Very good morning. You're watching India Market Open and we're beginning the celebrations here for Swatantrata Divas. And very happy Independence Day to all of you. Of course, markets will be shut tomorrow. But, you know, an interesting theme that we've put together, folks. And I thought we'll start for a few seconds and just tell our viewers all about it, about how we're looking at financial freedom as the big theme. So whether it's the freedom portfolio, whether it is how you really fulfill your aspirations of freedom in our 79th year, using the best investment tools, that's something that's going to be exciting all day on NDTV Profit today.
Yeah, no, absolutely. And I love to hear what people have to say when I ask them, what does independence mean to you? And quite often you have the answer, the right to choose what to do with your time, what to do with your life. And ultimately, financial freedom is what gives you that.
Yeah, I think as a nation, we've graduated to the level where we are now talking about making the best utilization of time. I think 50 years ago, it was always about what is it that you can do for making a life.
Yes.
I think now that's a given that everybody who's trying their best is able to make a life for sure. So now you're graduating to, okay, can you make the right utilization of your time for yourself? Yes. How can you excel on the global stage? And that's the beauty. I mean, almost everybody who is a large investor in India says that you are lucky to be in the right place at the right time. Can we make the next 21 years count so that at the 100th year of our independence, so 22 years count, at the 100th year of our independence, I mean, it could be a spectacle worth seeing.
Such a powerful thought.
Yeah. Just the only thing I hope also that as we continue to grow, that all parts of our country grow and all citizens grow, and more and more of them discover the magic of investment to just lift themselves up. Yeah. All right, on that note, let's start with all of the coverage of the day and very quickly what's happening on the global scale. It's another winning day in the US markets. All indices closed in the green in trade, and this has continued since the CPI data, the inflation data that came in day before yesterday, was better than expected. So you saw the Dow, in fact, up over 400 points. All eyes are now on fresh economic data which will come in. You'll have jobless claims come in. You'll have the Producers' Price Index, which is also to be released today. So that becomes the next big trigger. Bond yields have dipped after that inflation data came in quite benign. The 10-year at 4.23%. Oil prices, meanwhile, have remained low. Now, the International Energy Agency said that demand is going to slump to the lowest levels they've seen in a very long time. On the other hand, you also have these Putin-Trump talks in Alaska. Brent was under $66 a barrel levels as a result of this. So those are going to be the next big factors. Asian markets, meanwhile, opened mixed in trade, and there you see the Nikkei down about 1.5%, Shanghai and Hang Seng in the green. The Indian markets implied is looking at perhaps a very mild tick down at the start of trade. Let me go across now to Chiddu Narayanan. He's head of macro strategy APAC at Wells Fargo. Thank you so much for speaking with us today. And you know, let's really set up to what we're expecting out of this big Trump-Putin meet, and then does that really settle the next leg of what happens with tariffs and trade? How are you looking at emerging markets in this context?
Good morning, and thanks for having me, Tamna. See, the theme for this year has been a lot of uncertainty. There's been a lot of uncertainty, a lot of lack of clarity about what could be happening next this year. We began the year with uncertainty about trade and tariffs, and 8 months down, we're still talking about trade and tariffs and the lack of clarity about what happens. At this point in time, after the August 1st, August 2nd deadline, we've had a lot of trade deals happen for a lot of countries, and we've had new tariffs that have been in place. There is uncertainty, though, about the sustainability of these tariffs. Are they going to be the same? Is that going to be higher or lower? Risk is that it probably goes higher from here rather than lower. And there is uncertainty over the situation in Eastern Europe as well. That incidentally hasn't really impacted markets substantially. Oil prices are still contained. Risk appetite is still very, very strong. Risk sentiment is doing really well, and risk assets have done really well, as you noted at the beginning of the show. Equities have done really well. Bond yields are lower, and markets are rallying in most parts of the world. EM assets doing quite well as well. Underpinning all of that is the data that you talked about from the US, which is the CPI data preceding that, we had the non-farm payrolls data, the jobs data in the US, both of that pointing towards rate cuts from the Fed at its September meeting, which at this point in time is more or less completely baked in. I think a 98% probability that markets are pricing in for that 25 basis points rate cut. And once that comes, there'll be likely more to come. We think maybe another 2 more after the September rate cut this year, possibly early next year. But markets are now quite buoyed by the fact that there is a lot of support on the monetary policy front.
That's exactly what I was going to ask you. In fact, I read this morning, Chidu, that the probability has now gone up above 99% for that next month rate cut by the Fed. The only question I have is, would you roll back that expectation of 2 more beyond the next month's cut if you were to see a change in the data? Because the other part of what I was reading is that the data is murky. Yes, to a certain extent, you could argue that inflation was at the headline level benign. There are signs that some of those tariff announcements are starting to bite, and they will bite in the near to medium term. So would you have to roll back, especially when you have the possibility of a slowing growth and higher inflation?
You hit the nail on the head, Neeraj. I think that's a very, very important point that you raise, and markets need to be very cognizant of that. 2 factors, and I'll probably use a phrase that central bankers are very, very fond of, especially in the recent past: data dependency. I think they're going to be very data dependent and not really give too much forward guidance for markets. They will say that if there is declining inflation, that opens up the space for more rate cuts, but they will remain data dependent. And as you mentioned, while the last inflation number in the US it wasn't really soft, but it wasn't really too high. And after the payrolls number, the bar had changed for what the inflation number had to be. But there are signs that tariffs are being fed through into the economy. We are seeing some nascent signs of that. And we also have to remember that this is data for July, when tariffs were still quite low. They were in pause about 10% for most of the countries. Now that's increased to a floor of 15% for several countries, to 25, 30%. India has 50%, China has 51%. All of that will start to bite. It will start to bite margins for corporates, which we're already seeing, and it will feed through into the inflation number. If inflation is where it is right now, and job market starts to weaken even further, that opens up the space for more rate cuts.
Yeah.
But if inflation starts to accelerate, central banks are very, very cautious about accelerating inflation, de-anchoring inflation expectation. So you're right. If inflation starts to accelerate, we will have to roll back some of those rate cut expectations as a market, and that could potentially have more better expression of risk on markets.
Yes.
Markets seem to be going like there is no bad news on the street, which is a little bit of a...
Chidu, thanks so much for taking the time this morning. Absolute pleasure speaking with you, and look forward to our next chat. All right, let's talk about what happened in trade yesterday. And you have, once again, sell flows from foreign institutions. They've sold to the extent of 3,644 crore rupees. Domestic institutions mopping that up. And this is more or less a trend we've seen in the recent past. Indian equities managed to register modest gains amidst that global risk-on move that you saw yesterday. The mood, however, remained cautious ahead of the long weekend. And we spoke about this at the start of trade yesterday. The unlikeliness of people wanting to carry on their positions heading into the long weekend, especially because of everything that's happening globally. So the Nifty 50, by the way, remained in a pretty narrow band of 130 points as opposed to the previous day's session where it was over 230 points or thereabouts. And a couple of stocks in the Nifty 50 stood out on the back of earnings. One was Apollo Hospitals and the other was Hindalco, both reacting quite sharply and moving very dramatically. Broader markets kept pace with the benchmark and gained more or less about 0.6% or thereabouts. And defense stocks ruled the roost in trade yesterday. Technical experts, by the way, yesterday speaking to us on multiple occasions, and different ones, are all pointing to opportunities in the defense pack. I'm going to be curious about what our guests today have to make of that. Most sector indices gained ground. You had pharma, metal, auto, all of them that outperformed. PSU banks, however, have underperformed, but they only lost about 0.1% or so. The market breadth finally was in favor of the advances in a 9:7 ratio. I wonder what it will be today on expiry day.
But just before we get to the trade setup, I thought it was important to highlight the key takeaways that came in from day 2 of the MK conference, because I mean, there is optimism, and it's good to shed some optimism on the eve of Independence Day, right? So their takeaway is that the overall tone from corporate India remains optimistic, and there are continued expectations of a demand recovery in the second half, which is actually a really positive sign. Let's hope that comes about. And central government capex seems to be reviving, even if private capex is muted. And of course, they had the CA, and you saw some of that mentioned on our channel as well. But the CA has reiterated that the government has contingency plans to counter the impact of negative tariff outcomes. So all eyes, I mean, simply put, the first line on my trade setup was the obvious one would be there on any trade setup, that all eyes would be on the Friday meet between US and Russia for further cues. Remember, Donald Trump has warned Vladimir Putin that there will be severe consequences if there is no deal reached. But be that as it may, the CA is reiterating that the government has contingency plans to counter the impact of a negative tariff outcome. But all eyes out on that Friday meet. It does promise to be a mildly volatile expiry day. I'm calling it mildly volatile simply because I find it very difficult to believe that people will take very large positions either on the upside or on the downside before a long weekend wherein India is on a holiday, the rest of the world is not, and there is such a critical meeting slated to happen end of the week. So I think that's the key thing to watch out for. I do think, I mean, if we're looking at buckets, Alex was talking about defense, Tamanna would have something else on her mind. I think OMC stocks certainly remain in focus post reasonable results, and you expect some bit of activity into some of those in terms of a result reaction today as well. Keep in mind, because of the supply glut that OPEC Plus is talking about, oil is really, really cooling off or has stayed very, very low, and that also augurs well for the oil marketing companies.
I forgot to mention, we're at this point heading towards breaking a 6-week losing streak for the Nifty 50. If things hold steady today, a % plus gains for the benchmark.
If things over the last 6 weeks.
So we've lost for 6 weeks.
Yeah.
This week is breaking that.
Okay, so let's hope that winning streak continues. Just in terms of pockets, the only one I'd add is consumer stocks, and slowly and steadily those are coming up. I mean, look at numbers from a Jubilant, and I know Alex will talk about it in detail. Devyani also not looking half bad. What we saw from a Nykaa, a Honasa. So you're seeing that consumer story coming up once again. So that is something that you should watch out for on a more specific and more immediate basis. As far as the other factors are concerned, well, the key level for the Nifty is now 24,700. A decisive move above this level could trigger a rally towards 25,000 or 25,200. Analysts are optimistic about a potential breakout, citing the daily RSI, that's the relative strength index, turning positive and improved market sentiment. You've seen that from the last 2 sessions. Immediate support for the index now around 24,465, 24,340. Other support levels are also identified at 24,520, 24,450. A buy on dip strategy is being suggested if the index stays above the resistance zone. The PCR, that's the put-call ratio, also increased to 1.08, indicating a firming up of bullish sentiment. For the Bank Nifty, it remains range-bound, but some technical indicators suggest a potential recovery. Resistance close above 55,350, 55,450 range is required for the Bank Nifty to signal a potential upside. As far as support is concerned, immediate one at 54,950 to 55,000. So those are maybe some of the levels that you can look at. But let me go across to Puneet now, who's setting up the F&O section for the day.
Well, thank you for that. Definitely a very interesting one. We've seen yesterday that largely the short positions have been closed, which led to that stellar run on the Nifty yesterday. We closed about 24,600. It is a positive in the near term, and that is also one of the key near-term supports. The long-term support remains at 24,500, while we have the first level of resistance at 24,700, and we are trading in a very, very narrow range of 200 points, both on the upside and the downside. So that'll be something to watch out for in the next weekly expiry. We're expecting that largely a lot of action was happening, did happen yesterday. Some more reactions on stocks like OMCs, as you guys did mention, will be one of the other things to watch out for. On the Bank Nifty, again, lack of any kind of pivotal trigger continues. 55,400 is what we're seeing on this one as well. When you look at the foreign investors' positions, yesterday we did see some selling on index options as well as Nifty options, and that's largely been consistent with what FIs are doing in this particular time frame. The index longs, because of that, have largely been at 8.6%. It's been continuous selling and maintenance of short positions by the foreign investors in this particular time frame, and expiry the most bearish that they've been in the last 3 months, as I mentioned. Now, when you look at some of the key open interest distribution levels as well as stocks, we've seen 25,000 continuing to be the long-term range in which traders continue to put their money on. It has seen the highest open interest, while 24,700 has starting to see that inch up, initiating what we mentioned about the resistance at that level. Finally, in terms of stocks open interest gainers first, some long build-up seen in Apollo Hospital post their strong quarterly results. Muthoot Finance is the other one that will be in focus today after results as well. Short build-up already seen in the system yesterday, while open interest losers, we've seen some kind of short coverings across stocks. Astral, after weak results the day before, has seen some kind of short coverings in the market yesterday, but the momentum will stay negative with the stock post quarterly earnings. The market will wait for any kind of positive indication only post quarterly earnings, the next one of course, and Paytm also seen some short covering as well. So again, a day where a lot of individual movers. We have a couple of interesting listings in JSW Cement, but largely the OMCs will be in focus today.
Okay, thank you so much for that, Puneet. OMC is in focus. I think one stock definitely in focus is going to be Muthoot Finance. So I'm starting off with that on my watch list. It's a stellar quarter for them. Margins have risen quarter on quarter and year on year. They've clocked a 37% AUM growth, gold loan growth of 40%. You're seeing operating efficiency at play. Credit costs have been controlled, and you're seeing credit costs actually come down both when you compare on the quarter and on the year on an annualized basis. The ROA, return on assets, which is for financial institutions the gold standard to see their health, is over 7%. Now, let's look at some of the metrics that you're seeing on Muthoot Finance, and you're seeing good growth quarter on quarter, year on year in interest income. Interest expenses are in fact coming down, which is a good. Net interest income has been good. Other income also coming up higher. Operating income has been very robust, up 63% year on year. Provisioning has gone up a bit as well. But look at the PAT number, 90% up year on year, 36% on the quarter. Here's what Jefferies is saying. They're maintaining a buy. They've hiked the target price to 2,950. They say it's a solid quarter, strong AUM growth. NPA recoveries have boosted profit. Gold price tailwind has given headroom to lift LTV. This should support healthy loan growth. Net interest margins should expand due to easing rates with limited loan losses. It stays a defensive play. They're expecting a 23% profit CAGR ROE, that's return on equity, of 21% over FY26 to 28. So very, very solid set of numbers for Muthoot Finance. I don't know on valuations and the run-up that you may have seen recently how it will move, but definitely a good set of numbers. ICICI Bank is the other one that I've picked, and I think you will see a positive up move because of this. So you will see some stock impact simply because you saw stock impact when they announced a minimum balance requirement across sections, which were much, much higher. In fact, for urban India, for cities, it was 50,000 rupees as a minimum account balance that you have to keep, up from 10,000 rupees. Now, after a lot of flack and debate, they have turned it around. For metro and urban, they've reduced that amount by 70%. For semi-urban, they've reduced that requirement by 70%, and for rural also reduced by 75%. Now, they've said they have backtracked because of valuable feedback received from customers. The revised fee structure better reflects customer preferences. Now, the question is, was the move not well thought through? In fact, in terms of impact, the amount is still 50% higher than what it was before. And peer banks have minimum balance requirements between 2,000 and 10,000. So they're still much more, they're at a much higher level. So if you are an ICICI Bank customer, a new one, and if you will come in from now, then you will have to maintain a much higher minimum balance. Regulator, of course, said that they're free to do what they want, but I would say, folks, that to some extent this was not well thought out to that degree, and maybe they didn't anticipate the amount of flack they got, because yesterday a peer of theirs and another leading private bank, HDFC Bank, went through pains to tell everyone that some media reports which had come out and said that they've increased their minimum balance were inherently incorrect. So this is something where, you want to talk about inclusive banking, this just sticks out as going in the other direction.
So, so I spent a little time thinking about this, right? And why do banks want you to get the first credit card that you ever own with them? Because they want you to hold that for the rest of your life and maybe increase the amount that you spend on that card. Acquisition of customers is extremely important, and if you raise the bar and you put a barrier in place, you're not going to be able to do that.
Yeah, so maybe they thought through this from a business perspective, but I don't think they thought through it from the kind of feedback that they would get for a nation, which is for which it's not very easy for everybody to have a 50,000 minimum
100%.
balance, right? And this was, of course, for incremental customers. So from a business decision perspective, I'm sure they thought it through. They did the algos, did math, etc. But yeah, it's clearly backfired, and they've had to pull it off. Maybe it'll pass away as one small attempt which was done and forgotten. For their sake, I hope it does, but you never know with these
but
things.
It's still much higher than everyone else.
Yeah,
You're not clawed back completely. It's because you went 5x, so it's seeming like that, but you still want to position yourself as a creme de la creme bank. That's not how ICICI Bank started, went through its long history. But nevertheless, just the third stock very quickly is United Spirits. So now top line growth has been seen, led by popular segments. The Q1 is largely in line as far as the EBITDA is concerned, despite higher ad spends. So if you look at one-offs and you adjust for them, you could say it's a beat. So I'll give it a thumbs up. Margins have been impacted by those one-offs, elevated brand investments. Brokerages were concerned about a potential hit from the sharp tax hike in Maharashtra. So let's look at the numbers. Revenues up 8.37% at 2,549. EBITDA did come down about 9.39, about 9.5%. Margins have reduced from 19.47% to 16.28%. And you saw profits coming down about 14%. What's Macquarie saying? They've maintained an underperform target price of 1,250. They say the numbers are in line despite higher ad spends. They've liked the healthy Q-on-Q gross margin expansion, like the sequential moderation in interest costs, are concerned about a potential hit from a sharp tax hike in Maharashtra. Investec also has maintained a buy with 1,751. They're saying it's a beat adjusting for a one-off, solid top-line growth led by popular segments. So United Spirits, I think, is partly good and partly bad, but on balance, I would say maybe a thumbs up.
Okay, I'm going to start with Jubilant FoodWorks. It's a thumbs up because the numbers were largely in line with expectations. The thing is that Turkey seemingly is responsible for a large part of that meeting of expectations. Strength in that market has actually offset the lower than expected India margin. The focus is at this point on growth and delivery is better than the peers. The management is sticking to its formula of pushing for growth rather than focusing on the pricing. So the numbers at this point, you had 2,261 crore revenue number, 17% higher. EBITDA was also higher by about 14%. Margins have come in slightly below what it was in the year ago quarter. The reason I want to ask you to this is, okay, Neeraj, I don't know if you eat pizza, but
when no one's looking.
Yeah, when no one's looking. What are your favorite toppings?
Cheese.
Cheese, okay.
I like the jalapeno.
But so very rarely have I found that when I'm in a group of friends, everybody chooses the same things. So people choose different things, very hard to order, and seemingly brokerages have an equal difficulty coming to a consensus here because two very opposing views. Take Jeffries on Jubilant. They maintained a buy with a target price of 1,000. They say that delivery growth was way ahead of the food aggregators. And the same store sales growth continues to grow even after base normalization, or it's expected to lead going forward. On the flip side, you have Macquarie on Jubilant, which has maintained an underperform with a target price of 545. They say largely in line, aided by Turkey, but they say that the Q1 shows how discounting-led like-for-like growth has failed to aid EBITDA margin. So depends on what you choose and which way you want to go with this.
But I like the one line from the Jefferies note, which really struck me on Jubilant, when they say they have an unapologetic focus on growth.
Yeah,
I thought that was a really cool line, because it shows that mindset is there. And you can have a quarter here, a quarter there, but I think overall it's a solid set of numbers.
Absolutely.
And sorry, just one small thing here. I met a PE investor who's trying his luck at the same business and said, okay, Jubilant FoodWorks is not a pizza company. It's an infrastructure company. It's a logistics company.
Interesting. They used to say this about McDonald's as well. Yeah. All right. So that's something to bear in mind. Vishal Megamart. This is now a very clear thumbs up. Strong growth with expansion in margins. This is the 5th quarter in a row that they're seeing double-digit same-store sales growth, and the momentum on the store addition has continued with a foray into new states. And there's also a quick commerce platform, although currently small, and it's continuing to scale up at this point. The outlook remains positive, of course, and the numbers look pretty rosy if you look at it. Revenue growth of 22%, margin expansion, small one, but 14.6% looking robust, and net profit growth of as much as 37%. Jefferies is positive. It's hiking its target price to 175 from 142, and that should tell you something. I won't go into all of the details, but they're positive. Anupam Rasayan. This was an interesting one. It has beaten estimates. Its pharma and polymer businesses are performing well. There's also a recovery in the agrochemicals segment that is seen in the quarter gone by. USA as well as Japan markets have shown encouraging trends, and total exports accounted for nearly 60%, 58%. There were a couple of major additions that they made in the quarter, and now as a result of that, the order book stands at 14,646 crore rupees, which looks robust to say the very least. Revenue has grown as much as 91%. EBITDA has improved quite considerably. Margins have expanded to 25.6%, and the PAT number is considerably higher. Of course, it was a low base last year. The trend may be a little low, if at all, compared with the previous couple of quarters, but it looks good.
Yeah, but no, solid numbers. I mean, you're looking for chemical companies which are delivering good numbers. Look no further. I mean, this is it for you. I have 3 mixed names, if you will. The first one is more a reiteration of a story that we did out here at NDTV Profit and really went viral. And I wonder if it will be the headache for Eternal and Swiggy, because Rapid was launched, the food delivery app only, and most dishes are priced below 150. Even for Zepto, by the way, this might be an issue. So certainly watch out for any possible reactions for Eternal and Swiggy. But we'll talk more about this, by the way. So I'll just leave it here and not talk too much more about this, but keep an eye out for Eternal and Swiggy in the session today. Keep an eye out for Zydus Life. I was talking to Varsha about how important this announcement could be. So there are 2 distinct announcements that have come in, one positive, one negative. The positive one is better. So US FDA inspection for 3 products at Ahmedabad plant had 0 observations. So that's a positive for sure. The second one is not as big a negative, I think. The Baddi plant has 4 observations, but there is no data integrity issue in these observations. So therefore, I dare say it's not all that bad for Zydus, both these announcements that have come in. So watch out for this one. The third one, under normal parlance, if the stock had not rallied, I would have said, oh my, watch out for a rally in this one. Merck Electronics. Guys, any brand that you can relate with this one? Come on.
No.
Neighbors envy, owners pride.
Onida.
Yes, exactly.
Really?
You have to be of a certain vintage to remember Onida.
Hey, no, there was an Onida in my house.
Yeah, so
Yes.
back
growing up.
You have to be of a certain vintage.
Yeah, okay.
Alex, I mean, you're not getting the hint.
Okay, I was a kid. I still remember Onida with the devil and all of that.
So is this back from the brink, not brink really, but rising like a phoenix from the ashes? Because Sanjay Dangi, Vikram Kotak, Autumn Investments and Vikram Kotak, they have been made a preferential allotment in Merck Electronics. And I think some bit of this was probably in the price, because unless I'm wrong, if you just look at the price movement in the last maybe 7 days for Merck Electronics there, it tells you a story, right? We're thinking of what Yatra has done. Merck.
and it's less than 800 crore market cap even now.
It's a very small company, which is why these guys have put in the capital that they have.
Well, what do they intend to do with it is the question.
Should be interesting.
It's a very competitive space.
No, so this morning I messaged Vikram Kotak that why don't you come and talk about it? Let's see if he does. But this could be very, very interesting. So Merck Electronics is a stock. Watch out for this one.
Okay, so a lot of interesting ideas today, and a lot of them positive actually, which is a great thing. But we're celebrating the 79th year of the nation's freedom here at NDTV Profit, and we believe here at the channel that true independence is also about empowering every individual to become financially independent. In fact, I had this conversation with NSE's CEO and MD, Ashish Chauhan. Listen to him sharing his insights. Mr. Ashish Chauhan, just for this very special occasion, thank you so much for giving us the time. We're talking about 15th August this time from the context of financial freedom and how financial freedom is so important from independence that we want and as a nation. What are your thoughts on that?
For me, the freedom, many of us don't understand how important it is. The freedom as a country to make your own policies, to live as one group which makes its own decisions. It's a phenomenal achievement of modern Bharat or India, that 78 years, and there were many people wanted to, at least had predicted that this country will not even survive. But we have survived and thrived, right? And for me, it is an amazing thing that today 20% of all Indian households now invest directly through NSE, and freedom to invest is as important as say freedom to leave, because you need to make your own decisions, and that's where I think today India is on the cusp of a greatness over the next 30-40 years, and as Pradhan Mantri is saying, that Amrit Kal and Viksit Bharat by 2047. I think we have to all work hard, but we can achieve. And in some ways, this 79th Independence Day for India is giving us that little fillip in our own mind that all of us have not yet reached where we want to reach, or what is our potential. We have just starting to sort of go towards that, and we have a long way to go. We have come a long way, but we have a longer way to go.
What does financial freedom mean for you?
No, in a way, financial freedom allows you to see the colors of life. Life has myriad colors to offer. It allows you to see those colors in ways you want to see them. So when you don't have the adequate finance, many of your things which you want to see or experience, you may not be able to do. And once you have the finance, doesn't mean that you will be able to sort of experience whatever is there to experience, but at least in case you want to do that, you will have that ability to see those colors, and of course also come through the trials and tribulations of life, because I always say that money is not everything, but without money again you will have many issues. So you need to have adequate money, and for that, once you have money and surplus, you need to learn how to invest.
What is the role you think of stock exchanges to allow Indians to have that financial freedom?
The stock exchange is, the stock market, especially investment in equities, is a much higher risk activity compared to, say, putting money in banks. And that's where everyone who is investing or wanting to invest, we need to explain to them this is a high risk activity. You need to understand about the company, about the economy, about the industry, about the world, and then only invest. And if you don't have time, you can invest through the experts like mutual funds or portfolio managers, but invest you must, because if you have money, it's your responsibility for yourself and your family that your money increases. And in a highly inflationary world, you need to continue to invest so that your money doesn't go down in value. And that's where it's an onus on the exchanges and also other intermediaries to ensure that we take the right message of being there for the long run, not believing in tips, not trading in derivatives for small retail investors. And investor has to be doing investment and not trading. Many times we mix up trading with investments. Buying in the morning and selling in the afternoon is not investment. We have to be there for a long term, probably 2, 3, 5, 10 years. And that's where I think some amount of patience, some amount of understanding has to be inculcated. And that is our job.
Thank you so much, sir, for speaking with us.
Thank you.
जय जवान जो मैंने शुरू किया था ये एक्चुअली मैं दोबारा आया हूँ आप लोग से मिलने के लिए मुझे बड़ी खुशी है आप देख रहे हैं YouTube पे मेरी फिल्म वाह क्या बात है क्या बात है जय जवान मेरे साथ 15 अगस्त को सिर्फ NDTV पर जय जवान जय जवान जय हिंद जय हिंद
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now,
we have come a long way and we have a very, very long way to go. I wish everybody a very, very happy Independence Day, and in the days to come, while we are marching towards Viksit Bharat, we are going to make even better strides.
Welcome back. You're watching India Market Open, and this is part of our celebration of Independence Day. Joining us in studio is Kush Bora of kushbora.com and Parag Thakkar of Fort Capital. Gentlemen, thanks so much for joining us, and happy Independence Day in advance to the both of you.
Yeah.
To you too.
Happy. And I would pay huge tribute to all the freedom fighters who fought for us, so that we are
here
right
today.
Now, we are able to discuss markets and at ease.
At ease. And where we've come to this point, right?
Yeah.
So, Kush set the tone for us. We were discussing it this morning. We were anticipating that there might just be a little bit of caution ahead of the long weekend. Considering everything that's happening globally, do you think that that will pan out today's expiry day as well?
But before that. What does freedom mean to you, Alex? I got the opening line.
Oh, you saw that, yeah?
Yeah. So what does it mean to you?
Oh, the freedom to choose what to do with your time.
Neeraj?
Yeah, I mean, it's the same. In this day and age, the ability to take a decision without thinking about the repercussions.
Lovely. Parag bhai?
So basically, it is all about stocks and stocks. I cannot think of anything.
On to business.
But seriously speaking, I'm a little bit upset about what I'm seeing on the ground right now because of these tariff tensions.
Yeah.
So many factories are closing down. And see, the promoters of the factories might choose to invest in the stocks and real estate and all that. But the labor, the workers, the entire diamond industry, many apparels, textiles, plastics, I would see there's a lot of pain. So that's I would love to see it recovering very fast so that we don't have many job losses.
Yeah, true.
Yeah. True. Yeah, so on to the Nifty or the Bank Nifty.
No, you didn't say what it means to you. Very quickly.
Very similar, but I put it a little differently, which is the ability of the the freedom to make your own mistakes. You don't start out planning to make a mistake, right? But the idea that you can be creative, you can make your choices, you can do whatever you want, rise, soar, stumble along the way, pick up, and then learn from it, right? So move on. So in a very different way, but it's more of the same. Be able to make your own mistakes. So that's one way of defining freedom, for me. So now on to markets. What's happened with the Nifty is that we're very much on track for the first weekly positive close after that 6 weeks of decline, right? However, we've not been able to take out the Tuesday's high. Yesterday's move, very encouraging, but we were not able to take out the Tuesday high, which now becomes the first leg of resistance, about 24,700. Couple of things still stand as positive. The momentum indicators pointing north, not in the clear yet where you could say yes, the momentum's back and the index will move higher with a gusto, but on the upside for sure. What's also happened is that the put base has moved from 24,400 to 24,600, which means there's confidence on the support side. So on the higher side. So there is also this support that comes in at 24,500 mark. The trade on the Nifty right now remains clear is that you play for a long trade with a stop loss around the 24,400. Maybe you could now bump it up to 24,500 for levels of 24,800 and 25,000. That's the view on Nifty. Bank Nifty not so encouraging. We've seen consistent inside bars on Bank Nifty for the last couple of days, suggesting consolidation. Some bit of contraction that is happening. It could move higher because the PCR is at 0.75 and the heavyweights which we've been discussing, ICICI, SBI and HDFC are close to support zones. But I don't see a very big upside, like for 56,000, 56,500. But yes, we're closer to the support zones. So maybe a long pop could perhaps come on Bank Nifty as well, but more constructive on Nifty than Bank Nifty.
You've got a couple of buys as well. Power India and DMCC. Talk about these.
Sure. So have been taking these long trades for the last couple of days. They've been paying out well. So the first one is DMCC, fairly volatile. Let me just put it out there, fairly volatile, but it's had its fair share of accumulation over the last 3 to 4 sessions. I think this up move could continue. We've seen this traction in some of the other chemical names as well, like has been the case in some of the other names like Metropolis and Thyrocare. That entire segment, you're seeing some sort of similar moves in the specialty chemical and specialty chemical segment as well. So DMCC stands out for me for targets of 345, 356 and a stop loss around the 320 mark. Also Hitachi India, purely coincidence that the other name for this is Power India on a day like today. We've seen a good move on this. Every time it comes to the 20 and the 50-day moving average support zone, you see a good rebound on this. Similar has happened in the last 3 sessions on this. Volume uptick also very decent. So 21,550 and 22,000 are your targets on the upside. Keep a stop loss near the 650 mark.
Very happy Independence Day in advance to all of you as well. And what we're doing today is we're talking about what the Freedom portfolio looks like. And I just want to explain the concept for a second before I go to both of you for your picks on this. The idea is that if you have a goal of financial freedom for yourself, for your family, and if you want to build a portfolio, what are the stocks that you would put in it to achieve that financial freedom, which is why we're calling it a Freedom portfolio. So Parag bhai, let's start with that whole concept, and what are the stocks that you think can give those kind of returns over time?
Yeah. So basically, with a disclaimer, of course, that all these stocks which I'll discuss will be there in my PMS clients' portfolios. There's no holding personally. And the only thing is that every investor who is seeing this show should please consult financial advisor. Times are absolutely volatile. We have a very crucial meeting between Trump and Putin tomorrow. I hope everything settles down. So that is one thing. So please don't get swayed by whatever we recommend here. Of course, my portfolio holdings, of course, the large portion of the money which is going in stocks like Geo Finance, for example, where I feel the growth journey is just starting. And 60% of the market cap is justified by their 6% stake in Reliance Industries. They have done their 50% JV with BlackRock for AMC. For insurance, they have tied up with Alliance. So remaining that 90,000 crore market cap. Today, market cap of Geo Finance is 210,000 crores. So 90,000 crores, you are getting a business which is getting ready for the future with good partners, with a very strong promoter who has infused 15,825 crores very recently at close to current price, 5% below current price. So I would say that this is a growth journey starting. So it's a perfect portfolio stock for a, I would say, Independence Day kind of.
That's only one, Parag. What about the others?
No, so there are many others, I would say. So there will be shortage of time if I
Just go to the top three, maybe.
Yeah. So Geo Finance is one. We are very close to festive. I am hearing that August and September will be good volume numbers for auto. Because this time the festive is slightly earlier than last year, right? So TVS and Mahindra, as I always keep saying, whenever you see, yesterday unfortunately they both went up, or fortunately they both went up. But if it comes down a little bit, I think it's a good opportunity to buy both of these stocks. They are doing wonderfully on the ground. You see the pain around you in the system, in the economy, and where these two companies are gaining market share, protecting their margins, growing in double digits. Superb, I would say. So TVS and Mahindra for sure. And of course, I would like to say that yesterday again Hindalco was another stock which went up by 5%, which is our portfolio stock. We have done a very deep analysis in this company. Whatever they are doing in terms of Novelis with the new contracts coming into execution for beverage can from Q3, Q4 onwards. Their capacity expansion in Novelis and the fact that it is a one-time book value stock with 15% ROE with net debt to EBITDA of only 1x. And 1 lakh crore capex coming in, where 70% of the volumes are already contracted at a higher price. And in India also they are going to get a coal block, which will reduce their cost. So I would say that if you have a vision of 3-4 years, then at 675, 680 kind of range, I think that's a perfect stock which can give you 60-70% returns.
Wow.
Okay. Over next 3 to 4 years, you need to be patient because in manufacturing stocks, when the capacity actually starts, you see the traction. So you might see 2 years of no growth in EPS, but in third year you will see 25% growth in EPS. And stock is attractive. One-time book value, you imagine a company's 100-year-old assets with their build, you are getting at one-time book. For a 15% ROE.
And viewers, remember very quickly, just before we get to the dealing room check, the reason you buy, you might ask, why don't I buy the stock after 2 years when the capacity comes on stream? Because the market discounts that move 6 months to 9 months earlier. So if not earlier. So if you
and
believe.
And of course, SBI, as we rightly discussed, that's why I did not touch upon, because last time when I was on the show, SBI was, the result came.
Most
so
certainly.
SBI also at 0.9 times book, 7 PE, I think with very low credit cost at below 50 bips, I think that is another stock. So I'll leave it at that.
So that's the Freedom portfolio from Parag Thakkar. You already heard Kush Bora's ideas. Let's figure out from Somit Sarkar, who joins in with all the chatter from the dealing room, if there is some independent conversations happening out there since its Independence Day. Sorry, that was a bad toss to you, Somit. I'm so sorry for that. But good morning, happy Independence Day to you. What are you learning?
Good morning, happy Independence Day as well. So couple of stocks, Bajaj Housing and Bajaj Finance are in focus. Now dealers are indicating that Bajaj Finance, which is the promoter company of Bajaj Housing, has started the offer for sale process to sell some of its stake in Bajaj Housing. Now they have appointed bankers and dealers are indicating that the sell price of Bajaj Housing could be at a discount of nearly 10% to the current market price. And the OFS is being done by Bajaj Finance to meet the minimum public shareholding norms that have been put by SEBI. Now, second stock on the list is Bharti Airtel, where dealers are indicating there was some FTSE passive passive flows related to FTSE adjustment, and these flows were around 80 to 100 million US dollars. Mankind Pharma is one of the stock where institutional buying has seen, they're seeing some strong interest in institutional buying. Both foreign and domestic institutions have been buying this counter. And lastly, it comes to Hindalco, where dealers are indicating that large HNIs have been shorting this counter. These are positional shorts that they have built in. Yesterday, the stock had perked up around 5% in trade, despite the fact that the results were pretty much in line and there was no much of a positive commentary that had come in on the call. But despite that, we had seen a 5% up move, and some positional short positions have been taken by large HNIs, is what dealers are indicating.
Okay. Well, we know one HNI is not taking a short position on Hindalco for sure. But, the other commonality between the two gentlemen at two ends of the table is that they get down to business straight away. Yeah. We asked Parag Thakkar about Independence Day. For me, it's stock. No matter how much you praise Somit will say thank you.
Hi, Independence Day. Happy Independence Day. Good morning. Let's go.
No, but having said that, Kush, let's talk about your Freedom portfolio as well.
So, see, for me, the idea is very simple. You need stability at one end and the growth, factor at the other end. So, stuff like Bajaj Finance and Nestle that I've discussed time and again, that I've kept in my portfolio, my kids' portfolio, that remains. And as far as the forward-looking, growth ideas go, I think the stocks like Eternal, you have to have them in your portfolio. And the one stock that is common between Parag Bhai and in my portfolio seems like is Jio Finance. Had it for a while, looks like the story is just starting, so why not? So Bajaj Finance, Nestle.
I think another stock we have in common is Torrent Pharma.
Oh, absolutely. In fact, I could add Max Health as well to my list. But some of these stocks, evergreen. Any kind of dip you get, in a market crash or whatever, you should actually look at accumulating some stocks like these. So, yeah.
And one thing I would say is that, see, as a contrarian, and this is not that's why I did not mention it in the Freedom Independence Day portfolio, but a tactical thing. I think IT continues to be a tactical. Yesterday, I saw, Accenture was up 3.5%, Infosys ADR was up 2%. I would like to say that, this sector actually is very, very tired. People have given up. I think people are short, in my view. And 4% dividend yield in many stocks. LTI Mindtree giving very good commentary for coming quarters. I think last quarter in the call they indicated they'll get some very good deal wins in this quarter, which will ramp up their growth in Q3, Q4, which will take to their high single digit growth, which is very good and rare in IT. So I would say Infosys kind of stock or LTI Mindtree kind of stock, I think that appears as that's a tactical view, not a very long term view, because right now we don't have a very good clarity about what will happen with AI.
Yeah. But point well noted. Keep in mind, one more voice in the chorus of people who are taking that contra bet on information technology. Okay, now since we are celebrating the Independence Day and it's a Freedom portfolio, let's get in one more guest to talk about a Freedom portfolio and thoughts on what independence means, right? Rashesh Shah, Chairman, Edelweiss Group, Johnson. Rashesh Bhai, thanks so much for joining me. My first question to you is, what does financial freedom mean to you?
Yeah, I think India got the independence freedom in 1947, but only in the last 40-50 years we have started experiencing financial freedom as a country, as India has prospered and economic growth has picked up. So for me, for an individual, the financial freedom is about having choices, having options, like whether it's retirement, whether it's career, whether it's you want to send your kids to study in a particular school. When you have choices and options which your financial resources allow you, I would call them truly financial freedom has been achieved.
True. And Rashesh Bhai, it could be different for different people at different facets or different points of time in their life cycles. But for you, or for Indians at large, has the possibility of more financial freedom gone up in recent times with the market rallying, investing culture, so on and so forth?
Absolutely. I think India always has been a country of savers. We've been good at saving because of uncertainty and all of that. But I think last 30 years, India has started investing. And I think that converting savings into investment is what really fast forwards the financial freedom. Initially, you need to save to achieve financial freedom, but only saving, which until about 30 years ago was the only way Indians could achieve financial freedom. Now we can have financial freedom by combining savings and investing. And I think the country has learned, and thanks to media channels like all of you, people are getting comfortable with the concept of investing. And I think that is what has been the key change in that. And that does bring the financial freedom or achieving the financial freedom a lot faster.
And Rashesh bhai, do people need to change the dynamics of their investing systems in order to achieve this financial freedom earlier? Everybody wants to retire earlier that I meet. Do people need to change the dynamics of their investing culture?
Yeah, I think it's constantly evolving, Neera. I think the investing dynamics has improved a lot in the last 5-10 years as compared to last 30 years with the advent of mutual funds and new insurance products and AIFs and InvITs and REITs. I think the optionality has gone up. So, what you save, if you can convert that into really good long-term investment, it helps the country because it does facilitate capital formation, allocation of resources, but it also makes sure that you have a lot more corpus when you retire or in your future. So I think that way investing has evolved a lot, though I think India still has a long way to go. We need bond market. See, basically all investment needs are either growth or income. Now in India, growth has come through equity markets, through SIPs and the mutual funds, through private equity options, all of that. So I think we have shown investors how to access growth. But the other part is income. Now in income, currently we still are dependent on bank deposits, which has its own pros and cons, or things like liquid funds in mutual. Now we have InvITs and REITs and others which are coming, which are giving you income opportunities. They may not be growth opportunities. And I do think that in order to achieve a financial freedom, especially in a volatile world, I think investors will need a good mix of growth investments and income yielding investments.
Got it. Okay, Rashesh bhai, lovely talking to you and this early in the morning. Thanks so much for taking the time out. And there you have it from somebody who's been there, done that, gotten financial freedom at least, and multiple other forms of freedom, talking about how to get that in a hurry and more. Okay, time for a short break actually. We'll be right back with the pre-open session, more market voices and what freedom means to each of them. Stay tuned.
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग। जब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
जय जवान, जो मैंने शुरू किया था ये एक्चुअली, मैं दोबारा आया हूँ आप लोग से मिलने के लिए। मुझे बड़ी खुशी है आप देख रहे हैं YouTube पे मेरी फिल्म। वाह क्या बात है, क्या बात है। साथ 15 अगस्त को सिर्फ एनडीटीवी पर। जय जवान।
the strength of the Indian economy and the progress India is making. And I'm very confident that with the measures that are in place right now, the way the industry is contributing to the growth of the country, India will become a fully developed country by 2047. So my best wishes to all my fellow citizens on the August 15th Independence Day.
Welcome back. You're watching India Market Open and we're celebrating India's independence. Joining us on this side of the break is Shrikant Chauhan, who's Executive Vice President and Head Equity Research at Kotak Securities. Shrikant, happy independence to you, to your family and to your team. We're asking everybody who joins us today, all of the experts on the channel today, what their freedom portfolio is. So name 3 stocks that you think people should have in their portfolio to get them to financial independence early.
Good morning, Alex. Good morning, Neeraj, and everyone. And yes, happy independence to all of you and to all the viewers. Yes, like see, this market is into corrective mode. But if we go through with this stock specific activity, then there is good amount of buying attraction in those companies where there is value. And I am of the view that we need to be very, very particular in terms of buying stocks whenever there is a panic or whenever there is uncertainty in the market, like currently we are facing. I think we should focus more on stocks like those where there is fundamental upside as well as which are very big in its, I'm saying their size. Technically, we like State Bank of India, which is around 824, 825. There we have a target of close to 920, 925. But in the long run, the stock may even cross the level of thousands. So that looks good to us at these levels to buy. The downside is highly limited. After the correction from the levels of 1500 to almost 1375, 1380, Reliance looks good to buy. Also, we can expect value unlocking in the near future. And it looks a very strong bet to buy at current levels around 1385, 1390 with a first target of 1500 and maybe in the future 1650 or 1700 sort of levels. And the last one is to buy is from the new age technology. And there we are bullish on Eternal, which is around 310, 312. There we have a target of close to 325 on immediate basis, which is very nearby. But in the long run, I'm seeing the stock to move towards the levels of 450. I think all the stocks from the new age technology basket, they are doing really well. Honasa, Policy Bazaar, Eternal, Swiggy, including Nykaa, I can say. I think all these stocks, they are going to do well in the near future. So maybe for the, if you ask me anything specific related to sector, then I'm very much bullish on new age technology stocks.
And that's where the consumption patterns are also going. Very good morning, Shrikant, and happy Independence Day in advance from me as well. Are we going to get some independence from this range-bound kind of trade? Are the bulls going to find their feet and more freedom today is the question. Or do you see maybe on the index level, people will be careful before a long weekend, Trump and Putin are meeting, the outcome can be very good or very bad. I don't think anything in the middle is possible.
Good morning, Tamanna. Yeah, I think so, because the market is like, it was in the range. It has been consolidating between the range of 24,600 and 24,400, 350 on the downside. But on Wednesday, the market managed to close above the levels of 24,600, which is positive. It closed above 10 days exponential moving average. That is also going to support the market. And I'm going to say it's a closing of about 24,600 after almost 24 trading sessions. broadly, I am of the view that it is heading for the levels of 24,800, 24,900 in the near term. And I don't think that the market can sustain below the levels of 24,500 so easily. So in case if there is any lower opening because of whatever the flows which are there in the market, I think we should look for taking some contra bets of going long in the market. Option statistics are also suggesting at the same thing that at 24,500 there is good amount of put writing, and based on that, that should be the final stop loss for holding any long position on intraday basis.
Shrikant, sorry to rush you. Could we run through your 3 picks today? One of them is in the news because of earnings, Muthoot.
Yeah, absolutely. Yes, Alex. We like Muthoot Finance. It has reported decent number, but at the same time, technically also the stock is into strong up move. It is around 2,500 levels. I'm expecting this stock to move towards 2,600 and maybe even 2,650, 2,670 sort of levels. But we can keep a stop loss at 2,470 for holding any long positions. We also like Jindal Steel and Power. There also, we are expecting stock to move towards 1,060, 1,070 sort of levels. We can keep a stop loss at 960. It is around 980, 990 sort of levels. And the last one, which we like, it's Sami Hotels. There also we have a target of 237. All these hotel stocks, they have started doing well, and we saw good amount of buying interest in last few days in all these hotel related stocks. So we can keep a stop loss at 217 for creating any long positions on Sami Hotel.
Okay. All right. So picks there from Shrikant, Freedom portfolio from Shrikant, but we have a very interesting piece for you as well as we celebrate this historic milestone for India's freedom. We bring you a special segment built to last, shining a spotlight on the iconic companies that have stood the test of time, from pioneering startups of the early 20th century to modern day giants. These businesses have not only shaped India's economic landscape but also delivered remarkable value to investors. Samit Sarkar, my colleague, is now joining us with the details of companies that have been listed since 1947.
Well, as these companies are actually built to last, because of the more than 4,200 companies that are listed on BSE, which is Asia's oldest stock exchange, only 18 companies were listed before 1947 and are currently trading on the Bombay Stock Exchange. To start off with the first one, it's Walchand People First. Now, this company got listed back in 1990 and 1919, and the annualized return that this stock has given since 1990, because that's the last data that we have available, the annualized return has been around 5.8%, and this company deals in consulting and training services. The second company on the list is Tata Power. It got listed back in January 1934. Annualized return has been around 11% and this company is into business of generating and distributing power. When it comes to Alembic, now it's a holding company of Alembic Pharma, listed back in 1934. The annualized return has been around 15% and it also has businesses in real estate and power assets as well. When it comes to Kesar Enterprises, now this company is not known by many people. It's a small company. It's listed back in 1934. Annualized return are just 2.4% and is dealing in manufacturing of sugar and ethanol products. Apart from that, there is Bombay Dyeing. Now that's a very known company. The annualized return has been around 4%. Listed back in 1937, is into the business of real estate development, polyester, that is textile and retail as well. Apart from that, it's ACC. The company got listed back in 1937. The annualized return since 1990 has been around 9.4% and it's a cement manufacturing company. There is Tata Steel, which got listed back in 1939. Annualized return has been around 9.7%. It's a steel manufacturing company. Swan Energy, now this is an interesting company. 14.5% is the return. This company got listed as a textile company back then, but currently is completely into a different business. It's into real estate and developing LNG storage. Apart from that, there is Mukan Limited. The annualized return has been negative 0.5% since 1990. The company got listed back in 1939 and it's into manufacturing of special alloys and other metal products. Rawalgaon Sugar, now it's owned by Reliance Industries, manufacturer of confectionery products, the famous Pan Pasand candy. If you remember, the annualized return has been around 6.8% and this company got listed back in 1940. Peninsula Land, listed in 1942, annualized return in negative 4%, is into the business of real estate developing. Walchand Nagar Industries, annualized return of 13.3%, listed back in 1942, is into a capital good and industrial company involved in heavy engineering and foundry machinery shop business. Andhra Cement, as the name goes by, is a cement manufacturing company, annualized return of around 9%, listed back in 1942. Supreme Industries, A strong returns has been given, around 19% return since 1990. It's a plastic pipe manufacturing company and it got listed back in 1943. Raja Bahadur, this company got listed back in 1943. Annualized return has been 14.5%. It's just a Pune-based real estate developer. One of its project has been given on lease to TCS. Victoria Mills, it was a fabric manufacturing company back then. Currently, it's a real estate developer just in Alibag area. Annualized return is just 7% and the company got listed back in 1943. Shri Digvijay Cement, as the name goes by, it's a cement manufacturing company, annualized return of 16% and got listed in 1945. And lastly, it's Wipro, one of India's largest IT company, got listed in on June 13, 1947, the year when India got independence, and the annualized return has been the highest among all the other companies at around 27%.
That just goes to show that if you've got time on your hands, more often than not, you're going to make a lot of money. So have some patience. Great list, Soumit, and thanks so much for that. It is time now, or beyond time, for the big brokerage call of the day, and let's find out what Jefferies has to say about Vishal Mega Mart. It did come out with its numbers, and the stock is up and about nearly 7% higher in the pre-open session. Harsh joining in to tell you more about that. Harsh, what are you picking up?
Well, yes. So what Jeffrey sees is now a near 15% upside from the current market price, but as of yesterday's close, a 20% upside. That's how Jeffries is really placing this one. They're saying double-digit SSSG growth for the 5th straight quarter is impressive for them. 20% on revenue is what the company has done. Revenue is driven by strengthening of own brands, stronger footfall, store addition. All of those are what is impacting the top line and aiding the top line. In fact, they're saying that performance is somewhat impacted by a shift in festivals, and despite that, they've done an impressive 20% top line growth. So that's what Jeffries is saying. Gross margins expanded, a higher share of own brands, rise in share of apparel sales, and a decline in FMCG, all of those aiding, plus operating leverage aiding the numbers as well. They've added around 21 stores. Store count is now at 717. Quick commerce is scaling up with 670 out of 717 stores offering quick commerce facility, which is a very big positive. All of this adding up well for a Vishal Mega Mart. They are valuing this at 50 times September 27 EBITDA. That's how the valuation stacks up, 175 being the target price.
Okay, Vishal Mega Mart doing really well in trade. Okay, let's look at Vishal Mega Mart. Let's look at Muthoot once again, see how it settled after the pre-open session, because that's likely to be the star of the morning, 8.5%, 9% up. Let's also look at a Jubilant and a Devyani. What are some of those companies doing after good results? Jubilant about 3% up in the pre-open session. Devyani completely flat. Muthoot on charts, Kush.
This is kind of a trade done kind of a deal. It's been hovering around this level 2500, 2600 for some time. 2700 was very stiff. While you could consider this as a breakout, I actually look at it as an opportunity to exit, because there could be some supply pressure. Anyone who's been holding on to this for the last 3 months will perhaps look to take some money off the table. So yes, if you do have a position, book it partially, hold the rest with a stop loss around the 2680 mark, and don't initiate fresh positions just yet.
Parag bhai, Jubilant Food, if you saw the numbers, much is being talked about how their delivery was ahead of the delivery companies. So therefore, what do you make of it? Would you buy at this point?
No, I would not jump and buy at this point. The stock, in my view, is still expensive. Also, although operationally they have done very good job. Same is the case with Vishal Mega Mart. They are doing well. But they are valued at a fair price beyond which you cannot expect a big upsides. So Jubilant Food, for example, this quarter I saw the PAT was 94 crore. If you annualize it, 400 crore, suppose we grow 30%, 500 crore, market cap is 40,000 crore already. So basically, there's nothing too much on the table. LFL growth, and also operationally they have done very well. That other stores, Popeyes, US Popeyes, that is also doing well. They opened 63 stores there. So operationally they are doing all fine, but I think it is fairly valued. Same is the case, and I will agree with Kush on Muthoot also. They have done well, but remember the 400 crore of beat which has come in NII is due to the interest reversals and the ARC selling with they did. Right. So it is actually in line number, and they have benefited just because the gold prices has gone up.
Yeah. But the standout performance has to be Vishal Mega Mart, right? with this 6 quarters of double-digit SSSG growth, right?
Yeah.
Phenomenal performance by Vishal Mega Mart, and it's showing in the way the stock is doing today as well. 6.8% higher, really strong show. Very quick, Parag, do you track this? Do you buy it?
No, so basically I saw the numbers. Numbers are good. Definitely it's worth looking at, and maybe on, we don't have habit of chasing the stock at any price. So it look like wait for some bad day to start buying. They are executing very well. There's no doubt about it.
Shrikant, what are you liking after the pre-open session? And Muthoot, again, I'm going to come to you. I mean, Kush is saying that this party is done. I think after the numbers, though, it started. And it's your top pick as well. 10%, about 8% is where it's ended after the pre-open session. At these levels, is it still on your watch list?
The chart is same for everyone, but the perception is altogether different. It depends upon the perception, how you see to the company and charts. But I am of the view that the way the company has reported its number, and never the company has remained into limelight. So the euphoric activity is still missing from Muthoot Finance. So I am of the view that in case if there is any correction because of any reason, certainly we should look for adding Muthoot Finance to our positional portfolio. I think this stock can do really well.
Shrikant, but the question would be that because it's starting off 8.5% higher at these levels, would you hold on to an existing long, or would you book profits in Muthoot?
No. With a very short-term view, certainly one should stay away. But with a medium to long-term view, if there is a view of next 6 months, I think even at this price, it's a buy.
Okay. Kush Bora, short term, you said that it's peaked out, but medium term, if you have a view, would you stay long in Muthoot?
Yeah, then it's very similar. And plus, if you want to accumulate around the 2550, 2600 mark, go and accumulate some more.
Okay, guys, so now there is, the choices that both our guys have made, the freedom of making choices that we allow them in the studio, the opinion is converging on Muthoot. So keep that at the back of your mind. Okay, 11 seconds left for the markets to kickstart trade, and it'll be interesting to see that while we start off on a flat note, can we build on from there? Because it's the expiry day and it could be mildly volatile ahead of the long weekend. Flat start, but in the green. Okay, it's actually flat. Banks flat, Nifty 50 is flat, Nifty IT should come up on your screen. People are turning contrarian, and Parag Thakkar's confidence is getting rewarded for now. I'm sure he didn't mean it for a day's trade. Keep that in mind. Nifty Midcap 50, 1/3% higher. Nifty Small Cap 0.21% higher. So that's the key indices. Now let's get the heat map up on the screen and show you what's happening. Wow, what a beautiful green heat map. Even if there are not big winners, Infosys, after a long time, they've made an acquisition, and that's quite something. The street is rewarding it 1.29% higher. So good going for Infi, 1.3% higher now. I believe Parag Thakkar has a very large overweight rating on Infosys. We'll talk to him about it afterwards. Wipro is in the green too. HDFC Life, Apollo, Adani Ports, Cipla, they round up the remainder. But I mean, it's a quiet morning, but for Infosys, which is up about 1%. On the flip side, BEL down 0.78%. ONGC and Reliance Industries are down because oil prices have cooled off. I reckon this is the upstream companies' impact being played out on both of these. There's some weakness in Hero and Tata Steel. But on a flat day, some more green on start than red, which is a good sign. And Infosys holding the cards when it comes to the gainers, 1.29% higher now as we speak.
So IT having a good day today as markets open, completely flat but in positive territory, which is not half bad, ahead of a very uncertain kind of a time over the next 3 or 4 days. That Trump-Putin meeting becomes crucial, as we've been saying. Let's pull up what's happening in the broader markets this Thursday morning and the last trading day of the week. About 0.5% up nearly on the Midcap 150. So this trend that we've seen of at least some strength right in the beginning from the last 3 trading sessions seems to be continuing today as well. Even the small cap 250 about 0.5% up. Will we see bulls come back in force? Let's pull up the sectoral heat map and look at what's working. Reality stocks up and about today, and IT, of course, pulled by Infosys and Wipro, seems to be strong. Nifty Pharma doing pretty decently, and you had some good results coming in as well. Some news flow. Pfizer had a decent set. On the downside, you have a Nifty Metal, but not massively down, just about 0.5% down. India Defense, but then it's a very, sparsely populated index, very few stocks on it. So moves in that sense quite easily. So the heat map is also looking largely good. Let's talk about individual stocks and what's shining there. I want to look at what Muthoot is doing this morning. Stellar quarter for Muthoot Finance. Let's look at the Deepak Nitrite. Let's look at the Devyani International. Let's look at a Jubilant. Muthoot actually is about 10% up. Deepak Nitrite about, the numbers weren't good. So that's seeing some pain, about 4% down. Jubilant and Devyani we should look at. Devyani is a faltering kind of a quarter. Jubilant was actually looking good. Focus on growth is what the brokerages are saying. Shall be not that great, about 2.5% down on numbers as well. Paytm is the other one that we should look at. Momentum, is it continuing or not? It was in the pre-open session, seems to have come off. That's going to be one stock in focus. But I think Muthoot is totally the star of the morning at an all-time high is where Muthoot Finance is this morning.
Yeah, and the second highest on the Nifty 500 just behind Muthoot Fin is a stock that I had in number 4. Usually we pick 3 stocks and we didn't speak about it, I must say, but Pfizer is doing particularly well. The numbers actually stand out because, and it stood out to me, I haven't gone through the absolute details, we must rectify that, but EBITDA margin improvement, and I'm wondering if Parag Bhai has seen the numbers, 7.7% higher. Let me take our viewers through some of those headlines. Margin expansion to 34.8% versus 31.5%, as a result of which, seemingly on that margin expansion, the PAT is up 27.2% to 192 crore. Looked good. What do you make of it? Would you buy at this point as well?
So basically, after this 10%, I wanted to buy. In fact, I wanted to buy up to 5% up.
Okay.
I saw the numbers. Numbers were very impressive. They have done fantastic job on the cost control. That's why the EBITDA margins are at 35%. Yeah. So even if the revenue growth is just 7-8%, the profitability growth is too good. And for a company like Pfizer, they are launching 3 new products in this year. They just got approval in Q4. So at least now the growth trajectory is moving towards 8 to 10%. And remember, now 8 to 10% is a good growth number for a quality business.
At what level would you buy?
So if I get it at 5,300 or below, 5,250, I would definitely buy.
Okay.
It's a great company, not done anything since last so many years. Now finally showing some traction in terms of products. They have got fantastic products, right? Bicozols and various other strong brands, superb margins, high net cash, good dividend payout. Everything is there. It is just, just that market was looking for growth. Yeah. And now there are some green shoots of growth also visible.
We've spoken about one good performance. Let's also speak about one on the flip side. PG Electroplast has been losing ground practically every other day. It's come back to flat. It was down over 2%. But do you think it's fallen enough? I know that valuations would have been challenging, and this is a reset, if you can call it that, after Q1 results. When does it become a buy in your opinion?
So basically, see, I am not very bullish on this space, this EMS space, and I don't chase the momentum of buying them at 60, 70, 80 times. I cannot think of also, in my dreams also I cannot buy. I can buy
brands.
It's
a nightmare.
See, I tell you, I can buy brands. I can buy sticky businesses like Torrent Pharma or Pedialytes of the world or Pfizer's of the world when they show some growth at a slightly higher P. Now Pfizer today after 10% move is also 35 times FY27.
Right.
But I cannot buy a company which is doing a contract manufacturing of electronics at 70-80 PE. Now if market sees that 30-40% earning growth, so you give 70. But how long this 30-40% growth is going to continue? Yeah. Now one disappointment and stock is down 30%. Yeah, so 70 PE has become 50 PE, but will I buy a 50 PE? No.
So buying consistent mediocrity is sometimes better than buying flashes in the pan.
There are people who chase earning momentum. I don't deny that. Earning momentum should be chased, but earning momentum for longevity is also one thing, that how far this earning momentum will continue. Even a fantastic stock like Trent. Corrected from 7,000 to 5,000.
I'm going to come back and ask you about earning momentum on semiconductor play, because that's the
I don't understand.
That's the hot one right now. Nobody understands, but everyone is on it.
We also have to ask you about Infosys.
But I just want to go to Shrikant Chauhan very quickly on what you're spotting after the first few minutes of trade, Shrikant. And let's get your view also on what an Infosys is doing, on what some of the IT pack is doing this morning.
Yeah, this morning we are seeing very good amount of buying interest in almost all technology companies, especially Infosys, which is up nearly 1.5%. But there we are expecting a stock to remain in a range. Yes, if there is a very long-term view of more than 12 months, then it's okay. If there is a view of next, let's say 10 days, 12 days, then it is better to stay away and look for adding some other stock from the same basket. In that, we like Naukri, that is infoedge.com, which is currently trading around 1360, 1365. There I'm bullish. I'm expecting this stock to move towards the levels of 1450 or 1440 in the near term. In the long run, again, the stock may again regain the levels of 1700. That's the overall view based on its chart. So it looks very a strong candidate to buy at current levels, 1360. We can keep a stop loss at 1330 for the same. And we also like Coforge. It has like given very deep correction in the near term. It was around some 2000 levels. From there all the way it is at 1650, 1630 sort of levels. So it looks quite attractive. If there is any activity in the IT companies because of fall in the bond yield, because of maybe the higher chances of cutting interest rates and all, then in that case, I think we should look for adding Coforge to our positional portfolio.
Okay, why don't we talk to Parag Bhai about Infosys, because this is something that he has spoken about in the recent past.
Also because Alex, after months and months of inactivity, it seems like Infosys is finally
bucking that trend.
And doing some activity.
Barely bucking, Neeraj. I mean, I don't know.
But you want to catch it
No, it's not about the
trend.
price. It's about the activity. That they've made an acquisition, right? After such a long time. They've been so quiet.
So basically, I'll tell you where I disagree with the, what market people are saying. That IT companies should have acted earlier. 2 years ago, they should have cited all this. They should have done too many acquisitions on AI. Why they are doing buybacks? Why they are rewarding shareholders? I don't mind getting rewarded here. I don't mind getting rewarded. If a company keeps on investing, at some point it will fail. Rather than if it is generating cash and giving me money, what is the problem? First of all, I am not a believer of 50-60% CAGR return.
So clearly, shareholders are not making those comments because shareholders are never going to complain about dividends.
But the point is that people are saying that they were not ready, and you will see with the time. These are very large, big companies. We are talking about small companies who are doing AI, and you are, basically people are giving 70, 80p again, same mistake. And these companies which are traditionally, and they will definitely figure out the way to counter this, right? And they are available at 20p, 4% dividend yield. Is a khone ka kya hai? That is what I am trying to find out. And I have gone wrong, to be very honest, humble about it, that after I have bought, the stocks have not gone up. Okay, and I'm equal weight in IT. But I love these businesses. Of course, FMCG and Pharma are far more, I would say, predictable businesses. Pharma, of course, now because again there is a tariff drama going on, but at least the domestic pharma like Torrent Pharma and all. But I would say that these are great businesses, great companies, ready to reward you 80-90% of the profits as dividends or buybacks. Still, there is some worry around this deflationary thing happening due to AI because they are not adding people now.
They're reducing.
Top pick in IT. Is sabke baad.
So Infosys, LTI Mindtree, Wipro, HCL Tech.
Acha, in that order. Kush?
So I just want to make a comment on something that he said. Ki isme khone ko kya hai? I have stopped asking myself that question. Market has a funny way of answering that question in not a very good way, especially if you're on the trading side. So on the trading side, for sure. Especially on the trading side, so I never ask that question. But just to round that conversation off, the two stocks that I like, HCL, it's seen a very good rebound, 20-day moving average cross among the big names. That's the one that stands out for me. And the other one is FSL. Very strong accumulation in the last 15 sessions or so, crossed most of the averages. So if you want to dabble with IT, then I would still suggest be selective and HCL Tech and FSL. These are the two stocks that stand out for me.
The thing about HCL Tech in the recent times that if you see the order wins that they have gotten, amongst the larger ones, they are the ones with the highest rate of AI-led order wins. If it means something, I mean, others will catch up, some things will happen. But the recent order wins, HCL has kind of made its mark felt in terms of the AI-led order wins.
HCL Tech was good, but HCL Tech, there was a spillover. The 2 deal wins they are going to get in this quarter, hopefully. I'm not sure, but in the earnings call, they said, right? Wipro deal wins are very large.
Yes.
But then, again, after the call, market took this call that this deal wins are coming at a lower margin. And so this 17% margin will not be protected. So market has its own way of finding out, because where there is no momentum, people find reasons not to buy. So that is okay. Well, it tastes so basically it has tasted my patience. It has made me more humble.
Which is always good. Market, anyways. I mean, respect the market, right? As Rakesh Jhunjhunwala, the legendary investor, used to say. We remember him fondly on his 3rd death anniversary, of course, and what a legendary investor he was. And it would have been great to have his wisdom during these times as well. But be that as it may. Okay, just before we wrap up, Parag bhai, we've spoken so much about IT, right? A word on pharmaceuticals as well, because I heard you say that, oh, you like select pharma, select other stuff. What within pharma? Because that's the sector that is escaping the eye of the storm, as they say.
Yeah, absolutely. So basically, we have Cipla, we have Torrent Pharma, we have a small company called Granules in our portfolio. And of course, I would love to buy Pfizer if it dips. Today, it has not given opportunity, but I would love to buy Pfizer on dips. So pharma is one pack. The other pack which we have not discussed today, FMCG. Again, like IT, here is also a cash flow generating machine, very high ROC, HUL doing 4% volume growth, Marico doing 9% volume growth. I am quite positive, again a contra view for a high cash flow generating sector, but so-called slow growth sector. So these are so-called growth, low growth sectors, FMCG and IT, where I have a contra view on the market and I am a buyer.
Okay, Kush, do you like anything in pharmaceuticals? Or any other stock, by the way, that may have stood out for you on open? Now we are like 13-14 minutes into open.
So DMCC, the stock that we discussed, is up about almost about 2%, seems to be doing well. So that's one you can keep on your radar. But from the pharma pack in particular, Mankind Pharma and Aurobindo Pharma, these two stand out. Very good recovery. They've had a good move today, but despite that, the risk-reward ratio is fairly favorable, in these names. So if you want, you could keep Mankind Pharma and Aurobindo Pharma on your radar from the pharma pack.
Okay. Speaking of the pharma pack and speaking about Pfizer, Shrikant, what do you make of this? Would you ride this higher? Is there potential upside?
See, I have different choices. I like Divi's Laboratories. I like Dr. Reddy. There I am of the view that they are going to do well in the near term. Nicely corrected. The overall long-term patterns are very clear. They are into impulse wave. So based on their overall formation, I'm expecting these stocks to deliver at least 15 to 20% sort of returns in next few months. And they are nicely corrected. So at current levels, the risk reward ratio is quite favorable. For Pfizer, of course, yes, the stock is like currently up and it was into corrective mode. So after completing the correction, if there is a gap up opening because of some reason, then it looks that the stock is ready to cross its previous high, which was around 6,200. So there also I'm bullish, but I'm particularly bullish on Divi's as well as Dr. Reddy.
Okay, thank you so much, Shrikant, for joining us today. Thank you so much, Parag bhai, Kush, and great to have you in the studio. Wish you a very, very happy Independence Day. And
same to you, and same to all of your viewers. But be careful. I think I would like to say this tomorrow's meeting is very, very crucial in my view between Trump and Putin. I think it will decide the fate of the markets. So very, very careful. If you are holding on to right now, hold for one more day and then take a call.
So that's the thing. It can go either very well or it can go very bad. I doubt these two men are going to walk away with status quo.
Just handshakes.
Just handshakes. Let's hope so. All right. Thank you so much to both of you for speaking with us. Thank you, Shrikant. And I'm welcoming now to the conversation Sandeep Bhatia, Managing Director and Head of Equity India at Macquarie Capital. Sandeep, thank you so much for joining in on our special conversation today. We're tying up celebrations for India's Independence Day with the concept of freedom and financial freedom, and that's what we hope to bring to our viewers. So let's just start with your thoughts on that. What does freedom mean for you? What does financial freedom mean for you?
I think freedom is the choice that one has to live one's life the way one wants to, with the ability and the resources also to develop it, to develop one's own capacities. And financial freedom to me is essentially about knowing what your responsibilities are to yourself, to your family, and to your community, and fulfilling them financially and also by your own service. So there are multiple aspects of freedom and multiple aspects of financial freedom. It's not only about oneself.
Sandeep, before I come to your financial philosophy and your freedom portfolio, what does a freedom portfolio look like? I have to ask you about the big question weighing on markets' mind, and I think across the world, is what's going to happen at this Trump-Putin meet tomorrow. It becomes a huge flashpoint, you think, and could either lead to a solution which then affects India positively or negatively, one way or the other?
I think one event can be seen to be important in the near term, but may not be as important if you take the slightly medium to long term view. My own view, given the two personalities involved and given the entire background of what events have happened, I was just listening to President Trump. He said that even after this meeting, if it goes well, there will be a second meeting in which some European leaders and Zelensky may be there. So all told, this is not the one and final conclusion. It will be too much to build into that one event, especially given the two strong personalities involved here. So I think both President Trump and Putin would probably try to get the max out of each other. And in that kind of a situation is actually not indicative of a good outcome. That's what I would say.
Sandeep, actually, just trying to think of it, if it is a positive outcome, then there will be hope of some good things happening from a tariff perspective for India. But that will be a hope at best, right? We still, I mean, yes, it lays the ground, but not necessarily a done thing. But if it's a negative outcome, then the market will probably be quick to price in the belief that tariffs might actually stay higher. So is the risk reward for this meeting as well skewed towards the downside?
I would agree with you. I think there are multiple aspects to this. I don't know whether this is the right forum to discuss this, but between President Trump and Putin, essentially the question is whether there will be territory swap. So the regions of Ukraine which are currently under Russian control, whether Putin can hand over some of that to Zelensky, and Zelensky has clearly said that there's not going to be a territory swap. So I really don't see any any reason for this kind of a meeting to really succeed. And after that, as far as India is concerned, I think the Russian oil situation and the higher penalties on India is just one reason that these have been put in. I think there are underlying reasons of what happened between India and the US around Operation Sindoor and so on. And those are the real issues rather than the Russian oil import issue, which has actually happened within all the sanction rules. And it was also done with clear approval from the US. So I think there are multiple layers to both parts between Trump, Putin, Zelensky, and between India and the US. So to think that everything will just fall into place overnight, I think is expecting too much.
Sandeep, the other thing is the options. I mean, I'm approaching this completely from how the markets perceive it positively or neutrally or negatively, right? The result of being pushed by the US for countries making pacts with other countries, right? And it's happening across the spectrum. It's not just India, which is now with China, with some of the others, the call between PM Modi and Ukraine, or so on and so forth, or some of the other countries doing that. I mean, how does the market perceive it? Does the market think that, okay, this opens up other avenues for every nation, and therefore the impact of tariff, which was anyways 2% for GDP for India, will not be terrible, save for a few sectors? Does the market look at it that way or not quite?
I think if you look at what the market thinks, one is the near-term flows, which have been holding up the market very well. We all know how the SIPs have performed, and they are at an all-time high as of last month. So that's what holding up the market. As far as earnings are concerned, the market definitely knows that there's earnings disappointment which is coming through for this year. And even despite that, the market is not coming off, essentially because it's a technical liquidity-driven situation. As far as market's own estimate of where GDP is and how growth will be impacted because of the tariffs, I think the worst case scenario will be maybe around 30 to 50 basis points of GDP growth in the near term. But the real issue is not the near term. The real issue is what it does for countries and what it does for India in terms of where it looks for trade and where it looks for its own defense capabilities. So these are actually things which happen over a longer term. To my mind, near term, the market will definitely be driven by flows. Longer term, these issues will need to be emerge with more clarity than they are right now before any real pricing of these events can be done in the market.
The other big factor and the movement, I think, which will be watched very closely is India's greater or larger participation in the BRICS context. You're already seeing that news just a few minutes ago about border trade opening up between India and China, flights now beginning between India and China. That's been happening after a really long time. Of course, the Prime Minister's upcoming visit, etc. How do you see that being digested by the markets as we go along on that path, perhaps?
See, I think the market would like that. Clearly, we don't have to we don't have to forget what India's longer-term geostrategic issues are. We are the only country in the world which has two nuclear neighbors along its land borders, and both of them are hostile, and both of them can collaborate with each other. So these issues are much more longer term. The good thing about China is that it is a large economy, it is a growing economy, and it has a lot that India can gain from trade from China. I think the visa opening up, the flights opening up is also good for tourism for India, which is seen as one sector which can counterbalance the effects of what's happening on the US side. The real issue, I think, for India and for Europe and for China and for Japan, all the large economic blocks of this world, is whether they can evolve into a trading relationship between each other, which is not necessarily driven by what the US has built till now. Now, that's not going to be easy because there was a World Trade Organization, there was a scenario of most favored nations. Most favored nations mean that if I trade with country A and I charge them a certain proportion of duties, the same proportion of duties, same percentage of duties, I'll charge to every other nation. And that means that there's a level playing field as far as trade is concerned. Clearly, what US is doing is creating separate duties for each country. And that is the real challenge. And those are longer term challenges, and those are actually not currently being priced in by the market.
Okay, Sandeep, let's come from the macro to a bit of the here and now. We have a fairly clear picture of what's happened in first quarter for Indian companies. What is your assessment over there? Have there been some good, outstanding kind of numbers, at least in BFSI, that you've liked? We looked at Muthoot today. In the past, HDFC Bank, ICICI Bank have also not been bad at all.
I think BFSI has been okay. Outstanding is maybe a strong word. I wouldn't want to use that, but yes, it's been okay. The real challenge is what's happening in the slowdown on SME side, the portfolio, whether it's generating bad loans. And clearly there are parts of India, in South India, where these issues are real. There is an ongoing slowdown in the SME, MSE side, and that will have a significant impact on portfolios for the rest of the year. So to that extent, I would think the good part is that we'll probably see one more rate cut coming in for India. We would see at least a 50 basis point rate cut coming in for the US in the near term. So the rate cut scenario in the pre-Diwali would be favorable both for India and for the US.
Okay. Pre-Diwali rate cut favorable for India and the US. Any one sector that you think has, that potential right now, Sandeep, before we let you go? We didn't have, which you would add in your freedom portfolio, perhaps?
Yeah, I would think, a longer term, which is if you take a 2-year view, I would actually think that auto sector is good. We are going to be in a low interest rate regime. There's also going to be the pay award for public sector employees. So the government is going to constitute the new pay commission. It will give its award maybe next year, June, July 26. And the payment of it will happen with arrears. And once the central government gives a pay award, it is also followed by state governments. It's also followed by other institutions like schools, which also follow the pay commission award. So there would be a big bump in terms of of arrears and payments of higher salaries going to civil servants and going to state bureaucracies. And that would be very positive for consumption. And with a low interest rate environment, I think actually the auto sector could benefit. It's worth looking at Mahindra, which has done well and would continue to do well. It would also be interesting to look at Hyundai. So these are some of the stocks which could definitely do well over the next 18 to 24 months.
Okay, Sandeep, we'll leave it at that. Thanks so much for taking the time out and being with us. Really appreciate your time. And to you and yours, a very happy Independence Day. That's the view from Sandeep Bhatia. Okay, we're getting you big voices. And on the sidelines of the MK conference, we caught up with Sunil Vachani. He's the executive chairman of Dixon Technologies. Listen in to what he had to say about the company's plans for expansion, collaborations, India's independence, and more.
There's been some turbulence in the recent past, right? The last 1 month, particularly with regards to tariffs in the US. Is this a serious speed bump? Is this something that we as a country tide over, and particularly the sector which you represent?
So I think, these are exciting times and challenging times for us in the industry. Exciting, because we sense that we are sitting on a very large opportunity of making India the next hub for manufacturing of the world. And why we are very confident about this, because we, in this very short period, after PLI was launched, we have created a massive scale for manufacturing the finished products, especially if you look at a product like mobile phones, where there is a substantial capacity that has been created in a very short period of time. And what is happening now is that the industry is working very hard to ensure that a supply chain ecosystem is set up. So we ourselves in Dixon are in the process of setting up plants for camera modules. We've already announced the major stake in a company which is already doing that. We are in the process of setting up a new facility for doing display modules. We are setting up a new facility for doing mechanicals. And we feel that once we have done that, we will take up the value addition to almost 40% in a product like mobile phones, which was hovering around 18%. And no country, to my mind, has done this in such a short period of time.
Sure.
So I think it will be a great thing, done by the industry, and thanks to the government for the proactive policies due to which this has happened. Well, now to talk about the challenges. Well, tariffs are obviously a challenge, but as of now, the way things stand, mobile phones are in the list of exempted categories or exempted products where there is no duty being charged on India or on countries like Vietnam. Yes, China is paying that tax of 20% with the fentanyl tax, which was not exempted. So right now, this is how things stand. But as we speak, this list is likely to be reviewed at the end of August. But we are hopeful that the exemption will continue even beyond that period.
I'll be forced to ask this to you, but sure. in case some of the US majors are forced to review their investment plans into India, if indeed the exports out of made in India products, mobile phones, etc., what have you, does come into effect, does it slow down what otherwise could have been a very nice pace of growth, especially for you, which is like you capture the imagination when it comes to mobile phone value addition. So therefore, This question to you.
So if you look at the hubs, the key hubs for mobile manufacturing is of course China, Vietnam, and now it's India. And we feel that because of the huge advantages that the country offers in terms of a large domestic market, an ecosystem already developed, the government is very keen to promote manufacturing. We feel because of these reasons, India will continue to be one of the major hubs for manufacturing mobile phones. See, let's appreciate that these ecosystems are not very easy to create, right? And besides the two other countries that I talked about, there is no other country which is giving that kind of impetus to mobile manufacturing. So I feel this issue is a temporary issue, and hopefully things will settle down. And once things settle down, I can assure you there's no stopping us.
Got it. Could you, there is so much of talk around how you yourself are trying to partner with big names, getting big names into India for what you just said, a mobile ecosystem. Sure. Can you help us imagine what that could look like? Because for a layman, what she or he is seeing is a company which is manufacturing back-end parts for mobiles one by one, adding on new things. What do you mean when you say that you are trying to create this whole ecosystem?
Yeah. So I think for this ecosystem to be set up in India for the long term, I think there are 4 pillars which are going to be extremely critical. The first pillar is going to be scale, right? So we need very large scale to be globally competitive. And that's what we'll have to focus on as a company, as an industry, and as a country, right? So issues about land allocation, setting up mega factories, those are the things that they're going to come and play. The second issue is going to be supply chain. So as I mentioned, that we cannot be globally competitive if we do not have a strong supply chain within the country. And that work is already on, and I mentioned about a foray into products, components like camera modules and display modules. So it's headed in the right direction. The third issue is going to be on skills, right? Manufacturing is going to be very, very different from what it is now, and I think it's important that we have a large centers for skilling our people to take on the future challenges on digital transformation, on Industry 4.0. And finally, I think as a country and as an industry, again, we'll have to look at designing more and more products. We'll have to emerge as a products nation, and the focus will have to be on, not just on make in India, but designing products in India.
How far away are we from there?
Well, I think we're not very far, and I think a lot has happened in the last 10 years. But like they say, picture abhi baki. I think the journey has just begun.
No, so let me try and rephrase my question.
Sure.
While you may have borrowed some money from your father back in 1993, if I'm not wrong, as I read, and you built out this company back then, but the real impetus probably came in 2016, 17, as the case may be, right?
Yeah.
So the last 10 years journey, does your next 10-year journey, and for you and maybe for the ecosystem, dwarf what's happened in the last 10 years, you reckon?
Sure. I'm often asked this question, that what happened exactly, that how did this change suddenly come about?
Yeah, right? It's a hockey stick, right?
Yeah, absolutely. And I think, whenever this kind of thing happens, the biggest change that happens is the change in the mindset. Right.
Okay.
Almost 15 years back, our Honorable Prime Minister gave this call that, let's make in India, let's make India the hub for manufacturing. And honestly, before that, I used to find it a task, to go and convince people that, we should be manufacturing in India. So I think once that kind of call comes from the top, things change dramatically, because everybody started saying, that tell us what can we do to make sure it happens. Right, and I think that's what happens in companies, right? That call comes from the top, or that at least that vision is set, and then things just fall into place. So I think that's the biggest change. And of course, the policy initiatives have been amazing, and I think Indian entrepreneurs have really risen up to the occasion and have done a tremendous job. Because I remember, going on my road shows during, when the IPO happened, this is about 8 years back, 2017. And the first few meetings weren't great at all. I wasn't able to convince them about the opportunity that existed in electronic manufacturing. So I think that was the biggest challenge that time. But I'm very glad that now we have the interest of our investors. Now there are, I think, more than 6 or 7 companies in our space listed on the stock exchanges, doing very well. They've provided good returns to shareholders, and suddenly, we are able to fill a room whenever you go for investor conferences, like it happened today. So that's a positive thing.
Yeah, most certainly. Well, those guys who missed out in 2017 must be ruining their chances. For the last couple of very quick questions, I know you have a flight to catch.
Yeah.
One, I'm still trying to understand. Maybe it's difficult to answer, in which case tell me so, but could the next 10-year journey dwarf what's happened in the last 10 years? Could it?
Absolutely. See, if you see what has happened in the last 10 years, we've just scratched the surface. Right, the numbers that the global market for electronics is $3 trillion, right? And we are at about 3%, right? $130 billion. So this has just started. So what's going to happen in the next 10 years is going to be transformative.
Got it. One last question, Mr. Vachani, because we're doing this on the eve of Independence Day. India is an entrepreneur-filled country now, a lot of startups, etc. I'm asking you to go into the minds of a Dixon startup founder. Maybe you started in 93, but the real trajectory from 2016.
Yeah.
What's the message that you would give to budding entrepreneurs who kind of look up to people like you and think of how they can make their journey like yours?
Yeah, I think the message is very clear. The next 25 years, 50 years, 100 years belong to India, right?
Okay.
We have a large market. We have large pool of talented people. We have the design skills in India. We have everything going for us. We just need to believe in ourselves. We need to believe in our abilities. We need to empower our people, right? And we've shown that, in factories where we have our Indian operators, and in some factories we have, down south, we have 85% female workforce, right? And they have shown that they're the most productive in the world given the right kind of environment. So empower our people, make a great team, and, just believe in them. And that's it, things are going to happen.
Well, that's Dixon for you, and you need to look no further if you're looking at a manufacturing giant in India. Okay, IdeaForge is one of the company in focus key beneficiaries of India's defense opportunity. Before we get the management in, let's get in Anushi with some details about this company and the outlook ahead. Anushi.
Hi, morning Neeraj. So, defense has remained the story in focus since the last 5 years or so, with a push towards local indigenization along with the exports that we are looking at. Even if you look at the current allocation, 6.8 lakh is the kind of lakh crore is the kind of allocation that we are looking at, representing about 9.5% growth. And this is a number which we've seen steadily increasing over the years. In terms of defense exports, also 23,622 crore was the number that we saw at the end of FY25. The government's target to take this number to 50,000 crore by end of FY 2029 as well. In terms of the top players in the countries as well, USA, China, Russia, India, some of the top countries in respect to whether defense spending is considered. Now, IdeaForge Technologies in particular, the company does essentially it's in the business of manufacturing unmanned aircraft systems, and if you look at the order book, that stood at 145 crore as of June 25. The use case for this is about surveillance, security, patrol, municipal uses that we are looking at. Outlook is particularly interesting considering the emerging emergency procurement plans which have been there, along with more PLI schemes for drone manufacturers in focus going ahead. So that's the overall picture that we are seeing for defense as well as IdeaForge.
Okay, Anushi, let's get in Ankit Mehta, CEO of IdeaForge, on this conversation. And Ankit, to you and the whole team at IdeaForge, a very happy Independence Day, and may the next few years be as lovely as the previous we have been.
Thank you so much, and wishing you all at NDTV the same as well.
Thank you so much. Ankit, I think when people think about the work that you or your peers are doing, the first question that comes to mind is that how does a company like yours maintain the technology edge and leadership as the UAV market matures and technology in some sense becomes ubiquitous for most?
So I think, first of all, it is very, very important that, we need to predict where the market is going to go. We need to find out what is the certainty of what technology is going to come up and what are those areas that we need to invest in, so that we can be future-proofing both our forces and ourselves as a business. And if you look at what we did over the last couple of years or 3 years, looking at what is happening globally in the wartime scenario, we've been developing technologies which are very relevant to a real war-like situation. And those technologies are the ones that are keenly required by our forces as well now. So projecting what the world will need or the customer will need and building for it ahead of time is going to be very important, and that's what's going to differentiate good businesses from normal businesses in this industry as well.
Okay. Now, okay, fair call. So let's assume that all of that happens and you would have thought it through. The other question that comes to mind is how do you see IdeaForge as an entity from where it is right now? And then we'll come to what happens in FY26, of course. But how do you see IdeaForge as an entity right now versus what it could be in FY28, FY29, FY30? Because your civil sector revenue, I believe, rose to what, circa 40% in FY25. It would have been lower earlier. So how does the FY28 IdeaForge look versus what the FY25 IdeaForge was looking?
So I think, in terms of contribution of various segments, I think defense and civil, this push and pull will continue to happen based on, what is the, I would say, emergency as a country as well, and what are the procurements that are currently being planned out by the government of India. Because a lot of civil sector also has a use of technology in drones related to law enforcement and other vectors. So last year, defense procurement was muted, so civil sector was a bigger contributor to our revenue. But if this year the defense procurement again goes up, that contribution could come down as well in the short term. But in the long term, what we are very clear about is that there are going to be three core dominant sectors insofar as drone industry is concerned. There is going to be the segment in defense, which is going to continue to occupy near 50% or 40% of what the overall business is going to be. We will have the civil sector, which is again going to occupy a very similar segment if you look at 27-28. And then there is also the sector of logistics that is going to pick up, because that is a big civil application, and that sector is also going to pick up periodically. And that segment will again start becoming a part of the overall value chain in the drone segment. Eventually, all of these three will be, you can say, roughly equal segments in this industry in the long term. So that's what we are looking at insofar as small drones are concerned. And of course, when the segment of mobility will come, that segment will be a much larger beast in itself.
Got it. Now, I think FY25, and Ankit, correct me if I'm wrong, but there were some demand headwinds, some margin challenges, even as gross margin went up for you, I presume, right? So how does the near term look? Do you iron out a lot of pressing issues in FY26 itself, or do investors need to have a slightly long-term game? Does the gross margin expansion start showing into EBITDA, bottom line numbers, FY26 itself? Is it a slightly long-drawn game? Can you talk about it?
See, I think, we look at overall, when we look at our pipeline, right? We look at what the blended margins on the pipeline could look at, and they continue to be in our expected range in terms of the pipeline itself. But closure from the pipeline is always something which determines the year's performance in as far as margins are concerned. So, from a blended perspective, in the long term, it will average out to the expectation that we've always spoken about. But yes, from a short-term point of view, it will depend on deal to deal, opportunity to opportunity, particularly because some of these heavy opportunities can weigh in heavy on the gross margins as well. So I don't want to give a color today of that. It will entirely depend on what gets shipped out in that period, in that time frame.
Got it.
Ankit, but on a blended basis, we'll be where we are projected.
Got it. Ankit, wishing you all the best for this and more. Thank you so much for taking the time out and speaking to us.
Thank you.
All right. From there to two listings, and the big one, JSW Cement as well as All Time Plastics coming out and listing today. Let's get that special moments for both the companies up on the screen. These are both companies waiting to ring the gong, and eyes out for almost all kind of listings, remember this year, because it is a year which is filled with issuances, primary market issuances and listings, and therefore you watch out for this very special moment for both the companies. Well, so there is a listing. JSW Cement has rung the gong. We should get the prices up as well if we can. And of course, All Time Plastics, the BSE gong about to list as per their count. But this is very, very interesting. So 16% up for All Time Plastics. JSW Cement, with the subscription that they had gotten, well, we didn't expect more, but 3%. So healthy listing for both the companies. Keep both of them in mind. We'll of course talk about them a bit later on in the shows. For now though, we need to slip into a very quick break. Up next, a very special voice and a final word of sorts on consumption, on fashion, on quick commerce, and on the digital ecosystem in India. Coming up, stay tuned.
In 2008, a homegrown idea from Haryana changed the way India eats. From restaurant discovery to doorstep delivery, Zomato's user-friendly app became a daily habit for millions. Today, it competes head-on with global giants like Uber Eats. Zomato's presence extends far beyond India, operating in 23 countries worldwide, from the UAE all the way to the UK. With a brand value crossing $1 billion in 2025 and revenues of $1.2 billion, Zomato proves Indian innovation knows no borders. Built in India, serving the world. This Independence Day, we celebrate brands like Zomato. Brands that are made in India, that are made for the world.
जय जवान, जो मैंने शुरू किया था ये एक्चुअली। मैं दोबारा आया हूँ आप लोग से मिलने के लिए। मुझे बड़ी खुशी है आप देख रहे हैं YouTube पे मेरी फिल्म। वाह क्या बात है, क्या बात है।
देखिए जय जवान मेरे साथ 15 अगस्त को सिर्फ NDTV पर। जय जवान, जय जवान, जय हिंद, जय हिंद।
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside both.
Welcome back. You're watching India Market Open. Quiet day for the markets, but definitely not in a very bearish trend. I think that's what's important as well. Completely flat on the Nifty, given up most of its gains mid-morning. And the focus also on the new listings. Look at a JSW Cement, just completely mirroring what the grey market price was looking at, about 4% up. 3.5–4% up. All-time plastics doing slightly better. But I think one of the stocks that is definitely having a great morning is Muthoot Finance, arguably the winner of the earnings season, as the company has posted stellar numbers. Harsh joining in on what has worked for Muthoot.
Well, zone of its own, frankly, for Q1 FY26, where Muthoot's numbers are concerned. And what's led to this beat? One, your margins, both on a QOQ as well as on a YOY basis, have gone up, and that has aided the numbers. But not just that, they've clocked a 37% AUM growth on a console level, 40% where gold loans is concerned. So that's the other piece that stood out. Operating efficiency also playing out. Your OPEX to top line, OPEX to assets, both have moderated, and that has aided the numbers. You've got credit costs which are controlled. In fact, they've fallen both QOQ as well as YOY. And then you have ROAs which are, wait for it, 7% plus in Q1 of FY26. So a standout set of numbers where Q1 is concerned. Of course, sustainability to be watched out for. Let's look at the standalone numbers in themselves. You look at the way NII has gone up 20% QOQ, 51% YOY, aided by interest expense going up in moderation compared to the interest income. So that one, in terms of the bump up, has been lower, and that's what's driving this number here. Thereafter, you look at operating profit, therefore supporting all of the metrics, and thereafter you look at provisioning, which has come down, which is aiding that PAT line over there. 90% growth where profit after tax is concerned. What you also want to look at is some of the key metrics. Look at the ROAs, they've inched higher. Margins giving you that picture, and the advances yield has also inched higher, which has aided the margin number. So broadly, that's what's really playing out. You also have interest expenses to assets, that's interest expenses to assets, which is typically your cost of funds, and your OPEX to assets. Look at the moderation in OPEX to assets. That's the operating efficiency playing out. And then you have your NPA ratios, which have come off. All of those numbers looking good. That's your growth number, 10% sequential, really very little to complain about when you've got that kind of a number. So what's leading to the beat? One, higher yields, lower cost of funds, lower OPEX to assets, just kind of squeezing all of that together. You've got stellar growth and lower credit cost, all of that aiding the numbers.
Okay, so it's been a good set of numbers, no doubt about it, and you'll hear from the management on Know Your Company this afternoon. at 11:30. So don't forget about that. Naresh will be having a very detailed conversation. Meanwhile, Dheeraj Agarwal joins in. He is MD of Ambit Investment Managers, speaking to us on our theme of financial freedom and how do you build that. Dheeraj, very, very happy to have you on. Wish you a happy Independence Day in advance as we're celebrating it today on NDTV Profit. Markets will be shut tomorrow. And I want to start with this question. We've been asking everyone since this morning. What does freedom mean to you?
What is, sorry?
What does freedom mean to you?
What freedom means for me is where I can do anything which I want, obviously within the realms of the law, without actually worrying whether somebody is watching or whether somebody will stop me from doing what I want to do. I mean, obviously I didn't mean breaking the law. Looks like I've lost connection.
Oh, no, Dheeraj, we can hear you. And yes, we appreciate the fact that you mentioned that without breaking the law. But yeah, please finish your point.
Yeah. So, I mean, that's what freedom is, right? I mean, whether it's financial freedom, whether it's freedom in real life, whether it is freedom in the relationships, I mean, everything. Even within a relationship, what real freedom is, you can do what you want without fear of being judged at all points of time. Obviously, so long as you're faithful, you're moral, and you're dedicated. So that's what freedom means to me.
Yeah. Okay. Dheeraj, you reckon Indian markets will get freedom from all the geopolitical noise around us, or for now that independence is some time away?
I'll break this into two parts, Neeraj. I mean, one is obviously what's happening globally is impacting us, but I think we should also not take our eyes off on what is happening globally or domestically. So even before the current trade wars and the tariffs, etc., started, our economy has been showing signs of slowing down. Our earnings growth has been showing signs of slipping last 3 or 4 quarters. And that is purely domestic, right? I mean, for a variety of reasons, whether consumption is not picking up, job creation has not happened, capex growth is slowing down. That also needs to be addressed. So there are things within your control, there are things which are outside your control. I mean, we can't really control what the US government does. We can just negotiate, put our best foot forward and try to get the best possible deal out of this whole uncertain structure. But I think a lot needs to be done domestically as well to revive the domestic economy. So those are the twin challenges at this point of time.
Dheeraj, when you look at Q1, what are you seeing in terms of the Indian economy and how corporate India is doing? Because the mixed signals there. Some of the data looks good. People are talking about a revival in consumption, etc. But then also stress in certain segments beginning to show?
Actually, the data is not mixed. The data is a downbeat. I mean, we want to see them as mixed, but it's actually downbeat. So Nifty earnings growth for this quarter is just 2.5%. Broad market earnings growth for this quarter is 6% or 6.5%. This is at a 3-year low, both the matrices, right? So we are seeing a lot of commentary where people are talking about a possible consumption revival, possible demand revival, but it's not showing up on numbers yet. So I will color this with a little bit of a positive pinch of salt, that there is a rising expectation and perhaps good reasons to back it, that demand could see revival starting this quarter, right? So there has been tax cuts. Benefit of that is now coming into the hands of the consumer. There has been interest rate cut. It is now slowly filtering down to lower borrowing costs for the borrowers. And a little bit of channel checks that we do is showing some signs of some demand buildup into this festival season. But I think it needs to be very closely watched. As of right now, looking at the last quarter numbers, the numbers are very weak.
The numbers are very weak, but is there an upside you see, Dheeraj? I'm just thinking for the rest of the financial year, if someone wants to, build up at a time of market lows, what do they look at?
So I think, this is what I think we discussed last time when I came on your channel, that the next 2 or 3 years is likely to be a period of very, very high polarization. Earnings, so that there are two kinds of phases markets go through. One is where earnings growth is there in abundance, and second when it's there in scarcity. I think we have entered a phase where earnings growth will be scarce. So a very small percentage of companies will actually be able to deliver above sector, above market earnings numbers. So it's time more for bottom-up stock picking rather than taking a broad brush market calls or broad brush sector calls. Within each sector, it's possible to find companies which are outshining the peers as well as the overall market. So I don't see this trend changing for the next 2 or 3 years. It's going to be a tough market. It's going to be a completely stock pickers market. And I think the narrative-based or headline-based market time period is perhaps over.
Got it. Okay. Dheeraj, so do you, okay, let's not try and do that Himalayan pink salt garnish to make it look good. Let's assume you calling it what it is. Would you reckon, therefore, that the markets could stay subdued with a significant downward bias in the near term unless geopolitics improves or earnings improve? Either of the two improve and show visible signs.
So I will answer your more concrete question first. Is easier to answer. Do I see a meaningful downward bias in the near term? The answer is no.
No. Okay.
The reason for that is, for now, market has digested all negative news, right? So, see, markets always in the near term, markets always tend to react a little bit to what is in the price. Can it become worse or can it become better? So, what's in the price is very clear. 50% tariff on us is in the price. At 2.5% EPS growth in the March quarter, when Nifty is already in the price. The result season is almost getting over, so everybody knows the number. What is perhaps not in the price and where we could see some positive surprise in the next few months, if the festival demand is even slightly better than what the numbers have been showing in the last 2 quarters, and this 50% tariff imposition comes down. I mean, I think it will. I think everybody knows 50 is too high and unsustainable. How much will it come down? You don't know. But at the margin, that news is also likely to improve. So near term, too much of downside, I don't see. Possible rally can happen if both these things play out. I worry a little bit more from a medium term point of view. What happens in 2026 and 2027? There are 2 or 3 things which are very, very clear. Whatever is happening to global trade right now has only one implication, that from a longer term point of view, global trade will slow down, export growth will slow down, it will have an impact on the global economy. And that will impact domestic economy as well. So that's in the backdrop, and in the interim, if the domestic cycle does not see a strong revival, I think 26 could be tough.
26 could be tough. Okay. On that somber note, thank you so much for speaking with us, Dheeraj Agarwal. They're joining as a big market voice when markets are completely middling. But as we celebrate India's independence, it's a long journey, 79 years. We are today on NDTV Profit showcasing companies and ideas that have been at the cutting edge of highlighting innovation in India. And the next person that we have on the show, and Harsh, you will be speaking to Sanjeev Bhikchandani, really embodies this, right? The ability to pick out winners where no one saw them. And Zomato is the most celebrated example, but there are many more.
There are many more. There is, of course, PB Fintech in that sense. So that's the other listed one which is there. But also the conviction. I mean, my simple memory is his conversation with us and Pankaj Morarka, wherein Zomato, or Eternal as it's now called, traded at 40 and nobody believed that, oh, kuch hoga. And then he brought out conviction and saying that, this is how the landscape would look like. And it's starting to shape up that way.
Yeah, father to some fantastic startups. And continues to do that. So it's going to be an interesting conversation. Let me bring on board Executive Vice Chairman, founder of InfoEdge, Sanjeev Bhikchandani. So absolute pleasure having you here today and speaking with you. I want to start off with the theme of Viksit Bharat. We're looking at another 22 years in terms of a target to become Viksit. What does India Inc. need to enable this to actually happen? What does the startup ecosystem need, and what does India Inc. need?
I think not just the startups, for all industry, for all, including SMEs, for the common citizen, I think the need of the hour is deregulation. And I'm delighted that the government has set up a deregulation commission. It was announced in the budget earlier this year. I do hope, it has a sweeping mandate. I do hope the states governments play ball. And I do hope deregulation is done with earnestness and is done with depth and intensity. Because I think deregulation alone, removal of Inspector Raj alone, can give us 2% additional growth. And if we want to get to Viksit Bharat by 2047, we need to be growing at 9-10%. So deregulation alone can lift growth from 6.5% to 8.5% in my view. So this is a very important agenda. At the same time, what you want to be done to get to Viksit Bharat by 2047, by the time India is 100 years since independence, I think is a big focus on education. Right? The right kind of education, the right quality of education for large numbers of people. I think India has done a great job of higher education institutions, whether it's engineering colleges or it's management schools or others. And it is the products of these higher education institutions that went on to form India's 300 million, 400 million strong middle class, which essentially is the talent pool which drives a lot of India's growth. Now, but there are 800 million more who don't have access to that education and who are poor. So if you can open the ladder of opportunity to those 800 million people by massively scaling up quality education at the school level and then at the college level with relevant knowledge and skills, I think it'll make a huge difference to this country. Then, of course, there is investment in infrastructure, hard infrastructure. The government is doing a good job of it. It needs to continue. I think in digital India, I think the digitization of India has proved to be a great lubricant and catalyst. And that is something which will be leveraged even more. I think 900 million smartphones is good. I think the kind of digital public infrastructure we have got is excellent. We need to do more of it. So you do all of this, and then of course there's whole move towards technology and investing in deep tech and AI. I think India can leapfrog and become a technology nation. We have the manpower. We have enough organizations and companies. We have government organizations and government departments that are doing a good job. So we need to have this massive move towards deep tech.
So you've given us a great vision. Let's go granular. For the millennial, for the Gen Z entrepreneur, where are the largest opportunities going to come from over the next decade?
A country of 1.4 billion people, and the country the geographically size and diversity of India, there are opportunities everywhere. It's not one or two sectors. It's every sector, every geography, everywhere there are opportunities. You just have to be the right kind of person to spot them, to take action on them, and then do something about them. So but what we are seeing is AI is going everywhere. I think that is pretty clear. We are now seeing the emergence of genuine deep tech innovation in India. I think that is momentum that needs to be capitalized upon and back. We are seeing risk capital, Indian coming in. I mean, it has come in already, but we need more and more of it. Venture capital, a lot of it is overseas, but now we are seeing, risk capital coming in from India. I think the government of India in 2016 set up the Fund of Funds for Startups. That was a big move, 10,000 crores. And the Indian VC industry got a shot in the arm. The government has sanctioned another 10,000 crores. And that is going to give it further boost. In addition, the money that will come back from the earlier VC funds from the Fund of Funds 1, that will be replowed back into. So I think many good things are happening. We have to make sure that we don't do the wrong things and keep on doing the right things.
Okay, so with regard to the large human capital that needs some harnessing, what's the impact of AI going to be on them, on the skill development topic or subject? And is it a private sector opportunity or more a government-driven opportunity?
I think the government will set the framework. It will set the regulation. The government fund of funds for startups will actually back some of these other VC funds that will go on to invest in AI startups. I think some of the infrastructure, right, where you're trying to build your own LLMs in India, some of that will need to be backed by the government. So just as, UPI was created by the government, but now everybody's using it. And there are private organizations that have come up on UPI. AI will be roughly similar.
Right, sir. So risks, and there are plenty of them. One is global geopolitical landscape. That's fast changing. Human capital, we just spoke about that a bit. How should India adapt to some of these risks in this world?
Start off with some overall framework of policies, but ultimately it's the micro that matters. Every company has to adapt, has to, find its way, figure it out. Okay. And as far as tariffs are concerned, look, I think it's temporary. There will be an agreement. It may take a month, it may take 6 months. I do not know, but there will be an agreement. It'll hopefully be a fair agreement. But because India is way too important globally and to America for the US to afford India turning not so not so friendly to the US, right? Especially given the geopolitical situation with China that the US is facing. This is just one president. Presidents will come, presidents will go. Countries go on, hopefully forever.
Okay, so thank you so much. It's been a pleasure speaking to you today and wishing you and the entire team a very, very happy Independence Day. On that note, great insights coming in, as always is when you're speaking to Mr. Vikchandani. But as we draw the curtains on India Market Open before this long weekend, Thalaivar is back and the nation is ready to celebrate this Independence Day weekend, the long weekend, with a Rajinikanth movie. Marks his golden jubilee in cinema as well, 50 years since his debut in 1975, and this is his 171st film, Coolie, which is storming into 5,000 theatres worldwide with a jaw-dropping 100 crore already made in advance bookings. Let's toss it across to our colleague on ground, Sam Daniel, who's right in the electrifying epicenter of Rajinikanth's latest cinematic tsunami. Watch this special report. We'll be right back on the other side with Ask Profit.
It's a big day for fans of superstar Rajinikanth. In a sense, Coolie Day, as his film Coolie is set to release across Tamil Nadu and around the world. It's also special because it's the golden jubilee year for the superstar. And with me, Ravindran, thank you very much for your time. What makes first day, first show of Rajinikanth special?
It's always been special. It's superstar's film. It's always been special. I'm coming from childhood. I used to come with my father. Now I'm coming alone. So it's like he's an evergreen star. His aura is everywhere.
A power-packed lineup of stars in this film, from Rajinikanth, Amir Khan, Satyaraj, Shruti Hassan.
There will be power-packed stars. We only come for a superstar. That's it. That's it.
Did you like the music?
Yeah, Anirudh has always given his best, absolute best to superstar. It's been the 5th film for him. So we thought Hukum cannot be replaced, and he came up with Powerhouse. So it's for the Powerhouse. You know what, right?
What's that clicks with people of all generations when it comes to Rajinikanth?
So growing up watching his movies was, something which I'm attached to. My dad was a Rajinikanth fan, and I grew up watching his movies, carrying his style and all sorts of his attitude. So I feel always good to be here.
Lokesh Kanagaraj's first film with Rajinikanth, will it be Rajinikanth film or Lokesh's film?
It's low-key universe. It's always low-key. And it will be a proper Rajinikanth film too, fans as usual it. And we are looking for as 1,000 crore box office. as a pan-India film.
I think the biggest challenge for Loki would be to outdo Karthik Subraj as a fanboy. So I think what Karthik Subraj has done in Peta is like really outstanding, and we're expecting massive work here. We actually traveled out of state, like we're from Karnataka, Bangalore. We've come here to watch it with the fans and celebrate it with the fans.
Bangalore. We have come all the way from Bangalore just to witness the celebrations in Rohini theatres. What makes the frenzy special in Chennai? The vibe.
It's the fans.
Fans vibe.
So Rohini is fans' fort always. Rohini has the best celebration ever in South Indian theatres. So Rohini is the best place. We just came from Bangalore to just watch தலைவர் film. Let's go watch it.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग। जब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
जय जवान, जो मैंने शुरू किया था ये एक्चुअली, मैं दोबारा आया हूँ आप लोग से मिलने के लिए। मुझे बड़ी खुशी है आप देख रहे हैं यूट्यूब पे मेरी फिल्म। वाह क्या बात है, क्या बात है।
जय जवान मेरे साथ 15 अगस्त को सिर्फ NDTV पर। जय जवान, जय जवान, जय हिंद, जय हिंद।
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
Hi, thanks so much for joining in and wishing you and your families a very, very happy Independence Day from all of us here at NDTV Profit in advance, of course. And we're asking you today what you think freedom means to you. And also, we're asking you what your definition of a freedom portfolio is. Before we get to more details on that, I want to ask Mahima. Mahima, good morning.
Good morning.
What does freedom mean to you?
Freedom in the sense financial freedom?
Yes.
Okay, so financial freedom, according to me, should be, shopping without tax, probably seeing the the price tag. But jokes apart, financial freedom is, a figure probably where I reach and I feel that, this is sufficient for me to at least, retire with a corpus that I can retire with peacefully and, live the life that I've been living so far.
They say 25 times your current expenses, annual expenses, is what you need to have in order to declare yourself financially free. And by the way, for me, and nobody asked me, I'm just going to say it.
Okay.
Financial freedom for me means the ability to choose what to do with my time. So let us know in the comment section what you think financial freedom means to you, and also share your definition, 3 or 4 stocks that you think should be in a freedom portfolio. This is something that will get you to that mark of financial freedom, and we'll discuss with our experts what they think about your choices and whether they would suggest any changes to that. Let's take a look at where the markets are this morning, and it's a little bit cautious, a little bit muted. Gains are there on the screen clearly, 0.2% for the benchmark Nifty 50, and the broader markets not doing too badly at this point. You have the Midcap index is trading with just about flat. You have the small cap index just about 0.1% lower, and this is par for the course. The reason why this is normal and this is expected is because there's this big meeting that is scheduled to take place at the end of the week between Donald Trump and Vladimir Putin, and this could determine the near-term course for the markets, not just here in India but globally, because if it does mean an end to the war with Ukraine, it has implications for oil, it has implications for us here in India, because seemingly the tariff pressure that has been applied to India is on account of the pressure that Donald Trump seems to be wanting to apply on Russia. At least that's the interpretation as things stand right now. You have a little time to think about what your freedom portfolio should look like. Before we do that though, and before we speak about that, let me go across to the management of Samvardhana Motherson to find out what they think about their results in the first quarter.
Let me first, start off in this particular quarter. We had a couple of issues for the auto industry as a whole. One was, of course, on US tariffs, and the other one was on rare earth minerals. Now, let me start off first with tariffs, because we had spoken in the past as well. You have already a local manufacturing in the US, as well as some which are compliant under the USMCA. So you mentioned in your presentation also limited impact. Going forward, would these facilities be suffice for you to have any kind of revenue to be impacted, or do you see that these facilities should be enough and you see minimal impact of tariffs, if any, at the moment?
So if I start, thank you very much for hosting us on your show today. As far as Motherson is concerned, we have always been globally local. So our facilities are in the same geographies where our customers are. And in that sense, many of our facilities are in United States itself, and the rest of them are in Mexico and around, which are our products are USMCA compliant. So we do believe that it is a very big positive for us to be in the same geography. And as we move into the future, it should give us even more opportunities.
In terms of rare earth minerals, so if I can just squeeze in that question as well. For OEMs, we are seeing that currently there is ongoing conversation with CM, and that conversation is happening with the government, with the intergovernmental ministries, with China as well. Specifically for do you actually use rare earth minerals in sensors or any other products which you have, and how are you navigating this current shortage and challenge?
We actually don't use much of rare earth in our products. So if at all there is an impact, there's an indirect impact on us. There is some portion that obviously has to get rejigged. So from a customer perspective, I guess they have had to figure out many other alternate supply chains in order to cater to the needs that exist. But there is no direct impact on us in our product lines at least.
Let me just get into the business a bit, because we've seen some kind of margin impact on a couple of your business verticals. The modular business was one of them. The other ones in the emerging businesses as well. Could you talk us through what was that the impact in this particular quarter?
So actually, this quarter has been a fairly volatile one with tariff uncertainty at one end, geopolitical issues at the other end, to powertrain challenges in terms of what is going to sell, what is not going to sell, and so on and so forth. So it's been the best said is work in progress kind of a quarter. I think where things stand, we've been able to show a great degree of resilience versus the volatility that has surrounded us. So if you look at from a revenue front, we continue to grow. Profitability has come off a little bit, partly on account of front-ending of some of these costs. So some of the tariff-related cost, for example, is already embedded in our Q1. Which will be passed through as we discuss the agreements with the customer with a lag into the ensuing quarters. In April, we had also announced transformative measures to reduce our cost block in Europe by around about 50 odd million. That part of that cost has also got embedded into this quarter. So 14 odd million has been shown as exceptional cost in this quarter, 136 odd crores. In addition, I think the whole geopolitical situation resulted in a fair amount of volatility on the forex side, which was somewhat unanticipated. And hence that's also caused nearly a 90 crore impact on our bottom line. But all in all, I think from an action step perspective, the transformative measures should aid us in showcasing a much better performance as we go through the rest of the year, because our cost structures will then start getting aligned with the volume trajectory in the European side of the business. On top of it, I think the forex slash seems like a one-off, which should automatically ease out again as we go through the rest of the year. Tariff, as I said, are claims which, as part of the agreements with the customer, will also get claimed during the rest of the year. New greenfields that we had announced and which commenced, for which there are startup costs, will also ease out as we go through the rest of the year, as the greenfields ramp up, especially on areas like consumer electronics. And then, the new M&As that we have done in the last year, plus the recent one, Atsumi Tech, which has got assimilated in this quarter, as some of those integration benefits kick in. I think that should also aid profitability as we move through the rest of the year. So all in all, I think hopefully this is on a reported basis the lowest quarter in this financial year, and here onward we should be able to see improvement here on.
All right, so that's the management of Samvardhana Motherson, and we've given you plenty of time to think about what should go into your Freedom portfolio. If you're tuning in for the first time, the way that you can get in touch with us, the number on the top of the screen is where you can send us a message. On the bottom of the screen is where you can call us. We'd love to hear your voice today, and we'd love to wish you a happy Independence Day, with speaking on the phone. Let me introduce our experts for the day. We've got Aditya Agarwala, who's a head of research and investments at Invest4Edu, and Shahina Mukaddam, who's an independent market expert. Wish you and your families a very, very happy Independence Day in advance to the both of you. And I want to hear what you think should go into a Freedom portfolio, but we'll reserve it to the end of the show. Before the rapid fire round, we'll ask you that, and our viewers can take that as well. We've been asking people what they think should go into a Freedom portfolio, and let me start with the first response that we've gotten. And this is from this is from, let me just try and get the name. It's Hemendra Nanavati who's writing in, and he's got Vishal Megamart, Enviro Infra, and Indigene. And Shahina, I want to come to you about these choices and ask you what you think about them.
Well, I think these are all recently listed companies. So I would say that in my view, if you get into recently listed companies to some extent, you run the risk for the first couple of months till we start seeing numbers. So, but I think of the three, I would still see Vishal Megamart being India centric. I think it could do well over the next medium to longer term. So among the three, I think I would go with that, but I have limited information to give a fundamental call.
Okay. All right. We've got our next question then from Sanjeev, who is writing us from Bengaluru. He's asking about Tanla platforms. He's got around 100 shares bought at 665 a piece and wants to know if he can continue to hold or sell off the remaining odd shares. Aditya, hi. A very good morning to you and a very happy Independence Day as well. What is your view with regards to where Tanla platform stands?
Hi, Mahima. Morning, Alex. Good morning, and wish you both happy Independence Day in advance, and to all the viewers of NDTV as well. Talking about Tanla Solutions, not really something is happening there. Stock has constantly been in a downward spiral, making lower lows, lower highs. I don't see too much of a relief rally coming into the stock or any kind of a bottom formation just yet in the stock. So my take on Tanla Solution is it's better to exit the stock, book out partial losses that you have, that you're facing in the stock, and get into some better companies right now. And since we're talking about freedom stocks, it's also time to get yourself freed from the stocks which have been stuck in your portfolio for years and years, and maybe allocate that money to stocks which will really give you financial freedom in the coming times.
All right, we've got our first caller of the day, Arvind. उत्तर प्रदेश से हमें कॉल कर रहे हैं। अरविंद जी नमस्कार और हैप्पी इंडिपेंडेंस डे, स्वतंत्रता दिवस के लिए बहुत बहुत शुभकामनाएं। व्हाट इज योर क्वेश्चन, आपका सवाल क्या है?
थैंक यू सर। आपको भी, आपकी पूरी टीम को भी स्वतंत्रता दिवस की हार्दिक बधाइयाँ सर। मेरा सर सिंपल सा एक सवाल है, मुझे जो ऐसा लगता है कि 3 सेक्टर्स हैं जो आने वाले 10 साल में अच्छा परफॉर्म कर सकते हैं। मैं इस पर पूछना चाह रहा था ये। एक पावर एंड इक्विपमेंट सेक्टर है जो मुझे लगता है अच्छा परफॉर्म कर सकता है। एक एएमसी का जो बिजनेस है, एसेट मैनेजमेंट कंपनियों का वो, और न्यूक्लियर वेपन्स बनाने वाली कंपनियां जो मुझे लगता है अच्छा परफॉर्म है।
पर ऐसे न्यूक्लियर वेपन्स बनाने वाली कंपनीज तो है नहीं, मिसाइल्स बनाने वाली कंपनीज तो है।
बिल्कुल बिल्कुल सर, वो तो है, पर जैसे कि आपका जो उसके जो जैसे कि आपका बालचंद इंडस्ट्रीज हो गया, एक इस टाइप की कंपनियां हैं जो कि उस लाइन में नहीं है पूरी तरह से, पर उसके लिए इक्विपमेंट्स वगैरह बनाती है बाकायदा, क्योंकि मुझे लगता है न्यूक्लियर वेपन्स की बहुत ज्यादा जरूरत पड़ेगी। हर कंट्री को अपने को बचाने के लिए नीड होगी इसकी आने वाले 10-15 साल के बाद। प्रूव करना पड़ेगा हर कंट्री को कि हम पावरफुल है। तो आप न्यूक्लियर के ही थ्रू प्रूव कर सकते हैं कि आप पावरफुल है। मेरा ऐसा मानना है।
तो इन सेक्टर्स में कौन कौन से स्टॉक्स आपको लेने चाहिए, ये सवाल है आपका?
हाँ, मेरा ये सवाल है। और सर एक चीज मैं मतलब एनडीटीवी प्रॉफिट को मैं करीबन पिछले 10 साल से फॉलो कर रहा हूँ, 2018 के आसपास से। तो मेरे को बहुत अच्छा लगा, पर मैंने एक चीज जो सीखी है आपके चैनल से, और मैं ये बताना चाहूंगा, कोई भी पर्सन जो व्यू कर रहा है वो कभी भी कोई भी स्टॉक बाय करता है तो पहले देखे कि वो स्टॉक 20 ईएमए के ऊपर है कि नहीं है, या 50 ईएमए के ऊपर है कि नहीं है, तभी स्टॉक को बाय करने बढ़ना बाय रहे। मेरा ऐसा सजेशन है। बाकी सब लॉन्ग टर्म इन्वेस्टिंग वगैरह तो वो अलग चीज होती है, पर पहले देख ले जो हमारा 50 ईएमए तो होना ही चाहिए। ईएमए के ऊपर है तो हमें बाय करना चाहिए, वरना नहीं करना चाहिए।
आपकी जो सलाह है वो बहुत इंपॉर्टेंट है, और वो मैं आदित्य जी से भी सवाल करूंगा कि ये कैसे रीड करें, मगर उससे पहले मैं शाइना जी से पूछना चाहूँगा कि इन सेक्टर्स में क्या लेना चाहिए। पावर इक्विपमेंट स्पेस, AMCs विच इज़ एन इंटरेस्टिंग पिक, एंड डिफेंस। मैं ब्रॉडली आपको डिफेंस के बारे में पूछूंगा, क्योंकि स्पेसिफिकली मेरे हिसाब से न्यूक्लियर वेपन्स में कोई डायरेक्ट प्ले मुझे नहीं पता क्या है। आई गेस मिसाइल टेक्नोलॉजी यू कैन टॉक अबाउट।
Happy Independence Day to you and your viewers also the investor। बहुत सही सवाल पूछा उन्होंने, एंड आई थिंक ये टाइम पे हमको डोमेस्टिक प्लेस पे ही ज्यादा फोकस करना है, बिकॉज ग्लोबल थोड़ा अनसर्टेनिटी है इन टर्म्स ऑफ टैरिफ्स कैसे प्ले आउट करेगा, एंड डिफेंस इज टॉप ऑफ द लाइन। आई थिंक डिफेंस, फाइनेंस, ये दो सेक्टर्स, पावर सेक्टर ऑल्सो इट गिव्स यू एन एंट्री इनटू द लॉन्ग टर्म डिमांड जो इंडिया में हमको दिखेगा ओवर द लॉन्ग टर्म। डिफेंस में ऑफ कोर्स जो लार्ज कंपनीज है, BEL, HAL, यहाँ पर आप मेरे हिसाब से अगर आप लॉन्ग टर्म के लिए होल्डिंग करेंगे तो यहाँ पर रिटर्न मिलता है. Also, you can look at some small plays, niche plays that actually can give you a good return in the long term. जैसे अगर आप Zen Technologies देख लो या Cyan DLM देख लो. These are black horses which actually can give you a good return in your portfolio for the long term, लेकिन risky है थोड़ा. Finance में I think ये economy में you definitely need to be and their domestic plays also large. जैसे आप ICICI बैंक देख लो, Federal Bank देख लो. So to that extent, HDFC Bank, you can be in that. And the last sector जो power का जो पूछ रहे हैं, and I think वहाँ पे transmission of power, वहाँ पर अच्छा growth होना चाहिए. मतलब we are going to see good investments ये sector में आने के. And nuclear का जो है वहाँ पर भी जो investment होगा वो भी काफी होगा. उसमें आप टाटा पावर देख सकते हैं. Valuations at current levels बहुत महंगा नहीं है. You can look at Adani Power also. I think to that extent, they have got good plans going forward. Energy also वहाँ पर जो transmission के वो जो डाल रहे हैं, not at current levels but at dips because थोड़ा महंगा है as of current levels. So you can look at this, make a portfolio of some of these stocks and then hold it for the medium to longer term.
All right, Shaina, thank you so much for that comprehensive answer. I hope, Arvind, that answers your query. We've got our next question from Rajesh, who's writing us from Kashmir. He said that his freedom portfolio will consist of Infosys, Lodha, as well as Adani Green. So Macrotech developers, that's Lodha as well. But his question is on Infosys from the three of these. He's bought Infosys at 1452 a piece, and he's holding 90 odd shares. Wants to know a 3 to 6 months view on this counter. Aditya, I'll come to you on this one. What are your views with respect to where charts are concerned for Infosys?
Instantly, I don't see too much of a bump up in the stock, especially the large cap IT names. But the interesting thing is all these stocks are trying to form a base, Mahima. And my sense is give it at least a month or so, and you will see a good run up in most of these large cap IT names, be it Infosys, be it TCS or an HCL Tech. I would recommend continue to hold on to the stock, place a stop loss somewhere around 1350 to about 1360 on the downside, and give it some time. Let these stocks form a decent base, and then you will see a sharp run up in these stocks as well. So for a target of 1700 and 1900 from medium to longer term time frame, I would recommend continue to hold, because there is no momentum. You won't see any immediate upside in these stocks. But yes, once a base is formed, you will definitely see a run up in most of these large cap IT names.
Okay, all right. So that's with regards to where Infosys stands. We've got our next question then. Okay, we'll take up the next caller. Mahindra is calling us from Ahmedabad. Mahindra, hi, a very good morning to you. How can we help you today?
And happy Independence Day. Good morning and happy Independence Day.
Happy Independence Day to you too.
Yes, I would like to know your advice on Natco Pharma. I have 200 shares at 905.
Okay. And time period, what is the time period that you're looking at to continue to remain invested in this counter?
9 to 12 months.
9 to 12 months. Okay, so you want a technical view on this one, correct?
Yes.
Okay, Mahindra, I got your question and I'll take this up with Aditya once again. Aditya, your view on Natco Pharma with respect to where charts are concerned?
A bit of a correction that I see on the stock. On the downside, can test levels of 810 to 800. I would recommend continue to hold with these stop losses of 810 to about 800. Once it crosses 950 odd levels, then you will see a decent run up in the stock to levels of 1100 to about 1200. So I would recommend hold, place a stop loss somewhere around 810 and look for targets of 1050 to about 1200 in a medium term time frame.
Muiz has got the next question. He's listed out 4 stocks and he's asking, out of these, which is the best pick for the next 10 years? And this one's for you, Shaina. He's got Aditya Birla Sun Life AMC, Nippon AMC, so 2 AMC companies, Stride Pharma, and EID Parry. Would you pick any of these, or would you pick from outside of this list to say that you should buy this particular stock instead of all of these?
I would pick two from these 4. In addition, of course, to the other stocks that I mentioned earlier. I think EID Parry, it came up with fantastic numbers, and also it's got its holding in Coromandel Fertilizers. So it's really India specific. It's doing well. and in terms of valuations also is pretty attractive. Aditya Birla Capital, AMC, I think there also, there is a lot of value for the long term, both as the overall sector is also growing, as well as I think in terms of valuation, they're quite reasonably priced. So I would say these two, in addition to some of the other stocks I spoke about earlier.
Okay, all right. So hope that answers your question, Muiz. Our next caller is from Hyderabad. Rajmohan, thanks so much for calling us and happy Independence Day. How can we help you today?
Hello.
Hi, Rajmohan. We can hear you. Happy Independence Day. How can we help you today?
Sir. I'm holding Mahindra and Mahindra 50 shares.
Okay.
I have bought at 1600, 100 shares, and I sold at 2850 shares. Now I'm holding 50 shares.
Okay.
Shall I hold or shall I keep for long term?
Okay. I got your question. China, question for you. Mahindra and Mahindra, a lot of people looking at this favorably from the auto pack and saying that it is one stock that is still firing on all cylinders. The tailwinds exist. If the monsoons continue as they have been for another few weeks, then you can possibly look at a rural consumption story picking up. Tractor sales will look good, and certain pockets also utility vehicles. So would you say this is a hold for the long term, add more the current price?
Yeah, it's a hold for the long term. You can add more the current price also. They're doing well in tractors also, as well as, in fact, in the LCV segment also, they are likely to do pretty well through the acquisition of SML Isuzu. So, they are doing well across the sectors. The only, across all verticals, the only issue is the availability, if at all, in their EV segment for, the rare earth materials and the magnets that are required for them for their production. Let us hope that India and China can reach a, agreement as to how we can cooperate with each other to, benefit each other's economy. So I would say, given that negative overhang, M&M could be a good bet, and especially that they don't have much exposure to the US market. So whatever happens on the tariff fronts really doesn't matter too much to M&M.
Okay, all right. So that's with regards to where M&M stands. But viewers, it's time to slip into a very short break. But we'll be right back answering all your queries on the other side. So do stay tuned.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियाँ आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
जय जवान, जो मैंने शुरू किया था ये एक्चुअली, मैं मैं दोबारा आया हूँ आप लोग से मिलने के लिए। मुझे बड़ी खुशी है आप देख रहे हैं YouTube पे मेरी फिल्म। वाह क्या बात है, क्या बात है।
देखिए जय जवान मेरे साथ 15 अगस्त को सिर्फ NDTV पर। जय जवान, जय जवान, जय हिंद, जय हिंद।
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and Welcome back. You're watching Ask Profit, a show that gets all your stock-related queries answered. For viewers who are just tuning in, you can either call us or WhatsApp us on the numbers that will be flashing on your screen in a bit. But we've got our next question from Nivashini. By the way, I really like your name, Nivashini, if you're hearing us. And her freedom portfolio consists of ITC, Zydus Life Sciences, NMDC, as well as HAL. And she wants a view specifically on NMDC as well. But Shaina, I'll come to you on this one. Amongst these four, which one would you prefer the most? And of course, your view on NMDC.
See, for the long term, I will still go HAL, which is actually the valuations are expensive. There was some bit of disappointment in first quarter. But there, I think there is no issue in terms of the order book, no issue in terms of how they're going to perform over the longer term. So yes, if you're a retail investor holding for the long term, not trading very often, that could be the top pick. ITC, of course, in terms of valuation, I think in the FMCG space, it's in agri also. I think that's another stock, very high dividend paying. So that's another stock that one can keep in your long-term portfolio. And I think Zydus, to some extent, we may have to see how the tariff issues work out. So I would prefer holding these the other two stocks for the long term if you're buying as of now. The rest of the two stocks, you could look at dips.
All right, we've got Puneet Saxena who's writing in from Ghaziabad. Namaskar, Puneet, and he's asking about Tata Power. Aditya, the question is for you. 3 months is the time frame that he has in mind, and what is the kind of target that he can expect in that time frame? Should he go ahead and buy at this point?
If he's looking for a very short-term time horizon, Alex, no, I wouldn't say that, because it's a long consolidation that the stock is going through, and that is likely to continue for some more time, at least for at least a month or so. So 415 on the upside is a hurdle, on the downside 370 is a good support, and stock has been oscillating in this zone for some time now. My sense is, if you're looking to trade in this, then no, but if you're looking for an investment opportunity, definitely these are compelling levels. Risk to reward is in favor of going long.
Okay, all right. So that's it with regards to where Tata Power stands. We've got our next question from Narasimha Reddy, who is writing us from Hyderabad. His question is on Coal India and wants to know from a longer term perspective if he can continue to hold. He's got 500 shares in his portfolio at a price of 385. Shaina, your view on Coal India?
Yeah, he can continue to hold at current levels. In my view, in terms of dividend play, it's a good dividend play, as well as I would say that they are increasing their production. So to some extent, I think there could be a support to the profitability also going forward. For the shorter term, yeah, he could see some bit of consolidation, but I think you can hold it for the medium to longer term.
Okay, Coal India as a hold for the medium to long term, it's done okay over the last 6 months, and if I remember correctly, really the challenge that they have is about production and hitting their targets, which they didn't manage to do in FY25. The question is whether they'll be able to do so in the current financial year. We've got a caller from Noida, and Ayush is calling us. Ayush, namaskar. How can we help you today?
Yeah, very good morning, sir.
Good morning.
So actually PC shares.
Okay.
And 1,000 share I have at the price of 295.
Okay.
And I'm looking it for short term, like expectedly, I'm looking for the target of 350, 360 if it is going to reach.
In what time frame?
Within 3 months.
Okay, so that's considerable upside that you're looking at. Let me ask Aditya if this is possible. NTPC 350 in the next 3 months. Is that possible?
Very much possible, Alex. A good buy. Continue to hold. Trail your stop losses is what I would strongly recommend, since you're sitting on profits. It's very important because you're trading the stock. Trail your stop losses, bring it above cost, and wait it out. My sense is it should ideally cross 350 also. I'm looking at a target of 360 in about a quarter's time.
Okay, all right. Okay, we've got our next question then from Bala Subramanian, who's writing us from Bengaluru. He says that his freedom portfolio consists of stocks like SBI India, TVS Motors as well as TCS, and his question is that if he can buy Tata Motors at the current level from a longer term perspective, let's say 2 to 3 years is what he's asking. Shaina, I'll come to you on this. Of course, your view on Tata Motors from the next 2 to 3 year perspective, and SBI, TVS Motors as well as TCS.
Yeah, so SBI has done pretty well, both in terms of financial performance that they showed in the quarter, as well as the prospects remain strong. They have raised a lot of money, 25,000 crores, which will support growth going forward. So I think SBI should do well in the current year. You have TVS Motors, which is slightly expensive. There they could face some bit of problems in terms of raw materials. So I think it is a decent hold for the long term. If you want to add, it has to be at lower levels. And TCS, I would say as of now, avoid, because we have some bit of uncertainty that is coming out of the US market. And in terms of growth, in terms of revenue growth, there is some bit of uncertainty for the next 1 odd year. So I would say that you could relook at TVS Motors and TCS maybe a couple of quarters down the line to add to your portfolio. As far as Tata Motors go, there also is a similar story. I think it's better to look at it a couple of quarters down the line. While it is a great story for the long term, it will suffer from the similar issues of procurement of some of the important components, and as well as the tariffs which are affecting them both in US as well as the UK based tariffs. So I would say buy it at dips and over the real, and look at it in the next couple of quarters, not as of now.
Okay, all right. So that's a comprehensive answer. Tushar Bingarla is asking the next question, writing from Jaipur, and he also has a question on Coal India. By the way, Tushar, this has already been answered by Shaina. She spoke about the fact that it should be a hold based on the fundamentals. 433 is the buy price though, and he's asking, because he's incurring a loss at the moment, should he deploy at the current level? Aditya, on the charts, is that an option that he should consider?
Yeah, Alex, I don't think it's a bad idea to deploy some money at current levels, and even if it declines to 375 odd levels, he can deploy further more money in the stock and wait it out for some time. You definitely will see levels of 430, 440 on the upside.
Okay. All right. So that's with regards to where charts are concerned for Coal India. We've got our next question from Joseph, who's writing us from Chennai. He wants a view on Oberoi Realties. Bought 50 shares at 1870 a piece and wants to know if he can continue to hold or not. He's not given us the time period. I'll take this up with you, Shahina. Oberoi Realty, what's the view?
Yeah, for the shorter term, it's showing some bit of a bounce. So he can hold, but I think if he's looking at the medium to longer term and he wants to add, then it's better to add it at depths. I would prefer that he adds closer to say 1,500 type of levels. But if he's holding it, yeah, for the medium to longer term, there's no issue.
Okay, Sundar is writing us from Hyderabad and is looking for an outlook on NCC and Patel Engineering. I will ask about NCC. He is holding both of these stocks but with losses. Aditya, on the charts, NCC, how does it look?
Consolidation, Alex. I don't see any immediate upside in the stock. Probably it will go through some more time correction and grind at current levels. On the downside, 210 is a good support area. So I would recommend maybe hold on to it, place a stop loss just below 210. And once it crosses levels of 230 on the upside, then is when you really see some kind of an up move in the stock. As of now, I see more of consolidation and time-wise correction due in the stock, which is going to continue.
Okay, all right. So that's with regards to where NCC stands. We've got our next question from Seema Jain, who's writing us from Jodhpur. Her question is on Manappuram Finance. She's bought 400 shares at 177 a piece and wants to know if she can hold or book partial profits at the moment. And the view is for next 2 odd years. Shaina, she's sitting on profits of 33,000 rupees, over 33,000 rupees. Would you recommend her to continue to hold or sell? Because Q1 was disappointing and we saw that in the stock performance as well.
I would say that continue to hold. Q1 was disappointing, but at the same time, now it's more part of the Bain Capital type of portfolio. So they are the ones who are running the show. And I would say while the shorter term looks a bit dicey, I would be a holder for the medium to longer term. And if he wants to play safe, he can keep a stop loss closer to about 250, 247, 250. But I would say hold for the long term.
The long term is a view on Manappuram Finance. We've got our next caller from Jalgaon and Rao is calling us. Rao, very good morning to you. How can we help you today? Rao, can you hear me? Okay, we might have lost him. Let's take the next question. Advait is writing in from, I do not know where, somewhere in India. ABB is a question that he has, or rather the stock on which he has a question. 7,234 is a price that he's bought it at, and so he's losing ground at this point. Should he hold or buy more at this point? Aditya, what's the view on the charts?
It's weak, Alex, and my sense is it will continue to remain weak for some time more. Rather, I see more downside in the stock close to about 4,700 and 4,500. These are two levels that I'm playing around with. So if he's looking to add around those levels, he can. At current levels, it's a complete avoid. Don't venture into averaging at current levels.
Okay. All right. So that's with regards to where ABB India stands. We've got our next question, and this is from Ram Babu, who is writing us from Andhra Pradesh. His freedom portfolio consists of Wipro, Siemens, and FL India. He basically wants a view on Intellect Design right now from a 6 months perspective. So I'll take that up first and then come to Shahina. Aditya, Intellect Design from the next 6 months perspective, because he's holding 73 shares in his portfolio, bought at 1,167 rupees.
Can continue to hold, though the stock did witness a bit of a correction. I think it's now forming a base. Risk to reward is in favor of going long. Then therefore, rather he should continue to hold with the stop loss just below 900 and can see levels of 1100 to about 1200 again on the upside. So as of now, it's a hold, but do keep visiting once it breaks 900. You should again call and revisit once what's the view on the stock.
Okay, and Shaina, your view on these three counters, Wipro, Siemens, and Affle especially wants to know if this is the right time to make an entry.
See, Affle gave very subdued type of numbers in the Q1, but I think the prospects for digital going forward is strong. So he could hold. I would say that continue to hold. He can hold it with a medium-term target of close to about, I would say, 2,200. So that is possible over the next 1 year. In Wipro, I would say that it is better to avoid as of now, though they are, showing better numbers in the current year versus previous years. But I would say you could relook at it couple of quarters down the line because of the overall sector. And the third one was, I think I missed the last.
Yeah, so I just
AB
let me try
Capital.
to find that.
I think that was AB Capital.
AB Capital, yes.
Yeah, AB Capital, yeah, it's a good buy. AB Capital, we discussed Aditya Birla Sun Life, which of course AB Capital holds about 40% stake in that also. And I think overall in their business also they're doing well. Price to book is also decent. So continue to hold.
Hold on AB Capital. All right. Do we have a call? Yeah, we have a caller. Raj is calling us from New Delhi. Raj, very good morning to you, and I wish you and your family a very, very happy independence in advance. How can we help you today?
Hey, good morning. Good morning, Alex.
Good morning.
Good morning. Wishing all of you and the team a very happy Independence Day.
Thank you
and a
so
big
much.
shout out to our defense forces as well.
Absolutely.
All right. So I have a question on IEX. I've been listening to I've seen a couple of interviews with the management as well. And from what they claim, the top line is only going to be affected by about 5 to 6%. The stock is down by about 40%. Would this be a good investment, again, for a long term, 3 to 4 years? I mean, I'm hoping this would play out the way Paytm did. It seems to be at support levels as well. So would this be the right time to kind of get into this stock?
You know, Raj, by my understanding, the issue is not with the top line, because I guess the volumes have remained pretty much stable. The question is about pricing and the fact that this the coupling would remove...
The price discovery is not in their hands at the moment.
Exactly.
Right?
And so therefore, the interpretation that I have, and I will ask Shaina about this, the interpretation that I have is if pricing is no longer under their control, their ability to charge a certain premium will be removed. Shaina, what do you think about that? Because by my understanding, top line was not the issue. They will likely continue to control a sizable chunk of the volumes. Will their margins get affected? And I think to a certain extent, some estimates have pointed to a 30% EPS hit on account of coupling. So would you buy this for the long term as a revitalization or rebound story?
I would wait. I would avoid it for now. See, this coupling will kick in somewhere in January 2026. So I would wait to see the impact. I mean, there is, the management says the impact will be limited. Analysts are factoring in a much higher number. So I think there is a risk. We really don't know how it's going to evolve. So it's better to see. But the competition, is quite intense, and that is likely to come in from various players. And you never know how IEX will be impacted. So I think, if you're holding, you can hold, but I would say it's a very risky bet. The opportunity for the overall sector is very big. So there, of course, if IEX is able to maintain its market share with maybe slight hit on the margins, then it still could be a big, play in the long term. But I would say wait to add and see how it evolves. It's just a couple of quarters down the line.
Raj, hopefully that answers your question. I usually like to talk about the next show. It's one of my favorites, and I hope that you find it useful as well. Know Your Company. This is our daily show at 11:30, and here it's important, in my opinion, because it gives you a sense of a particular company on an ongoing basis. So if this is part of your portfolio, and today we're going to be discussing Muthoot Finance. Everything to do with the company. Of course, the company posted its results, and it was a beat across several metrics. And we were speaking to Parag Thakkar earlier today, and he says that some elements of this are on account of one-offs. But I'll leave it to Harsh Saita and the team to talk about what this last set of numbers means for the company in FY26. The Q1 was absolutely stellar. So does that mean that FY26 as a whole is going to be fantastic? You've seen a little bit of a muted move in gold recently, and is that likely to have a bearing on Muthoot Finance going forward as well? And what the disbursements are likely to be? Are the margins going to be sustainable? Return on assets was at over 7%. Is that a trajectory that's likely to continue in the near to medium term? All of that and more will be discussed on Know Your Company today, so watch out for that at 11:30. The next question is from Dr. Venu Verma, who's writing in from Bhimavaram in Andhra Pradesh. Highway infrastructure is the name of the counter that she wants to know about. And 122 is the buy price, 300 shares are being held. 1 year is the view that is being sought. Any view on the fundamentals, Shahina?
I don't really have a view.
I understand that. Aditya, it's 5% lower in trade today. Do you have an opinion on the charts?
Fairly newly listed company, Alex. I don't have much history to talk on it, unfortunately.
Okay, that's fair. So, unfortunately, we can't help you with that, but we will take the next question. I believe we've got a caller. Shriram is calling us from Chennai. Shriram, very good morning to you. How can we help you today?
Hey, very good morning. I have a question. I've been watching this PCBL Philips Carbon.
Yes.
I have bought it an year back, around 300 rupees. And it was going high, and then now it has bottomed out, and I'm seeing some reports saying it has already touched the bottom and it is now up for, the higher side. So what are your views? I have about a lakh and odd rupees. So should I invest on this with a midterm 6 months to 1 year view?
I have a quick question for you, Shriram.
Yeah.
What was the original color of tires?
You said what was the original color of the?
Of tires. You know, tires on the cars.
Okay, the original color, I do not know, it should be black.
No, the original color of tires was actually off-white or grey. And the application of carbon black is what turns it black. But let me ask this question to Shahina. Shahina, of course, tires is one avenue where Philips Carbon Black would sell its carbon black. But what are the prospects? Would you deploy a lakh of rupees additionally in this company?
Well, not at current levels. It is run by decent management, the Goenka management, which is good. But I would wait because even the first quarter numbers were pretty disappointing, both on YY as well as QOQ basis. Also, in terms of the the growth in volumes, we have to sort of wait and see how it will evolve. It is linked to the auto sector. So I would say that wait for a couple of quarters before you add. Numbers were not that great in the Q1.
Okay, all right. So that's with regards to where PCBR stands. We've got our next caller who's calling us from Dubai, Mohammed. Hi, a very good morning to you. How can we help you today? Hi, can you hear me, Mohammed?
Yes, sir, I can hear you. I'm with you.
Go ahead with your query.
See, it is regarding Suzlon Energy.
Okay.
Which I bought 5,000 shares for 60.32.
Okay, Mohammed, I think you'll have to switch off your TV because you're not audible properly.
Okay, sorry for that. Sorry, because
no worries,
I'm a fan of all of you. You're doing an excellent job.
Thank you so much, Mohammed. No worries. Go ahead with your query now.
So I bought it for 60.32. Almost I'm holding 5,000 shares.
Okay.
Okay, it is good to add more or to retain it, or what do you feel?
Okay, and this is from a longer term perspective, I believe.
Yeah, because there was news about the CFO resignation.
Correct.
Again, there was a positive news about Tata and
Correct.
Tata, and there's some projects in Andhra, I believe. I'm not remembering that. So overall, the profits were declared. The results were declared. How do you feel for a long-term perspective?
Right, got it. Okay, I got your question, Mohammed. I'll take this up with China. China, what he's saying is absolutely correct. The street was probably punishing the stock yesterday because of CFO resigning, but overall numbers prima facie did not look very bad. What's your view with regards to where Suzlon stands from a longer term perspective?
See, the numbers were good, and they are still talking of a 60% growth in revenues overall, which is slightly lower than what we've seen in the past, but very strong nevertheless. At the same time, I think the stock will consolidate around the 60, 70 between these levels, since the investors already holding some quantity. I would say he waits for a couple of months because valuations at current levels are pretty, if you look at EV by EBITDA, it's 30 times FY27 and price to book is 10 times. So, over the next maybe 1-2 years, it will not give you that sort of a multi-bagger that we saw in the last 2-3 years. So I would say do not add as of now. You wait, hold what you have. In fact, I would say you can even book some profits and hold it the rest for the longer term.
We promised our viewers that we would ask you this at the end of the program, and I'm curious about what makes it to your freedom portfolio, both of you. And of course, Aditya, I'm guessing this is now not technical basis, short-term, medium-term picks. This is long-term portfolio stocks, right? So first I'll go to you, Shaina. What makes it to your list?
Well, I would say capital markets, whichever the way the market goes, up, down, those stocks will do well. So I think BSE, NSE, which is not listed, but I think that should form part of your portfolio. And of course, some of the other capital market plays that we already discussed, that could be banks. I think banks need to be part of your portfolio. The large banks like ICICI Bank, HDFC Bank, SBI Bank, SBI, some of one or two smaller banks also could be part of your portfolio. You could look at some of the domestic plays like cement, power. So there's so many defense. So you have one or two stocks from each of these sectors and form a long-term portfolio.
Got it. All right. And we've discussed several of these names over the course of the show. Aditya, over to you. What makes it to your list?
A few of them, definitely. I will go sector-wise, top-down, maybe a better approach. So let's talk about insurance as a space. My sense is this is one space which is going to continue to see higher traction as we become more aware about the importance of insurance. So life insurance companies are something that I'm betting big on. And in that, both your HDFC Life and SBI Life both stand out for me. And I think this is one space that you should definitely bet on. Autos as a space, I still believe there's a lot of room for auto ancillary to grow from here on. We were talking about Tata Motors sometime earlier. If I really need to build a portfolio, it has to be a mix of two-wheeler and four-wheeler. And Tata Motor will definitely make the list within the four-wheeler space, apart from Maruti and M&M. And from the four-wheeler space, definitely Hero, Moto, Bajaj do look very interesting to me. Financials, how can we miss out on financials if you're talking about the long-term freedom portfolio? And in that, a couple of stocks do make the cut for me. And I believe SBI and HDFC, these are the two stocks that I will stick to. And over a period of time, my sense is, Alex, it's time to also look at some of the mid-cap and the small-cap names because of the type of correction and the consolidation that we've already seen in the space. And in that, maybe some of the auto ancillary names do stand out for me. Names like a Motherson, names like Gabriel or Uno Minda, even an Endurance Technology. These are some of the auto ancillary stocks which do stand out. And my sense is you could continue to see a decent run-up in these names. And finally, yes, as we're talking about defense, this as a theme is a long-term play. I believe at least for 4 to 5 years time horizon is something that you have to give in these names. You're not going to see any immediate upside because a lot of it is already priced into it. If I have to pick few names within this, of course, I'll bet on the large cap names like HAL, BEL, and there are, along with that, there are a few more niche players in the space like an Astra Micro, which can also be looked at.
Fantastic. Fantastic list, both of you. And that brings us to the end of this show. Thank you so much, Aditya and Shaina, for joining us today. Pleasure having you. Like I said, a happy independence once more to all of you tuning in, and from Mahima and myself and the team that put the show together, thank you so much for watching. Up next is Know Your Company, and this is NDTV Profit.
From the fields to the freeways, Mahindra and Mahindra has been driving progress since 1945. The world's largest tractor maker by volume and one of India's leading SUV manufacturers, it blends power, reliability and innovation, now with a bold push into electric vehicles. In 2025, Mahindra's brand value climbed to $7.2 billion, up 9% with a 19.1% SUV market share and 41.2% dominance in tractors. With exports to over 100 countries, from Africa to Australia and from China to South America, Mahindra's strength is built on wheels, wings and world-class engineering.
My birthday gift to Papa. ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग। जब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
गोल्ड क्लास क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
जय जवान, जो मैंने शुरू किया था ये एक्चुअली। मैं दोबारा आया हूँ आप लोग से मिलने के लिए। मुझे बड़ी खुशी है आप देख रहे हैं यूट्यूब पे मेरी फिल्म। वाह क्या बात है, क्या बात है।
देखिए जय जवान मेरे साथ 15 अगस्त को सिर्फ एनडीटीवी पर। जय जवान, जय जवान, जय हिंद, जय हिंद।
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
हेलो
हेलो,
बोलिए मैडम। डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Do you read? Hello and welcome. You are watching KYC. I'm Harsaita, and on behalf of the entire KYC team and on behalf of the entire of NDTV Profit, we all wish you a very, very happy Independence Day. Of course, we're Indians, we're proud of that. And yeah, just spelling it out. Anyway, we'll start off with the KYC today. And it's a stock which has done extraordinarily well for investors, but has delivered an outstanding set of numbers as well. The Q1 numbers really stood out. Very little in terms of criticism that one can pull out where a Muthoot Finance's numbers for Q1 is concerned, and therefore deserving and warranting a KYC to try and understand whether there is still some bit of re-rating possible on this one or not. And that's my first question. How much of the growth is driven by the rise in gold prices? They've done a 40% loan growth in the gold AUM. That's what's driven the overall AUM higher. And I want to therefore understand whether some part of this or a larger part of this is driven by gold price rise. The guidance, viewers, mind you, was that they will do a 15% growth in FY26. They have done 10% QOQ in Q1, which means that there's very little left in terms of growth to meet and beat that guidance. Very likely
they will beat that guidance, and therefore I'd want to know whether the growth expectations for FY26 are now revised. We've seen a couple of analysts come out and talk about a 25% growth possibility in FY26. I'd want to know whether there's a formal change to the guidance or not. The third piece is, therefore, is this a sustainable kind of performance? This beat across all parameters, can this sustain for maybe another 1, 2 or even 3 quarters? And if that is so, is this a blue sky situation, or can we see a more sustainable kind of a performance where the type of performance that we've got in FY26 is concerned? Can we get used to that or not? Or is this just a pure blue sky quarter and we'll start to see normalization as early as Q2? Because that will mean that some bit of the reaction today may not be fully warranted. The fourth piece is with regard to margins. Margins are aided by credit rating, or is it falling on the back of, or is it rising on the, or is it aided by the falling repo? What is it, and how much can I attribute it to each of those parameters? Because we've seen a couple of credit rating agencies upgrade the counter, so maybe some of that also rubbing off on the margins. I'd want to know that. How should one look at yields? The gold lending business is unique. When you have a customer who will come to a gold lender, he'll come in and he'll give you loans, or he'll give you the gold as a lender, and you'll give the borrower a loan, right? Now the value of the gold goes up, which entitles the borrower for a larger loan amount, right? But the rate largely will still likely be the same, and that's what I'd want to know. Whether the rate is also actually tweaked when the loan rates go up, and when a borrower comes in and borrows more money against the same quantity of gold, can the rates remain the same or can they be tweaked? Practically, how does Muthoot do it? And therefore, where do yields go as a result of this? Are they benefiting from that, given that yields have remained on a higher note and the repo has come off sharply post that? Credit costs. What should one make of it, given that they are undertaking diversification? Can we expect the kind of credit cost number that they've clocked? I know probably we'll analyze the more standalone numbers, and maybe at a console level the credit costs are higher and most of the other business are loss making, but I'd want to understand what the strategy is with regard to the diversification as well as the credit costs on the back of this diversification. So that's my 6th point. My 7th is with regard to the possibility of an upside surprise on ROAs. Now, this could be a positive for FY26, and sustainability of that for FY27 is also something I'd want to know. So all of that is what we'll try to explore today on KYC. It's a long one, but let me start off with the parameters. Before the parameters, what the company does. I'm going to first start off with a quick overview. It's India's largest gold loan company. It's got a 135-year legacy, headquartered in Kerala, has nearly 5,000 branches, customer base of almost 2 crore, larger focus on rural and semi-urban markets is what it has. In terms of product, the core product is gold loans. Let me illustrate how much of gold it does. Around 1.3 lakh crore is its total book size, out of which 1.2 lakh crore nearly, or apologies, 1.12 lakh crore nearly is gold loans. And Muthoot standalone is around 1.2 lakh crore. So when you're looking at it in the overall scheme of things, 80% plus is gold loans. And the growth there is what is driving the overall AUM growth, understandably, because just the size of the gold loan book is extremely large, and therefore no matter how fast some of the other segments grow, gold loans will really dominate in terms of the growth number, and therefore a 40% YOY growth, you can't do it without a gold loans, and therefore that's how it stacks up. In terms of what gold loans are all about, well, they're fast, flexible, short-term credit. I explain as to how a customer comes in, gives in the gold is valued 70% or below of that gold value is given to the customer as a loan. Broadly, that's how the business model works. In terms of others, Well, you have personal loans, you have business loans, loans against property. There's money transfer and collection services. They do insurance distribution, affordable housing loans, microfinance loans, vehicle finance loans. But broadly, it's microfinance, housing finance, and unsecured. That comprises of maybe 10% of the book of a Muthoot. Outside of that, pretty much a larger chunk of the loans is gold, which they give out. In terms of the core model, I did explain this model, but let's quickly have that. Customer gives gold as collateral, he gets cash, the branch network collects, evaluates, safely stores the gold jewelry, and if the customer defaults, the gold is auctioned to recover dues, and therefore you likely not see customers defaulting because the value of the gold will always be larger than the value of the loan plus interest that the customer owes. That's broadly the way in which it functions. Now let me start off with the key metrics as well. Try and explore what are the metrics we look at. We look at income statement, balance sheet, asset quality, operational metrics, shareholding, street cred, street coverage, and valuations. We'll cover all of that, we'll cover all of that in terms of the key metrics where a Muthoot Finance is concerned. Let's start off with the income statement, and I'll first look at Q1, and Q1 is essential because the kind of performance they've delivered in Q1 is extremely strong. You'll see it on your screen, 51% net interest income growth, 20% sequential. Again, you'll see that your interest income is rising much faster than your interest expense on a sequential basis. That's what's driving that growth higher, and that along with the 10% QOQ AUM growth is just giving a new fillip to that NII absolute number, which is what is playing out on operating income, which has gone up by 30% QOQ, 63% YOY. Also, your OPEX hasn't inched up in a significant fashion, and therefore your OPEX to assets has come down. We'll look at those metrics as well, but OPEX to assets has come down, which is helping the operating income number. Your provisions largely have come off, you could visibly come off, and therefore you're seeing that surge in profitability, 90% growth in terms of profit after tax. These are standalone numbers. But now let's zoom out, as we always do on a KYC. We don't look at it from a 1-year lens. We look at it from maybe a 3-year lens. And that's what you're seeing in terms of the 3-year picture up to FY25. So why Q1, FY26, very solid numbers. That's the number that we're looking for in terms of the FY25 number. The total PAT standalone in FY25 was 5,200 crore. They've done 2,000 crore in Q1 of FY26. That's why you're seeing the kind of reaction you're seeing. But that's how it's actually played out. And what you're seeing over the slightly longer term with a slightly zoomed out lens is that this business is otherwise not grown at a very sharp pace as some of the other NBFCs have grown. And understandably so, because it's tilted towards gold, and therefore gold price is going up is certainly one of the metrics that you look for when it comes to growth. It's also intense competition, higher yields, and therefore you've got some of these banks coming in and trying to disrupt the marketplace. You've seen an SBI come in aggressively with regard to gold loans, on the larger banks coming in and trying to build a gold loan book. And then you have some of the other NBFCs as well, like S&P Global, etc., which have come in and tried to disrupt. And which is why you're not seeing the kind of numbers that we've seen in Q1 FY26. And therefore, we'd want to understand what's changing. But that's broadly the case. But FY24 to FY25, we've seen very good growth. And that is also to a certain extent because of the way the gold price has moved. That's one. And second, it's also because of competition coming off slightly in the gold lending business. Both of those have aided some of the numbers where FY25 is concerned. But the 3-year view, not looking as impressive. We'll be cautious on this one. We'll give it a neutral where the income statement is concerned. Let's look at the balance sheet though. And the balance sheet, again, what you'll see is that the growth has been extremely back-ended, but there has been growth, and the growth has been strong. This is, of course, Q1 FY26 numbers. Let's look at the 3-year numbers as well, and that will give you a better picture. The growth has been good. It's been around 30% on a 3-year CAGR basis, and therefore it's positive where the loan asset growth is concerned. Also, your capital adequacy is fairly healthy. Both of those metrics adding up fairly well, but the growth has been back-ended, which is a maximum part of the growth has come in between FY24 and FY25. And that's why the tilt in the 2-year CAGR is more back-ended than anything else. That's something you want to keep in mind as well. But we've given this one a clear thumbs up. Let's talk about asset quality. Very, very stable where asset quality is concerned. You've seen NPA ratios largely been between maybe the 3.4 to 3.8% range. So it's fairly range bound. Your net NPA or your ECL percentage also has been fairly range bound. So no complaints there. We've given this a thumbs up. Of course, it's a risky business, but the stability with regard to the way in which assets have moved is important. Now, mind you, when you are looking at a lender, you don't necessarily get worried if the NPA ratios are high. You get worried if the NPA ratios fluctuate too much. That's what should worry you. If the NPA ratios are high, but if your margins are very, very high, that should take care of some of the credit cost. That's the better way to look at lenders. And that's why even though it's a 1.5% kind of ECL percentage, I wouldn't be too worried about it, simply from a perspective that some of the other metrics also matter when you look at asset quality. And that's broadly how one looks at it. So we've given this one a thumbs up purely on the basis of stability. Now let's look at some of the key metrics. The margins, again, largely stable across cycles, 11.4 to 11.5%. Margins have inched up now, and I'd want to know the reason for that. ROAs, largely again stable. Just look at the stability on the ROA. Look at the stability. This is of course Q1 FY26 on your screen. Very, very strong numbers. But let's switch focus. Let's look at the 3-year picture. And on the 3-year picture, you'll see far more stability in terms of where the numbers are. There you go. The ROA number, fairly stable. 11.23% is incorrect. The FY24 ROA is 5.84%. So between 5.7 to 6% is broadly the ROA range. And when you're looking at yields as well, it's been largely stable. It's not been too choppy. The cost of borrowing has certainly gone up as a result of the repo inching up between FY23 and FY25. Spreads also have largely been maintained. That's the better metric to look at it. So again, a thumbs up. It's tough to have that kind of stability in a business like this, in the lending business, and we've seen that. Shareholding pattern, and when you're looking at the shareholding pattern, fair bit of stability there as well. Lots of skin in the game that promoters have, and therefore we've given that a thumbs up as well. 73% owned by the promoters. FIs have a decent amount of interest, so do DIIs. Very small public interest in this one. Let's talk about the street cred now. In terms of returns, 1 month there's a 4% return, 3 months 23%, 6 months again 23%, 1 year you've seen a 52% return on the stock price. But the 5-year stock price is up just about 2.2x. So you've done maybe around 16% or 17% in terms of returns, which is fairly healthy. But when you compare it to the benchmark and what the benchmark has done in the last 5 years, mind you, compared to 2020, of course, there's been some bit of underperformance. And therefore, again, on the street cred point, we've given it a neutral, largely because the 5-year performance hasn't lined up as well with the index as ought to be. Let's look at valuations now. And when you're looking at valuations, you look at a Muthoot and largely look at a Manappuram, right? These are the 2 largest gold lenders and therefore businesses which are more comparable. You look at Muthoot, much higher priced in comparison to a Manappuram when you're looking at the multiple, right? But the multiple shrink is going to be extremely large. So 1 year forward price to book is just 3 times versus the 4 times number currently. You're going to see that shrink largely due to profitability coming in. And second, Muthoot has been relatively more stable compared to peers in terms of performance as well as in terms of the way it delivers profitability and ROA. So all of that helps it stand out in terms of the multiple that it commands in the industry. So surely something that you want to look out for, but surely something which is slightly expensive compared to peers. You also want to keep in mind that the ROA is 5.5% plus for a 3-time book, 1 year forward book company. So that's the other piece you want to keep in mind. But of course, we will try and get a better perspective from the management on what they think. This is street coverage now. 15 buy calls, 6 hold calls, 4 sell calls. Average return is -3%. given the buy calls that are there and given that we might see tweaks with regard to target prices as well, already starting to see that, we've given this a neutral as well. But largely the upside, according to analysts, remains capped, at least for the moment. Let's sum it all up. Let's try and put it all together and give you a full picture. No thumbs down. That's the one piece which really stands out. But outside of that, you've got all of those neutrals and thumbs ups, giving it a 6 out of 8 on the KYC rating. Let's go across. We have George Alexander Muthoot, Managing Director at Muthoot Finance, joining us. Pleasure, sir, speaking to you. This is Harsh here. Let me first start off by understanding this very, very strong loan growth that you've clocked, 40% YOY, 10% QOQ. How much of that attributable to the increase in gold prices, and how much of that is actually attributable to new customers and existing customers taking new loans? Give us that perspective.
Thank you. Thank you. So in the last 3 quarters, we have seen good growth coming from the good demand coming for gold loans. I think the demand is the most important thing here. The demand is coming mainly because gold. One is the availability of funding. The fund availability with people in the last 2-3 quarters have been low, especially with regard to unsecured lending. The regulator, etc., has been actually cautioning all banks and NBFCs to reduce unsecured lending, especially the personal unsecured loans, the microfinance loans, and even the credit card loans, etc. The Reserve Bank has been cautioning. As a result, the availability of funding has been low in the last 2-3 quarters. So people have chosen to take more of gold loans. And the gold price, which is already about 40% high in the last 1 year, there is always, every day, at least 3 news items in the newspaper about gold price, about gold loans. So people are now getting more and more interested to utilize the ornaments they are having to take a loan. That is the demand part of it. The second is the gold price. Personally, people who are able to get a lesser amount earlier can get higher amounts today. But not necessarily that everybody should take the maximum amount available. Today, if you look, our loan to value, although we are able to lend up to 75%, it is only 60% of today's price, or 61%. That means everybody has not borrowed the maximum 75%. People will borrow only to the extent they require, and they feel they can repay. The third point is again about the regulatory regulations. The new final regulations which came in maybe in a month back is, if you ask me, it is quite gold loan business friendly. It is gold loan business friendly both from the point of the customer and from the point of the lender, whether it is bank or NBFC. In fact, today a loan up to 2.5 lakhs, the new regulation says can be given with least formality. And that is what I think people need, and that is what I think is what the finance ministry as well as the Reserve Bank, the regulator, want. That is a clear signal that this gold loan business is being favored and maybe favored by the regulator. So these three things which work together in the last 2-3 quarters have been responsible for the good growth in the gold loan business. Not only for Muthoot Finance, but also for many banks and other NBFCs. Of course, Muthoot Finance was able to do better because we have a 5,000 plus branch network all over the country and a 30,000 dedicated staff. So that is the reason why the gold loan growth has come.
Sure. So let me ask you what the expectation therefore should be in terms of loan growth. All of this aiding your numbers, FY26, you've guided 15%. Does that change? That's my first question. Second, for an investor who's going to hold your stock for the next 3 years, what's the growth expectation that he should pencil in?
Yeah, of course. Our job mainly is to run the company well.
Yes.
Run it to the satisfaction of the regulator, the customers, etc. And of course, as we run a company well, as we deliver good profits, etc., the second corollary is that the share price also goes up. So we are, as I heard you say, that the promoters have the skin in the game. we have when we went public, we divested 25% and 75% has been with us. We have not sold one share till now. The 1% or so reduction you see is because of the ESOPs we have given. So we as a company, as a promoter or people running, we stand not much to gain by the share price. But then rewarding the shareholders is also definitely something which we need to do, and we have been doing it. So I wouldn't be able to say what the price will be after 2-3 years, etc. About the growth.
Apologies. I think you've got my question wrong. So I'm talking from a loan growth perspective. FY26, what is your guidance? Does the 15% guidance change, sir? And second, what should an investor anticipate in terms of growth? You've guided 15, but you've done 25 last couple of years. Is that now the new 15% for you?
So over the last 5-6 years, we have always guided the market in the first 2 quarters at 15%. We usually do a change only after the second quarter. In last year, we guided for 15%. We did a 40% growth. Prior to that, we again guided 15%. We did a 25% growth. So we have always overdone what we have guided. So today, at this point, I wouldn't want to change the guidance. Just really there. But I'm pretty sure we should be doing much better this year also.
Sir, with regard to margins, what's aiding it? Is it the credit rating getting better? That's what's aiding the margins. Is it the fact that there's more gold lending to existing customers? Is that's what's aiding the margins? Give us a perspective.
So the margins actually, we have a net spread of 9.2, 9.3, 9.5 over the last several quarters. If you look, our spread is always 9.5. This quarter, it was higher, mainly because there was an increase in the profits, which I'll explain right now, is having only for this quarter. We had a write back of about 700 crores of NPAs, which customers came, took back the gold. These are not the hardcore defaulters. It is just people to whom we gave time to clear the gold. When we gave the time, it became an NPA, noted as an NPA, but when they took it back, it became a normal loan. So all these 700 crores people, they came, they took back the loan. And when they took back the loan, they gave the accrued interest, which we had derecognized at the time of putting it as an NPA. So about 275 plus crores came from there. Another 100 crores we got because of the ARC. We did an ARC about a year back. We did about 700 crores and 60,000 customers gold we were able to keep without auction. Now in the last 1 year, they have all started taking back the gold. And by the last year, we got back all the principal. Today, whatever is coming is interest. So we got a 100 crore interest this quarter. So these two get the bump in the profit. So but going forward also, our spread would be in the same 9.5 range.
Understood. So blue sky quarter for you. I have just 20 seconds left. Blue sky quarter for you. Can you continue to do maybe 6.5% plus in terms of ROA, or is this just a one-off?
Again, we always guide for a 3 to 4% ROA. We always do 5 to 6. I think hopefully we should be able to do well, but I wouldn't give a commitment like that. Always when we commit, my CFO and me, we say 3 to 4% is reasonable. It's good also, but always we try to do more than that.
Understood. Okay, thank you so much, sir, for coming in and speaking with us. Viewers, completely out of time on this edition of KYC. Thanks so much for tuning in. It's a goodbye from all of us and wishing you and yours a very, very happy Independence Day. Have a great weekend.
गोल्ड क्लास ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
जय जवान जो मैंने शुरू किया था ये एक्चुअली मैं दोबारा आया हूँ आप लोग से मिलने के लिए। मुझे बड़ी खुशी है आप देख रहे हैं यूट्यूब पे मेरी फिल्म। वाह क्या बात है, क्या बात है।
देखिए जय जवान मेरे साथ 15 अगस्त को सिर्फ NDTV पर। जय जवान, जय जवान, जय हिंद, जय हिंद।
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
हेलो
हेलो
बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio.
Good afternoon, you're watching Markets at 12. Thank you so much for staying tuned in. I'm Shreyansi Singh and let's take a look at what the markets are doing at this point in time. Nifty managing to hold up quite well above that 24,600 level. So when you take a look at the Sensex as well, in fact 70 odd points of a gain is what the Sensex also has. Quickly, let's also take a look at the list of losers as well as gainers on a sectoral basis. So largely it's a mixed picture at this point in time. So you do have IT, finance, bank, PSU bank, as well as pharma exactly in that order that are holding on to a tinge of green at this point, except IT that is gaining about 1% thereabout. But other than that, there's metal, defense, realty, oil and gas, and energy and media exactly in that order on the flip side that are holding on to a shade of red at this point in time. When you take a look at the list of gainers, in fact, from within the IT pack, from within the Nifty 50 pack as well, you have Wipro, Infosys making it to the list of gainers. Other than that, there's of course Eternal that's up 1.5%, HDFC Life, Bharti Airtel, Dr. Reddy's, SBI, some of your other gainers. And on the flip side, when you take a look at the list of losers as well, there's a Tata Steel, BEL, Ultratech Cements, as well as Hindalco and L&T that are holding on to losses from anywhere between 1 to about 2%. So that's something that you have, at least as far as some of the sectors and some of those stocks that you should be keeping on your radar are concerned. But let's talk about one such stock, and that is Cohance Life, because you do have the profit that declined on a year-on-year basis. There's been some key drags on margins as well that we'll be decoding with the management. In fact, let's connect with the management, chat with them about their numbers and what they think about their earnings fine print. We have Vivek Sharma, who's the Executive Chairman of Cohance Life Sciences, joining us on the show. Thank you so much, Mr. Sharma, for taking time out and joining us, and a very good afternoon to you. I just wanted to quickly get a sense on what you think about the earnings fine print then.
Good, thank you. So as you know, we have stated before, we have 3 pillars of growth in our business. And by the way, this is our first quarter of fully integrated business. We announced the merger of Cohance and Suven, last quarter. So this is the first full quarter of merged business. 3 pillars: CDMO, API Plus, and Specialty Chem. And all 3 of them have demonstrated growth, which is very exciting. In the API Plus, we have seen a growth of, double-digit growth. It's CDMO business. We have seen some destocking from customers. So if you take the destocking out, there's about 30% growth in the business. And especially the technology business that we have been very focused on, they are seeing significant growth. And the specialty chemical business has also seen growth. So all 3 businesses are growing. And we're really excited with the growth that we are seeing in these businesses. Within these businesses, the CDMO business, we have added new large pharma customers with new molecules to our pipeline. And we have indicated before that we had 9 products in phase 3 with 15 projects, and happy to share out of that 2 molecules have been approval for commercial, and then they are going commercial this year. So we should start seeing more commercial products later this year. And that's a very positive news.
Right, understood. Hi, Mr. Sharma. This is Varsha. Welcome to the show, and pleasure to have you at NDTV Profit. Yet, if you see the EBITDA margins are at 23%, you have guided EBITDA margins to be in the low of 30s in FY26. When can you go back to 34% or 38% that you've seen in the last few years?
So we are investing for growth. We have invested in people as well as in businesses to really demonstrate, to commit to that margin that we have committed. So overall for the year, we are committed for that margin. We have added commercial resources. We have hired some other senior resources, and that result will start coming soon. NJ Bio integration is actually moving along very well, and I'm happy to share that we have signed our first integrated linker payload and conjugation customer with NJ Bio. That is starting to work. We have also announced investment in capital in NJ Bio. So overall for the year, we are committed to the margin.
Understood. And also, Mr. Sharma, how should we look at FY26, from a growth perspective between your CDMO, specialty chemicals and API segment as well?
So listen, we don't give short-term guidance. We've committed to $1 billion business by 2030, and we are reaffirming that guidance. Businesses go up and down. Sometimes quarterly, we see some fluctuations, but overall our guidance remains to the $1 billion business by 2030, and we are taking steps to make sure that we deliver to that commitment.
Also, Mr. Sharma, in a last con call, you had said that you were expecting double-digit growth in terms of revenue in FY26. Are you on track?
So yeah, whatever guidance we gave last quarter, we are sticking to it. As I said, we focus a lot on long-term guidance, long-term commitment. But yes, we are remaining focused on the commitments that we made in the last quarter.
Also, Mr. Sharma, regarding your expansion plans, when it comes to Hyderabad and Princeton,
when this will be live, if you can, give us update on that and any commercialization that you're seeing.
Sure. So in ADC, we are actually expanding our New Jersey site in Princeton. We are adding conjugation suites. So we have announced a capital investment of close to $10 million, and that is there to meet customer requirements. I spoke about having a customer that is coming with end-to-end capabilities. So we'll work on that and other customer needs. So that expansion is actually started to work on. In India as well, in our Nacharam site and the ADC site, we are also making some expansion. There's a customer that is looking for OEB6 capabilities, and we are investing capital there. Also, in oligonucleotides, we are coming out with a GMP facility that will be launched later on this year. So there's capital that has been allocated, and that work has already started, and we hope to actually launch it later this year with a customer commitment. So there's several actually CapExes that are being implemented right now to meet customer demands.
Understood. And currently, what would be the ADC proportion in the pharma CDMO, and what's the outlook in next 3 years?
So we don't disclose, unit-wise numbers as well as outlook. All I can share is that we are very excited with the ADC potential. I was recently in Japan and very excited with our partnership there and the relationship with customers there. And we, as I said, we are growing our relationship. We have signed up this new customer to look at end-to-end, and we keep investing in ADC, which is a testament to the customer commitment and the customer confidence in our ability, and we are looking for significant growth in that space.
And Mr. Sharma, just wanted to have your view on capex plans for FY26 and also beyond that, if you have any.
So, listen, capex, while we've been investing a lot of money, as you've seen in the last few years, we will continue to do that. We announced 2 big capex this morning, and we will continue to invest as customer needs. While, these 3 capex that I talked about, 2 in ADC and 1 in oligo are there, we are also investing capex in our small molecule sites and, some small capex in specialty chem to really meet customer requirements. And some of those are ongoing, and some of those are larger amounts that we have shared with you in the press release this morning.
Right. And also you were speaking about, the 9 molecules. Any update on the timeline for commercialization for the same?
Yeah, so out of 9, 2 are getting commercial this year. So you should start seeing 1 actually got announced a couple of days ago publicly. But 2 of them, 2 molecules with 5 projects, 6 projects actually will get commercial this year. So we are expecting to see some traction from customers in terms of orders later this year on that. We've also added 1 new molecule, which is commercial from a Japan-based innovator. That is in the tech transfer phase right now, and we should start seeing some commercial revenues from that later this year, early next year.
This is Shreyansi as well joining in the conversation. I also wanted to quickly get a sense on the current emphasis by the US president on manufacturing in the US. Do we foresee that we will be adding more manufacturing sites in the US apart from the NJ Bio? Is there a sort of a plan that you have there then?
So, if we do that, it'll be because our business needs it, and that makes right investment sense. The business that we have, NJ Bio, is a very strategic site, and we are excited that we have that site, and it's a key driver of growth and technology and innovation for us. We are adding capital. However, we will look at the business rationale and do it if it makes sense. Our existing customers are happy with us from the products that we provide from where we provide. But as a company that is, focused, and we have grown a lot through inorganic, we'll continue to look at opportunities. And if the opportunity is the right one to really invest in North America or Europe, we'll definitely be happy to do that.
All right, then, look forward to it. Thank you so much, Mr. Sharma, for taking time out and joining us this afternoon. So that was the management then talking about Cohance Life Sciences, talking about their earnings as well as the growth roadmap going forward. So tell you what, Varsha, it just does look like that that revenue hit largely on the back of destocking in pharma CDMO.
Yeah, yes, exactly. And, the margin downtick that you're seeing, is because of the investments in the talent and the business development that they're seeing, and also because of the integration of the NJ Bio. that we spoke about is one of the reasons.
Absolutely, and also what's very interesting is that the entire pharma pack, in fact, is in the spotlight. When you take a look at Zydus Life as well, even that counter is in focus. Take us through some of those counters as well then.
Yeah, so, talking about the Zydus Life Sciences, there are two news. One is positive and one is negative. So let's start with the, positive one, wherein their Ahmedabad plant has, there was a US FDA which conducted pre-approval inspection for 3 of their products, and the inspection happened from August 11 to 13, and they concluded inspection with 0 observations. So that is a positive one from Zydus Life Sciences. And the other negative news for Zydus is that for their Baddi plant, that is Himachal Pradesh, the US FDA conducted surveillance inspection, which was from August 4 to August 13, and that inspection came out with 4 observation, whereas no data integrity were found. But yeah, this was a negative. This is a negative news considering the 4 observations that the company has. But so overall, for Zydus, if you see, there is one positive news and there is one negative news. But I think the counter is it's down actually 0.22%.
Well, absolutely. And some of these other counters, the likes of Jain Irrigation, Prison Johnson, also in focus. In fact, Jain Irrigation, because when you take a look at the stock, that is in fact cracked under pressure. Take us through the update on that front.
Yeah, so for Jain Irrigation, if you see, they received an order for 135 crore, which is from Maharashtra State Electricity Distribution, and they received the order is for 5,438 solar water pumps, and which need to be executed within FY25 and 26. Talking about Prism Johnson, if you see, the cement division have signed supply agreement with Jabalpur Cement Industries, and JCIPL, that is Jabalpur Cement Industry, will manufacture cement from its Jabalpur plant to Prism, and the agreement will improve cement availability in Madhya Pradesh, and this will boost companies total grinding capacity from 1.08 metric tons per annum to 1.17 metric tons per annum, and this capacity will further increase to 1.38 metric tons per annum by September 2025, and the initial agreement term is for 1 year with options for mutual extension. So these are all the 3 stocks which are buzzing on the back of news, I would say.
Well, absolutely. Thank you so much, Varsha, for joining us with that update. As far as Cohance Life Sciences as well as some of those other 3 counters are also concerned. But tell you what, let's also take a look at Infosys, because you do have Infosys as well as Telstra deepening their partnership with a new joint venture in Australia, marking a significant step, in fact, in accelerating cloud and digital transformation for Australian enterprises. Let's bring in Puneet with some more details on this one then.
Well, thank you for that. It's a key development, a key joint venture that Infosys has signed. Stock was also and is continuing to show positive momentum on the back of the news flow. Now, Infosys will acquire a 75% stake in this particular joint venture. They've gone on to say that they'll take that shareholding in Versent Group. And Versent Group is specifically one of Australia's leading digital transformation solutions provider, and also an wholly owned subsidiary of Telstra. So essentially that agreement is between Infosys as well as Telstra via the company Versent Group. Now, apart from that, Telstra, of course, one of the leading communication companies in Australia for technology partnerships, and Infosys has worked with them in the past in 2024 as well as this year itself as well. Now, in terms of scope of this particular joint venture, they mentioned that they want to accelerate AI-powered cloud as well as digital infrastructure and transformation specifically for Australian enterprises, and will be a good export opportunity for Infosys. They've gone on to say that this will deliver these deep industry expertise as well as collaboration, will leverage Infosys Topaz as well as Cobalt platform as well. Finally, in terms of Versent, they are a 650 engineer team as of now and work specifically in sectors like government as well as educational institutions, as well as specifically mentioned that in 2024 they did have a multi-year collaboration with Telstra as well, and that's for Infosys. So overall, a key partnership nonetheless. They mentioned that this will enhance strategic collaboration between these 2 organizations and can increase the scope of the JV if needed as well.
All right, then, that's Infosys that we're talking about. There you go. That stock is up and away in trade, about a 2% uptick coming in as far as Infosys is concerned. But tell you what, let's take a closer look at CSB Bank based on their earnings. In fact, when you take a look at the first quarter earnings, it's largely a weak set of numbers. When you take a look at their margins, you've seen a decline continuation coming in as far as the margins are concerned. The ROAs, in fact, have hit a 16-quarter low, so that's also something that you're looking at. Other than that, the yields, in fact, have fallen, while the cost of funds, in fact, has risen. Let's take the conversation across to the management. Pralay Mondal, who's the MD and CEO of the company, joining us on the show. Mr. Mondal, thank you so much for joining us, and a very good afternoon to you. First things first, I wanted to get a sense about what really happened when it comes to your margins. You've also trimmed the margin guidance for financial year 26. I wanted to understand a little more about the margin front there.
Good afternoon, Shreyanshi, and good afternoon to your viewers. You're right that our margins came down around 20 basis points in this quarter. Broadly, the banking overall system has come down a little bit on the margins this quarter, but for us, the cost of funds had gone up a little bit because we took an aggressive call in the fourth quarter when liquidity was a big issue at that point of time. But the system liquidity was minus 3 lakh crores. Now it is more than 3 lakh crores positive. So obviously, we took aggressive call in terms of picking up deposits at slightly larger cost at that point of time. That flew through in this quarter because last quarter was only for 10-15 days. This quarter was for 90 days. So that is playing out. Having said that, now the larger world deposits or the larger deposit costs have come down. CD costs have started to come down. And hence, we will see gradual improvement in margin over the next 2 to 3 quarters. I personally think that we have sort of bottomed out on our margins and it should start seeing uptick from here.
Well, absolutely. That's at least about the margins. Thank you so much for helping us out with that outlook there. I also wanted to talk about the net interest margin that has fallen consistently from that 4.36% number to about 3.5% in the first quarter, and the guidance as well. I just wanted to quickly get a word from you in terms of the recovery. What is the timeline that you see here?
I think overall we will be moving between 3.5% to 4% this year. And every quarter we should improve our margins, and on an average our overall year margin should be somewhere in between, somewhere around 3.7 to 3.8 on an average, but it will gradually take uptake as the cost of funds starts coming down. So broadly that's a trajectory we'll take.
Well, absolutely. Thanks for helping us out with that outlook there as well. I also wanted to get a sense about your ROAs because they've also hit a 16-quarter low, if I'm not wrong. Can you take us through the outlook on that front as well? Help us with a little bit more color when it comes to your ROAs then.
See, ROA is fundamentally a function of income, of course, because we have grown assets by around 31% this year. On a year-on-year basis, and our deposits have grown by 20%. So obviously, when we grow fast in a difficult liquidity situation, which was there in the fourth quarter of last year, our funding cost little bit went up, and that's what has brought down the NII a little bit. And also always our first quarter is a little weaker, and as we go through, the last quarter is the strongest quarter from ROA perspective. So last year also, if you see, our ROA was marginally higher than this, and we ended the year strongly with 1.79%. So I think this will happen this year as well. So for the overall full year, I think our guidance will be somewhere around 1.5%, which is we will definitely achieve 1.5% ROA, and we'll see if we can do better than that as well. So we are quite fine with anything between 1.5 to 1.6 ROA this year, and we are aiming to do that.
All right, then thanks for helping us out with that outlook there. But I also wanted to get a sense on the broader interest rate environment next. How will the potential RBI policy actions in your mind impact your NIMs as well as the cost of funds? Of course, you've talked about the cost, but give us an outlook in terms of the outlook of the broader interest rate environment. Try and help us out with how that's going to factor in here.
So, Shreyanshi, what's happening is obviously there is enough liquidity in the system, and that has helped transmission of the 100 basis point repo cut, which has already happened in the system pretty fast. And as we look, obviously on a higher base, the CPI is pretty low, WPI is negative. So from that perspective, in such benign environment and with uncertainties in the global environment, the way things are growing, and to sustain the growth, we have to see what RBI takes a call on the interest rate eventually. Maybe one more rate cut is expected through the financial year. We have to wait and watch. It depends on many data and the global environment from that perspective. We don't know what the tariff decisions finally will be within the next 17-18 days. So we have to wait and watch all of that to take a call on the interest rate. But one thing is for sure that funding cost is going to come down from the entire banking industry. It will be a little bit more for us because our dependence on the borrowed deposits is a little higher, where general interest cost comes down further. And we have one more advantage vis-a-vis the overall banking ecosystem. That's where I'm pretty confident that our NIM will incrementally get better, that our EBLR linked portfolio is somewhere around 12%, and T-bill linked portfolio is somewhere around 5%, and our fixed portfolio is around 60%. And hence, to that extent, as interest cost starts coming down, our asset side of the yield will not come down that much. So to that extent, I think incrementally we should do better than this as well as on the NIM side. So we should be pretty much confident that this is kind of a bottom of our NIM cycle at this point of time.
All right, I also wanted to get a sense about your loan mix in terms of, is there any specific plan that you have in mind when it comes to your loan mix in terms of changes there?
Right now, our loan mix, gold loan is around 45-46% in that range. Wholesale is around 23%. SM is around 13%, and rest is retail. Broadly, it will remain similar because we will remain little cautious on the unsecured retail side. It's hardly 3% of our book at this point of time. And hence, I would say that more or less mix for this year will remain same. But I think next year, the wholesale business will start picking up a little bit more. It has done very well this year. Maybe wholesale will end the year somewhere around 24%, which will take away 1% share from the retail. Gold will continue to be strong. And next year, probably retail will start picking up because we have done a significant technology transformation journey where we have moved into Oracle system from a CBS perspective, core system perspective, along with 52 surround system. And that will help us with the LOS, LMS, and everything else. So we'll launch new products on the retail. So as the retail cycle tapers down in terms of delinquencies and all that, we should start entering the retail platform next year. So mix will start changing from FY27 onwards. And as a part of our SBS 2030 vision, we will see gradual increase of retail and wholesale and SME and gold tapering down by 2030. So broadly, that's the guidance. But this year, I think more or less it will remain similar to where it is today.
All right, and thank you so much for helping us with that perspective there. But before we let you go, sir, I just quickly wanted to get a word in terms of your key lending segments. What is the outlook that you have when it comes to gold loans, SME, retail, corporate? Is there any sort of indication that you have in terms of stronger growth that you're penciling in or contraction, anything that stands out to you in terms of outlook?
See, gold loan is a large portfolio for us. I think it will remain strong because now we have complete clarity on the RBI guidelines on the gold loan. Last year, there was a draft circular which has now got fully formalized. So to that extent, we exactly know what we need to do, and gold loan will continue to do well. We are significantly increasing our coverage on the wholesale side, and hence you will see incrementally disbursements. That segment is going to do well. SME continues to do well, but we have to see because the entire tariff discussion which is happening with US and the global uncertainties, we have to see how some of the export segments behaves and what are the kind of indications there. I fundamentally believe there will be not too much of a stress out there because there are always ways to do business, but we have to wait and watch and figure that out. And retail, of course, we are going to build the building blocks right now. And next year is something because we also believe that there's a slight retail cycle going on in microfinance, agri, and unsecured business like credit cards and unsecured retail loans. But things will change next year, and hence we will broadly be focused on these businesses at this point of time. And next year we'll start focusing on retail.
All right, then thank you so much, sir, for taking time out and joining us this afternoon. So looks like SME is going to be leading the next leg of growth. Thank you so much for helping us out with that entire outlook. But with that, it's completely timed out on this particular show. Thank you so much for tuning in.
Founded in 1868 by Jamshedji Tata, the Tata Group has grown into India's largest conglomerate, operating in over 100 countries with a portfolio spanning TCS, Tata Motors, Tata Steel, and Taj Hotels. In 2025, the group's brand value hit a record $31.6 billion, making it India's most valuable brand and the first to cross the $30 billion mark. From turning Jaguar Land Rover into a global luxury success to leading IT services through TCS and iconic acquisitions like TET, Tata's footprint stretches to 150 countries, powered by over 660,000 people, driving innovation, sustainability, and global ambition.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग। जब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है। बुलाओ।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
जय जवान, जो मैंने शुरू किया था ये एक्चुअली, मैं दोबारा आया हूँ आप लोग से मिलने के लिए। मुझे बड़ी खुशी है आप देख रहे हैं यूट्यूब पे मेरी फिल्म। वाह क्या बात है, क्या बात है।
जय जवान मेरे साथ 15 अगस्त को सिर्फ NDTV पर। जय जवान, जय जवान, जय हिंद, जय हिंद।
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
हेलो, बोलिए मैडम। डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world.
and welcome to NDTV Profit, and wishing all the viewers a happy Independence Day and a happy Janmashtami in advance from Varsha, myself, the team at NDTV Profit as well. It's an interesting day of trade, an extended weekend as well, so the volumes are expected to be slightly low in terms of trading today. But let's quickly pull up Nifty 50 on the screens as well as Bank Nifty and see what markets are doing, because I think everyone is in the mood, Varsha, to be on a holiday from tomorrow. But a lot of important events to track with Prime Minister Narendra Modi's speech on Independence Day. A lot of things that could be coming out from that aspect in terms of the plans, what is the agenda going to look like from here on. And you have a probable meeting between Putin and Prime Minister Narendra Modi, which is being eyed as well in terms of tomorrow's session. So a lot of developments that could be coming up for all the journalists across. So interesting weekend as well, along with the extended one. But let's quickly pull up the screens and see what Nifty 50 as well as Bank Nifty are doing in trade as we speak. If you see in terms of Nifty 50, there you go. No major upticks there, just a 0.1% up move on that front. 24,650 is what you're tracking in terms of Nifty 50. Let's quickly pull up Bank Nifty and then we'll look at the sectoral indices, which are even providing some bit of support, because you have the Bank Nifty, which is clearly outperforming at least Nifty 50 with gains of around 0.4% coming in there. Let's look at the PSU Bank Index with that, and then we'll look at the sectoral heat map as well as the Nifty 50 heat map. If you talk about the sectoral heat map and the PSU Bank Index, there you go. It's actually cooled off slightly, but it's IT which is gaining, and Infosys and Wipro are the two stocks which are providing that support to IT as well in trade today. We'll come back to those two companies. Consumer durables, Bank Nifty, PSU Bank Index are the ones which are seeing some good moves. But what's lacking today is Nifty Metals, which is trading under pressure. Defense is now seeing profit booking today. Real estate is also seeing profit booking. Oil and gas is under pressure, and that is taking cues from the way BPCL and HPLCL numbers have come in, as well as media. FMCG and healthcare are trading under pressure. But clearly a pretty range-bound trade. The trade range is also absolutely narrow. Volumes are slightly tepid on the back of that extended weekend that everyone is actually, rooting for. Let's quickly look at the heat map in terms of Nifty 50 stocks, and then Varsha will take us through what's happening in the broader markets. There you go. Wipro, Infosys, HDFC Life, Eternal, HDFC Bank, ICICI Bank, iSure, a few of the ones which are seeing some smart moves. Adani Ports trading under pressure, Tata Steel trading under pressure, BEL, Ultratech Cement, Hindalco, Geo Financial and L&T are a few of the names which are losing out. Broader markets are interesting as well, Varsha, with a lot of individual stock-specific action, some reacting to numbers, some reacting to volumes. It's a pretty interesting mix that we are seeing today.
Exactly. And, broader markets are little under pressure, I would say. Let's see what Nifty Midcap 150 is doing. Is down almost 0.21%. Let's see, if you see on the gainer side, you have Muthoot Finance, you have Kalyan Jewellers, Coromandel International. Yesterday, this stock was up almost, was down 4%. Today, it's up. You have Endurance, you have Tata Communication, which are on the gaining side when it comes to Nifty Midcap 150. Though on the loser side, you have NMDC, you have Max Health. Well, Max Health, if you see numbers, missed estimates. You have HPCL, Vodafone, and Oil India, which are on the losing end when it comes to Nifty Midcap 150. Well, let's see what small cap 250 is doing. It's under pressure. It's down almost 0.31%. You have MTAR Tech, you have GMDC, Sterlite, Aptus Value, and Poly Medicare, which are on the gaining side when it comes to small cap 250. While on the let's see. There you go. You have, CSB Bank, NHPC, EIL, NMDC, EIH, and Brigade Enterprises, which are under pressure when it comes to, BSC 500. So, yeah, Hiral, as you were saying, a lot of stocks, in the news now. This is on the back of Q1 numbers especially, and of course the news that has come around yesterday.
Absolutely. Muthoot Finance, we already spoke to the management co-hands. You've spoken to as well, so you have some bit of insights that are coming in on that front. Brigade Enterprises is another company that we will be speaking to soon. And one company that now is on our radar right now is Asami Hotels. Let's quickly pull up that one on the screens and see what the stock is doing in trade. Again, under pressure, 6.5–7% are the kind of cuts that you're seeing in terms of Asami Hotels. If you talk about the earnings as well, it's an interesting mix that we've seen. The revenue has grown, and that's mainly been driven by strong operational performance for this company. Let's get in Ashish Jakhanwala, Chairman and CEO at Sami Hotels. Ashish, good afternoon and welcome to the show. Wishing you a happy Independence Day and a happy Janmashtami in advance. My first question coming to you is some bit of pressure that we are seeing in terms of the stock right now, though we've seen a growth in terms of revenues. The operational performance has been strong as well. What has worked and what has not worked according to you?
So thank you and happy Independence Day. First of all, I'm totally incompetent to react on how the stocks move. However, I will tell you how the business is moving. So for the first quarter, we did see about a 10% growth on a same-store basis, which is actually pretty healthy if you see what happened in the month of May. So because of the India-Pakistan issues in the month of May, we saw just about a 3-4% total revenue growth year on year. April was about 13%, June was about 12%. So it gives you a very clear indication that while we reported a 10%, circa 10% same-store revenue growth, the actual potential and the market is indicating a much stronger growth in the subsequent quarters because, of course, that event we'd like to believe was a one-off event. So we remain pretty bullish as to how we expect ending up FY26, which should remain in that double-digit zip code.
Hi Ashish, Varsha this side, happy Independence Day and welcome to NDTV Profit. Well, just wanted to have your view on revenue growth breakdown when it comes to upper scale, mid-scale and, mid-scale, upper mid-scale and mid-scale hotels. If you could, give us update on that.
So Varsha, thank you. We've seen the RevPAR, which is a good KPI because, F&B tends to be very focused on restaurants and event spaces, and I'll come to that. But if you look at revenue available per room, which is largely the room revenue, we've seen the RevPAR growth in all three segments remain in that 10% zip code. While in the mid-scale, we are reporting slightly lower, but that's largely on account of one hotel in the 12 hotel portfolio, which had some crew movement differences, right? So we've actually seen the broader portfolio across all price points deliver that circa 10% RevPAR growth, which also reflects in your about 9.5%, 9.9% total revenue growth. So no surprises. As per segment is concerned, we continue to see markets like Hyderabad and Bangalore really outperform Varsha even in a difficult quarter. And I think that's very heartening and that gives a huge degree of excitement because that's where we have invested a lot of new capital, which will start showing results from next year onwards.
Okay. So Ashish, let's now look at expansion. If you have to look at FY26 and FY27, what is the expected expansion pipeline that you are watching out for? And secondly, on the back of the expansion, are you expecting the debt to go up? And in consonance to that, the finance cost that could go up as well on the back of the expansion?
Actually, it's very interesting times for Sami. And, I've been running this company for 14 years. It's a really interesting time where we're actually seeing value being created both in P&L and actually on balance sheet. So while we'll continue to see growth of our P&L because of same-store addition of rooms this year. So this year, by October, we deliver new rooms in 2 of our existing hotels. We've already opened 2 hotels in the last quarter, and they will start impacting our numbers from H2 as they stabilize. Next year, we open the W in Hyderabad. I'm talking about FY27. So we open the W in Hyderabad. Actually, as we go through this transition, and just to put things in perspective, if all of the rooms that we own today but are not operational or have not been renovated and rebranding, we would have been at a 1,500 crore top line, instead of 1,100 crore that we delivered in FY25. So we are seeing this 40% potential in revenue growth without markets really changing, and we will deliver this all while maintaining the balance sheet levels that we have today, which means our net debt will remain in the zip code of, let's say, 1,300 to 1,400 crores. Our finance cost will remain in the zip code of about 135 crores. That's the cash finance expenses. There are some index adjustments. So we don't expect any pressure on our finance cost or pressure on our balance sheet as we grow our business from the current levels to what we see the potential to be.
Ashish, also any expected real estate launches in the next 2 to 3 years?
So as I said, we adding inventory to 2 of our hotels this year. That will happen in Q3. And next year in FY27, we add a whole hotel in Hyderabad, which is the W in Hyderabad. And around the same time, we expect to renovate and rebrand a bunch of our hotels. And historically, we've seen that once you've renovated, rebranded hotels, you see a 20-25% jump in the average rates.
Okay. Along with this, what's the value unlocking plan that you have after GIC's recent investment that has come in? And secondly, any hotels that you're looking to sell?
So we have done a very successful capital recycling for almost about 1,000 crore. 210 crore through sale of non-core assets, including the one that we've sold yesterday, and about 750 odd crores through the minority stake to GIC. At the same time, what is important is that we've committed to invest about 1,000 crore. The only difference is that the hotels we've sold, they have been sold at an average EV/EBITDA multiple of about 20 times or about a 5% yield. Whereas the new money that we are investing, we are targeting about a 15% yield. So what we are doing is we are transferring capital from less efficient assets to highly efficient assets. In terms of future outlook, I think we had indicated about 200 odd crores of further capital recycling. 65 crores got done yesterday. And I think we remain open for looking at other opportunities where we can transfer our capital from, as I said, low yield to high yield.
Ashish, also just wanted to have the overall outlook when it comes to demand for the hotel sector in India for FY 26 and 27, particularly in your key markets, given your 74% occupancy in Q1 FY 26.
We are driven by two demand generators, office space and airlines. And if you look at the office space, the first quarter, the data that we have shows us that about 14 million square feet of new office space got absorbed across key markets, 1-4. And that's very healthy number. And in spite of what gloom and doom stories we hear and the geopolitical issues and the tariff war, in spite of all of that, we had 14 million square feet of new office space, right? We are seeing that office market is becoming much broader. The number and quality of tenants is very different today than it used to be 7-8 years back. It's no longer about the top 4, top 5 IT outsourcing companies. The mix of office building today is very diverse, and therefore is a mix of the hotels that check into our hotel, guests who check into our hotel. Similarly, in the airlines, even though the first quarter was soft, both because of the India-Pakistan issue in May and then very unfortunate incident in Ahmedabad, we've been seeing airlines also grow in high single digits to early double digit. And I think that both those data points give us a very strong base of estimating that same store hotels for the next several years will continue to grow in that high single digits to early double digits, because supply side is very weak. In Bangalore, in Hyderabad, in Pune, Delhi, Bombay, all of the core markets, we're seeing supply growth is probably half, if at all, of the demand growth. So I think the industry is extremely well positioned. I do believe that media will get bored of very good performance of this sector. And that's why I think we are preparing that what can we do beyond just riding on a cycle, and capital recycling gives us a very interesting opportunity to beat the cycle really, both in good times and in bad times. So I think you don't expect anything but strong performance from the sector. We are highly emotional sector, so you will have incidents like May. So there'll always be one-off disappointments. But generally, I think this sector has a lot more to offer in the next few years.
Right. So my last question coming to you is that the sector has so much to offer. What is the growth that SAMI is offering to the investors if you have to look at FY 26, 27 and 28? Because I do see a 15% EBITDA growth and the free cash expected to rise to almost 360 odd crores. Overall growth, what's the expectation?
We put in a slide in an investor presentation which says that without doing any work, we'll look at almost doubling our revenues, right, over the next 3 to 5 years. And I'm making that statement saying without any efforts, because all of that inventory is in some form or shape with SAMI today. And also the cash, what we hold today and what we're generating from the business. So at minimum, we're going to deliver really good growth, but that's not where we're going to stop. We are looking at almost investable surplus of about 1,700 crores to 1,900 crores over the next 5 years. We have demonstrated over years that we have the capability to do highly accretive M&A, do some long-term variable leases. So I think the starting point of our growth will be when we double our revenues. That's a base. And I think the sky is the limit beyond that. I don't want to give any definitive numbers, but we have 1,700 crores of firepower at minimum to deliver beyond that 2x growth.
Absolutely. So strong outlook that one should be watching out for. Thank you so much. for Ashish for joining us on the show and sharing the views. So that's the management of Sami Hotels. The stock is under pressure. The numbers are good. I think, the commentary is what is the street watching out for from here on, and execution becomes a key as well, because doubling of revenues over the next 3 to 5 years is the target the management has. But moving on, Brigade Enterprises, let's quickly pull up that one on the screens and see what the stock is doing in trade. 7% downtick. In fact, real estate has been in focus, taking into consideration the way the first half sales volumes have panned out and the way realizations are panning out. I think the top 8 cities from reports like Knight Frank, all of them, GLL, are indicating there is pressure with real estate sales. Let's understand, what has happened in terms of the first quarter and what's the outlook looking like for a Brigade Enterprises. Pavitra Shankar, MD at Brigade Enterprises, joins in. Pavitra, good afternoon and welcome to the show, and a happy Independence Day and a happy Janmashtami in advance to you and your family. My first question coming to you is a good surge in terms of profitability that the stock has seen. How sustainable is this kind of a number in terms of the coming quarters? Because the commentary that you hear from, agencies like GLL, Knight Frank, is that there is weakness in terms of real estate when you talk about the way sales are panning out and the way prices are panning out.
Hi, good afternoon. Thank you for the wishes, and the same to you as well. We have had a good quarter in Q1 from a profitability standpoint. That's reflective of the projects that are already completed and being handed over to customers on the real estate side. On the leasing and the hospitality side, those verticals have done very well as well. Both of those portfolios are fully stabilized and increasing in terms of the rental on the lease side, and hospitality in terms of both occupancy and RevPAR. So overall, the business has done well. In terms of the market commentary that you're getting, I think across the board, Q1 has been muted for this financial year. We typically see that after Q4, which is usually a bumper quarter for most developers, with a lot of the launches and year-end targets being met or surpassed. So I think what's happening on ground is that there's a lot of sentiment being pegged to what numbers look like today versus what they were a year ago or so. But we have to keep in mind that what the real estate sector has seen over the last 2 to 3 years is it's very uncommon to basically launch and sell out projects within a couple of quarters. So that's what we seem to be pegging against. And I would say that on ground, things are still extremely healthy. In Brigade, we are launching projects and still able to sell them out within 1.5 to 2 years from the launch. Again, that's a very good thing, but many are pegging it against what we've seen, over the last few years, which I would say is a bit over-optimistic. So we are still able to reach our profitability. We're still able to reach our business plans and sales velocity that we would like to see prior to the completion of construction of the project, and still achieve the numbers that we want to see on the pricing side. In terms of launches, that's heavily driven by the approval cycle in our markets, Bangalore, Chennai, and Hyderabad. So in Q1, we were able to launch 1 million square feet in Chennai, but in Q2, which is ongoing already, we've had a number of RERA approvals come through in Bangalore. So we're already seeing very good uptake of those projects. We just completed our annual sales event, the Brigade Showcase, all of which has done extremely well. So on ground, I would say there's not much room for worry, but the issue is that people tend to peg against what they just saw happen, which is more than never before, all things happening really well sort of situation.
Right. Hi, Pavitra. Varsha this side. Happy to have you on NDTV Profit. Pavitra, if you see the pre-sales growth of 3%, which is lower than the overall guidance of double-digit growth, any update on that? And onto the launches you were speaking about, any launches expected in H2?
Yeah, so as we've seen in the last few years for Brigade and maybe for others across the industry, the launches tend to get skewed towards the second half of the year. So we had that happen in our portfolio. So when we look at quarter on quarter or year over year, we have seen an increase over the same quarter prior year. And we do expect more of the launches to come in towards the second half of the year. That said, we've already got 3 launches coming in this quarter itself. itself in Q2 as we speak. So it's not that all of it is going to be pushed towards the second half of the financial year, but some of it has already been coming through. There is still, dependency on approvals, but we're working to make sure that it comes in towards the financial year. While on ground, the exact timing of the approval in each quarter doesn't really impact the overall project profitability per se. But we do recognize that we are being looked at on a quarterly basis.
So Pavitra, I'll take the conversation forward in terms of the pre-sales. The growth is around 3%, but if I see the average realization, that has seen a significant increase this time around. What is the reason for this higher realization? Is it a change in terms of the product mix, or is it prices which are increasing? What would you attribute this to?
It's reflective of both, actually. One is the same kind of projects and the same kind of markets are seeing an overall price increase that has been happening in Bangalore, Chennai, and Hyderabad and other markets as well. And specifically the mix of projects as well. So if we are launching a project and if we are selling inventory that is more higher price because it is a premium versus, a less or a mid-segment project, then we are seeing that come through in the price realization. So this will also fluctuate quite a bit quarter on quarter, although we've seen a sustained increase in our portfolio in the APR because of both these mixes. One is the markets in which we are, in which we have inventory, we've seen substantial price increase there itself. And also within our portfolio, we have moved towards from mid-segment to upper mid-segment, and in some cases, super luxury as well. So we're seeing that overall impact in the APRs.
Pavitra, what is the collection growth expected forward in FY26? If you can, guide us for that.
So in terms of last year, we did around 7,200 crores overall for the business. Leasing and hospitality will continue to grow, in similar levels because they're all fully leased. We just have about 0.75 million square feet to lease out in our commercial portfolio, and hospitality, we have 9 operating hotels and are building out a few more. So that will take time. So in terms of those two portfolios, those are more or less stabilized in terms of cash flow. On the residential side, last year we did around, on the overall real estate side, we did around 5,200 crores of collections. I would see that increasing marginally as well because many of the projects that we have launched and sold, the collections will come in as the construction progress continues. So while we've seen the bumper sales get pulled up and advanced in the life cycle of the project, the collections will still depend on construction progress happening on ground, which is stable and moving forward, per our schedules. Mm-hmm. So we'll see that all coming into the collections pipeline over the next year.
And Pavitra, a quick one in terms of the land bank that you have. What's the plan with regards to growth and to leverage this land bank?
So we, of course, are bullish about the overall sector. This is our core business. We are acquiring land in Bangalore, Chennai, Hyderabad, Mysore, Kochi, Trivandrum, across the verticals. So residential, office, retail, and hotel. And we are bullish about all of that. In the last quarter, actually, we have added about 11,500 crores of gross development value to our land bank, which is a really healthy number. And we intend to continue to do that over the course of the next few quarters and beyond that as well. In terms of markets of focus, we are again focusing on South India, Tier 1 predominantly, and a couple of the Tier 2 markets. So that's where we'll be focusing our efforts.
Got it. All right. Thank you, Pavitra, so much for talking to us at NDTV Profit and sharing your views. So that's the management of Brigade Enterprises. Good plans that are in place from here on, but the stock is trading at the day's lowest levels as we speak. Let's quickly pull up Ashok Leyland. EBITDA growth of around 6.5% is what you're tracking. The stock has seen a good spike trading at the day's highest levels on the back of the earnings that have come in. Margins have improved substantially as well. 11.1% versus a 10.6% is what you're tracking. Profits have seen a growth of around 13% at 594 crores. And the revenues almost have been flat with a 1.5% growth at 8,723 crores. The reason why the stock is seeing a surge also is on the back of the margin profile and the profitability growth, and it seems that the numbers are slightly above or in line with street estimates as well. So little here and there, but interesting one to look at in terms of Ashok Leyland with the kind of spike that you're seeing in terms of the stock price as well. But let's quickly slip into a short break. In fact, we have lots more lined up on the other side at NDTV Profit on Profit Buzzers. Please stay tuned.
In 2008, a homegrown idea from Haryana changed the way India eats. From restaurant discovery to doorstep delivery, Zomato's user-friendly app became a daily habit for millions. Today, it competes head-on with global giants like Uber Eats. Zomato's presence extends far beyond India, operating in 23 countries worldwide, from the UAE all the way to the UK. With a brand value crossing $1 billion in 2025 and revenues of $1.2 billion, Zomato proves Indian innovation knows no borders. Built in India, serving the world. This Independence Day, we celebrate brands like Zomato. Brands that are made in India, that are made for the world.
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
गोल्ड क्लास क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
जय जवान, जो मैंने शुरू किया था ये एक्चुअली, मैं दोबारा आया हूँ आप लोग से मिलने के लिए। मुझे बड़ी खुशी है आप देख रहे हैं YouTube पे मेरी फिल्म। वाह क्या बात है, क्या बात है।
देखिए जय जवान मेरे साथ 15 अगस्त को सिर्फ NDTV पर। जय जवान, जय हिंद, जय हिंद।
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
हेलो
हेलो
बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए?
Come a long way, and we have a very, very long way to go. I wish everybody a very, very happy Independence Day, and in the days to come, while we are marching towards Viksit Bharat, we are going to make even better strides.
Welcome back. You're watching Profit Buzzers on NDTV Profit. But let's quickly look at what individual stocks are doing, because few of them which are in focus in today's session. You have Muthoot Finance, arguably the winner of this earnings season, as the company has posted a stellar set of numbers. Let's get in Harsh to get in more. 11% up move, Harsh, on Muthoot. What's working? Because this is having a rub-off effect on a Manappuram Finance as well today.
Well, zone of its own, frankly, for Q1 FY26, where Muthoot's numbers are concerned. And what's led to this beat? One, your margins, both on a QOQ as well as on a YOY basis, have gone up, and that has aided the numbers. But not just that, they've clocked a 37% AUM growth on a console level, 40% where gold loans is concerned. So that's the other piece that stood out. Operating efficiency also playing out. Your OPEX to top line, OPEX to assets, both have moderated, and that has aided the numbers. You've got credit costs which are controlled. In fact, they've fallen both QOQ as well as YOY. And then you have ROAs which are, wait for it, 7% plus in Q1 of FY26. So a standout set of numbers where Q1 is concerned. Of course, sustainability to be watched out for. Let's look at the standalone numbers in themselves. You look at the way NII has gone up 20% QOQ, 51% YOY, aided by interest expense going up in moderation compared to the interest income. So that one, in terms of the bump up, has been lower, and that's what's driving this number here. Thereafter, you look at operating profit, therefore supporting all of the metrics, and thereafter you look at provisioning, which has come down, which is aiding that PAT line over there. 90% growth where profit after tax is concerned. What you also want to look at is some of the key metrics. Look at the ROAs, they've inched higher, margins giving you that picture, and the advances yield has also inched higher, which has aided the margin number. So broadly, that's what's really playing out. You also have interest expenses to assets, that's interest expenses to assets, which is typically your cost of funds, and your OPEX to assets. Look at the moderation in OPEX to assets. That's the operating efficiency playing out. And then you have your NPA ratios, which have come off. All of those numbers looking good. That's your growth number, 10% sequential. Really very little to complain about when you've got that kind of a number. So what's leading to the beat? One, higher yields, lower cost of funds, lower OPEX to assets. Just kind of squeezing all of that together. You've got stellar growth and lower credit cost. All of that aiding the numbers.
Right, absolutely, Harsh. Well, thank you so much, for all the details. Well, moving on, other stock which is in focus on the back of, again, Q1 FY26 numbers is Pfizer. Now, just, onto the key highlights, if you see, this company has seen strong EBITDA growth performance there, EBITDA margin expansion that you're seeing, because if you see the revenue is up only 7%, but there's a good uptick in EBITDA, which is up 18%, because if you see margins are at 34% versus 31% last year, and the EBITDA margin expansion that you're seeing is led by operating leverage, and also lower employee cost has also, helped EBITDA, because there was also decrease in other expenses, which has aided EBITDA margin, because other expenses, if you see overall, has decreased 9% year on year, and other income have also aided net profit. So it's basically, an operating leverage which is playing out for Pfizer. But moving on, other stock which is in focus is Shivalik Bimetal. Stock jumps. Now this is on the back of Q1 numbers, delivers a robust 8.2% profit in Q1, driven by better product mix. But we have Vansh with more details on that. Vansh, over to you.
Well, right. So strong set of numbers from the company, and the growth has been led by the improved product mix and the cost management basically, and the resilient demand across. There has been a resilient demand across the both domestic and the export markets for this particular counter. The revenue growth was supported by a 14% increase in the gross profit, and the gross margins have improved by 215 basis points to 48%. Now, if we talk about the segmental performance, the shunt segment revenue increased by 9.56% on a year-on-year basis, and the bimetals revenue grew by 8% on a year-on-year basis. If we talk about the numbers, the revenue was up 3%, but what really stood out was the EBITDA. The EBITDA was up 12% at 32 odd crores versus 28 odd crores, and the margins were at 23.4% versus 21%, and the net profit was up by 8%. If we talk about the outlook, the company anticipates a growth that is to be led by recovery in demand for thermostatic bimetals, and the strong domestic growth from smart metering and EV demand will contribute to the further growth for FY26. So this is what the overall picture is looking like for this particular counter.
Okay, so that's with regards to Shivalik. Interesting moves, 9.5% upside on the back of a strong demand from EV, smart metering sector as well. But moving on, Infosys and Wipro, these are two stocks that we are focusing on as well. But before we get to these ones, JSW Cement is one stock. Let's just pull up how the listing has been, because a lot of downtick there, 0.7%, so very tepid in terms of where the listing goes with 6 rupees premium. If you miss the allotment, the question is, should you buy it or not? Let's get into Puneet to crunch the numbers and assess the fundamentals on JSW. In fact, before we go to Puneet as well, I'll take you through the JSW details. The subscription has been tepid. 7.77 times was the kind of application that was received. And overall, if you talk in terms of the financials as well, it's very volatile, because from 5,800 odd crores in FY23, it scaled up to a little over 6,000 odd crores in FY24 in terms of revenues, and again dipped back to that 5,800 kind of a number on the revenue front. If you talk about the profit as well, the company actually reported a loss of 163 odd crores in FY25 versus a profit number that was reported in FY24 and 23. And the margins have also come in lower at around 12% in FY25 versus 15% in terms of FY24. If you talk about the debt, yes, that is a concerning factor when a JSW Cement is considered over here, because the total borrowings have been at a 3-year high if you compare the last 3 years' data in consonance if you see the net worth of the company. So that is one of the concerns that the street is looking at pretty closely. Valuations as well, if you talk about it, they have been on the expensive end. So that is one factor we need to consider if you look at the valuations as well. And you should be watching out for, from here on in terms of if they have any capacity expansion plans in North India, because currently they do not have any capacity in North India. So that is one of the concerning factors. Apart from that, the plan to double its cement grinding capacity to 41.9 million metric ton per annum, that is something you should be watching out for. And if they are looking to improve the realizations from here on, because it is currently the lowest realization number that they have from an industry perspective. So that's with regards to where JSW Cement goes. With this, let's quickly pull up a Wipro and let's quickly pull up a Infosys as well. Two stocks from the IT pack that are buzzing in trade, Barsha. If you talk about Infosys as well, it's about an acquisition. And if you have to look at a Wipro, I mean, interesting one, because they're amplifying talks for acquisition. And I mean, these are news reports suggesting that they're looking to acquire Harman India arm. And that stock also seeing some smart moves in today's session.
Exactly. And, just onto the Infi acquisition, if I want to talk about, so Infosys, Telstra formed JV in Australia, and Infosys is expected to acquire 75% of Versant Group. And the Telstra, which is Australia's leading telecom tech company, and Infosys get operational control, and Telstra retains 25% stake. Onto the JV spoke, if I were to talk about this boost AI powered cloud digital transformation for Australian firms, and also leverages Infosys Topaz, which is AI. And about Motherson Group, if I were to talk about, they have 650 engineers, advisor strategies across Australia, and serves blue chip clients in government, education, finance, energy and utilities. And lastly, if this combines Motherson's expertise with Infosys AI, cloud data and digital services. So overall, this is all the details when you see Infosys JV. Yeah.
Okay, so that's Infosys. And very quickly in terms of Wipro as well, I'll quickly take you through that one. Wipro and Warburg are amplifying talks for Harman India arm, and that's the reason why you're seeing gains of 2.5% coming in there. They are in advanced talks, that's what reports are indicating, and the transaction was earlier pegged at around 4,300 odd crores. Warburg Pincus and Wipro plan to acquire the DTS business. And with regards to Harman India, it's a US-based audio connected technology firm looking to sell its business in India. And that's the news that we're picking up with regards to where Wipro goes. But moving on to our 79th Independence Day coverage on NDTV Profit. It is just not about commemorating freedom. It's about reflecting of the daring reforms, bold bets, and visionary leaders that helped shape India with what it is today. We are stronger, bolder, and brighter. We are not just implementing transformative changes by the day, but making an indelible mark on the world stage. Here's a special report, a countdown, rather, to the top policies, milestones, and mavericks that turned India into a global giant. Let's take a look.
In 1947, India broke free, not just politically, but economically. From a 30 billion fledgling to a 4 trillion powerhouse, the journey has been anything but ordinary and wasn't built in a day. It was carved out by daring reforms, bold bets, and people who refused to think small. This is the ultimate countdown of the policies, milestones, and mavericks that turn the dream of a global India into reality. Number 5, 1951, the first 5-year plan. Our first blueprint for growth placed its bets on agriculture and dams. In just 9 years, GDP jumped from $30 billion to $42 billion. Over 2,000 community projects taught villagers to run their own local economies. An idea so ahead of its time, the world later copied it. But as fields flourished, one question remained. Could India feed itself in the face of a growing population and frequent droughts? Number 4, 1965, the Green Revolution. Enter MS Swaminathan. His high-yield seeds and modern farming turned Punjab and Haryana into India's breadbasket, boosting grain output by 70% in just 5 years. Quietly powering this change were women farmers. Food security was one thing, but to truly grow, India needed fuel. Not the kind you burn, but the kind that you bank. Enter number 3, 1969, bank nationalization. When 14 banks went public, credit finally flowed to rural India. Branches quadrupled in a decade, funding the first rural cooperatives, today responsible for 1/5 of agricultural lending. Yet for all this progress, there was still a ceiling, the infamous license Raj that kept entrepreneurs chained. That is, until the 1990s. Number 2, 1991, LPG reforms. Liberalization, privatization, and globalization ripped away red tape. FDI shot from $132 million to $5.6 billion in just 4 years. And in a twist few expected, these reforms also ignited India's first private TV channels, unleashing a media boom. With markets opening and businesses booming, India was ready for its most radical tax shakeup in history. Number 1, 2017, GST, a single unified tax system in the form of GST in 2017. By digitizing compliance, GST slashed paperwork time by 40%, setting a global benchmark. In 2024 alone, it brought in 1.7 lakh crore. Now, policies can open doors, but it's what walks through them that changes the nation's destiny. The reforms laid the track. Now let's see the trains that roared ahead. From institutes that redefine learning to revolutions that fit in your pocket, these are the milestones that turned India's potential into performance. Coming in at number 5, 1951, IIT Kharagpur, the first IIT that trained over 1 million engineers powering India's tech rise. And while they were building computers, another dream was taking shape, putting India on wheels. That's right, number 4, in 1983, the good old Maruti Suzuki launch. The Maruti 800 made cars affordable, selling 2.9 million units by 2014. India's first wind tunnel, built just to test it. But it was the 1990s where India found a new export, not a car, but brain power. Number 3, 1990s, the IT boom. By 2022, IT was 8% of GDP, employing 5 million people. India's Y2K fixes alone earned $2 billion and cemented its place as the world's tech help desk. So with tech thriving, policymakers wanted to supercharge exports, and so entire cities of opportunities were born. Coming in at number 2, 2005, the Special Economic Zones. The Special Economic Zones Act transformed exports from 22,840 crore to 7.59 lakh crore in 16 years, pulling in $100 billion in FDI and creating 2 million jobs, half for women. But India's biggest transformation wasn't in factories or farms. It happened in the palm of your hand.
That's an interesting package that's come in, from Sanjana. We will, you can catch the entire coverage on this on our social media platforms as well. But staying with Independence Day, India's vision for 2047, because this is the 79th year. We're just 21 years away from that. Let's get in Vikas Khemani, founder, Carnelian Asset Management and Advisors. Vikas, good afternoon and welcome to the show, and always a pleasure to speak to you at NDTV Profit. A happy Independence Day in advance and a happy Janmashtami as well to you. My first question coming to you is categorically the fund that you have, the Amrit Kal vision, pretty much in consonance with where we are right now. We're 21 years away from Vision 2047 as well of Viksit Bharat. If you have to look at a fund at this stage, what is your core belief in terms of the long-term wealth creation, and what are you betting on if you have to look at the next 10 to 15 years?
First of all, thank you very much for having me, and happy Independence Day to all of you and your viewers, and happy Janmashtami too as well. So I think, like you rightly said, we launched Bharat Amrit Kal Fund last year, and our belief has been very, very simple, that India is the transformational growth path. What we have seen in the last 10 years, a lot of foundational work has been done in terms of economic reforms, digital reforms, infrastructure reforms, and a lot of mindset shifts have happened. And I do believe that, as India moves from a $4 trillion GDP today, thereabouts, to about $29-30 trillion GDP by the time India turns 100, and, our per capita income goes from $2,500 to $16,000-17,000. It's a one of the very big transformative journey, and it happens very rarely in the lifetime of a nation. And these kind of periods are very inflection point periods and create huge amount of wealth. So we are big believer in that, and I think in this we are one of the only, I would say, or only large economy or game in the town. If you see, our biggest strength is that we are the youngest nation in the world, we are the most populous nation in the world, and we are the most aspirational nation in the world. So this kind of combination you will not find in any part of the world. And fortunately, our aspirations have been triggered, our mindsets have changed, and these mindsets, new mindsets, I think will propel us into sort of next trajectory. And I'm happy to go through what mindset change we have seen through, but this will create a very widespread wealth across various sectors, various opportunity sets, which India has never seen before. And it will be deepest part of the country. It is not restricted to the metros. It is, spread out in towns and, smaller towns and smaller cities. It is spread out across various sectors. It is in the investment phase. It is in the manufacturing phase. It is in services phase. It is in technology. So it's so well-rounded,
growth which we are witnessing and which we'll witness in time to come, that you will not be able to compare anything in the past of our history, but some parallels you can draw what has happened elsewhere in the world.
So Vikas, let's break this up. With everything said and done, with the growth, with what you are seeing where we could go, which are the sectors that you're betting big on? Because, between mid caps, small caps and large caps, your divide is pretty much in line, in that 25 to 30, 35% kind of exposure from the overall fund. What sectors would you bet on?
I think this fund bets on broadly five broad buckets, as we call it. Manufacturing, banking and financial services, consumption-oriented plays, services-oriented plays, and infrastructure. And this broad 5 buckets, each of them have many sub-segments, and also you basically identify companies, which are benefiting in each of these buckets from a big transformative journey we are seeing. And when you're talking about 20-25 years journey, please understand that, there will be always intermittent cycles. There will be some segments will do well for a period of time, will not do well for a period of time, but structurally they will do well. So, within these things, you have to keep rotating as and when, depending on your view on the sector and sub-segments plays out. But broadly, these 5 buckets are going to create massive amount of wealth.
Right. Vikas, hi, Varsha this side, pleasure to have you at NDTV Profit. I just wanted to have your view on some of the sectors like, cement or defense. What do you think India will be at these themes in the next, 4 to 5 years?
Again, cement looks good for the simple reason we have not had, much price hike for some time. Capacity additions have been limited, demand has been growing. So cement tends to move in a step function that, you have period where capacity gets added, then consolidation happens. So I think next 2, 3 years, 4 years look pretty good for cement. Defense is a structural play. For next 5, 10, 15 years. The only challenge in defense is that because there's one customer and the valuations are disproportionately high, and the timelines are uncertain, hence the risk portion is high. So you have to find right risk reward opportunity rather than just looking blanketly at the defense as a field. Like I said, in last 5 years, we never betted on consumption because consumer companies might do well, but, I might not make money as an investor. So as an investor, you have to make money, and hence identifying right company is important, but defense, structurally speaking, is a good opportunity.
Okay. So structurally, defense is a good opportunity. So Vikas, if you have to look at the formation of your fund right now in terms of the stocks that are there, what are the names that you've added in the recent past where you have exposure to? Because one name that comes to my mind right now is Edelweiss as well. What's the story in terms of Edelweiss and any of the other capital market companies? Do you think this is a space you should be watching out for, and why?
You will do a very disservice to the whole conversation of when talking about Amritkal period and talk about a stock in the company, right, in a portfolio. So I would probably talk and keep the conversation more at a macro level and the thematic level rather than the stock.
Sure. So how are you looking at the capital market space then?
Generally, if the economy goes from $4 trillion to $29-30 trillion, obviously capital markets are going to become bigger and better from here. And as an intermediate place of any capital markets, and there will be many players in that, wealth management to asset management to brokers. So, and all of them will do well. There could be intermittent cycle, but if you take 20-year view, all of them will do well. They will be far bigger than what they are today.
Other aspect is, I'm sure the fund is kind of focused on India's growth story. Do you think you would look at export-oriented sectors where right now there are threats when you look at US tariffs? I mean, there is a lot of uncertainty on that extent. So do you think the investment mantra right now should be domestic-oriented sectors versus export-oriented sectors? Or do you think the risk is not that large enough to have export-oriented companies in a fund which is meant to be a Amritkal fund?
Again, this is a very, export-oriented companies doesn't have to be in US only. We have only $80 billion exports to US and rest is all rest of the world. So point is that, and that is all fine. So, the way we look at it, we understand, try to company business model and see what percentage of the business is at risk right now. And if it is a larger percentage, then one should be careful. Though I think things have not settled yet, finalized yet, there could be right now more rhetoric than the reality, but we will know only in the fullness of time that what outcome comes on that. So, but at the same time, I do believe that this is not a derailment of the risk or derailment of the story for India. This is a temporary blip. And I'm sure 6 months down the line we will talk about it very differently.
Vikas, now since it is Independence Day, will your fund, give financial independence to one who is at 25 or 30 years of age investing in this fund?
Absolutely. I think India, in my opinion, will compound anywhere between 15-16%, over next, in my opinion, 15-20 years. And for sure, I mean, in probably the slightly more rate in next 10 years. So, in this period, if anybody is remaining invested, will definitely compound and gain financial independence. While you're working, your savings should go into equities in Indian equities. And mind you, last 20 years also, India has delivered very good returns despite all kind of weaknesses and fault lines. So I see no reason why India will not deliver when we have so many fault lines getting corrected, so many reforms happening, so many positivity working for India. So I think India will be one of the best market in the world from a wealth creation perspective.
Vikas, we've seen different styles of investing, from different generations. If you have to give one advice right now to the latest generation, I think, which is the Gen Alpha, what is that advice that you would give them if they have to compound their wealth and look at financial freedom from a next 20-25 year perspective? What is that one quick advice you would give them?
I would say, all of you are very, very smart. The only thing I would say, I'm sure given your youth, you are also in a hurry. You can only choose between jaldi or jada. You can't make both. So hence, don't be in a hurry. Try to make more, and that more happens only when you compound over a long period of time. People who try to make money in a hurry tend to actually create negative impact on the portfolio, and hence, so just don't be in a hurry and try to think very long term and compound value in long term.
Absolutely. Long term is going to be the key from here on as well. But thank you so much, Vikas, for joining us on the show and sharing your views. So that's Vikas Khemani talking about financial freedom, what could lead to financial freedom, and everything in terms of why he's built this Amrit Kal fund as well, and what is the story behind the kind of companies he is betting big on. But completely out of time. But that is a wrap on this edition of Profit Buzzers from Varsha, the team that put the show together, and myself. In fact, lots more lined up on the other side. Please stay tuned to NDTV Profit.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग, तब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
जय जवान, जो मैंने शुरू किया था ये एक्चुअली, मैं दोबारा आया हूँ आप लोग से मिलने के लिए। मुझे बड़ी खुशी है आप देख रहे हैं यूट्यूब पे मेरी फिल्म। वाह क्या बात है, क्या बात है।
देखिए जय जवान मेरे साथ 15 अगस्त को सिर्फ NDTV पर। जय जवान, जय जवान, जय हिंद, जय हिंद।
They're the force behind some of India's most respected business empires. but you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert in
Hello and welcome. You are watching Small Cap Buzzers on NDTV Profit with me, Soumit Sarkar, and my co-anchor Anushi. Well, if you look at the markets, the benchmark has been consolidating around the current levels. But on the flip side is the Nifty Bank Index that is up more than 150 points in trade. But let's go across to Hill to understand what's been buzzing when it comes to the small cap sector.
Thank you so much, Amit. It's interesting to see what's happening in the markets, but the volumes are very narrow in trade today. But a lot of individual stock-specific action that you're seeing. Let's quickly pull up the BSE small cap as well as the Nifty 250 small cap index at the day's lowest levels, cuts of around 0.6% coming in terms of the BSE small cap index, and likewise, the cuts are equivalent in terms of small cap 250 as well. In terms of individual stock specific action, companies which are reacting to earnings, let's quickly look at a few of those names as well right now. Names like Sami Hotels, a good set of numbers, but the stock is under pressure because in comparison to peers, the stock has not really done well. Similar trend is with Brigade Enterprises as well, 3.5% downtick in spite of a 79% jump in terms of profitability. Good set of numbers reported by Pfizer, 4.5% up move coming on there, and a Shivalik Bimetals is another one. Names like HPL Electric, Surya Roshni, Paka, all of these are trading under focus as well in terms of today's session. Para Cables as well is another one which is seeing pressure today. Manappuram Finance, Rishabh, Everest, Canto are a few of the names which are trading, seeing some good gains. SBCL, Hindware, and a Prime Focus are names seeing gains in that range of almost 9 to 15% in trade today. Senco, let's pull up a chart of Senco Gold because last two trading sessions have been absolutely interesting. Prime Focus also seeing good gains today. Senco saw good gains yesterday and today. And Newgen Software, that stock has been in focus along with the kind of gains that you've seen in terms of IT as a sector. So a lot of movers and shakers that you're seeing in terms of markets. Senco, that's the weekly chart, 10% up move that you've seen in terms of Senco Gold in the last 1 week, but the major gains have come in the last two trading sessions with this one. And Newgen, if we can just have a Newgen chart of as well of the last 5 trading sessions, you'll see the kind of moves, 5 or 1 month. You'll see the kind of moves that have come in there. Newgen Software, there you go, 7% cuts today as well. So pretty volatile one on this one. So that's the way markets are panning out from a broader market perspective right now, Anushi.
Well, thanks for that, Hiral. So, that was the overall perspective that we are seeing in terms of what's happening with the small and the mid-cap space. But with that, let's welcome the management for today, and that's Rajesh Bhatia, Group President and CFO of Uflex Limited, joining us. Hello and welcome to the show, Mr. Bhatia. First of all, just want to... hello. And first of all, wish you a very happy Independence Day as well. Just want to start off...
Wish you the same.
Thank you. So we just want to start off with by asking about your assessment of the first quarter numbers and even overall volumes, if you've seen about an uptick over here. But what's the outlook towards FY26 that we are looking at for volume growth?
So I think we had said that FY26 Q1 we had about close to about 8% volume growth and about 6.5% value growth, what we witness on a year-on-year basis. And for the full year, we had earlier guided that we'll look at about a 10% revenue growth. So I think we will, because some of the investments that we had planned that will come in available to us from April onwards haven't been so, especially the aseptic packaging facility in India, that expansion. So I think we've grown at 6.5% in the first quarter. Let's see for the rest of it, but as of now, we'll stick at about 10% revenue growth.
So when it comes to the guidance, post the Q4 number, you had given a revenue guidance of 10% and EBITDA margin guidance of 12.5% to 13%. On both fronts, your numbers have come in slightly below compared to what the guidance was. Are you confident enough that you'll be able to make up for these numbers in the remaining part of the 9 months?
I think if I look at on a revenue side, we have to grow at 11% for the 9 months. So looks a bit challenging given that the projects that we thought would get commissioned are still a little far away. So we'll have to really, dwell on increasing the capacity utilization from our existing businesses. Also, our investment in the, PET chips resin facility in Egypt. Those numbers are not being added on to the revenue because ultimately, though we achieved in the first quarter of operations more than 70% capacity utilization in that business. But, it's not adding to top line because at a consolidated level, it's all getting knocked off. So, and aseptic packaging hasn't still been commissioned. So, looks a bit challenging, but nevertheless, we'll stick at 10% growth. The EBITDA this quarter came at about 12%. The Q1 EBITDA, we're talking about the normalized EBITDA without any FX gains or losses. And we had said that about 12.5%. I think the upside in the India packaging films business, what we've seen post May, I think we will achieve about 12.5% EBITDA margin for the year as a whole, for sure.
Okay, so just a follow-up on what you said about, the capacity utilization levels being around 74% or so in Europe, in Egypt is what you said. When can we expect the incremental revenues from this particular PET chips that we are looking at? Along with that, if you can give us in terms of outlook for India as well, the expansion plans over here. So give us a broader outlook in terms of where the capacity expansion plans are and when can we see those incremental revenues flowing from the company?
So we have 4 ongoing projects right now. One is the aseptic packaging expansion from 7 billion packs to 12 billion packs at Sanand in India. Then we have a 12 billion packs greenfield capacity coming up at Egypt. The third is the WPP capacity at Mexico. And the fourth is our, recycling, PET recycle, which is mandated by EPR in India. I think we had looked at that, they'll come anywhere, somewhere between H2 and probably between December and March. But, within FY26 for sure, we'll have them. There is a bit of, ambiguity as to whether we'll achieve portion of that in H2 in terms of revenue and profitability. Else we'll have to shift our guidance to FY27 for incremental revenue as well as the EBITDA coming from these projects. These 4 projects have a potential to add about 3,000 to 3,500 crore of the top line. And, about a 12-13% EBITDA margin levels, what our industry is. They're likely to throw away between 500 to 560 crores of EBITDA margin.
So just on that part, can you just reiterate what's the kind of growth that we are looking from FY27-28 onwards? And this is with what kind of a margin profile that we are seeing?
So we are seeing that the blended overall margin, because, will remain between 12.5% to 13%. The top line growth of about 3,000 will come in FY27. So if we close this year, let's say at about 16,500 odd crores, or 3,000 crores from there would be close to about 18%, 17, 18% growth in FY27.
Right. Sir, I believe more than 50% of your revenue comes from international market. If you could just give us an idea, how much of revenue do you get from US? And I believe that your products are under some treaty, so they won't get impacted because of these tariffs. But given the fact that you are a significant stakeholder in this industry, you might be having some idea of what has been the impact on other peer group companies. Are there any order cancellations? What are you hearing on that front?
I think, like we have our substantial exports from other territories into USA, which are covered, which are from Mexico, and we are well protected under the USMCA as of now. But yes, there are exports from India as well and other territories as well. Now, given that we are presence in all, multi countries and all that, so that gives us the advantage if we can move, like Egypt, say, has the lowest tariff as of now, what we've seen, 10% into US. So if we were earlier, exporting into US from some other territories where the tariff is higher, so we'll use the Egypt facility to export to US. I'm just saying, that those possibilities exist because of our multi-locational manufacturing capabilities. And we'll see. I think this is still a moving story. Our next 6 months will really determine as to what we do. We do have some exports from India to US as well, which, are not very substantial, but, we'll have to look at them also as to, what sort of impact will it have on our margins or on our volumes. Right. But a very large part of our exports into US are well protected under US.
Right, sir. Just one final question from my side. Given the fact that you have a large part of exports going to the US market, not from India but from your other regions, just one thing I wanted to understand, what are your customers telling you? What is their strategy now? For other players, if there is a tariff that has been implemented, will they pass it on? What is this on-ground check that is suggesting you, sir?
I think what we likely see is that, to begin with, when US imposed 10% reciprocal tariff on everybody, they were could be passed on to the customers. So very easily, but a 25% kind of a tariff and all that, what happens on that? India is today looking at a 50%, which eventually, if the things go well, may come down to 15 to 20. So I think those are the numbers which can be easily passed on. So we don't see much impact of any tariff between 15 to 20% range. But obviously, a 50% tariff will call for a different set of negotiations with the customers, and are to expect that they'll take 50%.
Okay, thank you so much, Mr. Bharia, for joining in and sharing your perspective on Uflex Limited for going forward for not just FY26 but 27 as well. So that was the management of Uflex. Stock currently down about 0.8% or also. But with that also, let's welcome in our guest for today. That's Avinash Korakshekar, Director of Research of Profit Mart Securities. Avinash, hi. Welcome to the show. First of all, just wanted to get your assessment of the commentary that you've heard from Uflex Limited. What's your view on this particular counter?
See, I think Uflex is largely a B2B player, and most importantly, I think they are in expansion mode. I think the markets are worried that on the export piece, if the import tariff continues to be at 20 to 25%, that is definitely going to make their products expensive. And I think to a large extent, markets are a little worried that this could obviously impact their domestic export kind of trajectory. Definitely, I think it's not going to be easy for any customer to accept a 20 or 25% tariff, which eventually, makes the product more expensive. So I think, there could be a little slowdown in the export sales maybe over the next 1 or 2 quarters. We'll probably get to know once the 27th August deadline is crossed, and what actually finally gets approved. But nevertheless, even in the domestic market, I think the kind of volume growth which they have recorded in the first quarter has been slightly below expectation. So I think the markets are looking at a much stronger volume growth number. And I think most importantly, from the FMCG basket where they cater, there's been a lot of price cutting, there's a lot of competition. So I think, it was only a volume growth game initially. So my sense is, the 2-3 projects which the promoter mentioned, I think unless they get commissioned, we see some revenue impact on the financials. I think it's too difficult to take a call that, the stock would get re-rated in the very near term. So longer term, I think things could stabilize, but at least any growth which is likely to come in is likely to come only after the second or third quarter. So we'll prefer to wait and watch. We are constructive on the packaging space, but we believe that, it's better to wait for at least 1 or 2 more quarters before we can take a constructive call on the company.
Right, sir. Well, moving on to the next management on the show, Kapil Makhija, CEO and MD of Unicommerce eSolutions. Sir, firstly to start off with, if you look at the revenue growth on a sequential basis, it has continued to remain weak for second consecutive quarter. What is the main reason behind this? Is it your more exposure towards the e-commerce or quick commerce players that has been impacting your revenue growth on a sequential basis?
First of all, thanks for inviting me. We continue to demonstrate a strong revenue growth year on year. We have demonstrated 63% revenue growth. We are a one-stop shop for e-commerce enablement. So obviously, our growth is linked to the e-commerce volumes, and we've seen the broader e-commerce market not demonstrating the kind of growth levels it demonstrated during the pandemic. But having said that, we cannot really control the market growth. What we continue to do is focus on things that are in our control. So we continue to see a strong momentum of new client acquisition, as well as continue to build new products. And also, we've acquired a company, Shipway, recently, and in fact made it PAT positive in a matter of few months. So we continue to build and acquire new product capabilities to be able to serve the end-to-end e-commerce ecosystem.
Hi, Mr. Makhija. This is Anushi joining in as well. Just want to understand on the pricing front. Now, in quick commerce, you did say that there's a muted growth that we're seeing. Just want to understand that versus your other businesses. What's the kind of outlook that we're looking in terms of pricing going forward in the subsequent quarters?
Sure. Just to clarify, I talked about the broader e-commerce. We continue to see strong adoption in quick commerce. In fact, last year, we had processed about 20 million order items on quick commerce through our platform. But this year, in the first quarter itself, we are at an annualized run rate of 48 million order items. So we continue to see strong adoption of our quick commerce offering. Our revenues are linked to the number of transactions or shipments that we process. We continue to see our pricing in a similar ballpark that we've seen over the last few quarters. We haven't seen any pressures there. Plus, we continue to add new products, which give us opportunities to cross-sell and upsell existing customers, through which we are able to realize a lot more.
Right, sir. So when it comes to the software and service business, and I'm quoting CLSA here, they say that continued client mining and growth in top account is key to long-term success, and Unicom has been struggling on this metric since its IPO. Any comments on this, and how do you plan to improve this, sir?
So our revenue from revenue concentration of top 10 clients has seen a constant decline, which is our endeavor to ensure that our revenue mix continues to be diversified as we continue to add new clients. Our revenue concentration from top 10 clients used to be 50% plus, which meant that we were reliant on a few clients. This was a few years ago. And in the last quarter, we've published that our revenue concentration of top 10 clients is only 15%. So it's a consistent effort of continue to add new clients, which has resulted in our revenue being fairly well diversified. In fact, our revenue is diversified across various categories, as well as both traditional as well as digital first brands.
Okay, just want to understand on Shipway also. Now, Shipway is expected to be the growth driver forward. Currently, we've seen about a sequential dip in terms of where the growth was for Shipway. Just want to understand on this basis that how will the growth over here differ from the standalone business that you have?
Sure. So the sequential growth decline in Shipway is a result of a strategic initiative where we restructured certain select low margin accounts which are not meeting our internal benchmarks. Because of which, although there is a small dip in the revenue, but we have ensured that Shipway becomes PAT positive. So in just a matter of few months post our acquisition, we have been able to turn Shipway PAT positive. And if you look at our July numbers, we like we mentioned that in our investor call yesterday, that we have shown a highest ever ARR of 80 to 85 crores for Shipway, as opposed to 70 crores of ARR in Q1 FY26. So we continue to see a strong growth momentum with Shipway already. Shipway operates in a large space of 4,000 crore, in which it is roughly at 80 to 85 crore ARR today. So there is a significant headroom for growth for Shipway going forward.
Right, sir. Well, thank you, sir. Thank you for joining us and giving us the explanation about the quarter gone by. Avinash, coming to you on Unicommerce, how are you looking at this company, and do you see that the constant pricing pressure will be an issue for Unicommerce going forward as well?
Yeah, I think clearly, there would be some amount of pricing pressure, but since they have been able to add new clients, Sumit, and most importantly, I think if you look at their YOY growth, maybe the sequential quarter is not great. But if you talk about the YOY growth, I think a 60% growth is definitely commendable. My sense is, I think, this is a new age company which is related to the fintech sector. And I think you'll have to wait for at least another 1 or 2 quarters before we see some stability coming in. But I think it's going to be a very competitive business. And I think it's always going to be, that the management and the company will have to be on their toes all the time. But overall, the volume opportunity is very large. And I think that is where the key to incremental volume growth remains. So we'll prefer to wait and watch for the next couple of quarters. But yes, the numbers which have come out with a 3.9 crore profit and a 60% growth in top line are definitely decent in the current quarter. So possibly the second half should be much better, but definitely constructive on the company over a long-term period.
Okay, so wait and watch is currently the approach that we are looking at for Unicommerce. Thank you for that, Avinash. But that's all the time that we had on this edition of Small Cap Buzzers. Stay tuned for India Market Close coming up next.
In 1942, as India's freedom movement was taking shape, another revolution was beginning in Mumbai in color. From humble beginnings, Asian Paints grew to become Asia's third largest paint company and a global leader in coatings, combining innovation and sustainability. Today, it operates in 15 countries, leading markets from Nepal to Oman, Egypt to Bangladesh. With $3.5 billion in annual revenue, a $2.5 billion brand value, and a top-tier BSI score, Asian Paints proves that Indian enterprise colors the world. Born before independence, thriving in freedom. This Independence Day, we salute brands like Asian Paints for coloring the globe with India spirit.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
जय जवान, जो मैंने शुरू किया था ये एक्चुअली, मैं दोबारा आया हूँ आप लोग से मिलने के लिए। मुझे बड़ी खुशी है आप देख रहे हैं यूट्यूब पे मेरी फिल्म। वाह क्या बात है, क्या बात है।
देखिए जय जवान मेरे साथ 15 अगस्त को सिर्फ NDTV पर। जय जवान, जय जवान, जय हिंद, जय हिंद।
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
हेलो, बोलिए मैडम। डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बात, खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest. Welcome, you're watching India Market Close at NDTV Profit. I am Mahima Vachhrajani and with me is Harsh Sayata, and the entire NDTV Profit family wishes you a very happy Independence Day in advance. Now in terms of where the markets are doing right now, well, I think traders and investors don't want to take a risk over the long weekend, and that's why we're seeing a very range bound trade when it comes to the Nifty 50 as well as the overall Bank Nifty as well. The Nifty 50 trading around 0.12% higher, the Bank Nifty trading around 0.3% higher. Let's try to pull up the Nifty 50 heat map and see see how counters are doing in trade today. It's largely led by a lot of IT names. Wipro up 2.5%, Infosys up 1.8%. There's also Eternal that's doing well in trade today. HDFC Life, Eicher Motors are some of the counters that are in the green and doing well today. There's also Titan and Asian Paints, which are seeing gains of about 0.8 to 0.7 odd percent. But counters that are under pressure include Tata Steel down 2.6 odd percent, Adani Ports down 1.6%, Hindalco also down by 1.1 odd percent, Tech Mahindra also seeing losses of around 1 odd percent, and BEL also seeing losses of about 1 odd percent. There's Hero Moto, JSW Steel, Ultratech also in that red space. Let's also try to pull up the advanced decline ratio and see how that's doing in trade today. There you go. There's around 1400 odd declines. Of course, the market is skewed towards the sellers, and 880 odd advances. So slightly below that 2:1 mark there with respect to where declines are concerned. But in terms of the sectoral heat map, let's try to pull that up and see what's happening there. There you go. It's the Nifty Metal that's losing grounds today, down by about 1.5 odd percent, followed by oil and gas down by about 0.7 odd percent. Nifty Realty also seeing some profit booking there, down by about 0.6 odd percent. But something that's doing well is Nifty IT up 0.6%, largely led by Wipro that we saw in the Nifty 50 heat map. Nifty Consumer Durables doing well. Nifty Finance Bank, so largely the BFSI in the green today. In terms of the PSU Bank also in the green. There's Nifty Pharma, which is slightly in the green today after the kind of gains it saw yesterday. But otherwise, there's Nifty Auto, which is trading flat almost, but there is profit booking seen in FMCG as well. So that's with regards to where the sectors stand. But how are the broader markets doing?
Yeah, I mean, that will give you an indication, Mahima as well as viewers, good afternoon, as to how the broader markets are functioning as well, because you're seeing a relative outperformance in banking and IT, and which means that some of the broader market indices are facing some bit of pressure. The Nifty Midcap there down around 1/3% thereabouts, and the Nifty Small Cap as well down by a similar kind of number. When you're looking at the range and it's a fairly range bound day of trade, and that's the other thing that stands out for me across the market. Activity levels are slightly on the lower side, and it's very, very range bound, as Mahima said. Most investors, traders are not or keeping chips to themselves and keeping chips off the table. That's what it seems. BSE 500, top gainers, top losers. Of course, there are quite a few. Muthoot at the top of that list. It's also a stock of the day. So that one is up 10%. And not every day that a 1 lakh crore market cap company moves by that much. Then you have Kalyan Jewelers also doing fairly well for themselves. Chalet, Sterlite, Pfizer, again on the back of numbers. Manappuram is up 4 as well. Probably some bit of knock from the way in which Muthoot is doing. You have some names which are not doing as well. Cohance Life, again, maybe 40,000 crore, 7% move is a large one. Bata, EIH, EIL are just some of the names. CSB Bank, again, not particularly positive with regard to how the commentary shaped up yesterday, and therefore you're seeing that 4% knock in trade. Mahima.
So that's with regards to where the markets are concerned, and let's bring in Kush Bora joining us today. Kush, very good afternoon to you. With respect to where markets are concerned, I believe you will also be, taking careful positions right now going into the long weekend. Is that reading correct with respect to where Nifty 50 stands?
Hey, hi, Mahima. First of all, very good afternoon. A very happy Independence Day in advance to you and to all the viewers. That's right. See, my bias on the market remains long. If you see the kind of moves that we made yesterday, even today, consolidating with this mild positive bias, I think, from a near-term perspective, there could be an upside that could come about to 24,800, 25,000 levels. 24,400 remains a strong support zone. But this is the known unknown that the market is perhaps, cautious about. We all know that there is a big meeting lined up anyway, ahead of a long weekend. In volatile times like these, markets would have perhaps cooled off a little, consolidated and traded with low volumes. Now more so, as I said, because of that known unknown of the meeting, I don't think anyone wants to take a very big position home. Despite that, as I said, the bias should be on the long side. If you have a position on the Nifty, perhaps even on Bank Nifty for that matter, not a bad idea to hedge that or maybe go a little light just because of the nature of the event that's lined up.
What about the top picks for the day?
So more of updates on the picks. This morning, on the morning show, we had discussed a call, DMCC specialty. chemicals seems to be doing well right now. Volumes a little muted, but that's been the case across the market. So I'll take that as a positive on the price action. So from the current levels, 345, 356 target still intact. 320 is where you place that stop loss. The other one is also an update. GPIL Godavari Power, is something that we discussed yesterday for the first target of 205 that was hit today. In fact, even yesterday for a brief bit, the stock actually hit that level. I think it's a good idea to continue holding on to this one. Perhaps add a little, since it's seeing some sort of profit booking with a stop loss around the initiation price of 198. Now for targets of 212 and 219.
Okay. All right. So those are the picks that Kush has on his radar today. But it's time for an NDTV Profit exclusive. Now, Indian tax authorities are sending inquiry notices to several individuals over foreign accounts, and mainly in the UK and European countries. And we have Shimi joining us with more exclusive details on that story. Shimi, what are you picking up?
Yeah, so what sources tells us is that, the Income Tax Department has started sending inquiry notices to several individuals over its foreign holdings. And in fact, the notices were issued under Section 131 pan-India, across the India, where they are seeking explanation over that how and where the money has been disclosed, the account has been disclosed. Now, the move comes after the Indian authorities have received a huge number of data, and in fact, what we understand from the sources that around 2.5 lakh of account have been shared under common reporting standards via automatic exchange of information. And basis of those data and those intel, now the Income Tax Department started sending inquiry notices in most of those numbers and those data. Now, the critical point here is that if the account remains undisclosed and they are not able to kind of disclose, they won't come forward and say that we have not disclosed these data, then they may have to face action under Black Money Act, which is a very rigorous law under Income Tax Act, which actually attract jail term up to 3 years plus above 100% penalty on the total undisclosed amount. The important point here is that Income Tax Department notices is at inquiry stage, and where the signal and the messaging tax departments want to send that, look, you have chance, you can come forward and disclose these numbers, otherwise you may have to face rigorous action. And of course, with the global cooperation with all foreign jurisdictions, they are getting these data to kind of go after those individuals who used to easily stash money abroad and were difficult earlier to kind of trace those foreign accounts earlier, but with real-time access to these financial data, now Indian authorities are clearly going after those tax offenders.
Okay, thank you for that, Shimi, for that perspective as well as for that cover of sorts coming in. Okay, viewers, stay with us. We have Kush with us. Kush, quick take with regard to the auto space, because I read a tweet today by Sandeep Sabharwal, who's also a guest speaker on our channel, talking about how the auto space on charts looks extremely interesting. The Nifty Auto Index, apparently, and he's referring to a head and shoulders pattern that it has made, and believes that this is probably one of the very few times where a perfect chart pattern is being seen. Wanted your take on this, and is there a possible opportunity in this pocket?
Harsh, so there's definitely traction in the two-wheeler space, and the two picks that I've also discussed a couple of times on the channel are TVS Motors and Hero MotoCorp. In fact, I remember a conversation, I think it was with Tavanna in the morning show, where the 4200 base was a very solid one, and we said it's not a bad idea from a risk-reward perspective also to go long. The stock was around 4350 or so at that time. It's shot up quite a bit. Even now, if you see, the volumes on the way up are very, very encouraging. So definitely, as far as the two-wheeler space goes, TVS Motor, Hero MotoCorp, both these stocks look very, very interesting even now. The issue is with the passenger vehicle space, where the only candidate, if you suppose standing out is actually Mahindra and Mahindra. It's had its period of accumulation with positive bias, seems to be moving higher. It's perhaps just a market hangover that's holding it back. Otherwise, the stock perhaps would have run to 3,400 and higher levels, which in time, in all likelihood, it might. So I would actually be constructive on Mahindra and Mahindra. Now, concern is with the likes of Maruti, which has faced 13,000 as a resistance level multiple times and dipped from there. So if 13,000 is taken out, I would be constructive on Maruti. Tata Motors, we all know, is a long-term play and hasn't really done much in terms of momentum. So yes, I would be constructive on the auto space, but selectively. And the three picks in this space would be TVS, Hero, and Mahindra and Mahindra.
Thank you for that, Kush. Stay with us. As always, 2:10, we have a special conversation lined up for you. We have Prashant Khemka, founder, Vito Capital, joining us on this Independence Day special conversation. Welcome, sir. Harsh here. Always great chatting with you. So let me start off by giving or asking you for guidance. What's the best space to be in this 79th year of independence? If I were to ask you for that, one big sector or space or pocket in all of this uncertainty that we are seeing globally that could outperform this year and could maybe help some of our viewers gain financial independence, maybe not in this year, but maybe a couple of years from now.
Thank you, Harsh, for having me here on the show today.
It's a pleasure. It's totally ours.
So, see, I would answer the question a little differently, not trying to avoid the question.
Sure.
But actually, some of these questions are of the nature that the answer is impossible for anyone to know. Not just myself, I'm saying impossible for anyone to know. So it's impossible to know which sector is going to do better next year, according to us. But what I can say is, for financial freedom that you talked about, longer term financial freedom, the few steps that one needs to follow, first of all, depends on whether an individual has a corpus to invest or not, whether they have the savings that they can invest in equity market. If they don't, then start saving. That's the first step. Obviously, a lot of people end up spending nowadays. I see younger folks end up spending almost everything that they earn and take some borrowing. Then there is no room for investment or financial freedom. You have to decide what is a priority. Your priority to have a $200 mocha or a $100 mocha ahead of building a path towards financial freedom, then that is your choice and you have to decide. Otherwise, you can start with a target to save on a monthly basis. What is the minimum that you would save? And just I'll give you a hint, the higher, the better. And then from this savings, you determine an asset allocation program. Maybe you can, take help from a financial advisor on this front, depending on your risk appetite, your time frame, your expenses that you see ahead of you. You can come up with what is the right asset allocation. Risk appetite plays a very important role. And also the comfort with equity markets. For me, only feel comfortable if 100% is invested in equities. If anything less than 100%, it's very discomforting to me, and hence have always been 100% in equities and fully invested at all times. So that comes me to the third point. Once you've determined your asset allocation, don't, flog it around. It should be truly a structural asset allocation. It should not change month to month, quarter to quarter, depending on macro headlines. Like Trump is imposing tariffs, Trump is reducing tariff. All these things, they should not lead to, I would say, there should be hardly any events or instances where you have a step function change in your asset allocation, other than an evolutionary manner where, depending on your age and risk appetite and responsibilities as they change over time, that may have an impact on your asset allocation. So to recap, if you don't have a corpus, start saving. If you already have a corpus, or once you have a corpus, determine an appropriate asset allocation program and then stick to it. Don't get whipped around by the market volatility and media headlines. Harsh, back to you.
So you've given us a fantastic 30,000 feet view. If I were to just probably ask you a follow-up, so a lot of investment analysts and big investors say that you should sit on cash at certain points in time, and that really helps you deploying cash at the right time, especially where equity markets is concerned. You are more of the view that be fully invested at all points of time. Give us your take on why is it that you feel so? Do you just see that that's the quantum of opportunity always available in equity markets? There's always inefficiency somewhere. Is that where you come from when you give us that?
So Harsh, few things. First of all, I've heard many market gurus talk about the beauty of keeping in cash, staying in cash and whatnot. I'm yet to see one that has really benefited over a long period of time by doing so. And for every one example that you might be able to cite, and I won't go into verification of that, there would be dozens, if not hundreds, who have lost money doing that. Okay, I don't believe that it is doable, and hence I have never even tried. So long ago, I saw a movie about the time when I started investing in equity markets in the mid-80s. I saw the movie Dawn, where there's a dialogue, Dawn ko pakadna mushkil hi nahi, namumkin hai, which applies, though Dawn gets caught in the movie market, you can't catch the bottoms and the peaks and whatnot. So I've never tried to catch bottoms or find bottoms in the market at a market-wide level. You can do it for individual stock basis. So now that is one perspective to look at it. Now there's another perspective I'll give of why I believe fully invested makes sense. It's a bit mathematical. I have at least reached the conclusion that of all the asset classes, equity gives the best returns over time. Yes, it is a little bit more volatile in the short periods, but in the time horizon, which is over decades, over a lifetime, that volatility is nothing. So longer term, equity provides the best return. That is number one. Second is that timing or calling the market direction in the near term is impossible. So first, hypothesis that I believe in longer term, it's the best. So it is obviously going up at a faster pace than any other asset class. Second hypothesis, it is impossible in the shorter term, it is impossible to predict where it's going. Yeah. When you combine the two, it's almost like mathematical, A equal to B, B equal to C, so A equal to C. So when you combine the two that I talked about, then to me it makes tremendous sense to stay fully invested at all times. That's the only logical conclusion if you agree with the first two, that A, stock market is the best return over time, and B, it is impossible to time. If you combine the two, the only conclusion is to stay fully invested at all times, Harsh.
Makes absolute sense, Mr. Khemka. Hi, Mahima also joining this side. Just want to understand in terms of where earnings stand, right? We're almost at the fag end of where Q1 FY26 numbers have almost come out for most of the companies. Just wanted to get your sense from the first reading of it as to how earnings will pan out for FY26 going forward. And a follow-up with regards to that, do you think now valuations perspective, do you think it's attractive enough? Markets are attractive enough, and if one wants to go ahead and invest today, do you think this will be the reasonable valuations to enter at?
Mahima, I think it's very reasonable valuation to enter at. It is in line with the last 11 years, let's say. Since 2014, the multiple has hovered around 20-21 times. Right now, we are right there. It's not I'm not saying that's the right multiple or wrong multiple, but one of the measures or parameters that people call a market expensive or cheap is by looking at how is it trading relative to history. So right now it is trading right in line with the last 11 year since 2014 average multiple, the market. So that is one. Second, to your point of earnings, I think the first quarter, everything that we've seen so far, obviously there are always puts and takes. Certain sectors have done better, certain sectors not done so well. Within sectors, there are certain names that have done even better or not done so well. So that's always the case. But in aggregate, the numbers of the quarter are consistent with what we believe would be a year of low double-digit corporate earnings growth. And that's in line with longer term normal. I think we had, after COVID, 4 years of super normal or above trend line, I would say, above trend line earnings growth. Last year it was a bit softer. And this year we're expecting in line with the trend line, which is a low double-digit earnings growth from the market.
Understood. Mr. Khemka, in terms of where the flows are concerned, DIs have been resilient enough to keep the markets in check. But year to date, we've seen that FIs, has been net outflow only. It's around 1,92 crores. Just want to understand as to, what will be the next trigger that will bring back FIs in India when it comes to, the overall net inflow position that will be in positive.
See, the market is the biggest trigger. The market is going higher. There's some puts and takes. So see, first of all, we have to understand that out of $800 billion or so invested in India by foreigners through the FPI route, 600 or so is as part of multi-regional funds, be it Asia Fund, EM Fund, or Global Equity Fund. Only approximately 200 billion is India dedicated funds, people choosing to invest in India, whereas the vast majority, 75% or so, is people choosing to invest in emerging markets, and a small allocation flows through to India. So if there is a situation where people are negative, investors globally are negative, say on emerging markets, even if they're positive on India, even if the 200 billion has grown by, let's say, 5% to 210 billion due to net inflow of $10 billion. But what if this $600 billion sees a 10% outflow or even a 5% outflow? So then that is minus 30. So that minus 30 would be far bigger. And that's because not people are just cutting down on India exposure within EM, but just overall global investors are cutting down EM exposure. There's been 5% outflow from EM funds, let's say. That would lead to 5% outflow from that $600 billion bucket, vast majority of which is EM. Yeah, and 200 billion would only get 5%, which is 10 billion. So even though investors are allocating to India and are positive, the overall flow can be negative. That's an important point, my view, to understand. And what we've seen over the last year, 2 years, is exactly the same phenomenon where EM has seen considerable outflows, and that has dominated the flows in India. I'm not saying all throughout India flows have been positive. Of late, India dedicated flows have also turned somewhat weak and negative, and that is to do with Indian market underperforming this year by about 20% relative to the rest of the EM. Markets everywhere, investors everywhere are extremely predictable in that they put money in what has recently done well and they take money out of what has recently done poorly.
Sure. So you've been an investor for a very long period of time. So you've seen various cycles, various themes play out over 3, 4, 5 years. One or two or three of those likely themes may be energy transition, maybe data centers, maybe AI and technology. How do you suggest, or how are you playing some of these themes? Or do you believe that some of them are premature and maybe others will do well? So give us your take.
No, Harsh, you're right. Look, there are two things. One is the themes playing out in real world, and B, is there a way to benefit from them in the stock markets, from the equity markets? Yeah. So some of the themes that you mentioned are very true. I'll throw in AI as well into that, along with energy transition, and so on and so forth. Now the question is, in the listed market space, what are the opportunities either directly or indirectly benefiting from them? And B, how are they valued? Whether investing at current prices, even if the theme does extremely well as expected or better than expected, whether investing at current prices, would they deliver good returns? Obviously, we would like outsized returns, but even whether they would be able to deliver better or superior returns. So those analyses have to do. As an example, let's say during 2003 to 2007, infrastructure, real estate, and major boom in the real economy was there. And those were the strongest themes at that time. But most of those sectors didn't end up making money. In fact, if you invested beyond a certain point in time, let's say 2005-6 time frame, those who might have invested in 2003-4, got in very early, could have made money since that time even till today. But those who invested in 2006-7 time frame, even the themes were at their strongest in the real economy, in the real world, in fact, might still not have recovered their money, at least not recovered inflation adjusted or market adjusted. Yeah. So those are important considerations. So I agree with you in terms of the themes that we'll see in the real economy play out very well globally as well as in India, this whole energy transition and the AI phenomenon. The challenge is to identify names that directly, indirectly benefit and whether they are at appropriate valuation at this time.
Right. Thank you so much, sir, for coming in, speaking with us on this very special day. Wishing you and yours a very, very happy Independence Day, sir. And thanks for coming in and giving us that perspective.
Thank you, Harsh. I'm sorry not dressed for the occasion, but thank you for having me.
Not at all, sir.
Much appreciate you.
Not at all. I'm sure that all of your views, sir, resonated very well with the viewers.
Wish you and all your viewers a happy Independence Day.
Thank you, sir. Thank you. And with that, we'll slip into a short break. On the other side, of course, we'll continue India Market Close, so stay with us.
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
मुझे तोड़ लेना वनमाली, उस पद पर देना तुम फेंक, मातृभूमि पर शीश चढ़ाने जिस पर जाएं।
वीर ने क्या बात है भाई, वाह वाह वाह। अगर चीरोगे ये सीना धड़कता देश निकलेगा। मैं वो हनुमान हूँ जो दिल में हिंदुस्तान रखता हूँ।
भूल गए क्या युद्ध भूमि में कीमत बड़ी चुकाई थी।
तुमने तो अपनी ही मर्जी से वतन छोड़ा था।
तब ये वर्दियां खड़ी थी तान करके छातियां।
खून माटी से जा मिला वरना आज सिंदूर ही नहीं होता।
जय जवान जो मैंने शुरू किया था ये एक्चुअली मैं दोबारा आया हूँ आप लोग से मिलने के लिए। मुझे बड़ी खुशी है आप देख रहे हैं YouTube पे मेरी फिल्म। वाह क्या बात है, क्या बात है।
देखिए जय जवान मेरे साथ 15 अगस्त को सिर्फ एनडीटीवी पर। जय जवान जय जवान जय हिंद जय हिंद।
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardroom.
Welcome back. You're watching India Market Close. Now it's that time of the show where we invite Soumit Sarkar, and who is joining us with all the chatter that he's hearing from the dealing room, and he's picked up some things today. Soumit, what are you hearing today?
Well, definitely nothing on the consumer stocks, but multiple stocks that remain in focus. Firstly, it's blue.
Sorry, she just breathed. She just breathed a sigh of relief because a long weekend is something that Mahima is really
waiting for.
That Soumit was planning to spoil. But okay.
Well, yeah, multiple stocks that remain in focus. Firstly, it's Blue Jet, and dealers are indicating that the company might announce a fundraise as soon as on Monday, and the QIP amount could be around 1,000 odd crore rupees, and the pricing could be at a discount of close to around 5 odd %. So keep an eye out for Blue Jet Healthcare. For BPCL, dealers are indicating that there are buy flows seen at lower levels on this counter. Dealers believe that BPCL currently is the best bet among the oil marketing companies. For KPIT Tech and Oracle Finance, multiple dealing rooms are suggesting buy calls to their clients, and this is based on completely technical charts. For Ola Electric, dealers are indicating that there are buy flows on large HNI desk on anticipation of some positive announcement that could come in on their annual event that will be held tomorrow on August 15th. For RBL Bank, dealers are indicating that the fundraise announcement could come in anytime soon now. But do remember that this news has been doing rounds for quite a while in market. And lastly, when it comes to Vedanta, there are buy flows seen at large HNI desk on lower levels on anticipation of some positive announcement that is expected to come in soon from the company's side. So keep an eye out for Vedanta as well.
Very interesting. Soumit, on the BPCL front, you're seeing buy flows at lower levels. You also mentioned today morning that the results were largely in line, you would say, and you felt that there was still some bit of constructiveness left on the stock.
Well, yes, if you look at, if you compare all the three oil marketing companies, HPCL, BPCL and IOCL, BPCL is currently has the cheapest valuation. It posted a much better result compared to what HPCL and IOCL has reported numbers right now. So on that front also, BPCL numbers are much better and valuations are cheap. So on that basis, dealers believe that it is currently the best bet among the oil marketing companies.
Interesting, and we will quiz some of our guests on that as well. BPCL clearly finding favor from someone who tracks this space very, very closely, which is Soumit. So thank you so much, Soumit, for that. We'll let you go. All right, we still have Kush with us. Kush, BPCL on the charts.
Afraid I still don't share the same enthusiasm as Soumit does. I will give the entire OMC pack a miss. Let's see, if the price action does take off, and then if there are some resistance levels taken out, I might change my view. But at the moment, I wouldn't really venture a trade. And if you see all three of them after a good run are actually seeing some sharp rounds of profit booking, trading close to the low point of the day. So yeah, that view remains. I wouldn't trade them just yet.
Okay, all right. So that's with regards to where BPCL stands, but we're also joined by Nirav Ashar now. Nirav, hi, very good afternoon to you and a very happy Independence Day in advance. I'll take up what Soumit was talking about. That's RBL, a possible fundraising on the cards for the counter. Your view with regards to where RBL stands?
Yeah, good afternoon, and thank you for the invite. And here is wishing everybody at our NDTV team and all our viewers a very happy Independence Day in advance. Yeah, I think with regard to your question, I think RBL planning a fundraise at this point of time. I think it's the most opportune time to do a fundraise because we are seeing an uptick in the credit offtake, and the loan sanctioning disbursement has been going up. And I think this seems to be an opportune time to do the fundraising as far as the bank is concerned.
Nirav, thank you for that. The S&P has upgraded India to a BBB, outlook stable versus a BBB negative. This is, of course, substantial positive just on the eve of Independence Day, Mahima, that we're seeing. Wonder what's happening on the 10-year yield. If we have that, let's quickly pull that one up and let's see if there's been an impact on that. But this is obviously big news, positive news coming through, that S&P has upgraded India to a BBB. Of course, this will lead to lower funding costs from a fiscal deficit standpoint, which is clearly a positive, and clearly all positive from a macro perspective where India is concerned. Nirav, any thoughts with regard to what this will mean broadly?
Well, I think it's a very big positive at this point of time, especially if one were to consider this on a relative basis, if one were to compare this with the rest of the world. We are seeing the world is going through a lot of turmoil at this point of time. As far as the different geographies are concerned, we are seeing that there's expectation of a slightly lower growth as far as the US economy is concerned. Europe is already going through a sluggish growth period at this point of time, and we have China, which is showing resilience at this point of time. So I think especially in this entire context of things, I think it's a very positive development. And one should not forget that all this upgrade has come on the back of some very strong fundamentals. So we have the rain gods with us. So we've had a very good Kharif crop as well as a Rabi crop. So this is one big positive. And the second big positive for the Indian economy has been the food inflation has been tamed. And we have the commodity inflation, which has been tamed to a large extent. And we have crude oil prices which have behaved. So they are hovering currently at around $66, which gives a lot of comfort to the Indian economy. And this is not to forget that we have a good growth story ahead of us, especially the focus on the infrastructure spending, etc. should augur very well as far as the economy is concerned.
In fact, there are lines also coming in on the same, and that says that they believe that the effect of US tariffs on the Indian economy will be manageable, and that's one of the reasons as to why they've upgraded India. In terms of the 10-year bond yield on bonds that Harsh was talking about, that is also taking a sharp fall. It's come down by 7 basis points, which opened at around 6.47% mark, which has come to around 6.4% right now. So that's the effect of this particular upgrade that S&P has given to India, and that's probably S&P's way of saying Happy Independence Day to us, it seems, Harsh.
Well, it does, and what this does even to the currency, which is the rupee, will be crucial to see. Some bit of rupee strength prima facie being witnessed clearly on the back of this. The chart has gone a little bit awry, but we'll have to wait and watch as to, the dollar rupee chart. Can we pull that one up? There you go. So we're seeing some strength where the rupee is concerned as well against the dollar. Clearly positive from that perspective, even though IT seems to be doing well on a day like this. So yes, interesting stuff playing out at this point on the back of that substantial upgrade, Mahima.
Absolutely, and we have Hiral also joining us with more detail as to how this will, overall impact.
What's interesting over here is, this upgrade is coming in because the last time what S&P did was in terms of the FY26 growth forecast. They had last upgraded that, I think, if I'm not mistaken, a month back to 6.5%, and their entire conversation was that the upgrade in terms of growth is coming in on the back of a resilient, domestic demand as well. So that was the time when they actually went ahead and raised the growth forecast to 6.5%, and the reasons that they cited for the same was normal monsoons, soft oil prices, tax reliefs, monetary easing. All these were the key drivers as well amid the global headwinds that they were looking at. But now, following this upgrade in terms of growth, upgrade coming in to a BBB with a stable outlook does come in as a key positive, and this is coming in at a time when you're talking about threats from a US tariff perspective. Now, to be noted, tomorrow you have Trump and Putin that will be meeting as well. So just ahead of that, this is a crucial step. The impact that you're seeing in terms of the bond deals, the impact that you're seeing in terms of the Indian rupee as well, pretty interesting. And this is an absolute positive news, Harsh and Mahima, that we're picking up. So one, an upgrade in terms of a growth forecast, which is now followed by an upgrade in terms of the credit rating. So you know where India is headed towards.
And you know, the report also is quite interesting because it says that they've given the reason as to why they've upgraded the counter. They're saying that India is prioritizing fiscal consolidation, and the kind of government's political commitment is there to deliver public finance as well as maintaining strong infrastructure drive. That's something that is, you know, one of the reasons as to why they've upgraded India as a whole. And they're saying that robust economic expansion is having a constructive effect on India's credit metrics as well, and they expect sound economic fundamentals to underpin growth momentum over next 2 to 3 years is what they're saying. So these are the two main reasons, an overview of the overall upgrade on India.
Yeah, and it makes sense, right? Because Hiral, Mahima, you know, largely the Indian economy and the Indian fiscal prudence has been on the conservative side at a time when other economies of the world have been focusing more on spending, and therefore, this is very, very welcome, and this has been an appeal which has been in the works for a while. We are joined in by Gaurav Sen-Gupta, who's the Chief Economist at IDFC First Bank. You know, Mr. Sen-Gupta, thanks so much for joining us at very, very short notice. Talk to us about what this means structurally and what this opens us up for. Was this something which was in any case warranted, or is this a bit of a surprise? Give us that perspective first.
It's definitely a positive surprise. The fact that the rating upgrade is a positive surprise, and it reflects the fact that India, especially at the center level, the central government has stuck to its fiscal consolidation plan. In fact, for the last couple of years, the center has also outperformed in terms of reducing the deficit to below target levels. And they've done it in a very challenging environment, and I think among emerging market countries, if you see the overall trajectory post-COVID of fiscal deficit to GDP, India will be one of the few countries where overall fiscal deficit to GDP is coming down, led by the consolidation by the center. And this upgrade actually reflects that, because the only thing that is holding back India's rating or keeping us in the BBB bracket is the fiscal side, where we, relative to other BBB rated countries, are slightly on a weaker footing. But the fact that we are making them right in terms of fiscal prudence, we are making the right moves in terms of sustained reduction in fiscal deficit as a proportion of GDP for the last couple of years. The fact that the center has done a lot of reforms, for example, getting off balance sheet items on balance sheet, also trying to streamline the cash management, the sort of fund release from center to state governments with their real-time, or I would say just-in-time cash management using the Sparsh system, etc. So this upgrade reflects the fact that at least on the fiscal side, our fiscal deficit to GDP has been coming down, led by the center. Even our government debt to GDP, while it's on the higher side, it is on a moderating trajectory.
Mr. Gupta, hi, Mahima also joining in. Just want to get a sense, you know, the report also says that they believe that the effect of US tariff on Indian economy will be manageable, and that's been the case so far, that a lot of market experts, economists have reiterated. Do you also believe the same, and do you think that this upgrade will further probably help India when it comes to the overall tariff impact that's going to have?
Definitely, the good part is right now in this sort of global slowdown, high external uncertainty among the Asian countries. India is one of those few Asian countries which is domestic demand driven. So we are more dependent on how our domestic consumption and our domestic investment cycle performs. We are a net importer, so there is some downside risk from the US tariffs, but it's much more manageable due to the nature of our growth dynamics, being a domestic demand driven economy. So for example, if let's say the US persists with its 50% tariffs till March, we see a downside risk of maybe around, cumulatively, of around 40 basis points. If, let's say, our base case is that India does reach a agreement with the US, that would limit the downside risk to growth. But given the nature of our growth, being domestic demand driven, also the fact that if you see our export basket, it is, yes, US is our largest trading partner in terms of 18 to 20% of our exports go to the US. But if you see the merchandise export basket of India, it's well diversified because we have got almost an equal distribution between developed markets as well as emerging markets on the merchandise front. The other saving grace, or I would say protection from external volatility, is the fact that on the services trade, where these trade tensions for now have not spread, India has really post-COVID, if you see, there has been a very strong pickup in our services exports, especially software, professional services, etc. So that has limited the impact of external volatility, global growth slowdown on India. So we do agree with the S&P assessment, but for us, I think the limited impact is also assuming that India is able to reach an agreement with the US.
All right, thanks a lot for that, Gaura. Moving to Madhavi Arora, who joins us as well. She's the lead economist at MK Global. Madhavi, hi, I hope I'm audible.
Yes, very well.
So, Madhavi, any first thoughts, long sort of impending upgrade, and what are you making of this?
So, Gaura has largely covered bits of it, but of course, I think we are finally getting to enjoy the fruit of the last 10, 12 years of consistent fiscal consolidation across the board, across entering states to some extent. And the fact that we've sort of managed our balance sheet, not just in the government side, but as well as other economic agents, both household as well as businesses, have actually been very clear, very manageable in terms of their own balance sheet assessments. And I think the external sector also has been, pretty well managed. From the internal as well as the external balances, I think India has been steadily improving, its case for an upgrade, and I think it was long impending and finally it's happening. So, it's a good news, that's it.
Madhavi, I do want to understand, so with most, all three of the global credit rating agencies, they've consistently focused on how the fiscal consolidation path is, sort of India's Achilles heel. Also, the other factor they've consistently spoken about as the reason for India not having been upgraded earlier was the debt to GDP ratio, the general debt and those levels. So, of course, while we've made immense progress on fiscal consolidation in recent years, on debt, while we have seen some reduction, it has not been to that extent. So, I mean, how are you sort of piecing that together?
Oh, post-COVID, I think across the board, we saw worsening debt to GDP ratios. Was not India. But if you look at the Western world, the debt-to-GDP ratio actually worsened dramatically. Even in China, for that matter, last 2 years, the consistent fiscal expansion has led to the debt-to-GDP ratio now going above 90%. For India, if you look at the trend, I think we reached close to around 89% post-COVID. We're now currently somewhere close to 83%. And given the fiscal consolidation path that we have in order, I think next 2 years, it should be able to touch somewhere close to around 80%. Of course, going to a 60%, which is what their main aim is going to be a long-drawn process. But at least there's a direction, there's an intent. And our debt-to-GDP ratio has worsened much lesser than our peers in emerging markets. Or if you look at the DM market, which is developed world, there the trends are very different from what you're seeing in India. So at least on incremental basis, there is a hope that India, if it continues with fiscal consolidation, should be able to see a much lower debt-to-GDP ratio in the coming years.
Okay, Madhavi, I do have one last question for you regarding what you think are the immediate implications of this upgrade. What can we expect in terms of any reaction, immediate as well as in the near term, on the bond yields, on currency markets? What can we expect the implications of the upgrade to be?
So any upgrade, investment upgrade that any country sees leads to a big increase in the passive flows as far as the some indices are concerned. So you are going to be seeing, and you are already seeing the first impact, the major impact across asset classes, be it INR, be it bonds, or be it equities. So, but that beyond that, I think because of this upgrade, you should see some passive flows coming into India, which would ideally be good for the quality flows that that would stay back instead of just being hot money flows. So I think any kind of upgrade leads to a relatively lower risk premium for the economy, which again has impact on the overall financing ability of the country. So of course, broad-based gain that we should be seeing across sovereign as well as corporate when it comes to borrowing abroad and even domestically.
Okay, thank you, Madhvi, for some of those views coming through. Gaura, thank you as well. We'll let both of you go. Thanks so much for joining at short notice and giving us that perspective. Pallavi, thank you for joining in to that conversation as well. Let me bring on board Gurmeet Chadha, who's also here to give us a perspective on what this means. Gurmeet, uncertain global macro, but India getting a big thumbs up on the eve of Independence Day.
Absolutely, couldn't have come at a better time, especially when we are grappling with host of issues. If you see, India is probably the only market which has underperformed in last couple of weeks, largely due to tariff and trade war issues. Japan made a new high. We've seen US markets scaling new high. S&P made new highs. Most European markets made new high. And I think this couldn't have come at a better time. And I think it was long due. With a series of reforms government has done, fiscal consolidation, India now being the fourth largest economy and the fastest growing. So I think it was long due. Ideally speaking, although you may say that I'm asking for more, I think we deserve much better. We were ranked at par with likes of Thailand, Romania, etc. With our external debt position is much better. And I think couldn't have come. And I think the banking cleanup which has happened, corporate balance sheets being deleveraged, this will have a lot of long-term implications, including to flows in bonds as well as a serious reduction in FPI selling.
Gurmeet, hi, Mahima also joining in. Just want to get a sense, we've already seen the fall in the 10-year yields already. What do you make of this in terms of where the yields go from here on, as well as the India dollar impact, rupee dollar impact?
I mean, very good question. I think, and I've been making this point, Mahima, with Harsh and Neeraj also for a while, that long duration bonds are the juiciest in terms of asset allocation right now. And I've been saying this for almost 12 months when the yields were 730. I think now with inflation being 1.5 and WPI being negative, I think the terminal repo rate can go to 5, maybe 25 bits below that. And with 10-year GSEC typically, is about 50 to 75 bits over repo rate. So we can see 10-year yields sub 6. Which means, you can see another 30 to 50 bips rally on bond yields, which also means corporate bond yields will come off and cost of funds come off. And I think that has a huge bearing on the overall system, the credit offtake, the banks in terms of the treasury gains they do and cost of funds falling. And I think overall people have forgotten, because we have been so used to high rates and high yields. What does let's say a 6% home loan do to consumption in housing? What does a 6% car loan does in private consumption? So this has huge ramifications, along with, I think, interest rates coming down. I think, as I said earlier, couldn't have come at a better time.
Our Executive Director, Neeraj Shah, also joining us on the phone line. Gurmeet, be with us, please. Neeraj, what do you make of this? What's the editorial take? Neeraj, can you hear us?
Yeah, loud and clear. Can you hear me?
Yes, yes, we can. Please go ahead.
Yeah, I'm saying, Harsh, it'll be interesting to see if there are further dead economy tweets or social posts coming out. But be that as it may, I mean that's the joke that every corporate leader that I send this message to sends back to me. So this is a shot in the arm, right? I mean, and it has immediate repercussions, some of which Gurmeet spoke about. And I wonder if there is a pattern in the way global rating agencies in the last 12 months have gone ahead and given a thumbs up to India's economic standing is. Now, whether the economy is slowing down and the pace at which it is slowing down is a different question altogether. This is more about the balance sheet strength of India and whether India's economy is able to absorb shocks, if any, right? In some sense, the rating does that. And I think that is, therefore, this is a thumbs up to my mind. I would love to hear, of course, what Gurmeet and other people have to say. But yeah, this is a well-expected shot in the arm, if you will, for India. It's just coming at an interesting juncture, Harsh.
Right. So, Gurmeet, we've spoken bonds, and Neeraj also, please be with us. Gurmeet, we've spoken bonds and how you're positive there. What's the immediate bond impact, and what do you believe the cascading impact on equities will be, Indian and in the global context? Give us that perspective.
So purely from an investor point of view, because we manage public money, I think if you see, there's a lot of gap even between the 10-year and the 20-30-year bond. Traditionally, this gap is not more than 10-20 bits, but because of the FI selling, post-RBI change in stance even in bonds, and the market is slightly illiquid, relatively liquid versus 10-year, not liquid in absolute sense. The gap almost went up to 50 basis points. So I think any long duration fund, from an investor point of view, you will benefit from the compression as well as the overall fall in yield. So I'll not be surprised if the next 1 year return in bonds could be double digits. Won't be surprised there. Secondly, as I said, there's a lot of impact on the overall cost of borrowing and the perception in general. Because see, mind you, we have just got included in the global bond index, and there were already some news of JP Morgan reconsidering India's weight, etc. So I think we need long-term bond flows as well. A lot of time we are so focused on FPI flows in secondary market. We forget that we need bond flows. And look at this way, income tax amendment has happened, and I'm surprised it hasn't been covered as much. I was speaking to Neeraj also on this, that now the sovereign funds, the pension funds can invest in infra sector with exemption on dividend and capital gain. Now, if you add all of these things together with the rating upgrade, higher FPI flows in bonds, income tax exemption towards infra, you can see massive foreign capital coming. I think just need to act on this now and do more things to deepen the corporate bond market in particular. I think that could lead to significant benefits for the overall economy.
Okay, all right. Gurmeet, we've also got the short-term ratings from that report, and we've got that upgrade there as well from A3 to an A2 is what the short-term ratings have also been raised at. In terms of what Neeraj was also earlier indicating, saying that the tweet about the dead economy that was just defied by this take that S&P has given on India overall. Any message, according to you, that you would want to give the viewers through this particular upgrade in terms of, because this move is coming on a fantastic day, just a day before Independence Day. So your view, one message that you would want to give the investors.
I always say, and this is my favorite quote, that every past correction was an opportunity. The current one always looks like a risk. And I think don't lose, belief in the long-term story of India. And I think time and again, different names come. Sometimes it's the wars, sometimes it's COVID, sometimes, now the tariff is the new war. I think things will keep coming. The names keep changing. Use these disruptions to build onto your portfolio and have the asset allocation in place. Sometimes what we do is we get carried away by a lot of noise in the near term and forget about the asset allocation. We missed out on gold giving 40% last 1 year. As I said, the last 1 year return for long end bonds is also double digit. So be more balanced in your approach, and any sharp correction due to external events in India, in my 20 years has always been an opportunity. So I think you first have to be a believer if you are an equity investor, And overall, as a balanced investor, don't miss bonds and other asset classes like gold.
Right. Gurmeet, good afternoon. Hiral on this side. So, another question I have is if you have to look at corporate India, basis the upgrade that we've gone in terms of India, companies which have a rating which was as what it was for India, do you see an upgrade coming in on that front as well, number one? And two, if that happens, how do the dynamics change for any of these companies?
No, it will happen. There will be definitely a rub-off even on some of the better rated papers. Now, if you already see, the bank credit was a little slower, but the corporate borrowing has picked up because AAA issuers like let's say Reliance and some of the NBFCs were able to borrow more from the corporate market. And, a lot of bond issuances in the last 2 months. So, it always happens in terms of, that's why I said it's very important to deepen the market, even beyond AAA. I also see some of the better run AA plus, also the spreads getting reduced on the credit side as well. So it's huge benefit overall. And, once you have low cost of borrowing, it also encourages you to borrow and do capex, especially in companies which are in capital goods, power utilities and broad capex sector. So I think it has a lot of, implications. And I just hope these tariff issues are resolved because the market would want to see that before making the next leap forward. That's why you see the reaction so far. I don't know what the reaction will be in the next half an hour, and today's expiry also has been still pretty muted. In a normal day, an event like this would have led to a big surge, while the bond market is showing it, equity is still not showing it. So I think it has broader benefits for the economy and cost of borrowing and capex, and I think eventually it will get reflected in the markets too.
Right. Gurmeet, thank you so much. And, while I bid you goodbye, let me also take it as an opportunity to wish you a very happy Independence Day, you and the entire organization, of Complete Circle. And also to let viewers, all of you know that the India Chief Economic Advisor has also issued a statement saying that the S&P upgrade is actually a motivation for them to maintain that path of fiscal prudence. And that, of course, at such a juncture, when you've already seen an upgrade, continues to resonate with what the establishment has always said, or the government has always said in terms of its positioning. Let me also slip into a quick break. On the other side, we'll continue and we'll take top buy today, sell tomorrow picks. We'll talk about some stocks which are really buzzing in trade, the likes of a Muthoot and more. Stay with us on NDTV Profit.
मुझे तोड़ लेना वनमाली, उस पद पर देना तुम फेंक, मातृभूमि पर शीश चढ़ाने जिस पर जाएं।
वीर, अरे क्या बात है भाई, वाह वाह वाह। अगर चीरोगे ये सीना धड़कता देश निकलेगा, मैं वो हनुमान हूँ जो दिल में हिंदुस्तान रखता हूँ।
भूल गए क्या युद्ध भूमि में कीमत बड़ी चुकाई थी।
तुमने तो अपनी ही मर्जी से वतन छोड़ा था,
तब ये वर्दियां खड़ी थी तान करके छातियां।
खून माटी से जा मिला वरना आज सिंदूर ही नहीं होता।
जय जवान, जो मैंने शुरू किया था ये एक्चुअली, मैं दोबारा आया हूँ आप लोग से मिलने के लिए। मुझे बड़ी खुशी है, आप देख रहे हैं YouTube पे मेरी फिल्म। वाह क्या बात है, क्या बात है।
you're watching India Market Close here at NDTV Profit, well, the markets are extremely flat. The Nifty 50 trading about 0.05% higher. So I think, as we mentioned at the start of the show, the investors don't want to take a risk over a long weekend is what the prima facie reading is. The Nifty Bank also up 0.3 odd percent. The Midcap 150 is gone back to the red. Territorial, it's down by about 0.3 odd percent. The small cap 250 also down by about 0.3 odd percent. In terms of the overall heat map, if we can try to pull that up and see how counters are shaping up right now, I think Wipro is still leading the entire pack. Tata Steel still under the red and with a lot of pressure, down by about 3 odd percent. Tech Mahindra down by about 1.3%. There's Hero Moto down by about 1.19%. But Wipro and Infi, the IT majors stealing the show. Wipro up 2.2%. There's Infosys, which is up 1.5%. Gains are also seen in counters like Eternal, HDFC Life, both seeing gains of about 1.5 to 2 odd percent. There's also good moves in Asian Paints as well as Eicher Motors, Maruti Suzuki. So auto names also doing well. Let's try to pull up the sectoral heat map and see what's happening there. In terms of the overall sectoral picture, it's divided into the red and green. There's good moves in the Nifty IT where we're seeing good gains in Wipro and Infosys. There's Nifty Bank, Finance and PSU Bank doing well in trade today, but the Nifty Metal seeing cuts of about 1.4 odd percent. The Nifty Oil and Gas down by about 0.8 odd percent, and Nifty Energy also seeing losses of about 0.7 odd percent. But sticking with the story where S&P has upgraded India to a BBB, Hiral, give us more perspective as to what's happening there, and we've also guests joining us.
Yeah, what's interesting is, the commentary which is coming in that the strong growth track record is the major positive, because the report has stated that India's growth track record is pretty strong. And this is especially after the pandemic that, they saw the GDP growth average at around 8.8% between that FY 22 to 24 period. And this was the highest if you have to look at the entire Asia Pacific region. Now, in addition to that, what they've indicated is that it remains the best performing economies in the world from a growth perspective. And it has actually staged a remarkable comeback as well since then. In fact, let's also get in Manishi Rai Chaudhary to tell us more. Manishi, good afternoon and welcome to the show. A big rating upgrade coming in for India. And this is at a time when we have the 79th independence celebrations tomorrow as well. How do you read this upgrade, number one, and the back of this upgrade, how do you see FI inflows reacting to this?
Okay, great. Thank you very much for having me here. I think this upgrade was in a sense long overdue, because if one compares India's, the usual parameters like debt to GDP ratio or fiscal deficit, and, inflation, which basically gives more room to the Reserve Bank of India, then pretty much India would compare favorably with all the other economies which are rated similarly. So, I think it's a reaffirmation that India's stable fiscal and monetary policy is bearing fruit, and it's also giving a good deal of policy stability and policy room to both the government and the central bank.
Okay. So Manishi, overall taking these into consideration now when you're talking about the growth momentum moving ahead, and because this rating upgrade was long overdue, do you think the FIs that have been sellers in the last 1 month, there is a potential for that buying interest to come back?
It's definitely a sentiment boost, no doubt. But at the same time, I think FIIs, or why FIIs only, pretty much all investors would possibly wait for the earnings environment to catch on. As I have said repeatedly, that the strongest reason why we have seen foreign outflows and the market coming down is that the earnings estimates have been coming down over the past 1 year, right, from September 2024. So we would need the earnings estimates to bottom out and then begin moving up before we see a sustained revival in the inflows. So I think that could happen, and most importantly, I think this rating change also reaffirms that there is enough policy wiggle room for both the government and the central bank to provide some stimulus so that earnings estimate revival and even the consumption revival can be hastened.
What, Manishi, in your opinion, and this is Harshya, sorry, what in your opinion will revive consumption in a big fashion? Because while we talk about fiscal prudence on the one hand, and that's probably likely one of the big reasons for this upgrade, it's also a bit of a concern that an economy of $4 trillion odd dollars still is looking or gunning for 6.5% growth. Would that in any way disappoint you? And do you believe that a solid stimulation on the consumption side is still required, or all of it is done? What's your opinion there?
I think the government has done its bit in terms of giving more money in the hands of the urban taxpayer. Also, the 16th Pay Commission awards are likely to be implemented in the near term. But at the same time, what we need possibly is more job creation, and which also needs some degree of, what should I call, clearing up of the policy environment. Right now, much of the, basically the lack of job creation or the job losses are happening in the tech and service sector. Like TCS talking about 12,000 reductions in the middle and senior to mid-level is sort of a proverbial canary in the coal mine. So until and unless we have some revival on that side, it is difficult for consumption sentiment to pick up on a sustainable basis.
So much, Manishi, for coming in, giving us that perspective. Voices coming in thick and fast. Also wishing you a very happy Independence Day, Indian Independence Day. Hiren Ved joining us, Director and CIO, Alchemy Capital Management. Hiren, great having you. This is Harshya. Sir, I'll pose the same question that I posed to Manishi. What should priority be at this hour? Of course, we've got this big rating upgrade, long awaited, positive sentimentally, as well as honestly on rates. So across the board, a positive. What should the current priority be from a market's perspective? Where's the boost required?
I think, I think what has been happening in the economy is that the consumption is still struggling at the bottom of the pyramid, right? And, while ratings upgrade is good news, as you rightly said, much awaited, should bring the overall cost of capital down for Indian companies who want to borrow abroad over the medium to long term. But what is most important at the current point in time is two things. One, I think from a consumption side, I think that we probably need one more rate cut. We continue to have the RBI to keep liquidity surplus, and the impact of the tax cut to flow through, which should typically flow through now. On the investment side, I think there is a lot of uncertainty that has been created because of the trade and tariffs that have been imposed on India. And unless there is clarity or some resolution over the next few weeks, people, at least private capital investment might be held back because nobody would want to start new projects in the face of this kind of uncertainty.
Hiren, 100 bips cut already done. You're calling for maybe another cut or so, 25 bips. How long does this take to impact consumption? Give us your view there.
Yeah, I mean, 100 bips is done. I think another 25 to 50. Typically, it takes, 1 or 2 quarters for the cuts to seep through. I think that the one of the reasons why it's got a bit complicated is that despite the cut, we have not seen the transmission of that is because currently unsecured lending and retail lending is going through a little bit of a soft patch, given that NPLs have spiked seasonally for all lenders, and lenders may be a little circumspect to go out and dilute their lending standards. So my guess is that it is going to take a little bit of time, but it should definitely happen by the second half of this year or going into the festive season. We should be able to see some bounce in discretionary consumption.
Okay. All right. Hiren, thank you so much for taking out the time and speaking with us at NDTV Profit. We really appreciate that. We've also Rajesh Palavia joining us now from Axis Securities. Rajesh, hi. A very good afternoon to you and a very happy Independence Day in advance to you and your family and your team, of course. With regards to where markets stand, what is your view right now? Will you be taking any positions?
Good afternoon and happy Independence Day to NDTV Profit team as well as to the viewers of NDTV Profit. With regards to the market view, Nifty is very sideways, and the kind of supply pressure which we are witnessing at 24,650, 24,700 range is as the major call writing activity is still intact around those strikes. So I think till Nifty not crosses about 24,700, I think range bound activity is likely to be there in Nifty. On the downside, 24,500, 24,450 is the immediate support area, and on the higher side, 24,650 to 700 is the supply zone. So I think till this uncertainty is there as we are going for this long weekend. So I think nobody wants to take any big bets in the market, and everybody is light in terms of position. So I think everybody is waiting for some news flow to to react to. So I think any positive news towards any tariff or something can boost some sentiment, and we may see some buying action to emerge in this market. Till the time there is no news flow, I think range bound activity and stock specific activity is likely to be there, and Bank Nifty is not able to cross 55,500, which is the immediate and major supply zone for the Bank Nifty. So if Bank Nifty crosses 55,500, then some short covering could trigger. Okay. On the stocks fronts, two stocks idea where we are focusing at this juncture. One is Uno Minda. If we analyze the weekly structure, almost consolidation of 7-8 week, there is a breakout on Uno Minda. And looking at this breakout, we believe that this momentum can extend further, and possible upside towards 1200 to 1220 we can see. So Uno Minda one can buy with stop loss of 1120. Another stock where we are focusing is Asian Paint. After a long corrective move, now stock is showing sign of bottoming out, and the kind of recovery which we are witnessing on the weekly as well as on the monthly chart, that clearly shows that now again the fresh buying interest has been emerged in this counter. Looking at chart structure, we are projecting target towards 2575. So one can buy and accumulate with stop loss of 2495.
Okay, the stock of the day, Muthoot Finance, Q1 complete beat across the board, 7% ROA. The longer term guidance is 3 to 4%. They've been doing 5 to 6 typically over the last 3 years, 7 this time. Margins better than expected, both YOY, QOQ, things get better. Higher yields, lower cost of funds, lower OPEX to assets, all three of those aiding the operating profit side of things. Then you have lower credit costs coming in, both YOY and QOQ, led by recoveries, which was aiding the numbers, and a very, very strong growth of 40% on the gold loan side, 37% on console, 42% on standalone AUM. Extremely robust numbers overall, 90% YOY growth on profitability, 2100 crore, near 2100 crore in terms of profit after tax versus the 5200 crore PAT number they clocked for the full year FY25. Very, very strong numbers, and therefore stock of the day, stock on a tear. Nirav Ashar, quickly your view with regard to a Muthoot, and also if I can ask you, Nirav, give us a take on Manappuram as well. That arbitrage between Muthoot and Manappuram in terms of valuation, what looks more attractive to you?
Well, I think it's been a dream run as far as the gold loan companies are concerned. And I think as far as Muthoot is concerned, they've had the best of all the worlds. I think a very strong performance since the last 3 quarters. I think apart from having a strong reach, apart from having the technological know-how, the more important thing is to spread awareness about the effectiveness of this product. I think we had a lot of informal players and unorganized players who were quite active in this particular space, but I think now that awareness has been going up, and I think consequently we are seeing the organized players begin to perform quite well. Their margins have improved significantly. And I think the concentration of gold in the southern part of the country, South India holds about 40% of the gold holdings, and we have a large part of the gold holdings in rural areas and the semi-urban areas. So I think the spread of this awareness has definitely played an important role as far as these gold loan companies' performance is concerned. If from a valuation perspective, I think Muthoot trades at closely 4 times price to book. So I think a lot of the upside is captured into the price at this point of time. And I think on a relative basis, I think Manappuram looks, there is scope for some appreciation from the current levels.
Okay, so that's the take coming in from Nirav. Nirav, Rajesh, right at the outset, I'd request you to be very, very quick because, of course, we've had a truncated show, or the show has been affected due to that rating upgrade that we got. Rajesh, quick take, Muthoot Manappuram.
Muthoot Finance is looking very attractive. The way stock is moving up, I think furthermore upside we may see in the continuation of this up move. So one can remain invested in this counter at this juncture. Even in the minor decline, one can add the position with stop loss of 2650. On the higher side, I think 2950 would be the next trajectory for the stock. Even Manappuram is also showing sign of good buying interest, and looking at the overall structure, we believe that till stock is trading above 255, there is a possibility of upside towards 280, 290 in the short term.
Rajesh, BTST?
For BTST, I think we are focusing at this juncture at Uno Minda. I have already recommended. So another stock where we are focusing for BTST is Indian Hotel.
Okay.
Indian Hotel managed to give breakout on the falling trend line on the weekly chart. Looking at the structure, we believe that some more upside towards 790, 800 we may see in the near term. So one can buy Indian Hotel with stop loss of 765.
Okay, on to our bull versus bear segment. The stock we've chosen today is Senco Gold that we're going to discuss about in terms of both the bull and the bear case for the counter. It came out with its Q1 earnings, an impressive set of numbers. I mean, in terms of the overall numbers, it was not a disappointment at all. Sales growth was largely in line with what peers did. In fact, a tad bit better than what Titan and Kalyan did. But overall, high gold prices is a concerning factor, plus competitive intensity going up is also one of the reasons as to why they had to go to higher discounting in terms of their making charges, which is where they make maximum profits and margins from. In terms of the EBITDA margin, it expanded 230 basis points YOY to that 10.1% mark, but the guided range is between 6.8 to 7.2, and there is inconsistency when it comes to their operating margins because of fluctuating hedging that they're doing. So that's a concern with regards to where margins stand. Moving on, in terms of where the return ratios are concerned, they are set to improve going forward in the next 3 to 4 years to that 17 to 18% mark, because they are adopting FOCO model, that is franchisee model instead of company owned model. But overall store expansion when it comes to Senco is not as aggressive as something like a peer Kalyan Jewellers or Titan for the matter is doing for Tanishq as well as Carrot Lane. Lastly, in terms of where valuations are concerned, it is trading at an inexpensive valuation as compared to its peers, because 36 times P trailing 12 months is not cheap, but compared to a Titan, Kalyan, it is cheap. And going forward, the valuations to come down to around 24 times, so cheapest amongst the pack of that retail jewelry space. But overall working capital days have significantly gone up, which could be a concern when it comes to Senco Gold. So this is the overall view of the bull and the bear case of where Senco Gold stands. Nirav, I'll come to you quickly on this one. Your view according to how Senco Gold has done this quarter, and if you were to play the theme of the retail jewelry space, which one would your bet be on?
Well, I think Senco continues to be a consistent performer. It's focused more on the eastern part of the country. Typically the ticket size tends to be on the lower side. I think lower than 50,000 rupees. I think there has been a strict focus on margins. So the results have been pretty decent. But I think from a valuation perspective and from an investment perspective, I think we would prefer a Titan at this point of time.
Okay, so that's with regard to Senco Gold. Rajesh, do you have a view on Senco?
So there is a breakout on near-term chart, and looking at breakout, if its stocks continues to hold above 348, I think some more upside we could see towards 375 to 380. That's the next level where we can see stock to continue this up move.
Some other stocks moving as well. One is Ventive Hospitality. That one is down 6%. Do you have a view on that, Rajesh?
Ventive, again, the major supply zone for this stock is placed at around 800 rupees, and we have seen again, the same kind of corrective move from the stock. So if I analyze on the short-term behavior, stock is still consolidating in a broader range. On the downside, 700 is the lower band of the stock, and on the higher side, 800. So I think looking at the overall structure, we believe some more consolidation is likely to remain in this range. Only 700 to 800 would be the range for the stock for next couple of months.
Quick view on Sami Hotels. The stock is taking a beating today on the back of its earnings. It is because a lot of other peers in the same space have done exceedingly well despite of the geopolitical tensions. But as compared to that, I believe Sami Hotel was not up to the mark, and that's why investors punishing the counter. Are you of the same view?
It's a corrective move in this counter. This is the fourth consecutive week in this counter. We are seeing sustained supply pressure is there. So looking at the near-term structure, there is a breakdown. So if it continues to trade below 215, maybe we may see further lower level. Possible downside can extend towards 190 also.
Thank you so much, gentlemen. We'll let you go on that note. We're 2 minutes from close for the day as well as for a truncated week. Wishing both of you a very, very happy Independence Day. And we hope you have a great long weekend. You too, viewers, but we've still got 2 minutes to go. So we're going to quickly take you through how markets have been. Absolutely flat on the Nifty. We've given up the very, very marginal gains, if at all I can call it that we made through the day. Let's look at the intraday chart, a very, very tight band in which the Nifty has traded in. You look at the day's high and the day's low, probably just about a 60 to 70 point differential in that high and low. So very, very tight band. Let's look at the heat map as well, and what we'll see is largely the breadth is even Steven. 22 advances to around 28 declines. Wipro is the top gainer. Some IT stocks showing zing, the likes of an Infosys, a Wipro of course out there. So those are the two IT stocks doing fairly well for themselves. Pharma also doing all right, but largely flat. The financials have done a little bit better than they have all through the week. So some outperformance in those two pockets, but despite that, we're not seeing a lift with regard to where the Nifty is concerned. Absolutely flat. Let's look at the sectors as well, and that's likely what we will see in terms of the texture. IT, banking, finance, consumer durables has done fairly well for itself. Metals languishing at the bottom, 1.4% down. Oil down as well. Energy, oil down around 1%. Realty is down 0.8%. So within the broader market pack, that one is the one to pick. Nifty FMCG also down around 0.8% odd. So that's the texture. Broader markets not doing as well. Let's pull up the advanced decline all through the day, and you'll see that the advanced decline is reflecting some pessimism in broader markets. We are at the day's, possibly at the day's low where the advanced decline is concerned. So the breadth clearly unfavorable, therefore there you go. The Nifty Midcap down around a third. Again, a very, very range bound day that the Nifty Midcap has seen, the index itself. The Nifty Small Cap too, down around 0.5%. So closing very close to the day's low where the Nifty Small Cap is concerned, despite being a range bound day of trade. Let's look at it intra-week as well. The Nifty 50, Mid Cap, Small Cap. Let's also look at banking and IT, because those ones did stand out a bit in trade today. So 1% higher on the Nifty all through the week after what's been a tough last 3-4 weeks for the Nifty. So we've closed in the green. Nonetheless, 1% higher on the Nifty Midcap as well, despite the kind of fall we saw today, but largely in line with the Nifty, working in tandem, 0.7% higher on the Nifty Small Cap this week. So slight marginal underperformance seen here on this index. Let's also look at the Nifty Bank and the Nifty IT and the Nifty Metal if we can. 1.5% up on the Nifty IT, so outperformance seen there. Within the larger counters, that's where some outperformance was seen. Nifty Bank, despite the outperformance today, is up just about 0.6%, so has still underperformed the Nifty. Last off on the Nifty Metal, well, 0.8% higher. So despite the fall today, and that's possibly the reason for this underperformance on the Nifty Metal. So that's broadly the take coming in. Last off, the BSE 500 top gainers, top losers. Those are some names for you which are in focus. Muthoot Finance, we spoke about that. Coromandel has bounced back up 4% higher. It was impacted due to China urea yesterday, and we've seen a bounce back on that one. Easy Trip doing well for itself, 4% up. Chalet Hotels, Manappuram Finance on the back of that zing scene in Muthoot Finance doing fairly well for itself. Cohance Life Sciences on the back of numbers, 8.5% lower. Clean Science, well, just some of the other names which are buzzing in trade. Hotel stocks were one of the culprits in trade today, but broadly, that's how it played out. Let's look at the weekend. It's going to be a packed one, of course. You'll have US initial jobless claims, China industrial production, but more importantly, it'll be everything about tariffs. We'll have to wait and watch as to how that plays out and what is in store. Some corporate actions for you on your screen, some dividend adjustments which will happen come Monday. You'll also have a few earnings which are still left. Those are the earnings post-market which are expected to come in. That will be awaited on the weekend, but that's the boring stuff. Let's talk about the interesting stuff. Let me bring in Shreyansi to tell us about all that's happening beyond markets during this weekend.
Well, absolutely, and there's a lot that is happening beyond markets because you do have coolie fever that has in fact gripped the nation. Of course, you do have that one big release. That's the one that we're going to be talking about in just a bit. There's another one that you should be looking at. The next plate is about the War 2. That's a sequel made with a big ticket budget. In fact, let's take a look at Coolie first things first, because that's the one that you should be looking at. Budget of about 350 crores there, about 350 to 400 crores is something that you're penciling in terms of the budget. And when you take a look at the recovered about 60% of its cost just before the release. And those are what some of the reports in fact are indicating. 100 crores is the kind of pre-sales figure that this has managed to rake in. The fan frenzy, of course, like we've seen, is crazy. It's really something that we're seeing that is unprecedented in terms of the biggest releases in cinema as well at this point in time, and there's no points for guessing. Of course, you can see one of the reasons why this film is doing very well. The next one that we're going to be talking about, of course, is War 2. Like I mentioned, made with a budget of 400 crores. You're looking at a very big release coming in. This is in contrast to War, which was the previous one in this particular franchisee, and you have a strong opening weekend despite the release of Coolie that is being penciled in. 85 to 120 crore rupees. For this one, tickets already priced between 800 to 2000 rupees in some multiplexes. So it looks like fans are going to be paying big, and there's going to be a hole in a lot of pockets when it comes to tickets for War 2 and Coolie the Powerhouse. But let's also take a look at some of the OTT releases that you have on ZEE5. Of course, you do have Tehran that is releasing. So that's one that you should be looking at. The other one, of course, is Sare Jahan Se Acha on Netflix. That's also one important release that already it's released on August 13th. And there's a lot of expectations around this one because you do have two great actors coming together with this one. And those are some of the releases that you should be keeping an eye on then. But thank you so much for tuning in.
लेना वनमाली, उस पद पर देना तुम फेंक, मातृभूमि पर शीश चढ़ाने जिस पर जाएं।
वीर अरे क्या बात है भाई, वाह वाह वाह। अगर चीरोगे ये सीना धड़कता देश निकलेगा, मैं वो हनुमान हूँ जो दिल में हिंदुस्तान रखता हूँ।
भूल गए क्या युद्ध भूमि में कीमत बड़ी चुकाई थी।
तुमने तो अपनी ही मर्जी से वतन छोड़ा था।
तब ये वर्दियां खड़ी थी तान करके छातियां।
खून माटी से जा मिला वरना आज सिंदूर ही नहीं होता।
जय जवान जो मैंने शुरू किया था ये एक्चुअली, मैं दोबारा आया हूँ आप लोग से मिलने के लिए। मुझे बड़ी खुशी है आप देख रहे हैं YouTube पे मेरी फिल्म। वाह क्या बात है, क्या बात है। देखिए जय जवान मेरे साथ 15 अगस्त को सिर्फ NDTV पर। जय जवान, जय जवान, जय हिंद, जय हिंद।
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
Hello.
Hello and welcome. You're watching Market Express and I'm your host Malika Mishra. Let's get straight into the show. A range-bound day of trade saw Nifty close flat at about 24,600 while Sensex ended the week at around 80,500. This is despite the positive cues from S&P which upgraded India's rating to BBB. Wipro was a top gainer in trade while Tata Steel was the biggest laggard. The broader markets meanwhile faced pressure in trade with both small cap and mid cap indices closing the week with cuts of around 0.5%. Most sectors end in the green. In the red, metal, oil and gas and energy were the top sectoral laggards. IT, finance and PSU bank were resilient in trade. The market breadth largely favored the bears. Today, August 15th, marks India's 79th Independence Day. This anniversary commemorates the country's freedom from British colonial rule that ended in 1947. The day will be observed with flag-hoisting ceremonies, cultural events and speeches across the country. The celebrations will highlight India's progress, achievements and ongoing development efforts. This milestone provides an opportunity to reflect on India's history, its people and its ongoing journey towards growth and development. And today, in a significant boost to India's economy, S&P Global Ratings has upgraded the country's credit rating from BBB- to BBB with a stable outlook. S&P says effective US tariffs on Indian economy will be manageable. It also says that our monetary policy is more conducive to manage inflation. The upgrade in rating reflects India's robust economic growth, improved fiscal management and strong external balance sheet. The BBB rating is a testament to India's solid growth performance and promising economic outlook. The country's GDP growth is expected to remain strong with projections of 6.8% in FY25, 6.9% in FY26 and 7% in FY27. JSW Cement made a muted debut on the stock exchanges today, listing at a 4% premium over its IPO price of 147 rupees, opening around 153 rupees per share. Despite the brand's strength, subscription was tepid with a 7.77 times overall subscription led by strong QIB and NII interest. but weaker retail participation. The company reported losses in FY25 with revenue slightly down from previous years and EBITDA margin contracted to 12%. High debt burden of 6,166 crore rupees against a net worth of 2,352 crore raises concerns. JSW Cement plans to double capacity and improve its industry low realizations, but lack of North India presence remains a challenge for the company. JSW Cement lists at a 4% premium today, as I said before. Brigade Enterprises posted a robust Q1 with revenue up 18.9% to 1,281 crore and net profit soaring 79% to 150 crore rupees. Pre-sales held steady at 1,118 crore despite a 17% drop in sales volume to 0.95 million square feet, buoyed by a 24% rise in realizations to 11,782 per square feet, rupees per square feet. Office leasing revenue grew 15% with 92% portfolio occupancy. The company launched 1.36 million square feet, including Brigade Morgan Heights in Chennai, and committed 803 crore rupees in capex. Management targets a 15 to 20% pre-sales growth, with 13 million square feet of launches planned across Bengaluru, Chennai, Hyderabad, and Mysuru. Samvardhana Motherson's Q1 FY26 consolidated results showed revenue growth of 4.7% to 30,212 crore rupees, slightly beating estimates. However, EBITDA declined 11.4% to 2,458 crore rupees, dragging margins down to 8.1% from 9.6% last year. Net profit dropped sharply by 49% to 512 crore rupees, impacted by exceptional expenses of 136 crore due to phased European operational restructuring. Segmental margins in modules and emerging businesses were affected by one-offs. Management confirmed no material impact from new US tariffs on India while being cautious about global demand and acquisitions. The company is optimistic about margin recovery with cost optimizations underway in Europe. Prime Focus delivered a strong Q1 FY26 performance with consolidated revenue rising 26% year-on-year to 1,023 crore rupees. EBITDA surged to 244 crore from 75 crore rupees, expanding margins sharply to 24% from 9% earlier. The company swung to a net profit of 110 crore rupees from a loss of 158 crore last year, aided by sharp increase in other income to 167 crore rupees. In July, Prime Focus approved a preferential allotment worth 5,552 crore rupees, issuing 46.27 crore shares at 120 rupees each, largely to acquire subsidiary DNEG. DNEG specializes in visual effects, animation and immersive content, reinforcing Prime Focus' global media footprint. Allied Blenders and Distillers posted its fourth straight quarter of strong profitability in Q1 FY26, with net profit soaring to 56.6 crore rupees from 11.2 crore rupees last year. Revenue grew 21.8% year-on-year to 923 crore rupees, driven by a 17.2% rise in volumes to 8.5 million cases and a 6.2% improvement in realizations. EBITDA rose 50.5% to 112 crore rupees, expanding margins to 12.1% from 9.8% earlier. Premium and above volumes formed 46.2% of the total mix, reflecting accelerated premiumization. The company launched Golden Mist in Karnataka and Telangana and expanded its international footprint to 27 countries, up from 14 countries last year. Ethos Limited reported a strong Q1 FY26 with revenue jumping 26.7% to 346 crore rupees, driven by robust demand in the luxury watch segment. However, net profit fell 16.6% to 19 crore rupees and margins slipped to 13.3% from 15.8%, impacted by higher promotional costs despite a 6.6% rise in EBITDA to 46.1 crore rupees. All-Time Plastics made a robust market debut, listing at 314.3 rupees on BSE at a 14.3% premium and 311.3 rupees on NSE, a 13.2% premium against its 275 rupee issue price. The 323 crore rupee IPO, comprising 160 crore fresh issue and 163 crore offer for sale, was subscribed by 3.6 times, driven by strong retail and non-institutional investor interest. Funds will support capacity expansion and debt reduction, capitalizing on growing demand for plastic houseware. The listing outperformed grey market expectations of 10 to 12% premium, reflecting high investor confidence. Dixon Technologies strengthens its growth strategy with two major joint ventures. The company received NDTV approval to form a JV with Longcheer Intelligence, a key smartphone design and manufacturing partner with brands like Realme in India, a move aimed at securing higher production volumes. Dixon also signed a binding term sheet with Chongqing Yuhai Precision Manufacturing to produce precision components for laptops, mobiles, IoT, automotive and more. Dixon will hold a 74% stake in this JV, further expanding into high-margin technology-driven segments. Bharat Petroleum Corporation (BPCL) reported Q1 FY26 standalone results broadly in line with muted expectations. Revenue rose 1.2% sequentially to 1,12,515 crore rupees, while EBITDA grew 24% to 9,663 crore rupees, expanding margins to 8.6% from 7%. Net profit surged 90.5% to 6,124 crore rupees, aided by lower costs, even as gross refining margins (GRMS) halved to $4.9 per barrel from $9.2 per barrel due to inventory losses and reduced Russian crude imports. LPG under recoveries for the quarter stood at 2,100 crore rupees compared to HPCL. BPCL saw sharper profit jump on a quarter-on-quarter basis, strong core GRMS at $7.2 per barrel and smaller inventory losses per barrel as well. Vishal Mega Mart posted an exceptional Q1 performance, extending its growth momentum for the fifth consecutive quarter with double-digit same-store sales growth. Net profit rose 37.3% year-on-year to 206 crore rupees, while revenue increased 21% to 3,140 crore. EBITDA climbed 25.6% to 459 crore rupees, with margins improving to 14.6% from 14.1% on the back of better operating leverage. Store expansion continued with entry into new states, further boosting its retail footprint. The company's quick commerce platform, though currently a small part of the business, is scaling rapidly. Management remains positive on demand trends and operational efficiencies driving growth. Senco Gold reported robust performance with consolidated sales growing 30% year-on-year to 1,826 crore and same-store sales growth at 19.6%, broadly in line with peers like Kalyan and Tanishq. EBITDA margin expanded by 230 basis points to 10.1%, driven by better product mix and diamond sales, although the company acknowledged fluctuating hedge ratios and expects EBITDA margin between 6.8 and 7.2% for the full year. Despite strong growth, Senco employed discounting amid high gold prices and competitive intensity. Return ratios are forecasted to improve to 17 to 18% in 3 to 4 years, with cautious store expansion compared to peers. Working capital days increased to 67.2. Cohance Life Sciences reported a mixed Q1 FY26 with revenue up 12.5% to 549 crore rupees, driven by a 19% rise in API and 28% in specialty chemicals, though tempered by Pharma CDMO destocking. Net profit fell 35.2% to 48.9 crore rupees, impacted by one-time ESOP and M&A costs of merger and acquisition costs of 17.1 crore rupees. EBITDA dropped 10.5% to 112 crore rupees, with margins contracting to 20.4% from 25.6% due to talent and business development investments. Excluding destocking, Pharma CDMO grew over 30%. The company eyes $1 billion revenue and mid-30s EBITDA margins by 2030. Indian tax authorities are cracking down on offshore tax evasion, issuing pan-India inquiry notices under Section 131 of the Income Tax Act to individuals holding foreign accounts, primarily in the United Kingdom and Europe. Data from 2.5 lakh accounts obtained via the Common Reporting Standard is under scrutiny, targeting professionals and business owners. The notices seek details on account disclosures with undisclosed holdings, facing strict penalties under the Black Money Act, including 10 lakh rupee fine and up to 7 years of imprisonment. Now, this move signals India's push for financial transparency. Top India executives from FedEx, UPS, DHL, and Aramex are set to face cross-examination in the coming weeks in a rare development within an ongoing antitrust probe. The Federation of Indian Publishers has accused these companies of price collusion involving fuel surcharges and discounts. The Competition Commission of India, CCI, had earlier cleared them due to lack of direct evidence, but has now allowed them to move to scrutinize executive statements more closely. Such cross-examination is uncommon in India and may extend the case timeline, potentially uncovering new evidence in the growing $14.3 billion courier market. Premiums for prompt benchmark oil prices globally and are falling compared with those in future months on rising output from the Middle East, Latin America and Europe, just as peak summer demand ends, traders and analysts said on Thursday. Easing concerns that the US could impose more sanctions on Russia and further disrupt oil supplies are also weighing on oil prices. Bitcoin hit a record high as increasing expectations for easier monetary policy from the Federal Reserve added to tailwinds from recently announced financial reforms. The world's largest crypto asset by market capitalization climbed as much as 0.9% to $124,000 in early Asia trading, surpassing its previous peak hit in July. On the day, the second largest crypto token either hit $4,780, the highest level since late 2021. Infosys and Telstra have launched a joint venture in Australia, with Infosys acquiring a 75% stake in Telstra's Versant Group for $153 million, gaining operational control while Telstra holds 25% stake. The JV aims to accelerate AI-powered cloud and digital transformation for Australian enterprises, leveraging Infosys' Topaz AI and Cobalt Cloud platforms alongside Versant's 650-strong team serving government, finance and energy sectors. Now, this builds on prior collaborations, including a 2024 IT transformation deal and a 2025 Telstra International Partnership for the Connected Future 30 strategy, driving innovation and regional growth. The Indian government has urged the food industry to adopt ethical practices in labeling and advertising food products. Now, this call to action aims to ensure public health and protect consumer interests. The Food Safety and Standards Authority of India organized a national stakeholder consultation to discuss regulatory framework on food labeling, advertisement and claims. Now, during the consultation, MHFW Secretary Punya Salila Srivastava emphasized the importance of truthful practices in labeling and advertising. She noted that with increasing global exposure, the industry must adopt best practices and scrutinize food products more closely. Hearing petitions challenging the Supreme Court order to round up all stray dogs in Delhi NCR and move them to shelter homes, another bench of the top court asked why authorities in several areas started picking up animals even before the earlier order became public. The court also came down heavily on the authorities for not implementing guidelines for animal control, leading to this situation. The bench of Justice Vikram Nath, Justice Sandeep Mehta and Justice N.V. Anjaria heard the matter after an August 11th order of two-judge bench of Justice J.B. Pardiwala and Justice R. Mahadevan sparked a massive row, with animal lovers hitting the streets to protest the order to remove strays from residential neighborhoods. India has achieved a remarkable milestone by reaching 100 gigawatts of solar PV module manufacturing capacity under the approved list of models and manufacturers framework. This achievement is a significant step towards India's goal of becoming self-reliant in renewable energy and reducing its dependence on fossil fuels. To put this achievement into perspective, India's solar module manufacturing capacity has grown from just 2.3 gigawatt in 2014 to 100 gigawatt in 2025, which is a staggering 43-fold increase. US President Donald Trump said on Wednesday that there will be very severe consequences if Russian President Vladimir Putin doesn't agree to stop the Ukraine war after their Friday summit in Alaska. While he did not specify what those measures would be in a virtual meeting with European leaders, he said that he wants to achieve a ceasefire at the upcoming summit. Trump also said there was a chance of a second meeting involving Putin and Ukrainian President Volodymyr Zelensky that would be more productive than the one scheduled for Friday. Paris Saint-Germain have beaten Tottenham Hotspur on penalties to win the 2025 UEFA Super Cup. The European champions came from 2-0 down in the closing stages of normal time and then recovered from 2-0 down in the shootout to prevail. Mickey Van Deven gave last season's Europa League winners the lead on 39 minutes, and Christian Romero got their second goal 3 minutes into the second half. Coolie, superstar Rajnikant's latest release and a landmark moment marking his 50th year in cinema has hit theatres today. Directed by Lokesh Kanagraj, the movie also stars Nagarjuna in a lead role and showcases Bollywood star Amir Khan in a prominent role. The buzz and the hype that comes with a Talaivar movie is not a secret. Industry trackers expect it to cross 150 crore rupees in collections on its very first day, with tickets sold out for the opening weekend. And with that, it's a wrap on Market Express, but do stay tuned to NDTV Profit as we continue to bring you a lot more news and updates.
मुझे तोड़ लेना वनमाली, उस पद पर देना तुम फेंक, मातृभूमि पर शीश चढ़ाने जिस पर जाएं।
वीर अरे क्या बात है भाई, वाह वाह वाह। अगर चीरोगे ये सीना धड़कता देश निकलेगा, मैं वो हनुमान हूँ जो दिल में हिंदुस्तान रखता हूँ।
भूल गए क्या युद्ध भूमि में कीमत बड़ी चुकाई थी।
तुमने तो अपनी ही मर्जी से वतन छोड़ा था,
तब ये वर्दियां खड़ी थी तान करके छातियां।
खून माटी से जा मिला वरना आज सिंदूर ही नहीं होता।
जय जवान जो मैंने शुरू किया था ये एक्चुअली, मैं दोबारा आया हूँ आप लोग से मिलने के लिए। मुझे बड़ी खुशी है आप देख रहे हैं YouTube पे मेरी फिल्म। वाह क्या बात है, क्या बात है। देखिए जय जवान मेरे साथ 15 अगस्त को सिर्फ NDTV पर। जय जवान जय जवान, जय हिंद जय हिंद।
In 1942, as India's freedom movement was taking shape, another revolution was beginning in Mumbai in color. From humble beginnings, Asian Paints grew to become Asia's third largest paint company and a global leader in coatings, combining innovation and sustainability. Today, it operates in 15 countries, leading markets from Nepal to Oman, Egypt to Bangladesh. With $3.5 billion in annual revenue, a $2.5 billion brand value, and a top-tier BSI score, Asian Paints proves that Indian enterprise colors the world. Born before independence, thriving in freedom. This Independence Day, we salute brands like Asian Paints for coloring the globe with India spirit.
S&P Global upgrades India's rating from BBB- to BBB with stable outlook. India gets an upgrade for the first time since 2017. Commerce Secretary Sunil Bhartwal says India's exports grew substantially in July despite uncertain global policy environment. Adds that the proposed export promotion mission is currently under interministerial consultation. Benchmarks end the week 1% higher as Nifty snaps its 6-week losing streak. All sectorial indices barring FMCG close with the gain. Broader markets underperform marginally. Tax authorities issue inquiry notices to individuals over foreign accounts seeking details of how and where these accounts are disclosed. Notices mainly sent to Indians with accounts in the UK and European countries. Infosys ends over 1% higher after acquiring 75% stake in Telstra's Versant Group for over 1,300 crore rupees. Both the companies will set up an AI-led cloud JV. Supreme Court hears petitions challenging the order on removal of stray dogs from residential neighborhoods, raps the Delhi government for not implementing animal control guidelines. 10 people feared dead after a massive cloudburst in Chashoti region of Jammu and Kashmir. Pilgrims are being evacuated as rescue teams rush to the site. Trump warns Russia of very severe consequences if it does not make a peace agreement with Ukraine. Also seeks a trilateral meeting with Russia and Ukraine in the future. Good evening, you're watching Profit 360 on NDTV Profit and I'm Sanjana. Over the next half an hour, we're going to bring you the latest in markets as well as national and international news. Big news coming in. S&P Global has upgraded India's long-term sovereign credit rating. The agency cited economic resilience and sustained fiscal consolidation as reasons for the upgrade. Now, S&P Global has revised outlook on India's rating in May last year to positive from stable. But for more on this and what this actually means and what this entails, I'm joined now by Dinesh Khara, former chairman of State Bank of India. Good evening, sir, and welcome to NDTV Profit. Thanks so much for joining us. Good news, in fact, coming in, especially on the cusp of Independence Day. What more could we ask for? How significant is the S&P outlook upgrade for India's global investment landscape and borrowing costs?
No, it will certainly help the country when it comes to the country risk. With the improvement in rating by S&P, the country risk will come down, which actually means it actually translates into lower borrowing costs when it comes to overseas borrowing. So I think it is a very welcome step. And also when the international rating agencies recognize the fiscal prudence of the economy, then obviously it actually goes a long way in terms of demonstrating the commitment of the government and ensuring the growth of the economy while ensuring that there is enough discipline as far as fiscal is concerned. So I think it's a very welcome step, and I believe it will further improve our ability to raise foreign borrowing at even much cheaper cost.
And we're actually getting in word right now from the finance ministry that has, of course, welcomed S&P's upgrade, saying that it has become the second global agency to upgrade India in 2025 after DBRS. So this is, in fact, good news coming in, and the government welcoming the ratings upgrade coming in after 18 years. I'm going to go across to my colleague Pallavi, but before that, sir, I'm going to ask you, you had made a comment, and that was here on NDTV Profit, that global investors look closely at sovereign ratings. So now how do you see this playing out in terms of FII flows and foreign investor sentiment towards Indian markets?
No, I expect that it should turn positive. And of course, there are multiple other things also which foreign investors invariably evaluate before they take the final decisions. But this is one of the very important factors which will certainly influence their decisions also.
All right. Dinesh Khara, sir, stay with us, but let me quickly go over now to my colleague Pallavi to actually break this down for us. Pallavi, what does this rating upgrade mean for India, and give us the rationale for it?
Right, Sanjana, like you've already said, it is a positive for the Indian economy. The rating being raised from BBB-, which, let's remember, is the lowest investment grade rating, to a BBB. And a lot of market analysts and commentators did say that this was long overdue. So, looking at what is the rationale that S&P has set out, India has continued to prioritize fiscal consolidation. We have shown a consistent decline in the fiscal deficit, especially at the center's level, and that does demonstrate the government's political commitment to delivering sustainable public finances. Let's remember, this was alongside the government continuing to maintain its strong thrust on capex. Also, robust economic expansion that's having an effect, a positive effect on India's credit metrics. That is expected to continue to drive growth for the next 2 to 3 years, in addition to fiscal, also monetary policy settings that have been conducive to managing inflationary expectations. In fact, the CPI print that has come in, the latest one, is in fact the lowest in almost 8 years. So these are some of the reasons that S&P too has outlined. Also, let's have a quick look at the outlook. The outlook continues to remain stable, reflecting the global rating agency's view that continued policy stability and high infrastructure development continues to support India's long-term growth prospects. That, along with fiscal and monetary policy, is expected to help moderate the government's elevated debt as well as fiscal burden. Let's remember that global rating agencies have consistently cautioned that India's debt burden has been, the economy's Achilles heel, but there is expectation that that too is going to narrow along with the consistent reduction we have been seeing in the central as well as general government deficit.
Right, Pallavi, thank you so much for that and explaining that so simply and comprehensively. Let me check if I have Dinesh Khara still with us, sir. Sir, why do you think it's taken so long? Because the last upgrade by S&P that we saw was actually, some time ago, sometime in 2007.
No, of course, invariably these agencies review the trend for a reasonable time, and then only they take a call. And we are observing that for past couple of years, the fiscal consolidation is one of the focus area for the central government. And that is something, and apart from that, when the economy was in bad, was in need of the support from the fiscal, there was enough focus in terms of developing the infrastructure, which has gone a long way in terms of maintaining the stability and the growth of the economy in the difficult days also. So I think the more important aspect is that while supporting the infrastructure growth, the fiscal prudence has been maintained. So I think that is a very clear reflection that we can actually strike a balance between the conflicting goals, but still it is possible when there is a very clear focus in terms of what we want to achieve. So I think fiscal prudence was given enough importance, and at the same time, even the monetary policy is also very supportive, and it is actually getting reflected into the kind of inflation print which we get to see. So I think inflation numbers also giving the indication about the inflation expectation, that being low, focus on the infrastructure, fiscal prudence. These are all very welcome areas when it comes to ensuring the sustainable growth of the economy. And I think once the international rating agencies could develop that kind of a confidence, they have upgraded. This has to be seen in the context that despite the fact that we are currently facing headwinds when it comes to the the US tariff rates, but nevertheless they have evaluated all those factors and still decided to upgrade the rating. So that is something quite credible. This I would like to mention.
Would you think, and what kind of macro level changes can Indian banks and corporates now expect following this upgrade?
Well, when it comes to the monetary policy, had actually already reduced the policy rate significantly. So which means that the interest rate regime has become quite soft when it comes to the domestic interest rate regime. When it comes to overseas also, it has turned to be very positive in the sense that it has come down. Interest rate for the overseas borrowings will also come down. So eventually this should show up in terms of the operating performance of the corporates in the days to come. So I think, which again is a very welcome stage. And invariably the foreign investors look at the operating performance of the corporates. So I expect that even that will also improve, and which will probably help country to demonstrate Indian corporates to demonstrate much healthier position, and should help in attracting the foreign investments too.
Okay, do you think, and we have been saying that India's fiscal deficit has been narrowing, over the past couple of years, and even as per government targets. So how crucial is this sustained fiscal consolidation in further improving India's credit ratings?
No, that of course, I think as far as the fiscal prudence and the fiscal consolidation is concerned, that is very much required, and it has to be maintained in the days to come also. Because when it comes to even the interest servicing also, that actually eats into the significant part of the revenue. With the consolidation happening, that those resources would be available for encouraging the development of the economy also. So I think that is one of the very major focus area. And I would also like to mention that it's not only at the center level, there's a nudge from the center to the state governments also, that they should also follow the fiscal discipline. So I think eventually when we succeed in having the fiscal discipline, even at the state government's level also, that will further enhance the ability of the economy to perform better and grow even faster.
Okay, does a GDP growth of 6.8% then in that case bode well for India's 2047 plan, would you say?
Yeah, I would say that since, for reaching the kind of a developed state by the year 2047, we certainly need to step up the growth rate of the economy beyond 6.8. So I would say that the kind of fiscal prudence which is happening and the way interest rate regime is turning soft, so this will eventually support our growth ambitions also, and we can move towards 8% plus kind of a growth rate in the days to come.
I'm going to address the elephant in the room actually, and something that I think has been on everybody's minds because of the recent developments in US policy that have caused a lot of uncertainty on India's trade relations. Do you think that there is material risk for that in India?
See, as far as Indian economy is concerned, it is more domestic economy. So I think, yes, there are challenges. I would not say that there are not, challenges are not there. There are challenges, but I would say that since the Indian economy is predominantly domestic economy, this will certainly, we cannot ignore the risk which is there on the global scene. But nevertheless, our domestic economy should itself be in a position to propel well, and should help us in tiding over the risk which is evident in the global scenario.
In terms of these positive indicators, and of course this big rating upgrade that has come, what sectors do you think are likely to drive India's next leg of growth in light of all of these positive indicators?
I think there is a lot of focus on manufacturing, so this will certainly help. And apart from manufacturing, when it comes to services sectors also, we get to see that, there is a lot of focus on the GCCs. So I think even that will also help in terms of generating the export revenue from the services. And as far as the infrastructure is concerned, that is always having a multiplier effect, which is to the tune of almost about 3. So even that will also help in terms of the growth. I would say when it comes to the infrastructure sector, it's all road, port, and railways. So we are seeing a lot of focus on all these sectors. So I believe that it will also show up. Manufacturing, we are seeing a lot of focus in terms of PLI, and apart from that, manufacturing will also help us in addressing the quality of employment issues also. So I think, to my mind, these are some of the sectors which have got a huge potential to grow. Apart from that, the new sector which we have seen in the recent past, of course, is the defense manufacturing sector. There also there's a huge potential for growth, and I think these are some of the sectors which will be quite a promise for the growth in the days to come.
Sure. So I think, something that we've been talking about since the news actually broke was the RBI's very prudent management of inflation and rates in supporting this improved outlook. One is, of course, how do you think RBI's prudence has helped banks stay resilient, especially in the light of global volatility that we are experiencing at this point of time? And more importantly, what more can be done to deepen India's financial stability?
Well, I think when it comes to the financial markets, risk is a reality. And the engagement of RBI with the bankers helps them in understanding the risk. But being a regulator, they have got a responsibility to ensure that they should put the guardrails in place. And those guardrails actually help in terms of mitigating the risk also to a greater extent for the financial institutions. So I would say that it's more of a collaborative effort between the lending institutions and the regulator, which has helped in terms of achieving this kind of an outcome which we have seen. So I think going forward, I'm quite confident that these healthy practices will be adhered, and which will help us help the economy and also the financial institutions also to tide over the potential risk.
All right, sir. And if I were to ask you, looking forward and your kind of outlook, what policy steps do you think are now essential for advancing towards an actual rating upgrade beyond, an outlook?
I think for the time being, maybe we'll have to wait and watch, but we'll have to see that the performance which you have demonstrated in the last couple of years, even that should be sustained. So once that gets sustained, it will certainly help us in terms of, one, of course, retaining this rating, and then, of course, upgrading this rating also in due course.
And do you think that coming to the trade negotiations, and I know that we actually addressed it, but then do you think that this could potentially put India in a better position to handle the trade negotiations now with a firmer rating?
Well, I think there are multiple other factors also which are forming part when it comes to the trade negotiations. So I would not be in a position to really comment much on that. But yes, nevertheless, it is one of the factors which certainly gives the confidence to the other side also that when it comes to the counterparties, they will certainly be having confidence in the economy. And obviously, it can help in sort of improving the trade terms to some extent. But yes, of course, there are multiple other factors which will be guiding the decisions relating to the trade negotiations.
Dinesh Khara, former chairman of SBI, sir, thank you so much for your time and for answering all of our questions so very patiently. This is the big news that's coming in right now, a big rating upgrade coming in for India. The international credit rating agency S&P Global has upgraded India's sovereign credit rating, and it has kept the outlook as stable. This is, of course, big news coming in, especially on the cusp of Independence Day. So quite quite a shot in the arm, not just for news for all of us here, but even for the economy. And we're also looking at, the reasons for the upgrading and the reasons for this rating. The government, of course, has been steadfast in focusing on keeping public finances healthy with the effort to lower the deficit and, of course, with better financial management as well. Let me, bring in my colleague Pallavi here. Pallavi, we've actually been talking about, the upgrade, we're talking about the rating, we're talking about the economy here. But I think if we were to understand for ordinary people, for you and me, and for all of our viewers watching here, what does this actually mean? Positive for India's image is one thing, but break it down and give us the basics of why this is relevant for all of us.
Right, absolutely, Sanjana. So, we've for long been sort of waiting for a rating upgrade, especially given that the previous rating, the BBB- was in fact the lowest investment grade rating that was available. And what this could essentially mean, like you said, apart from the fact that it is a positive in terms of the image that the economy is projecting. This most importantly could result in lower borrowing costs for the country, specifically for the government and as well as for corporates. What this could also mean is we've already in fact seen a quick knee-jerk reaction of sorts. We have already seen the India benchmark bond yields ease. We've also seen a slight strengthening on the rupee, and from a medium and longer term perspective as well, these are trends that could persist, especially given how other factors, of course, play out. S&P, for instance, has explicitly said that they do not expect the tariffs that have been imposed by the US to have a very detrimental impact on economic growth. It does, in fact, continue to expect GDP to grow by 6.5%. Right. So while that is on wait and watch mode, from a macroeconomic front and from a financial perspective, this will have implications, positive ones at that.
All right, Pallavi, thanks so much for that. And let me quickly bring in Yifan Phua, Director of S&P Global Ratings, joining us live from Singapore. Good evening from India and welcome to NDTV Profit. Thanks so much for joining us. We're looking at the rating and the fiscal outlook. This is a big rating coming in for India. So give us a sense of what specific fiscal milestones or policy reforms is S&P monitoring for this upgrade in India's sovereign rating?
Hi, good evening. Thanks for having me. Yeah, there were a few factors that we were looking at when we decided to act on the positive outlook and upgrade the ratings. The first thing, as we mentioned earlier, was really the government's demonstrated commitment to fiscal consolidation. The second factor that we were looking at was also the fact that nominal GDP growth continues to be very healthy in India, and this healthy GDP growth is actually helping to steady a lot of the credit metrics, especially given the fact that despite the fact that still there is some fiscal consolidation, deficits are declining, but it's declining at a very slow level. So this fast GDP growth has helped to stabilize the debt level of the government, at the same time also to gradually bring it down. The third factor that we saw was very important was the monetary policy settings and its development, how inflation has been controlled at a much durable rate over in recent years, and that we think speaks forth to the increasing strengthening transmission mechanism from the RBI.
All right, so thank you so much for taking time out to join us. I do want to quickly add on to that question and understand a little bit more. Now, for the longest time, credit rating agencies, including S&P, of course, has held back on a rating upgrade on concerns regarding India's central as well as aggregate debt. So what is your current view on that? We do see some fiscal consolidation and consequently some debt reduction as well. But what are the estimates you are looking at? How reasonable are these? Would you rather see debt consolidation taking place at a faster pace?
Pallavi, thank you for the question. I think you hit the nail right on the head. That's actually, in our statements when we talk about future upside movement is really even faster pace of fiscal consolidation. If you look at India's overall fiscal picture, for us, we look at it from a general government perspective, which is central plus the state governments. Now, as you can see, the central governments, in terms of deficit declining, actually has been quite fast, right? During COVID, it was deficits were as high as 9.6. I recall at the peak of COVID. And back then, the finance minister was already very clear to say that within 5 years, we'll bring the deficit at the central level to below 4.5. And they've certainly achieved that. On the other hand, the state governments themselves, the deficit has been, coming down a lot slower, or perhaps even, staying at almost the same level, between 2.8 to 3% of deficit GDP every year. So I believe that going forward, yes, the central government will continue to put in a lot of effort to consolidate its spending. But at the same time, I think the state governments perhaps will have to also chip in to help the overall deficit get smaller as well. But deficits aside, the other thing to really take note of is that sometimes it's not just the deficit that matters, but also the quality of the government spending. And that we see has been improving in the last 10 years. Increasingly, the budget has been tilting more and more towards infrastructure spend. And as a share of budget, subsidy also has been coming down. Now, that's very important because as your infrastructure improves, as your connectivity on the ground improves, that actually allows India to grow at a faster pace than what it is right now. So we are recognizing the fact that this is still an emerging economy where spending has to be done to support the economy, to also build infrastructure. But this all we believe that has a positive impact on India's metrics going forward.
Okay, Yi, I'm going to actually address the elephant in the room, and of course in every newsroom at this point of time, which is the global volatility around the tariffs. And I think in the past you have noted that US tariffs on Indian goods will have limited impact due to India's domestic demand orientation. What sectors or metrics would you monitor for any negative surprises if trade tensions escalate further?
Thank you for that question. I think overall our view is that India's, as we said earlier, it's not a very export-oriented or export-reliant economy for its growth. A lot of India growth, I believe, around 60% or so drives from domestic consumption, and therefore, we do think that the tariff story will have limited impact on India's growth, right? As we see right now. India's export to the US is about 2% of its GDP. But once you factor in the sectorial exemptions on certain products like pharmaceuticals and also consumer electronics, their exposure is down to about 1%. So that's the reason why we feel that the tariff, even though it could have some impact, but it will be quite manageable. And overall, the long-term growth story for India remains quite healthy.
Okay, I do want to add on to that. While you have explicitly detailed, even in the report and in your comments, that the tariffs are not expected to have any detrimental impact as such on the long-term growth prospects. Back here in India, we do have some concerns regarding the impact, the volatility and global uncertainty is having on investments which have already been fairly stagnant despite the government's bid to push up the number, especially in the private sector. That alongside the fact that we have seen demand, especially in urban areas, remain fairly lukewarm. What are you making of these mixed sort of trends domestically, and how concerned would you be regarding those as well?
Yeah, thanks for that question. I think it's very important to have a sense of relativity here and comparison to India and its peers, right? If you look at a growth number of 6.5% for this year, this clearly puts India in terms of growth compared to other emerging economies as a clear outlier. It probably ranks, top few in the world in terms of its actual growth momentum. And I think that's very key for us. Of course, there could be some divergence in the economy, as you put it. Urban sector is perhaps not growing as quickly, but a lot of the growth is rural and so forth. But if you actually look into the detailed numbers of FDI inflows, especially last calendar year, even though net FDI numbers doesn't look so great, but actually net gross inflow actually continues to be very strong. Coming into sectors like services, into financial services, consulting, IT. We see a lot of that still keeps coming in. I think that certainly speaks to the fact that investors still have a lot of confidence in India as an attractive investment destination, especially the fact that you have a very large domestic market, and also the fact that the middle class is getting larger and larger. So all these are factors for investors to look at India and to come in to invest in various industries.
And Yi, our last question before we let you go, and thanks so much once again for your time. What's the one metric you'll be watching most closely for India in the next fiscal year?
Right. Yeah, great question. I think actually we pointed it out in our outlook statement. It will probably be the deficit that we are watching out for, how quick the pace of consolidation is. One thing also we're also watching out for is the pay commission's recommendations to see how what kind of deficit level we're going to be talking about, recommended by the Finance Commission, and also in terms of its recommendations to states and also to central government in terms of the revenue sharing arrangements and things like that. So we'll all be watching out for that as well. But in our outlook statement, I think we put very clearly that future potential upward will continue to rely on. Will be dependent on India being able to keep up its fiscal consolidation efforts, continuing to focus on its infrastructure investments. Also at the same time, having a very conducive monetary policy environment and having inflation being kept under control as well.
Right, Yi Fan Phua, thank you so much for your time and for actually breaking that down for us so comprehensively. We'll continue tracking this and can keep coming to you for all of your insight and analysis.
Most welcome. Thank you.
And that's a wrap on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
मुझे तोड़ लेना वनमाली, उस पद पर देना तुम फेंक, मातृभूमि पर शीश चढ़ाने जिस पर जाएं।
वीर ने क्या बात है भाई, वाह वाह वाह। अगर चीरोगे ये सीना धड़कता देश निकलेगा, मैं वो हनुमान हूँ जो दिल में हिंदुस्तान रखता हूँ।
भूल गए क्या युद्ध भूमि में कीमत बड़ी चुकाई थी।
तुमने तो अपनी ही मर्जी से वतन छोड़ा था,
तब ये वर्दियां खड़ी थी तान करके छातियां।
खून माटी से जा मिला वरना आज सिंदूर ही नहीं होता।
जय जवान जो मैंने शुरू किया था, ये एक्चुअली मैं दोबारा आया हूँ आप लोग से मिलने के लिए। मुझे बड़ी खुशी है आप देख रहे हैं YouTube पे मेरी फिल्म। वाह क्या बात है, क्या बात है। देखिए जय जवान मेरे साथ 15 अगस्त को सिर्फ NDTV पर। जय जवान, जय जवान, जय हिंद, जय हिंद।
force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
Hello and welcome. You are watching KYC. I'm Harsaita, and on behalf of the entire KYC team and on behalf of the entire of NDTV Profit, we all wish you a very, very happy Independence Day. Of course, we're Indians, we're proud of that, and yeah, just spelling it out. Anyway, we'll start off with the KYC today, and it's a stock which has done extraordinarily well for investors but has delivered an outstanding set of numbers as well. The Q1 numbers really stood out. Very little in terms of criticism that one can pull out where a Muthoot Finance's numbers for Q1 is concerned, and therefore deserving and warranting a KYC to try and understand whether there is still some bit of re-rating possible on this one or not. And that's my first question. How much of the growth is driven by the rise in gold prices? They've done a 40% loan growth in the gold AUM. That's what's driven the overall AUM higher. And I want to therefore understand whether some part of this or a larger part of this is driven by gold price rise. The guidance, viewers, mind you, was that they will do a 15% growth in FY26. They have done 10% QOQ in Q1, which means that there's very little left in terms of growth to meet and beat that guidance. Very likely they will beat that guidance, and therefore I'd want to know whether the growth expectations for FY26 are now revised. We've seen a couple of analysts come out and talk about a 25% growth possibility in FY26. I'd want to know whether there's a formal change to the guidance or not. The third piece is therefore, is this a sustainable kind of performance? This beat across all parameters, can this sustain for maybe another 1, 2 or even 3 quarters? And if that is so, is this a blue sky situation, or can we see a more sustainable kind of a performance where the type of performance that we've got in FY26 is concerned? Can we get used to that or not? Or is this just a pure blue sky quarter and we'll start to see normalization as early as Q2? Because that will mean that some bit of the reaction today may not be fully warranted. The fourth piece is with regard to margins. Margins are aided by credit rating, or is it falling on the back of, or is it rising on the, or is it aided by the falling repo? What is it, and how much can I attribute it to each of those parameters? Because we've seen a couple of credit rating agencies upgrade the counter, so maybe some of that also rubbing off on the margins. I'd want to know that. How should one look at yields? The gold lending business is unique. When you have a customer who will come to a gold lender, he'll come in and he'll give you loans, or he'll give you the gold as a lender, and you'll give the borrower a loan, right? Now the value of the gold goes up, which entitles the borrower for a larger loan amount, right? But the rate largely will still likely be the same, and that's what I'd want to know. Whether the rate is also actually tweaked when the loan rates go up, and when a borrower comes in and borrows more money against the same quantity of gold, can the rates remain the same or can they be tweaked? Practically, how does Muthoot do it? And therefore, where do yields go as a result of this? Are they benefiting from that, given that yields have remained on a higher note, and the repo has come off sharply post that. Credit costs, what should one make of it, given that they are undertaking diversification? Can we expect the kind of credit cost number that they've clocked? I know probably we'll analyze the more standalone numbers, and maybe at a console level the credit costs are higher and most of the other business are loss making, but I'd want to understand what the strategy is with regard to the diversification as well as the credit costs on the back of this diversification. So that's my 6th point. My 7th is with regard to the possibility of an upside surprise on ROAs. Now, this could be a positive for FY26, and sustainability of that for FY27 is also something I'd want to know. So all of that is what we'll try to explore today on KYC. It's a long one, but let me start off with the parameters, before the parameters, what the company does. I'm going to first start off with a quick overview. It's India's largest gold loan company. It's got a 135-year legacy, headquartered in Kerala, has nearly 5,000 branches, customer base of almost 2 crore, larger focus on rural and semi-urban markets is what it has. In terms of product, the core product is gold loans. Let me illustrate how much of gold it does. Around 1.3 lakh crore is its total book size, out of which 1.2 lakh crore nearly, 1.12 lakh crore nearly is gold loans. And Muthoot standalone is around 1.2 lakh crore. So when you're looking at it in the overall scheme of things, 80% plus is gold loans. And the growth there is what is driving the overall AUM growth, understandably, because just the size of the gold loan book is extremely large, and therefore no matter how fast some of the other segments grow, gold loans will really dominate in terms of the growth number, and therefore a 40% YOY growth, you can't do it without a gold loans, and therefore that's how it stacks up. In terms of what gold loans are all about, well, they're fast, flexible, short-term credit. I explain as to how a customer comes in, gives in the gold is valued 70% or below of that gold value is given to the customer as a loan. Broadly, that's how the business model works. In terms of others, well, you have personal loans, you have business loans, loans against property. There's money transfer and collection services. They do insurance distribution, affordable housing loans, microfinance loans, vehicle finance loans. But broadly, it's microfinance, housing finance, and unsecured. That comprises of maybe 10% of the book of a Muthoot. Outside of that, pretty much a larger chunk of the loans is gold, which they give out. In terms of the core model, I did explain this model, but let's quickly have that. Customer gives gold as collateral, he gets cash, the branch network collects, evaluates, safely stores the gold jewelry, and if the customer defaults, the gold is auctioned to recover dues, and therefore you likely not see customers defaulting because the value of the gold will always be larger than the value of the loan plus interest that the customer owes. That's broadly the way in which it functions. Now let me start off with the key metrics as well. Try and explore what are the metrics we look at. We look at income statement, balance sheet, asset quality, operational metrics, shareholding, street cred, street coverage, and valuations. We'll cover all of that, we'll cover all of that in terms of the key metrics where a Muthoot Finance is concerned. Let's start off with the income statement, and I'll first look at Q1, and Q1 is essential because the kind of performance they've delivered in Q1 is extremely strong. You'll see it on your screen, 51% net interest income growth, 20% sequential. Again, you'll see that your interest income is rising much faster than your interest expense on a sequential basis. That's what's driving that growth higher, and that along with the 10% QOQ AUM growth is just giving a new fillip to that NII absolute number, which is what is playing out on operating income, which has gone up by 30% QOQ, 63% YOY. Also, your OPEX hasn't inched up in a significant fashion, and therefore your OPEX to assets has come down. We'll look at those metrics as well, but OPEX to assets has come down, which is helping the operating income number. Your provisions largely have come off, you could visibly come off, and therefore you're seeing that surge in profitability, 90% growth in terms of profit after tax. These are standalone numbers. But now let's zoom out, as we always do on a KYC. We don't look at it from a 1 year lens. We look at it from maybe a 3 year lens. And that's what you're seeing in terms of the 3 year picture up to FY25. So why Q1 FY26, very solid numbers. That's the number that we're looking for in terms of the FY25 number. The total PAT standalone in FY25 was 5,200 crore. They've done 2,000 crore in Q1 of FY26. That's why you're seeing the kind of reaction you're seeing. But that's how it's actually played out. And what you're seeing over the slightly longer term with a slightly zoomed out lens is that this business is otherwise not grown at a very, very sharp pace as some of the other NBFCs have grown. And understandably so, because it's tilted towards gold, and therefore gold prices going up is certainly one of the metrics that you look for when it comes to growth. It's also intense competition, higher yields, and therefore you've got some of these banks coming in and trying to disrupt the marketplace. You've seen an SBI come in aggressively with regard to gold loans, on the larger banks coming in and trying to build a gold loan book. And then you have some of the other NBFCs as well, Capri Global, etc., which have come in and tried to disrupt. And which is why you're not seeing the kind of numbers that we've seen in Q1 FY26. And therefore, we'd want to understand what's changing. But that's broadly the case. But FY24 to FY25, we've seen very, very good growth. And that is also to a certain extent because of the way the gold price has moved. That's one. And second, it's also because of competition coming off slightly in the gold lending business. Both of those have aided some of the numbers where FY25 is concerned. But the 3 year view, not looking as impressive. We'll be cautious on this one. We'll give it a neutral where the income statement is concerned. Let's look at the balance sheet though. And the balance sheet, again, what you'll see is that the growth has been extremely back-ended, but there has been growth and the growth has been strong. This is, of course, Q1 FY26 numbers. Let's look at the 3 year numbers as well. And that will give you a better picture. The growth has been good. It's been around 30% on a 3 year CAGR basis, and therefore it's positive where the loan asset growth is concerned. Also, your capital adequacy is fairly healthy. Both of those metrics adding up fairly well, but the growth has been back-ended, which is a maximum part of the growth has come in between FY24 and FY25. And that's why the tilt in the 2 year CAGR is more back-ended than anything else. That's something you want to keep in mind as well. But we've given this one a clear thumbs up. Let's talk about asset quality. Very, very stable where asset quality is concerned. You've seen NPA ratios largely been between maybe the 3.4 to 3.8% range. So it's fairly range bound. Your net NPA or your ECL percentage also has been fairly range bound. So no complaints there. We've given this a thumbs up. Of course, it's a risky business, but the stability with regard to the way in which assets have moved is important. Now, mind you, when you are looking at a lender, you don't necessarily get worried if the NPA ratios are high. You get worried if the NPA ratios fluctuate too much. That's what should worry you. If the NPA ratios are high, but if your margins are very, very high, that should take care of some of the credit cost. That's the better way to look at lenders. And that's why even though it's a 1.5% kind of ECL percentage, I wouldn't be too worried about it. Simply from a perspective that some of the other metrics also matter when you look at asset quality, and that's broadly how one looks at it. So we've given this one a thumbs up purely on the basis of stability. Now let's look at some of the key metrics. The margins, again, largely stable across cycles, 11.4 to 11.5%. Margins have inched up now, and I'd want to know the reason for that. ROAs, largely again stable. Just look at the stability on the ROA. Look at the stability. This is of course Q1 FY26 on your screen. Very, very strong numbers. But let's switch focus. Let's look at the 3 year picture. And on the 3 year picture, you'll see far more stability in terms of where the numbers are. There you go. The ROA number fairly stable. 11.23% is incorrect. The FY24 ROA is 5.84%. So between 5.7 to 6% is broadly the ROA range. And when you're looking at yields as well, it's been largely stable. It's not been too choppy. The cost of borrowing has certainly gone up as a result of the repo inching up between FY23 and FY25. Spreads also have largely been maintained. That's the better metric to look at it. So again, a thumbs up. It's tough to have that kind of stability in a business like this, in the lending business, and we've seen that. Shareholding pattern, and when you're looking at the shareholding pattern, fair bit of stability there as well. Lots of skin in the game that promoters have, and therefore we've given that a thumbs up as well. 73% owned by the promoters. FIs have a decent amount of interest, so do DIIs. Very small public interest in this one. Let's talk about the street cred now. In terms of returns, 1 month there's a 4% return, 3 months 23%, 6 months again 23%, 1 year you've seen a 52% return on the stock price. But the 5-year stock price is up just about 2.2x. So you've done maybe around 16% or 17% in terms of returns, which is fairly healthy. But when you compare it to the benchmark and what the benchmark has done in the last 5 years, mind you, compared to 2020, of course, there's been some bit of underperformance. And therefore, again, on the street cred point, we've given it a neutral, largely because the 5-year performance hasn't lined up as well with the index as ought to be. Let's look at valuations now. And when you're looking at valuations, you look at a Muthoot and largely look at a Manappuram, right? These are the 2 largest gold lenders and therefore businesses which are more comparable. You look at Muthoot, much higher priced in comparison to a Manappuram when you're looking at the multiple, right? But the multiple shrink is going to be extremely large. So 1 year forward price to book is just 3 times versus the 4 times number currently. You're going to see that shrink largely due to profitability coming in. And second, Muthoot has been relatively more stable compared to peers in terms of performance as well as in terms of the way it delivers profitability and ROA. So all of that helps it stand out in terms of the multiple that it commands in the industry. So surely something that you want to look out for, but surely something which is slightly expensive compared to peers. You also want to keep in mind that the ROA is 5.5% plus for a 3-time book, 1 year forward book company. So that's the other piece you want to keep in mind. But of course, we will try and get a better perspective from the management on what they think. This is street coverage now. 15 buy calls, 6 hold calls, 4 sell calls. Average return is -3%. Given the buy calls that are there and given that we might see tweaks with regard to target prices as well, already starting to see that, we've given this a neutral as well. But largely the upside, according to analysts, remains capped, at least for the moment. Let's sum it all up. Let's try and put it all together and give you a full picture. No thumbs down. That's the one piece which really stands out. But outside of that, you've got all of those neutrals and thumbs ups, giving it a 6 out of 8 on the KYC rating. Let's go across. We have George Alexander Muthoot, Managing Director at Muthoot Finance, joining us. Pleasure, sir, speaking to you. This is Harsh here. Let me first start off by understanding this very strong loan growth that you've clocked, 40% YOY, 10% QOQ. How much of that attributable to the increase in gold prices and how much of that is actually attributable to new customers and existing customers taking new loans? Give us that perspective.
Thank you. Thank you. So in the last 3 quarters, we have seen good growth coming from the good demand coming for gold loans. I think the demand is the most important thing here. The demand is coming mainly because gold. One is the availability of funding. The fund availability with people in the last 2-3 quarters have been low, especially with regard to unsecured lending. The regulator, etc., has been actually cautioning all banks and NBFCs to reduce unsecured lending, especially the personal unsecured loans, the microfinance loans, and even the credit card loans, etc. The Reserve Bank has been cautioning. As a result, the availability of funding has been low in the last 2-3 quarters. So people have chosen to take more of gold loans. And the gold price, which is already about 40% high in the last 1 year, there is always, every day, at least 3 news items in the newspaper about gold price, about gold loans. So people are now getting more and more interested to utilize the ornaments they are having to take a loan. That is the demand part of it. The second is the gold price. Personally, people who were able to get a lesser amount earlier can get higher amounts today. But not necessarily that everybody should take the maximum amount available. Today, if you look, our loan to value, although we are able to lend up to 75%, it is only 60% of today's price or 61%. That means everybody has not borrowed the maximum 75%. People will borrow only to the extent they require and they feel they can repay. The third point is again about the regulatory regulations. The new final regulations which came maybe in a month back is, if you ask me, it is quite gold loan business friendly. It is gold loan business friendly both from the point of the customer and from the point of the lender, whether it is bank or NBFC. In fact, today a loan up to 2.5 lakhs, the new regulation says can be given with least formality. And that is what I think people need, and that is what I think is what the finance ministry as well as the Reserve Bank, the regulator, want. That is a clear signal that this gold loan business is being favored and maybe favored by the regulator. So these three things which work together in the last 2-3 quarters have been responsible for the good growth in the gold loan business. Not only for Muthoot Finance, but also for many banks and other NBFCs. Of course, Muthoot Finance was able to do better because we have a 5,000 plus branch network all over the country and a 30,000 dedicated staff. So that is the reason why the gold loan growth has come.
Sure. So let me ask you what the expectation therefore should be in terms of loan growth. All of this aiding your numbers, FY26, you've guided 15%. Does that change? That's my first question. Second, for an investor who's going to hold your stock for the next 3 years, what's the growth expectation that he should pencil in?
Yeah, of course. Our job mainly is to run the company well.
Yes.
मुझे तोड़ लेना वनमाली, उस पद पर देना तुम फेंक, मातृभूमि पर शीश चढ़ाने जिस पर जाएं।
वीर ने क्या बात है भाई, वाह वाह वाह। अगर चीरोगे ये सीना धड़कता देश निकलेगा, मैं वो हनुमान हूँ जो दिल में हिंदुस्तान रखता हूँ।
भूल गए क्या युद्ध भूमि में कीमत बड़ी चुकाई थी।
तुमने तो अपनी ही मर्जी से वतन छोड़ा था,
तब ये वर्दियां खड़ी थी तान करके छातियां।
खून माटी से जा मिला वरना आज सिंदूर ही नहीं होता।
जय जवान जो मैंने शुरू किया था ये एक्चुअली, मैं दोबारा आया हूँ आप लोग से मिलने के लिए। मुझे बड़ी खुशी है आप देख रहे हैं YouTube पे मेरी फिल्म। वाह क्या बात है, क्या बात है। जय जवान मेरे साथ 15 अगस्त को सिर्फ NDTV पर। जय जवान, जय जवान, जय हिंद, जय हिंद।
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses.
What does independence mean to you? That's a layered question. You could, of course, have a very quick answer to that. The textbook definition, the guarantee of the inalienable rights that every individual must have, what we celebrate every year on the 15th of August. But if you narrow the scope and think about what it means to you, your answer might differ from your neighbors. For me, it is the ability to choose what to do with my time. This is Your Money Matters on NDTV Profit, and I'm Alex Matthew. First, on behalf of everyone here, I'd like to wish you a very happy Independence Day. I wanted to discuss what independence means to different generations, and that's why today I invited into studio Stan Alvarez and his daughter Yulette Alvarez. Thanks so much for taking the time, and along with them in studio also is Rohit Shah, the Chief Executive Officer of GYR Financial Planners. Thanks so much to all of you, and wish you all a very, very happy Independence Day.
You too.
You know, so the idea was to get very different generations. And Stan, you're 63, you celebrated your birthday this week, so happy birthday as well.
Thank you.
And your daughter, your youngest of three, is 22. Yulette, you're 22. So this is already and also, Rohit, if I can throw you in the mix. You're from a very different generation. I'm a millennial, so we've got quite a mix of everything. I want to start with you, Stan. As you look back, when you were Yulette's age, and you were looking forward at the life that you would lead, and you were looking for gainful employment, and you see everything that is happening right now, and you juxtapose the two, how different is it?
As a self-made man, in my time, our priority was doing our best, getting the nearest job, making money, maybe not much of it as was possible as at that time, but doing your best, doing new things, planning for them years in advance. So you could take the leap when time became ripe.
When did you start working?
Well, I was involved in as a techno geek. I was involved in a lot of things right from college days. I used to, in the audio field, the lighting field, I used to build my own stuff. And I had a lighting business right in my college days.
Okay.
The disco era.
The disco era. Can you relate to that, Yulette?
That is something I have grown up seeing. I've grown up seeing my dad innovate and make something new. And a common term for it is jugaad today, where people like to put things together. But to me, that's just my father. That's not jugaad.
Okay. So I hear that you have two older brothers, one who is pretty much on the cusp of being millennial, and you are Gen Z. You are 22 years old. You've just started working. I'm just trying to understand from you, and we're going to talk about financial freedom. We're going to talk about independence. If I were to ask you the question, what does independence mean to you?
To me, independence has many meanings, but I'll say the two that stand out to me. One of them is that ease of expressing myself through what I do, through the way I live and dress, all of that. And the second one is to not be forced into a choice, to have all of my choices open. I think that is one of the most important meanings of freedom to me.
Okay, and that you mean by employment, what you do to earn your living, is that what you mean?
Through employment, even through, if say today I'm fed up with my job, I want to explore something different. I don't want to be backed into a corner because, oh wait, I don't have money, I cannot jump onto something else today.
Okay, I want to ask your dad whether he had that choice, because I think a lot of people from your generation, Stan, talk about the fact that they did what they needed to do to put bread on the table. They didn't really have too much of a choice. For example, you had 3 children, you had to bring them up. That was your foremost priority. The job market then was very, very different. You started your own thing. But would you say that your objective at that time was not, when can I stop working?
Yes, thought always occurred to me, because when I reached that era, there were people already saying we are going to retire at 45.
Really, even back then?
Yes. There were people saying that, and you see YouTube, like maybe today you see on YouTube, there were similar stories going around, and you're saying, why can't I also do it?
Oh, okay. Wow, so that's interesting. The fact that it stayed the same. Are you surprised by that, Rohit? This is not really a new concept. People wanted to stop working. Who wants to work, right?
No, that's a news. That's definitely a surprise, Alex, because what has happened is that, the way technology has gone, the new generation has become very aware. The information is available to them. And, they all have dreams and desires that don't want really to be into this 12 hours run. The other thing that you will notice, Alex, is that, what they call typically as a 1-2-3 formula. You hire one person, give him the double salary, get him to do the work of 3 people. And that's the reason what everyone wants, that when can I be financially free so that I can really do something else. And I think that's the change that I see in this generation.
Okay. Tell me about your interaction with your other children as well, Stan, because I'm sure that you would have learned things from them as well. Do they think differently from your daughter, or do they have a more or less similar outlook? And what are the kind of conversations that you've had about money, if at all? And what is the kind of advice that you've given them? Because you come with a very different lens and experience of dealing with things.
Yes, handling each of the 3 of them have had a different outlook of life. As I say, all 5 fingers are not the same.
Right.
I accept it that way. But yes, each one had varying degrees of ambition or achievements. But our overall advice to them was keep stability.
Stability, okay.
Keep stability. All of them started working the minute, they're all engineers. They're all engineers, 2 of them masters, she's just finished engineering. But our priority was that, as it may sound odd for today's, that don't laze around, keep yourself busy, get a job the minute you pass out.
Your dad says it might sound odd. Do you want to comment on that?
It is, I guess people do find it odd because I started working fairly early. I started working just as I finished my 2nd year of engineering. Not out of compulsion, it's just that there was an opportunity. I felt I can take this opportunity. And my friends thought it's a little insane because juggling a whole 8-hour job with college was exhausting. It is odd to people.
Okay. I want to talk about investments, and I'll come to you, Rohit, in just a bit. But first to you, because that will set the context for the rest of this conversation. Do you invest at all?
To a limited degree. I am still learning what they did and trying to decide what would be good for my money.
Okay. So when you think about your investments, of course, I'm not asking you to say what you've learned, but of course, you're exposed to a lot of information. You look at the various options available to you. For example, a lot of your cohort, your generation, look at cryptocurrency or look at relatively new financial instruments very differently from what your dad might. So what are the things that you have been attracted to when you talk about investments?
So in investments, I think to explore the riskier ones, you first need to ensure that you have a decent amount of the safe ones. So I think one of the safest things are FDs. It's very old school. My mom always says that, every couple of months when you've saved up enough, put in an FD.
Yeah.
Later do what you want with your money.
So that's what you're doing now?
So that's what I've been doing so far, playing catch up with the FD gang.
We need
this
to
is a
define what is safe.
22-year-old. Rohit, are you surprised by this answer? 22-year-old investing in fixed deposits because the mom has told her every couple of months, whatever surplus you have.
I do agree that FDs are not, to some degree they do beat inflation, to some degree they're just preserving your money.
Wow.
But it's debatable.
Rohit, you want to comment on this?
We need to define what is safe.
So you want to talk about it? Why don't you do?
And I think what we really have to think more about it is that, and I think when we are starting up, fixed deposit is definitely a good idea because you need an emergency corpus.
So, but let's talk about that. Early on, did you contemplate investing in equity? Did you build an equity portfolio? Everybody looks at the relatively older generation. You're very young, Stan, I must say that, but you've had more years than I certainly have. The opportunities at that time were to invest in early companies, right? In companies that were starting out on their journey. India was not necessarily growing as fast as it is and has been over the last couple of decades. So you had the opportunity, for example, investing in Infosys or TCS or any one of these large companies today. What did you think about that?
I may have a different story for you.
Please.
Because we belong to a time where our priorities were looking after our house, looking after our dependent elders, and also your career.
Yeah.
I used to invest in electronic equipment to...
So you invested in your business?
Business, or even my own skills.
Right.
To further my skills. And so there was, although I used to study the full investment page of Times of India, all the stocks, everything like that. But we said we keep it for a later date.
And you always pushed it down the road because you didn't have the surplus to invest.
We may have had, but then there were other priorities crowded that came in between.
That's very interesting.
Like at one junction in my life, it was, okay, I had, say, 50K, that was at her age, one fine day, suppose or even less, maybe a little younger than that. And I decided, do I buy a bike or do I fix up my house?
And you chose a house?
Yes, because I said the bike can, in those days people just pick up a bike and walk off or things like that. And I said I don't want to lose that.
Yeah.
So shall I do something which is lasting?
So, but this beautifully explains how people have a very different mindset, right? So, can you even contemplate that today, Yulat? And I'm asking this effectively of you because you have a very different approach to the earnings that you have. You don't have the compunctions that your dad might have had at that time. He's taken care of his own requirements and he's not dependent on you at all. And so therefore your income is your own. Can you contemplate the fact that when he was your age, that didn't exist?
It seems like a very scary choice, I'd say.
Yeah. So Rohit, why don't you talk about this? Because ultimately, this is the definition of different generations within our country right now, right? Because you have a generation now that is earning, that is comfortable, where a base or a foundation has been created for them that allows them to elevate to the next level. Why is that so important today?
2-3 observations, Alex, and if you really think about, the time that Stan comes from, that generation, not specifically him, but I'm referring to that generation. See, the society is also structurally changing from a, multi-family, joint family system. We are now sort of shifting to nuclear. The other is look at the income profile. Look at the disposable income, the way it is rising. And he said it in terms of the priorities. Then, how do you really look at it in terms of where is the question of saving? Whereas for her, that's becoming an important question that, one, they're not a sandwich generation. For example, in his case, parents as well as planning and probably in some cases even taking care of the children.
In his case, absolutely that was the case.
And this generation doesn't need to. Stan is already taking care of himself. And that's the reason these questions are coming. I have a higher disposable income. I really don't want to do the rat race. And then can I, really be financially freedom? I think that's the generational transformation that is happening.
But I want to ask this, right? Because this then leads me to another question. Stan, you've saved all your life. You've taken care of your children. You effectively don't have financial dependence right now, right?
I shall add into that.
Right.
Both me and my better half have together planned it.
Exactly. So you've done that. Yes. What I have realized, and this is true for my parents as well, is that they have a lot of money for themselves, more or less in a similar situation. But even if I give them money because they're not spending their own, they don't spend it.
Right.
So would you say that your generation has not learned how to spend money?
We believe in constructively spending our money.
How do you define that?
Is don't get something out of compulsion, or just the other person has it. Just get something. If it's useful for you, maybe flashy also, maybe it's something a little better, but it's useful for me.
Do you think that dad and mom spend enough on themselves?
So one thing about dad is he's a person of few wants, but he gets himself the good stuff when he wants to get himself something.
I've gotten my answer.
And what I'm observing, Alex, my mom has stopped buying jewelry because the government now wants 18% GST. Right? And I think the difference is that the lifestyle aspiration is a one-way traffic.
Yeah.
Right? And this generation has beautifully managed it well. Instant gratification, delayed gratification, need versus want. Whereas this generation, we're all into experiences. We don't want to get attached to a location. We don't want to marry to a job for the next 40 years. And I think those are the new interesting combinations coming up.
No, absolutely. So I don't know if it's an interpretation that I have or it's just an observation. It doesn't appear to be the case for the two of you and for your family. But what I've often found is that people of your generation, Stan, have saved all their lives. They've been responsible. But now when it comes to enjoying the fruits of their labor, they've not been able to do that. They're not able to cut loose and say, oh, I want to go to Italy this year. Or, look, I want to go to Kerala. I want to spend 2 weeks in the backwaters.
And
no, it's too expensive. Not now. Maybe next year. Maybe in a few months.
Would that be a function of two? One is the fear, money fear.
Yes.
We all have money fear, right? Will I
have enough
money
for the rest of my life?
Money will, run off me. The second is it's also a lack of a planning.
Yeah.
Right? Financial planning is 20 years old. In the US, it is 60 years old, correct? And the financial planning for the most traditional families is that a joint family system, which takes care of it. So when we have not done the numbers, we don't know the math, we haven't done a, safe withdrawal rate, systematic withdrawal, then it becomes very difficult to spend the money.
Yeah, and equally, what I found in not necessarily my generation, because I think we've taken a lot from our parents, you have as well. Evidently, you have a lot of the answers that I think I would look for in people of my age. But having said that, a lot of young people say, I'm going to spend now and worry about the future later. But having said that, I'm going to use this opportunity to ask you both to speak to Rohit about how to manage your own finances, because this is the perfect opportunity.
Right.
If you were to talk about your retirement and the next 20, 30 years maybe, do you have any doubts about how to manage your money that you would like to pose to him?
Yes. Yes, we have, as she said some time back, that the FD was the safest or thing like that. We don't go into adventure. But in the current, that we've always been busy 24/7. So going to some adventurous investments has always been a thought, but not put into practice. But now with a little more free time, yes, definitely. Could you give me some advice on how we could channelize our funds for better returns?
You need to have a conversation with him about how to plan.
Sure. So I'm just simply going to give you, this example that what we see here is basically a currency.
Yeah.
Right? But money is not currency. Money is purchasing power, right? And, in many words, when you think about it, money also reflects our love for the generations to come and for the causes which are very close to us. So the whole concept is that, first level, how can we, build the power of our money, whereas there is a purchasing power. And at the second level, can the money flow like a river? When you see the river flowing downstream, it gets deeper and wider, right? And the money is also like that. It can grow generation to generation. Now, when we think like that and think for the next 30 years, 40 years, which itself could be a very well period that you yourself have, then you will look at it in a very different way and probably start thinking about that if India is going to become a $5 trillion economy and even more, how can I leverage that?
Okay, so therefore I think what he's getting at is you need to have a certain element of equity in your portfolio. Because this is ultimately the way that you grow is going to be to invest in companies that are part of the growth story of India, right? So you obviously still have your consultant work that you do, but if you're talking about people like Stan, and of course I'm not asking you to give him exact financial advice, maybe we can do that offline, but for somebody in his context, what are the kind of things that he needs to look at in terms of the amount of money that he should keep at the very least in his portfolio towards equity to ensure that he takes care of the next 20 years and he has something to give over to Hewlett as well as the other two children?
So, one is maybe it will be a good idea for you to learn the concept of SWR. And I think this is something that all our parents should take effort and learn it, is that because the whole problem that, you have, Alex has, Hewlett is going to have, I'm going to have, is that, how do we consume our money so that, we don't outlive money, money outlives us. So that is an art and science, it's a debate, it is not a settled an issue, but the safe withdrawal rate is the concept. How do you withdraw a certain percentage of your money in such a way that you are able to grow the corpus and it survives you at least for the 3 to 4 decades of retirement? It's a huge debate, as I said, and you can take a number anywhere from 2.5% to 4%, 4.5% based on your risk appetite, based on these different
What is this 2.5 to 4%?
Right. So suppose if I have 1 crore and if I take a 3% at the age of, let's say, 65, then I can withdraw 3 lakh rupees per annum from the corpus, which basically means I can do an systematic withdrawal of roughly around 25,000 per month.
Okay.
So that's a good starting point for a 3 to 4 decades of retirement planning.
Okay. To come to you, Hewlett, because you've got so many years ahead of you, I think this is the optimum and the most ideal opportunity for you to look forward and say, this is when you... I wish that somebody had this conversation when I was 22, right? I started very late, but I've still benefited because I started when I did. Rohit, any advice that you would give to her as she's starting out? She's been doing fixed deposits, which is a great thing to do when you're starting out, because she's creating the habit of saving. And she's already got a great foundation. I think her dad and her mom have given her excellent advice, maybe her brothers as well.
So one thing to Hewlett's credit, somebody has said, one of the very maverick investor, I think Joel Greenblatt has said that one of my largest position is not where I'm expecting a huge money to be made. I'm expecting money to be not lost. Morgan Housel says, compared to other people, I have a higher element of cash. And I'm okay with that because it allows the rest of my portion, which is aggressive, long-term equity, to have a higher longevity. So when you have money with you, that's a power in today's world. So that's a great thing to do. My advice to you will be that learn this subject, study this. Depends upon what is the method you like to learn. You read a book, you pick up a podcast, you do YouTube, you read up on AI. But the whole idea is, for example, Morgan Housel has done very good work area, and there are a couple of very, very deep, insightful, resources for you to get started.
But I'm specifically talking about her investments and how she should approach that, because just the concept that I think is very powerful of obviously compounding, but what Warren Buffett talks about when he says that compounding is like a snowball on snow, right? It gathers and becomes bigger. I'm paraphrasing here, but what you need for it to become much larger is a long hill. And so therefore you need to start early, as he did at the age of 11, and you're 22, not very far away, or you need to live long, and he's over 90 years old right now. So, and he's got what, 20% per year, which is something that people have gotten over the last 5 years. I'm not saying that that's necessarily something to aspire to, but you can get what, 12 to 15%. Yeah, that is the advice that I'm looking at.
I'm just thinking because, if you look at this generation, nobody is really caring about retiring at 60 and looking at the NPS or EPF. For them, 60 is not retirement, first of all. It's much earlier.
Yeah.
But I think most of them probably tend to have only 3 goals. One is they want to have money to get married. 2, they want to have money to buy a house. 3, they want to have money to buy a vehicle.
Yeah.
So the 3 goals.
Is that relatable, or is that not true at all?
My priorities in life are more of I'm saving up for an education.
Yes.
Because education is very expensive.
Yes.
Lovely.
That's my first priority in life right now.
Right.
Second one is maybe stepping out of my parents' house a bit. You know, like rents are ridiculous right now. So if I could pull that off maybe a few years from now, that would be amazing for me.
So 2 priorities essentially.
Yeah.
And you're not worried about retirement at all, but you'd like to stop working at some point.
It'll come when it has to come.
There you go. So, but if she starts today and she's got these immediate goals and she saves for 22, 23 years, at 45 she's already got a humongous corpus to fall back on.
That's right.
So, but last bit of advice on how she can achieve her immediate
So a
goals.
small equity exposure could be a good idea, because you need to get comfortable, NAV, fluctuation, understanding the style. But if your goals are nearby, like education, like you want to live independently, then probably you need to build a corpus which is not dependent to the equity markets, because in the short run, that's a problem. 2 years, 3 years, it's a problem. But the full cycle is 5 years, 6 years, 8 years. And then, when we look back, we are always wondering that whether we are in upcycle, whether we are in a late cycle, whether we are in early cycle.
Time is more important than anything else. No, I've certainly learned a lot from Stan and Yulette both, particularly Stan, because of the way that he's conducted himself and the way that you've taught your daughter. It's commendable. Rohit, thanks so much for taking the time.
Sure.
Of course, this has been a free-ranging conversation, talking about all things independence related and everything else money related as well. Let us know what you think and what you think independence means to you. Here's wishing you and your families a very happy Independence Day. Thanks so much for watching. This is NDTV Profit.
मुझे तोड़ लेना वनमाली, उस पद पर देना तुम फेंक, मातृभूमि पर शीश चढ़ाने जिस पर जाएं।
वीर ने क्या बात है भाई, वाह वाह वाह। अगर चीरोगे ये सीना धड़कता देश निकलेगा, मैं वो हनुमान हूँ जो दिल में हिंदुस्तान रखता हूँ।
भूल गए क्या युद्ध भूमि में कीमत बड़ी चुकाई थी।
तुमने तो अपनी ही मर्जी से वतन छोड़ा था,
तब ये वर्दियां खड़ी थी तान करके छातियां।
खून माटी से जा मिला वरना आज सिंदूर ही नहीं होता।
जय जवान जो मैंने शुरू किया था ये एक्चुअली, मैं दोबारा आया हूँ आप लोग से मिलने के लिए। मुझे बड़ी खुशी है आप देख रहे हैं YouTube पे मेरी फिल्म। वाह क्या बात है, क्या बात है। देखिए जय जवान मेरे साथ 15 अगस्त को सिर्फ NDTV पर। जय जवान जय जवान जय हिंद जय हिंद।
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
In conversation with Sunil Bachani, Mr. Bachani, thank you so much for speaking to us here. And at the outset, I mean, you're the poster boy, right, of what India wants to do when it comes to electronics manufacturing. There has been some turbulence in the recent past, right, the last 1 month, particularly with regards to tariffs in the US. Is this a serious speed bump? Is this something that we as a country tide over, and particularly the sector which you represent?
So I think, these are exciting times and challenges for us in the industry. Exciting, because we sense that we are sitting on a very large opportunity of making India the next hub for manufacturing of the world. And why we are very confident about this, because we, in this very short period, after PLI was launched, we have created a massive scale for manufacturing the finished products, especially if you look at a product like mobile phones. Where there is a substantial capacity that has been created in a very short period of time. And what is happening now is that the industry is working very hard to ensure that a supply chain ecosystem is set up. So we ourselves in Dixon are in the process of setting up plants for camera modules. We've already announced the major stake in a company which is already doing that. We are in the process of setting up a new facility for doing display modules. We are setting up a new facility for doing mechanicals, and we feel that once we have done that, we will take up the value addition to almost 40% in a product like mobile phones, which was hovering around 18%. And no country, to my mind, has done this in such a short period of time.
Sure.
So I think it will be a great thing done by the industry, and thanks to the government for the proactive policies due to which this has happened. Well, now to talk about the challenges. Well, tariffs are obviously a challenge. But as of now, the way things stand, mobile phones are in the list of exempted categories or exempted products where there is no duty being charged on India or on countries like Vietnam. Yes, China is paying that tax of 20%, with the fentanyl tax, which was not exempted. So right now, this is how things stand. But as we speak, this list is likely to be reviewed at the end of August. But we are hopeful that the exemption will continue even beyond that period.
I'll be forced to ask this to you, but sure. in case some of the US majors are forced to review their investment plans into India, if indeed the exports out of made in India products, mobile phones, etc., what have you, does come into effect, does it slow down what otherwise could have been a very nice pace of growth, especially for you, which is like you capture the imagination when it comes to mobile phone value addition? So therefore, This question to you.
So if you look at the hubs, the key hubs for mobile manufacturing is of course China, Vietnam, and now it's India. And we feel that because of the huge advantages that the country offers in terms of a large domestic market, an ecosystem already developed, the government is very keen to promote manufacturing. We feel because of these reasons, India will continue to be one of the major hubs for manufacturing mobile phones. See, let's appreciate that these ecosystems are not very easy to create, right? And besides the two other countries that I talked about, there is no other country which is giving that kind of impetus to mobile manufacturing. So I feel this issue is a temporary issue, and hopefully things will settle down. And once things settle down, I can assure you there's no stopping us.
Got it. Could you, I mean, there is so much of talk around how you yourself are trying to partner with big names, getting big names into India for what you just said, a mobile ecosystem.
Sure.
Can you help us imagine what that could look like? Because for a layman, what she or he is seeing is a company which is manufacturing back-end parts for mobiles, one by one, adding on new things. What do you mean when you say that you're trying to create this whole ecosystem?
Yeah. So I think for this ecosystem to be set up in India for the long term, I think there are 4 pillars which are going to be extremely critical. The first pillar is going to be scale, right? So we need very large scale to be globally competitive. And that's what we'll have to focus on as a company, as an industry, and as a country, right? So issues about land allocation, setting up mega factories, those are things that they're going to come and play. The second issue is going to be supply chain. So as I mentioned, that we cannot be globally competitive if we do not have a strong supply chain within the country. And that work is already on, and I mentioned about a foray into products, components like camera modules and display modules. So it's headed in the right direction. The third issue is going to be on skills, right? Manufacturing is going to be very, very different from what it is now, and I think it's important that we have a large centers for skilling our people to take on the future challenges on digital transformation, on Industry 4.0. And finally, I think as a country and as an industry, again, we'll have to look at designing more and more products. We'll have to emerge as a products nation, and the focus will have to be on, not just on make in India, but designing products in India.
How far away are we from there?
Well, I think we're not very far, and I think a lot has happened in the last 10 years. But like they say, picture abhi baki. I think the journey has just begun.
No, so let me try and rephrase my question.
Sure.
While you may have borrowed some money from your father back in 1993, if I'm not wrong, as I read, and you built out this company back then, but the real impetus probably came in 2016, 17, as the case may be, right?
Yeah.
So the last 10 years journey, does your next 10-year journey, and for you and maybe for the ecosystem, dwarf what's happened in the last 10 years, you reckon?
Sure. I'm often asked this question, that what happened exactly, that how did this change suddenly come about?
Yeah, right? It's a hockey stick, right?
Yeah, absolutely. And I think, whenever this kind of thing happens, the biggest change that happens is the change in the mindset, right?
Okay.
Almost 15 years back, our Honorable Prime Minister gave this call that, let's make in India, let's make India the hub for manufacturing. And honestly, before that, I used to find it a task, to go and convince people that, we should be manufacturing in India. So I think once that kind of call comes from the top, things change dramatically, because everybody started saying, that tell us what can we do to make sure it happens, right? And I think that's what happens in companies, right? That call comes from the top, or that at least that vision is set, and then things just fall into place. So I think that's the biggest change. And of course, the policy initiatives have been amazing. And I think Indian entrepreneurs have really risen up to the occasion and have done a tremendous job. Because I remember, going on my road shows during, when the IPO happened. This is about 8 years back, 2017. And, the first few meetings, weren't great at all. I wasn't able to convince them about the opportunity that existed in electronic manufacturing. So I think that was the biggest challenge that time. But I'm very glad that now we have the interest of our investors. Now there are, I think, more than 6 or 7 companies in our space listed on the stock exchanges, doing very well. They've provided good returns to shareholders. And suddenly, we are able to fill a room whenever you go for investor conferences, like it happened today. So that's a positive thing.
Yeah, most certainly. Well, those guys who missed out in 2017 must be ruining their chances. But the last couple of very quick questions, I know you have a flight to catch.
Yeah.
One, I'm still trying to understand. Maybe it's difficult to answer, in which case tell me so, but could the next 10-year journey dwarf what's happened in the last 10 years? Could it?
Absolutely. See, if you see what has happened in the last 10 years, we've just scratched the surface. Right, the numbers that the global market for electronics is $3 trillion, right? And we are at about 3%, right? $130 billion. So this has just started. So what's going to happen in the next 10 years is going to be transformative.
Got it. One last question, Mr. Bachani, because we're doing this on the eve of Independence Day. India is an entrepreneur-filled country now, a lot of startups, etc. I'm asking you to go into the minds of a Dixon startup founder. Maybe you started in 93, but the real trajectory from 2016.
Yeah.
What's the message that you would give to budding entrepreneurs who kind of look up to people like you and think of how they can make their journey like yours?
Yeah, I think the message is very clear. The next, 25 years, 50 years, 100 years belong to India, right?
Okay.
We have a large market. We have large, pool of talented people. We have the design skills in India. We have everything going for us. We just need to believe in ourselves. We need to believe in our abilities. We need to empower our people, right? And we've shown that, in factories where we have our Indian operators, and in some factories we have, down south, we have 85% female workforce, right? And they have shown that they're the most productive in the world given the right kind of environment. So empower our people, make a great team, and, just believe in them. And that's it, things are going to happen.
Great. Thank you so much for speaking to us, Mr. Vachan. I really appreciate it.
Thank you so much. Thank you.
And that was Sunil Vachani, the Executive Director at Dixon Tech, speaking about the company's expansion plans as well as what financial freedom means to him. But now I'm being joined by Rashesh Shah, Chairman, Edelweiss Group. And thank you so much for joining us in this conversation, sir. My first question to you would be, what does financial freedom mean to you?
Yeah, I think India got the independence, freedom in 1947, but only in the last 40-50 years we have started experiencing financial freedom as a country, as India has prospered and economic growth has picked up. So for me, for an individual, the financial freedom is about having choices, having options, like whether it's retirement, whether it's career, whether it's you want to send your kids to study in a particular school. When you have choices and options which your financial resources allow you, I would call them truly financial freedom has been achieved.
Very well said. Has the possibility of more financial freedom gone up in recent times, according to you?
Absolutely. I think India always has been a country of savers. We've been good at saving because of uncertainty and all of that. But I think last 30 years, India has started investing. And I think that converting savings into investment is what really fast forwards the financial freedom. Initially, you need to save to achieve financial freedom, but only saving, which, until about 30 years ago was the only way Indians could achieve financial freedom. Now we can have financial freedom by combining savings and investing. And I think the country has learned, and thanks to media channels like all of you, people are getting comfortable with the concept of investing. And I think that is what has been the key change in that. And that does bring the financial freedom or achieving the financial freedom a lot faster.
All right. And speaking of investing, do people need to change the dynamics of their investing in order to achieve financial freedom earlier in life?
Yeah, I think it's constantly evolving, Neera. I think the investing dynamic has improved a lot in the last 5-10 years as compared to last 30 years with the advent of mutual funds and new insurance products and AIFs and InvITs and REITs. I think the optionality has gone up. So, what you save, if you can convert that into really good long-term investment, it helps the country because it does facilitate capital formation, allocation of resources, but it also makes sure that you have a lot more corpus when you retire or in your future. So I think that way investing has evolved a lot, though I think India still has a long way to go. We need bond market. See, basically all investment needs are either growth or income. Now, in India, growth has come through equity markets, through SIPs and the mutual funds, through private equity, options, all of that. So I think we have shown investors how to access growth. But the other part is income. Now, in income, currently we still are dependent on bank deposits, which has its own pros and cons, or things like liquid funds in mutual. Now we have InvITs and REITs and others which are coming, which are giving you income opportunities. They may not be growth opportunities. And I do think that in order to achieve a financial freedom, especially in a volatile world, I think investors will need a good mix of growth investments and income yielding investments.
A good mix of growth investments and income yielding investments. Then, can you build out a financially sound, problem-proof portfolio for our viewers?
See, again, it's a function of how old you are and what your objectives are. But I would assume that if the most common objective is, retirement savings, and let us say you start investing from the age of 30. So at 30, I would be largely equity led. And as you get closer from 30 to 60, at the age of 60, I think somebody should be maybe 50% equity and 50% in income yielding investments. So at 30, you should be maybe 100-0. At 40, you might be 80% equity, 20% into income yielding. At 50, you might be 65-35. So you keep on changing as you get older, and you get closer to when you're going to use that corpus and that saving, you go more towards the income options. But if you're early on in your life, you want to enjoy the equity option, because all said and done, equity returns in India will be healthy, and especially from an after-tax point of view. So if you have a long-term horizon, equity is increasingly attractive, and we always recommend a good mix of equity and income yielding opportunities.
Definitely, sir. Then would you like to add anything else to your building the problem-proof portfolio? Anything else, a golden advice maybe?
Yeah, I would say I think investing in India is a very interesting game, but it gets easier if you take the long-term view. I think in the long term, India is always rewarded. It may disappoint in the short term. So any investor should make sure that they are able to keep a bifocal view. Keep one eye on the short term, but keep your main focus on the long term, because India has rewarded in the long term. And as all of us focus on our financial freedom, on our financial wealth, I always say that, having seen this for 35 years, I've been investing in the market for more than 35 years. I think along with building your wealth, every individual should invest in their health and their relationships, because I think the golden mix will really allow you to enjoy your wealth. Because if you don't have good health or good relationships, you won't be able to enjoy your wealth.
Thank you so much for joining us in this conversation, sir. And your advice would definitely be taken very, very positively. And viewers, next up, we have a conversation with Ashish Chauhan, who is the CEO and MD of the National Stock Exchange. So let's listen in.
Mr. Ashish Chauhan, just for this very special occasion, thank you so much for giving us the time. We're talking about 15th August this time from the context of financial freedom, and how financial freedom is so important from independence that we want, and as a nation. What are your thoughts on that?
For me, the freedom, many of us don't understand how important it is. The freedom as a country to make your own policies, to live as one group which makes its own decisions. It's a phenomenal achievement of modern Bharat or India, that 78 years, and there were many people wanted to, at least had predicted that this country will not even survive. But we have survived and thrived, right? And for me, it is an amazing thing that today 20% of all Indian households now invest directly through NSE. And freedom to invest is as important as say freedom to live, because you need to make your own decisions. And that's where I think today India is on the cusp of a greatness over the next 30-40 years. And as Pradhan Mantri is saying that Amrit Kal and Viksit Bharat by 2047, I think we have to all work hard, but we can achieve. And in some ways, this 79th Independence Day for India is giving us that little fillip in our own mind, that all of us have not yet reached where we want to reach, or what is our potential. We have just starting to sort of go towards that, and we have a long way to go. We have come a long way, but we have a longer way to go.
What does financial freedom mean for you?
In a way, financial freedom allows you to see the colors of life. Life has myriad colors to offer. It allows you to see those colors in ways you want to see them. So when you don't have the adequate finance, many of your things which you want to see or experience, you may not be able to do. And once you have the finance, doesn't mean that you will be able to sort of experience whatever is there to experience, but at least in case you want to do that, you will have that ability to see those colors, and of course also come through the trials and tribulations of life, because I always say that money is not everything, but without money again you will have many issues. So you need to have adequate money, and for that, once you have money and surplus, you need to learn how to invest.
What is the role you think of stock exchanges to allow Indians to have that financial freedom?
The stock exchanges, the stock market, especially investment in equities, is a much higher risk activity compared to, say, putting money in banks. And that's where everyone who is investing or wanting to invest, we need to explain to them this is a high risk activity. You need to understand about the company, about the economy, about the industry, about the world, and then only invest. And if you don't have time, you can invest through the experts like mutual funds or portfolio managers, but invest you must, because if you have money, it's your responsibility for yourself and your family that your money increases. And in a highly inflationary world, you need to continue to invest so that your money doesn't go down in value. And that's where it's an onus on the exchanges and also other intermediaries to ensure that we take the right message of being there for the long run, not believing in tips, not trading in derivatives for small retail investors. And investor has to be doing investment and not trading. Many times we mix up trading with investments. Buying in the morning and selling in the afternoon is not investment. We have to be there for a long term, probably 2, 3, 5, 10 years. And that's where I think some amount of patience, some amount of understanding has to be inculcated. And that is our job.
Thank you so much, sir, for speaking with us.
Thank you.
Let me bring on board Executive Vice Chairman, founder of InfoEdge, Sanjeev Bikhchandani. Sir, absolute pleasure having you here today and speaking with you. I want to start off with the theme of Viksit Bharat. We're looking at another 22 years in terms of a target to become Viksit. What does India Inc. need to enable this to actually happen? What does the startup ecosystem need, and what does India Inc. need?
I think not just for startups, for all industry, for all, including SMEs, for the common citizen, I think the need of the hour is deregulation. And I'm delighted that the government has set up a deregulation commission. It was announced in the budget earlier this year. I do hope, it has a sweeping mandate. I do hope the states governments play ball. And I do hope deregulation is done with earnestness and is done with depth and intensity. Because I think deregulation alone, removal of inspectorate alone, can give us 2% additional growth. And if we want to get to Viksit Bharat by 2047, we need to be growing at 9-10%. So deregulation alone can lift growth from 6.5% to 8.5% in my view. So this is a very important agenda. At the same time, what you want to be done to get to Viksit Bharat by 2047, by the time India is 100 years since independence, I think is a big focus on education. Right? The right kind of education, the right quality of education for large numbers of people. I think India has done a great job of higher education institutions, whether it's engineering colleges or it's management schools or others. And it is the products of these higher education institutions that went on to form India's 300 million, 400 million strong middle class, which essentially is the talent pool which drives a lot of India's growth. Now, but there are 800 million more who don't have access to that education and who are poor. So if you can open the ladder of opportunity to those 800 million people, by massively scaling up quality education at the school level and then at the college level with relevant knowledge and skills, I think it'll make a huge difference to this country. Then, of course, there is investment in infrastructure, hard infrastructure. The government is doing a good job of it. It needs to continue. I think in digital India, I think the digitization of India has proved to be a great lubricant and catalyst. And that is something which will be leveraged even more. I think 900 million smartphones is good. I think the kind of digital public infrastructure we have got is excellent. We need to do more of it. So you do all of this, and then of course there's whole move towards technology and investing in deep tech and AI. I think India can leapfrog and become a technology nation. We have the manpower. We have enough organizations and companies. We have government organizations and government departments that are doing a good job. So we need to have this massive move towards deep tech.
So you
मुझे तोड़ लेना वनमाली, उस पद पर देना तुम फेंक, मातृभूमि पर शीश चढ़ाने जिस पर जाएं।
वीर अरे क्या बात है भाई, वाह वाह वाह। अगर चीरोगे ये सीना धड़कता देश निकलेगा, मैं वो हनुमान हूँ जो दिल में हिंदुस्तान रखता हूँ।
भूल गए क्या युद्ध भूमि में कीमत बड़ी चुकाई थी।
तुमने तो अपनी ही मर्जी से वतन छोड़ा था,
तब ये वर्दियां खड़ी थी तान करके छातियां।
खून माटी से जा मिला वरना आज सिंदूर ही नहीं होता।
जय जवान जो मैंने शुरू किया था ये एक्चुअली, मैं दोबारा आया हूँ आप लोग से मिलने के लिए। मुझे बड़ी खुशी है आप देख रहे हैं YouTube पे मेरी फिल्म। वाह क्या बात है, क्या बात है। देखिए जय जवान मेरे साथ 15 अगस्त को सिर्फ NDTV पर। जय जवान जय जवान, जय हिंद जय हिंद।
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए ये तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
जय जवान, जो मैंने शुरू किया था ये एक्चुअली, मैं दोबारा आया हूँ आप लोग से मिलने के लिए। मुझे बड़ी खुशी है आप देख रहे हैं YouTube पे मेरी फिल्म। वाह क्या बात है, क्या बात है। देखिए जय जवान मेरे साथ 15 अगस्त को सिर्फ NDTV पर। जय जवान, जय जवान, जय हिंद, जय हिंद।
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
Good evening, you're watching NDTV Profit and I'm Sanjana. On this Independence Day, as we celebrate 78 years of freedom, the theme is inspiring the future. It's a moment to look beyond where we've come from to where we're going, to ask what kind of India are we building for the next generation? What are the ideas, the technologies and the ambitions that will define our place in the world in 2047 at 100 years of independence? Tonight, we bring together three leaders shaping that future in very different ways. Jaspreet Bindra, founder of AI and Beyond and Tech Whisperer Limited, helping India navigate and lead in the age of artificial intelligence. Srinath Ravichandran, co-founder and CEO of Agnikul Cosmos, taking India to new heights, literally in the space economy. And Ashok Atluri, CMD of Zen Technologies, building cutting-edge defense technologies to keep India secure in an uncertain world. So together, we're going to explore how their work and the sectors that they lead can inspire and define the India of tomorrow. Good evening to all of you and welcome to NDTV Profit. Let's start with the big canvas on the future that you're working towards India in 2047. Jaspreet Bindra, over to you first. How are you seeing AI shaping India's economic and social landscape by 2047? And what must we do now to ensure that it works for every Indian and not just a handful?
It definitely is an exciting time to be alive and an exciting time to be an Indian and alive. The reason for that is I think every generation, there's a technology which comes and shapes our future, our society, our work, and sometimes even our planet. And we are right now at that moment with artificial intelligence, a technology where intelligence will become free, available on tap for everyone. And in our case, 1.4 billion Indians who can draw into that and kind of shape their future and their country's futures. I think we have a great opportunity as we look towards 2047 to use AI to leapfrog towards that goal of a developed India or Viksit Bharat. We have lots of problems. We know that population scale problems, but we have once before used technology at population scale to leapfrog with UPI, Aadhaar, etc. And a similar opportunity exists in front of us to do that all over again. But to do that, to answer the second part of your question, we will need to forge our own path. The US is forging a particular path, which is private sector led, which is very libertarian, which is very, corporate led in a sense. China is forging another path, which is very statist, very application led, very much within Chinese kind of AI models and AI. And we have an opportunity to actually do a rest of the world path, which is a third way in a sense, which combines both the exciting innovations that AI can bring in, but also how it can be used for all and for good and bring in societal good with the right guardrails, the right population scale problems for not only India, but the global South, and forge that third way and take a leadership position as the third country in that troika, leading the path to the future with India, and then followed by the global South. And we have a unique opportunity to do so as a global South leader, and also because the big AI India Impact Summit is going to happen in February 2026 with India as the chair, and that I think is the right platform to do that.
That sounds like an interesting platform and quite an interesting concept as well. So Feb 2026, we'll keep our eyes peeled for that. Srinath Ravichandran, in space technology, how do you imagine India's role evolving over the next 25 years? Because we're looking at satellite launches to deep space missions now.
Yeah, I think the biggest thing that has happened in India in the recent past in space tech is opening up of the sector to the private players, right? I think ISRO has been working with private players forever. I think that's not new. What's really changed is policy coming out that allows for private players to be mission owners. Like right now, an Agnikul's rocket can fly another private satellite from India and put it in orbit, and the Indian government will come in only as a regulator to make sure we're following the safety protocols and we're following all the other norms. So this allows for terrific expansion because suddenly 60 years of ISRO knowledge that we have gained painfully over a very long period of time is now available to actually commercialize. And I think once money starts flowing into this sector on the private side, we're going to see a lot more innovation. And I think once we see a lot more innovation, that is actually how a country's real power and stature in the world is going to be calibrated, right? I think the 3 or 4 fronts in which I think today a country can position itself, like how, a corporate company would probably be in energy, in space tech, in AI, and, a couple of other sectors, right? And I think this has been opened up now. So I think we are in very strong footing. No better time in India to be building a private space venture. No better time to be doing space tech R&D than today. Like literally, I would say this. The government has allowed for a SpaceX to be built in India if that is what people are wanting to and willing to do. Now it is up to us to go and build out these things. So that's where we've gotten today, which is a very bright way to look at what is possible.
Absolutely, reaching for the stars in every possible way. Ashok Atluri, from a national security perspective, what's your vision for a future-ready India that can really defend itself against both traditional and any emerging threat? I think you're on mute, sir.
We need to identify some Pareto technologies in the future, in the sense that we should not try to become a little of everything. But what are those future technologies that will actually help us, win a war. Like, for example, we talk about anti-drone systems, we talk about drones, we talk about space technologies. So these are all the technologies we think, 20% of these Pareto technologies, if you really, really focus on them, and then again, when I say focus, it is not manufacturing. Unfortunately, many of the people in the defense, they say make in India, but actually the make in India component is very, very less. It's about, even if you look at iPhone, it's 1.25% that Apple pays to Foxconn. But everybody talks about make in India as if it's a big deal. No, it is not. Actually, to design and develop should be the primary criteria. If we are able to, not just focus on the old technologies like the tanks and different things, but in the future technologies, the anti-drone systems, the space technology, the quantum safe communication. If we really, really start investing now, doing serious R&D in that, we will emerge absolutely number one in that. 5 years from now, we should be aiming at that. We should not play the catch-up game. We should be there. Because as they say, in war, there are no runners-up. You have to be number one. And that in technology, we should not depend on TOT and start manufacturing here. I see very large companies just going and begging that we want to your technology so that we can manufacture. We are not manufacturing coolies. We are smart enough to innovate and invent ourselves. So, that is the mindset change that needs to happen. People say we want India to be the factory of the world. No, we don't want India to be the factory of the world. We want India to be the R&D lab of the world. We want to be a product nation, not a manufacturing nation. Thank you. Yeah.
Okay, I think that's quite an interesting perspective and approach. And honestly, talking to Jaspreet and to Srinath, we're seeing some pretty ambitious visions. But I think turning them into reality means solving some hard problems in the here and now, which I think Ashok sir rightly raised. So as a follow-up to you, Ashok sir, what's the biggest bottleneck that you are facing in building, say, indigenous defense tech? And how can policy or industry collaboration unlock that for you?
I'm a very Pareto guy. Recursively, if I see where does all the problems end up, I think that the time, there are companies like, Zen that have, we have 195 global and Indian patents that we have applied for, 95 granted. But the point is that once we make a product, the ecosystem should absorb it immediately. But even after we make a product, it takes, a few years for us to actually sell a world-class product to our forces. So that is the problem we face, that if people, other players look at us and they say, listen, you developed this product in 2021 and you got the order in 2025, that's a lot of time gap. Nobody wants to invest in R&D. So if they can actually incentivize the bureaucracy and the officers to you process the files faster. So, I always say, if there is no penalty to any officer if they delay the file, if they take as much time as they want. But if they sign even one file in which there is a comma or a full stop missing, there is a CVC and a CBI angle. So my proposal is that if you really want to incentivize Indian R&D companies to come, make the procurement faster. And how can you make the procurement faster? By actually calculating the delay for each day of decision that you delay in taking. For example, we have calculated on 100 crore project, every day's delay costs at least 10 lakhs. And this is a component, the national GDP is delayed, the Indian defense is compromised, and the business itself, I can't sustain 2 years or 4 years of salaries and maintaining the overheads, etc. I can't sustain. So what is the day of delay? And we should mark it to the officer or the person responsible. And we say, listen, if you and again, it should be a positive thing. If they have 2 weeks to take a decision and they take it in 3 days, there are 11 days to their credit. But if they take beyond 2 weeks, then that's a minus, that's a nation suffering a loss. So if they can actually calculate this, savings and penalties with respect to early and delayed decisions, I think, this speed score, which I like to call, if they can, they should actually, everybody, IAS officer should ask, what's your speed score? So, industry a lot. Yeah.
I think that's probably a problem that Jaspreet doesn't face in terms of using AI. The speed score is not something that he potentially faces, and he's nodding in agreement. Jaspreet, in AI adoption, what's the biggest mindset shift that India needs among businesses, policymakers, or citizens to truly embrace this transformation? Because I think where we are at the moment, because of the kind of layoffs that we're seeing, we're also seeing there is understandably so, there is a sense of hesitancy, there is some fear that is there, and it's very well to say we need to embrace it and all of that, but you have to face that it also means like there has been a loss to some livelihood. So what would you say is the mindset shift that we need as a population?
Sanjana, I do actually face the speed test or the speed score thing,
Okay.
but in the opposite way that Ashok is probably referring to. In AI, things are happening so fast.
Too fast, yeah.
If we get on a conversation tomorrow, between today and tomorrow, multiple things would have changed. It's a rocket speed, as Srinath would probably agree. But coming to your question, I think, look, the fact is this. The fact is AI is here. It is inevitable. We cannot wish it away. It's something like when the internet came, we had probably the same apprehensions, and we had to go through a similar mind shift. There were apprehensions regarding jobs, there were apprehensions regarding skills, there were apprehensions regarding education, what it will do to our students. There were apprehensions regarding pretty much the way our businesses were run, what would happen to our companies, everything. We took it in our stride. We had some problems, took it in our stride. And actually, if you think about it, the internet and IT has created far more jobs, created far more opportunity, created far more entrepreneurship than potentially what it was supposed to destroy. AI is the same thing. And in my book, the one thing that we need to do in AI, and I work a lot on that, I'm passionate about that, my latest book is about that, is about how we make every Indian citizen AI literate. The definition of literacy will change, Sanjana, from reading, writing, arithmetic, country being 72% literate, 80% literate, to doing all this, but also how you can naturally work with so many AI tools and possibilities out there. Much like we do with search, much like we do with WhatsApp, and now much like we do with UPI and some of the other digital public goods that are there. And the moment people become AI literate, they will stop fearing it. They will start looking at it as an opportunity. In fact, I have a name for it. I call it Jan AI, AI for the Janta. Obviously, it's a riff on Gen AI. Let me give you one example and then close. Ashok was talking about how long it takes and, how the defense forces, for example, take so long to absorb technology. We did a few days back what we call an AI literacy boot camp for the very senior officers of the Indian Army, Navy, Air Force. And for the first time in those 4 hours, they understood what AI could do for them very simply. And once they understand, that mindset change happens. Perhaps it will become easier for entrepreneurs like Ashok and others to actually bring in their technologies because people are now literate in that technology.
Right.
And I think so that's one thing that I would say as an India, we need 1.4 billion AI literate Indians.
Okay, ambitious targets. Srinath Ravichandran, space remains capital intensive, right? So what financing or regulatory changes would make India more competitive globally?
I think the first thing actually that can be done is to figure out technology that works at a lower cost. That's really the best way in which you can reduce cost. Right, and so that's a part of a lot of the R&D that we do. Don't just count on, it's made in India, or rather designed and made in India, so it'll be cheap. That doesn't work in space tech. It's better if you're actually thinking about what are the unit economics, what are the commercials, what should we really solve for, and how to make the cost lower from that. Now, that said, it's still capital intensive even after all that. So in that context, I think 2-3 things can happen. One, I think the government has already announced like a space tech fund, multiple projects coming out where now private players can actually get access to some amount of government money to carry out missions. So we should be doing more of that, and people should be made more aware of that. Second, I think is from the typical, startup ecosystem standpoint, like venture capital money or private equity money coming in. probably there is a bit of a lack of a massive success story in this space. And so you're not seeing a $500 million funding round happening for any of the startups today in space tech because the game also started very recently. But at the same time, I think people are also waiting for those amazing exits that they should get, and then that becomes its own fully established sector. So I think the success story part is something that could also propel things forward. The last bit, I think, is general acceptance at both the government level and at a much more local level, where people actually accept and understand that good space tech can be built here or good aerospace tech can be built here. There's a lot of, I think, negativity or at least some bias in thinking that India or Indians cannot design some of the engineering that's required for the most advanced space tech systems or aerospace systems. And maybe that is driven by some bad stories of the past and so on. But I think we are way beyond that. So there is a little bit of, I think, as a community, we need to get more confident about our engineering capabilities. There is a lot here. Whatever I've seen with Agnikul, I've seen some of the best engineers out here, and I've been outside the country as well, and I work. So I know that what I'm seeing here at a global level is also some of the best people we have here. So yeah, we just need to get to that level of confidence, which will then translate into reliance, self-reliance.
All right. Okay, so if we can break all of these barriers, I think as we've all discussed, the opportunities ahead are immense, and I think they just go far beyond just business success. So Srinath, let me come back to you. What is your message today to young Indians who dream of joining the space industry? What skills should they start building today?
Three things. One, I think if you want to be in engineering, get your math and physics basics right. You don't need to be very advanced. You don't need to be a
out of this
mathematician.
game then.
All you need to know is the basic math and basic physics and a lot of common sense. The more of common sense you have, the better. Second, I think is a slightly more softer skill, which is resilience. Anything in deep tech or hard tech doesn't happen quickly. So we should stop solving for instant gratification. Try thinking about long-term bets. We should start thinking about 50-year plans. I know 50-year plans almost looks like infinity for many of us, but without that, no massive big projects can happen in these kind of sectors. And lastly, don't wait. There is literally, this probably maybe the bestest of the best times that we have to do space tech in India privately, right? So I think if you want to do something in space tech, start in the next working day, whatever, next Monday or something, you should go and start your startup.
All right. Okay. No pressure. Ashok, how can India better channel its youth into defense R&D and high-tech manufacturing, not just as jobs, but even missions of national pride?
We at Zen Technologies have a vision that, we want to make India unbeatable in war. So, when we try to hire people, we try to see people with high agency, just not intelligence. We don't really go after IITs, and God forbid IIT plus IIM is a big no for us. Okay. But we do go after people who are actually saying this and this, we want to do something for the country. And then, if you have that vision, that high agency, and, as Srinath said about the resilience and the ability to stick through the different, this is a fantastic time for people to come into defense. And there are so many opportunities, the cutting edge technologies. And we have started using AI across all the, not only R&D, the generative AI and R&D, but across all operations, everything. Even for tender submission, we are using AI a lot. So, so this is the exact time in which the young people can come, learn these things, and become 100x more, productive than a guy again. Again, I don't believe AI will replace people. It is people with AI skills who will replace people. So this is what I tell the team that, please learn AI so that we don't get replaced by another company with AI. Yeah.
All right. Okay. Nice. So then coming to AI, let me ask Jaspreet this. How can we inspire more young Indians to see AI not just as a job opportunity, because I think that's the general consensus at the moment in popular culture. I'm sure not at the level where you are involved, but more as a tool to solve India's biggest challenges.
Yeah. So, I absolutely resonate with what you're saying, Sanjana. Sometimes we kind of narrow down or look at the lens of AI only through jobs.
Correct.
And therefore, at a youth level, we tend to get nervous about it. Therefore, what's going to happen? What's my new job? See, there are a couple of things which I would say here. Number one, that there has been no better time for a young person to be an entrepreneur, whether in space tech, whether in defense tech, or anything else. AI is a massive disruptor. We are looking at the negative side and saying, oh, jobs will get disrupted. Oh, the way society is going to get disrupted, etc. But when I wake up, I see everywhere I see every disruption to be an entrepreneurial opportunity in everything. And so if I was a young person today, I would literally be in a candy store, a kid in a candy store with so many entrepreneurial opportunities. And therefore, the first thing that I would tell a young person is that, look, forget the old model of going into a job, spending 3 years, exactly. Just become an entrepreneur. Let tens of millions of entrepreneurs bloom. And that's the biggest opportunity. And it's entrepreneurs who will build India. It's not going to be large corporates which are going to build the economy. It's going to be entrepreneurs. And so that to me is number one. And number two is taking off from everyone becoming AI literate, which frankly is not difficult to do. We've had literacy targets, we've had population control targets, we've had those targets, and that's really happened. And so the second opportunity really for people who feel for the country, who feel, how they can help uplift the country. This is a very powerful set of new technologies which have come in, which can help you go in and solve some of the big population scale problems, whether it be in education, whether it be in healthcare, whether it be in defense, or whether it be anywhere else. And so I would really look at that as a mission in a sense rather than a job. And so those are the two things I would talk to youth about.
All right. Okay. I think this has been a great discussion, and in a future as unpredictable as ours, the ability to adapt potentially may be our greatest strength, and I think that's something that all of you have done effortlessly. Just some really quick thoughts, and I'm going to get the last answer in from Ashok. In national security, looking forward, how do we balance preparing for conventional threats along with fast rising cyber and drone warfare risks?
I think the threats are completely moving towards the advanced threat. The conventional threats, I think we have enough infrastructure in place to neutralize them, kind of thing. But what we have to see is it's not what happens if a drone goes and attacks a agrochemical plant. What kind of damage it will do. So these unconventional ways, where the airports, the airplanes, everything are now under threat. So how do we smartly keep innovating without disrupting? If something happens, you suddenly say, no more drones to be flown, you will kill innovation completely. So, this is the knee-jerk reactions will happen. So we have to be preemptively trying to solve the threats that, what we have seen, in Operation Sindoor, we saw lot of drones coming, and Zen's anti-drone systems were very effective there. But still, we need to up the game now. We need to have hard kill options. We need to, what is the future? What is how it was again? It was not just a war between India and Pakistan, but it was fully supported by China and Turkey. So what happened is actually a multi-front war. How are we going to handle that? So those are the capabilities I think very, very fast self-funded private companies can do. But again, if the decision-making cycle is fast, with the speed score being installed in the decision-making process, we will be prepared for the future from the private industry. And so I think that is the fastest way to do it. Self-funded private R&D is the way to go.
All right, and with that, thank you so much to all of you for your time. And my quick takeaways from this: no better time than now to be an entrepreneur in India. Up the game, like Ashok sir rightly said, and of course, keep building on common sense at the same time. Thanks so much for that. The India of 2047 will be shaped not just by policies and budgets, but by visionaries, risk takers, and problem solvers. People who dare to imagine and build what doesn't yet exist. On this Independence Day, inspiring the future isn't just a theme, it's a call to action. From AI to space to defense, the work starts now, and the responsibility belongs to all of us. I'm Sanjana Chauhan, and wishing you a very happy Independence Day.
मुझे तोड़ लेना वनमाली, उस पद पर देना तुम फेंक, मात्र भूमि पर शीश चढ़ाने जिस पर जाएं।
वीर ने क्या बात है भाई, वाह वाह वाह। अगर चीरोगे ये सीना धड़कता देश निकलेगा, मैं वो हनुमान हूँ जो दिल में हिंदुस्तान रखता हूँ।
भूल गए क्या युद्ध भूमि में कीमत बड़ी चुकाई थी।
तुमने तो अपनी ही मर्जी से वतन छोड़ा था।
तब ये वर्दियां खड़ी थी तान करके छातियां।
खून माटी से जा मिला वरना आज सिंदूर ही नहीं होता।
जय जवान जो मैंने शुरू किया था ये एक्चुअली, मैं दोबारा आया हूँ आप लोग से मिलने के लिए। मुझे बड़ी खुशी है आप देख रहे हैं YouTube पे मेरी फिल्म। वाह क्या बात है, क्या बात है। देखिए जय जवान मेरे साथ 15 अगस्त को सिर्फ NDTV पर। जय जवान जय जवान, जय हिंद जय हिंद।
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
Good evening, you're watching NDTV Profit and I'm Sanjana. Welcome to this special conversation on a landmark moment for India's economic journey. Today, on the eve of India's 79th Independence Day, S&P Global ratings have upgraded India's sovereign credit rating with a stable outlook, the first such upgrade in nearly 2 decades. This milestone underscores India's robust growth, fiscal discipline, and transformative infrastructure push, signaling confidence in its rise as a global economic powerhouse. But joining us to unpack this historic development is none other than Mr. Amitabh Kant, former CEO of Niti Aayog, G20 Sherpa, and a visionary architect of India's policy landscape. Sir, it's an honor to have you here with us to discuss what this upgrade means for India's future and how the nation can seize this moment to soar to new heights. Thanks so much for joining us.
No, my pleasure entirely.
All right, sir. We'll start off from, I think, a question that's on everybody's minds. What specific milestones or policy reforms, are we going to be monitoring for a possible upgrade in India's sovereign rating going forward, and your assessment and reading of all of this?
No, I think the important thing is that the rating agencies have started realizing that India has carried out very vast structural reforms. We were amongst the fragile 5 just about 7-8 years back, and we've moved to be amongst the top 4 economies of the world. This has not been easy, and this has been possible only because we brought in GST, IBC, RERA, lowering of corporate tax. The balance sheet of both the corporates and of the financial institutions have radically improved. We don't have the twin balance sheet problems anymore. But more than anything else, I think the government has done a huge amount of fiscal consolidation post-COVID. And I think the other thing that's happened is that we've become a very formal economy because of digitization. We've also pushed for our infrastructure in a very big way, but in a very fiscally responsible manner, that we've built houses, provided electricity connection, provided water connection, all that we've done for our citizens in a responsible manner. So I think the opportunity now is to carry out more and more reforms in the Indian economy, which would mean, as you asked me about reforms, I would say it means that there should be more simplification of the goods and services tax. There should be, I think, to my mind, there is a need to lower the SLR is almost about 18%. That means banks have to buy 18% of government bonds, which is very high, which needs to be brought down so that the interest rates for private sector can come down. And thirdly, to my mind, there is a need to really drive economic growth by laying a lot of focus on improving our cities, because urbanization will be a very big driver of growth. And fourthly, I personally am a great believer in the quality of spending. We spend, but the quality of spending in terms of better outcomes and better outputs is very critical. It's not just the fiscal spending, but outcome focused monitoring is very important. And the last point I want to make is that we need to remove a lot of red tapeism in our economy by eliminating a lot of processes, procedures, paperwork, and digitizing so that no one needs to come to the government with at a personal level or interact on a physical level, but all interaction must be digital. A lot of these reforms have been carried out by the central government, but we need to push them now to the state government, and we need to make our regulators far more developmental in nature. The regulatory regimes have to become far more proactive and far more developmental.
All right. So, the government has credited the fiscal consolidation for the upgrade. But with declining revenue numbers, how do you think India can sustain both consolidation and high infrastructure spending?
Yeah, so the challenge, to my mind, really is to push consumer spending in a very big way, and that's a valid point. Now, the challenge for India is also to sustain its growth at high levels despite the 50% tariff. My two views on this is that it's not the spending needs to be enhanced for infrastructure. We need not rest happy with a spend of about 4 to 4.5%, but take it to about, to my mind, the infrastructure spend should go up as much as 6%. Secondly, there's a need to push for privatization and asset monetization in a big way so that government revenues increase. Privatization is, we need to push the pedal on privatization. We need to push the pedal on asset monetization in a very big way, not merely at the center, but at the state government level. That's critical. And thirdly, we need to, the allocations have been made by the government for urban infrastructure 1 lakh crore scheme, which needs to be pushed and implemented. These are 3 or 4 things which will see a lot of spending on ground. So these are 3 or 4 things that are critical to my mind.
All right, sir. So, we've seen the government linking the upgrade also to its vision of Viksit Bharat by 2047. How does the ratings boost influence policy priorities or any upcoming reforms?
So the key is that when your rating improves, your ability to get credit is at a lower interest rates, which means that you are able to provide credit to the consumers and to the private sector at lower rates of interest. It's part of your economy becoming far more efficient. That means you are able to then raise resources in a much larger manner at a lower rate of interest. And that's a recognition of your efficiency of your economy. And that, to my mind, the the country's sovereignty will greatly help in our ability to raise resources in a much bigger manner and push for infrastructure creation. Our private credit to GDP ratio is still very low at about just about 50%. If you look at countries like USA, it's 220%. It's China, it's 180%. Korea, it's 200%. So the extent of private credit needs to be enhanced. If India is to grow, it has to grow on credit. No country has grown without credit. So the credit to private sector needs to be enhanced, and we need to push the private sector into taking more credit. That will be possible if they are able to get credit at lower rates of interest, and that is what rating is all about, to my mind.
All right, so I'm going to address the other elephant in the room and in the market, and something that everybody's talking about and it's on everyone's minds is the recent US tariff hike, and of course the impending geopolitical volatility, and because of that. And I think in the past you've called the hike a once-in-a-generation opportunity for reforms. How do you see this upgrade aligning with trade challenges posed by the 50% US tariffs? What does it signal about India's economic resilience? We just spoke with S&P director just a few hours ago, and he's of the opinion that there's not going to be any impact in India's growth because of these tariffs.
Well, he's absolutely bang on that. First of all, I think the nature of tariff, you look at Trumpian tariff, one day it's 25%, next day it's 35% in the case of Canada. In the case of Brazil, it was 25%, raised to 50%. In our case, he's put in, because of Russian oil, it shows the level of hypocrisy that China buys more oil than India does. Turkey buys more oil than India does, and yet you have slapped 25% on India, which is absolutely bizarre to my mind. My view on that is that India should never lose its, strategic autonomy or its energy security because of this policy of Trump. Because 2.5 decades we've pushed for, both bipartisan in the United States of America has pushed for closer relations. Whether it was Democrats or Republicans, they pushed for closer relationship with India. And so has India pushed. It was an evolving process for the benefit of both countries. It has to be done with mutual respect. You can't just slam India down like this. And if you succumb now, you will keep succumbing throughout, and it'll have long-term repercussions in a very big way. So my view on that is very clear, that we need to be it'll have very little implications, but it is also a huge opportunity for India to carry out very vigorous reforms in its economy. I mean, we need about 10, 12 states to grow at high rates. So we need to push the states. We need many more large companies, but we need to become very easy and simple. And we need to make a simplification in GST and many of our regulatory regimes and push for digitization and carry out massive amount of process reforms. It's also an opportunity to carry out reforms in the judicial system and carry out reforms in the dispute resolution mechanism. You'll never get this opportunity again. This is the opportunity. This is a once-in-a-generation opportunity for you. Trump has given us this opportunity. We should seize it. We should not let it slip.
So let's talk long-term resilience and outlook now, because I think the government's shift towards a capital expenditure now at 3.1% of GDP has been highlighted as a key factor. And as someone who has championed transformative policies, what role do you see infrastructure playing in India's long-term economic resilience? Because that's also something that the S&P was looking at very closely, is the quality spending and, of course, the spending on infrastructure.
I think they should raise it further. 3.1% is not adequate.
Okay.
We should take it up to 4.5%. In the next coming years, we should take it to 6%. My view is, if you want India to grow rapidly on a sustained basis for 8 to 9% per annum, year after year, for 3 decades, we are talking about a 3-decade period. We are talking about taking India from $4 trillion to a $30 trillion economy plus, which means sustained growth of 8.5%, 9%. And that means that your GDP has to grow 9 times, your per capita income has to grow 8 times, your manufacturing has to grow 16 times. All this will not have a benefit without a huge focus on massive thrust on infrastructure, and the quality of infrastructure creation is very, very critical. Secondly, I believe that we need to give a far greater impetus to free enterprise. There's too much of public sector. There's too little of private sector. Disinvestment has happened in India. We need to do much more asset monetization. Too many assets are in the control and too many capital goods are in control of the government. They need to be taken out and put through a transparent process in the hands of private sector so that we can get more efficiency out of them. That is important.
So my last question before we let you go, and thanks so much again for your time. Looking ahead, what message would you like to convey to global investors about India's economic potential, given this upgrade and the stable outlook that has been projected?
So India's had a very clear vision, and it has carried out massive structural reforms. It has digitized its economy. It has created infrastructure, and it has gone for a green economy. It's also pushing for technological leapfrogging through artificial intelligence mission, quantum computing mission, semiconductor mission, and the green hydrogen mission. This demonstrates India's great determination to drive growth in the coming years and take it from being just a $4 trillion economy to a $30+ trillion economy. And I think, to my mind, we need another upgrade very quickly. So the S&Ps of the world need to look at the quality of spending much more closely. And I think they need to upgrade India once more after a short while.
Thank you so much, sir. And that brings us to a close of an incredibly insightful conversation. Mr. Kant, thank you so much for sharing your insights on this rating upgrade and painting a very compelling and interesting picture of the opportunities and, of course, even the challenges ahead. Thanks so much.
Thank you. Thank you.
And earlier we did, in fact, speak with S&P Director Yifan Phua on these global ratings. Let's listen to what he had to say. And let me quickly bring in Yifan Phua, Director of S&P Global Ratings, joining us from Singapore. Good evening from India and welcome to NDTV Profit. Thanks so much for joining us. We're looking at the rating and the fiscal outlook. This is a big rating coming in for India. So give us a sense of what specific fiscal milestones or policy reforms is S&P monitoring for this upgrade in India's sovereign rating.
Hi, good evening. Thanks for having me. Yeah, there were a few factors that we were looking at when we decided to act on the positive outlook and upgrade the ratings. The first thing, as we mentioned earlier, was really the government's demonstrated commitment to fiscal consolidation. The second factor that we were looking at was also the fact that nominal GDP growth continues to be very healthy in India, and this healthy GDP growth is actually helping to steady a lot of the credit metrics, especially given the fact that, despite the fact that there is some fiscal consolidation, deficits are declining, but it's declining at a very slow level. So this fast GDP growth has helped to stabilize the debt level of the government, at the same time also to gradually bring it down. The third factor that we saw was very important was the monetary policy settings and its development, how inflation has been controlled at a much durable rate over in recent years, and that we think speaks forth to the increasing strengthening transmission mechanism from the RBI.
All right, so thank you so much for taking time out to join us. I do want to quickly add on to that question and understand a little bit more. Now, for the longest time, credit rating agencies, including S&P, of course, has held back on a rating upgrade on concerns regarding India's central as well as aggregate debt. So what is your current view on that? We do see some fiscal consolidation and consequently some debt reduction as well. But what are the estimates you are looking at? How reasonable are these? Would you rather see debt consolidation taking place at a faster pace?
Pallavi, thank you for the question. I think you hit the nail right on the head. That's actually, in our statements when we talk about future upside movement is really even faster pace of fiscal consolidation. If you look at India's overall fiscal picture, for us, we look at it from a general government perspective, which is central plus the state governments. Now, as you can see, the central governments, in terms of deficit declining, actually has been quite fast, right? During COVID, it was deficits were as high as 9.6, I recall, at the peak of COVID. And back then, the finance minister was already very clear to say that within 5 years, we'll bring the deficit at the central level to below 4.5. And they've certainly achieved that. On the other hand, the state governments themselves, the deficit has been, coming down a lot slower, or perhaps even, staying at almost the same level, between 2.8 to 3% of deficit GDP every year. So I believe that going forward, yes, the central government will continue to put in a lot of effort to consolidate its spending. But at the same time, I think the state governments perhaps will have to also chip in to help the overall deficit get smaller as well. But deficits aside, the other thing to really take note of is that sometimes it's not just the deficit that matters, but also the quality of the government spending. And that we see has been improving in the last 10 years. Increasingly, the budget has been tilting more and more towards infrastructure spend. And as a share of budget, subsidy also has been coming down. Now, that's very important because as your infrastructure improves, as your connectivity on the ground improves, that actually allows India to grow at a faster pace than what it is right now. So we are recognizing the fact that this is still an emerging economy where spending has to be done to support the economy, to also build infrastructure. But this all we believe that has a positive impact on India's metrics going forward.
Okay, Yi, I'm going to actually address the elephant in the room, and of course in every newsroom at this point of time, which is the global volatility around the tariffs. And I think in the past you have noted that US tariffs on Indian goods will have limited impact due to India's domestic demand orientation. What sectors or metrics would you monitor for any negative surprises if trade tensions escalate further?
Thank you for that question. I think overall our view is that India's, as we said earlier, it's not a very export-oriented or export-reliant economy for its growth. A lot of India growth, I believe, around 60% or so, drives from domestic consumption, and therefore, we do think that the tariff story will have limited impact on India's growth. Right, as we see right now, India's export to the US is about 2% of its GDP. But once you factor in the sectorial exemptions on certain products like pharmaceuticals and also consumer electronics, their exposure is down to about 1%. So that's the reason why we feel that the tariff, even though it could have some impact, but it will be quite manageable. And overall, the long-term growth story for India remains quite healthy.
Okay, I do want to add on to that. While you have explicitly detailed, even in the report and in your comments, that the tariffs are not expected to have any detrimental impact as such on the long-term growth prospects. Back here in India, we do have some concerns regarding the impact the volatility and global uncertainty is having on investments which have already been fairly stagnant despite the government's bid to push up the number, especially in the private sector. That alongside the fact that we have seen demand, especially in urban areas, remain fairly lukewarm. What are you making of these mixed sort of trends domestically, and how concerned would you be regarding those as well?
Yeah, thanks for that question. I think it's very important to have a sense of relativity here and comparison to India and its peers, right? If you look at a growth number of 6.5% for this year, this clearly puts India in terms of growth compared to other emerging economies as a clear outlier. It probably ranks, top few in the world in terms of its actual growth momentum. And I think that's very key for us. Of course, there could be some divergence in the economy, as you put it. Urban sector is perhaps not growing as quickly, but a lot of the growth is rural and so forth. But if you actually look into the detailed numbers of FDI inflows, especially last calendar year, even though net FDI numbers doesn't look so great, but actually net gross inflow actually continues to be very strong. Coming into sectors like services, into financial services, consulting, IT. We see a lot of that still keeps coming in. I think that certainly speaks to the fact that investors still have a lot of confidence in India as an attractive investment destination, especially the fact that you have a very large domestic market, and also the fact that the middle class is getting larger and larger. So all these are factors for investors to look at India and to come in to invest in various industries.
And Yi, our last question before we let you go, and thanks so much once again for your time. What's the one metric you'll be watching most closely for India in the next fiscal year?
Right. Yeah, great question. I think actually we pointed it out in our outlook statement. It will probably be the deficit that we are watching out for, how quick the pace of consolidation is. One thing also we're also watching out for is the pay commission's recommendations to see how what kind of deficit level we're going to be talking about, recommended by the Finance Commission, and also in terms of its recommendations to states and also to central government in terms of the revenue sharing arrangements and things like that. So we'll all be watching out for that as well. But in our outlook statement, I think we put very clearly that future potential upward will continue to rely on. Will be dependent on India being able to keep up its fiscal consolidation efforts, continuing to focus on its infrastructure investments. Also at the same time, having a very conducive monetary policy environment and having inflation being kept under control as well.
Right, Yi Fan Phua, thank you so much for your time and for actually breaking that down for us so comprehensively. We'll continue tracking this and can keep coming to you for all of your insight and analysis.
मुझे तोड़ लेना वनमाली, उस पद पर देना तुम फेंक, मातृभूमि पर शीश चढ़ाने जिस पर जाएं।
वीर, अरे क्या बात है भाई, वाह वाह वाह। अगर चीरोगे ये सीना धड़कता देश निकलेगा, मैं वो हनुमान हूँ जो दिल में हिंदुस्तान रखता हूँ।
भूल गए क्या युद्ध भूमि में कीमत बड़ी चुकाई थी।
तुमने तो अपनी ही मर्जी से वतन छोड़ा था,
तब ये वर्दियां खड़ी थी तान करके छातियां।
खून माटी से जा मिला वरना आज सिंदूर ही नहीं होता।
जय जवान जो मैंने शुरू किया था ये एक्चुअली, मैं दोबारा आया हूँ आप लोग से मिलने के लिए।
मुझे बड़ी खुशी है आप देख रहे हैं YouTube पे मेरी फिल्म। वाह क्या बात है, क्या बात है।
देखिए जय जवान मेरे साथ 15 अगस्त को सिर्फ NDTV पर। जय जवान, जय जवान, जय हिंद, जय हिंद।
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversations.
Born in 1946 from the milk pails of Gujarat's villages, Amul began as a dairy cooperative empowering millions of farmers. It went on to spark India's white revolution and became the nation's top food brand, with its butter alone holding 85% of the market. Today, with a turnover of 90,000 crore, Amul is expanding across the globe. From New York to Spain, its cheese, ice cream and fresh milk are winning hearts, boosting exports and taking on global dairy giants. Amul, proudly Indian, making the world a little more utterly delicious.
S&P Global upgrades India's rating from BBB- to BBB with stable outlook. India gets an upgrade for the first time since 2017. Commerce Secretary Sunil Bhartwal says India's exports grew substantially in July despite uncertain global policy environment. Adds that the proposed export promotion mission is currently under inter-ministerial consultation. Benchmarks end the week 1% higher as Nifty snaps its 6-week losing streak. All sectoral indices barring FMCG close with gains. Broader markets underperform marginally. Tax authorities issue inquiry notices to individuals over foreign accounts seeking details of how and where these accounts are disclosed. Notices mainly sent to Indians with accounts in UK and European countries. Supreme Court hears petitions challenging the order on removal of stray dogs from residential neighborhoods, raps Delhi government for not implementing animal control guidelines. Over 35 people are dead and 100 injured after a massive cloudburst in Jammu and Kashmir's Kishtwar region. 120 people have been rescued. Death toll is expected to rise as more people are believed to be trapped. Hello and welcome. A very good evening. This is Profit 360 on NDTV Profit and I'm your host Malika Mishra. Along the next half an hour, we will be bringing you the latest on markets as well as national and international news. Big news coming in. S&P Global has upgraded India's long-term sovereign credit rating to BBB from BBB-. The agency cited economic resilience and sustained fiscal consolidation as reasons for the upgrade. S&P Global had revised outlook on India's rating in May last year to positive from stable. My colleague Pallavi Nahata is standing by with more on what this rating upgrade means for India and the rationale behind it.
Right now, Malika, as you said, in the big news of the day, S&P Global has raised India's sovereign rating to BBB from the previous BBB minus. Let's remember that BBB minus is in fact the lowest investment grade rating. Now, what this essentially means could be lower borrowing costs for the Indian government, also lower borrowing costs for corporates from India that are borrowing from abroad. We in fact already saw a little bit of a reaction on the India 10-year benchmark bond yield, which did ease by 7 basis points at its close today. Let's have a quick overview of what S&P did say in its release when it changed the rating. Now, it did emphasize that India has continued to prioritize fiscal consolidation, and the government has demonstrated continued political commitment to delivering sustainable public finances. S&P also did make note of the improvement we have seen in the quality of spending as well, while the government continues to maintain its thrust on capex. Now, robust economic expansion is also having a constructive effect on India's credit metrics, the global ratings agency said, and it said that it expects India's economic fundamentals to continue to underpin the growth momentum over the next 2 to 3 years. S&P does estimate GDP growth for the ongoing fiscal year at about 6.5%. It has also added that it does not expect the impact of the tariffs imposed by the US on India to be substantial. It does not also expect the impact of the tariffs to be long-term in nature. Now, in terms of outlook, S&P has said that continued political stability and high infrastructural investment continue to support India's long-term growth prospects. Added to that, a cautious fiscal as well as monetary policy is expected to help regulate the government's elevated debt and interest burden, and that's what is going to be watching out for as well. In fact, we spoke to the team at S&P regarding what could possibly help improve India's rating further, and what they said to us as well was also the fact that fiscal consolidation is what they're going to be watching out for, and a faster pace of fiscal consolidation is what is most likely to get India a further upgrade.
Right, Pallavi, thank you so much for bringing us those details on India's big rating upgrade. And Chief Economic Advisor V. Anantha Nageswaran has commented on S&P boosting India's credit rating, stating he is pleased with the development. He also said that India's macroeconomic fundamentals had warranted this rating upgrade, and that the country has been steadfast in its promise and delivered on it. Let's listen in.
I think obviously we are very pleased with the development. We felt that India's fiscal macro fundamentals warranted this ratings upgrade. We have been, as you know, we have a formal conversation with them every year, twice a year, etc. And we have been highlighting the fact that while we know that interest payments are as a percentage of revenue, tax revenues on the high side, etc., we borrow in domestic currency, and we have a very stellar track record. And the fiscal prudence exemplified by the fact that the government committed to from 9.2%, we would bring it down by more than 50% to 4.5% or less, and we delivered on it. And that should be recognized. And I think while the track record of several other countries on the fiscal front has been mixed, India has actually steadfastly stuck to its promise and delivered on it, and that should be recognized. That is what we have been saying, and we are very appreciative of the fact that Standard & Poor chose to acknowledge the commitment to fiscal prudence, fiscal stability, and given us the recognition of that.
Earlier today, we spoke with Yifan Phua, director at S&P Global Ratings, to get his views on India's BBB credit rating. He believes the impact of tariffs on India's economic growth is likely to be limited. Let's listen into this as well.
I think overall, our view is that India's, as we said earlier, it's not a very export-oriented or export-reliant economy for its growth. a lot of India growth, I believe, around 60% or so drives from domestic consumption. And therefore, we do think that the tariff story will have limited impact on India's growth, right? As we see right now, India's export to the US is about 2% of its GDP. But once you factor in the sectorial exemptions on certain products like pharmaceuticals and also consumer electronics, their exposure is down to about 1%. So that's the reason why we feel that the tariff, even though it could have some impact, but it will be quite manageable. And overall, the long-term growth story for India remains quite healthy.
And responsible fiscal consolidation post-COVID, rapid digitization and the needed infrastructural push has worked well for India, says former G20 Sherpa Amitabh Kant. While speaking about the reasons behind India's rating upgrade, he added that the balance sheet of financial institutions have also radically improved. Let's listen in to a part of this exclusive conversation with him.
The rating agencies have started realizing that India has carried out very vast structural reforms. We were amongst the fragile five just about 7-8 years back, and we've moved to be amongst the top 4 economies of the world. This has not been easy, and this has been possible only because we brought in GST, IBC, RERA, lowering of corporate tax. The balance sheet of both the corporates and of the financial institutions have radically improved. We don't have the twin balance sheet problems anymore. But more than anything else, I think the government has done a huge amount of fiscal consolidation post-COVID. And I think the other thing that's happened is that we've become a very formal economy because of digitization. We've also pushed for our infrastructure in a very big way, but in a very fiscally responsible manner, that we've built houses, provided electricity connection, provided water connection, all that we've done for our citizens in a responsible manner.
And Dinesh Khara, former chairman of the State Bank of India, highlights the importance of fiscal prudence alongside a supportive monetary policy. He notes that India's inflation trajectory is favorable, paving the way for a focused infrastructure push while ensuring sustainable economic growth.
I think fiscal prudence was given enough importance, and at the same time, even the monetary policy is also very supportive, and it is actually getting reflected into the kind of inflation print which we get to see. So I think inflation numbers also giving the indication about the inflation expectation, that being low, focus on the infrastructure, fiscal prudence. These are all very welcome areas when it comes to ensuring the sustainable growth of the economy. And I think once the international rating agencies could develop that kind of a confidence, they have upgraded.
And moving on, July trade deficit widens to $27.35 billion and exports are up 7%. That's the word coming in from the Commerce Secretary routine briefing on trade data. Commerce Secretary Sunil Parthiwal also said that negotiations with the US for the bilateral trade agreement are ongoing. He also said that trade between India and China have improved. My colleague Grishab Bhatnagar was at the briefing and he joins us with more details on this.
Right, important set of commentary coming in from sources on India's export scenario as well as trade data. What we're seeing firstly is the fact that despite the uncertain global policy environment, we've seen that India's exports have continued to grow, both in July and the April to July quarter. This is also much higher than other countries and what the global export growth rate has been. Interestingly, what we also heard from official sources was the fact that trade between US and India as well as China and India has grown over the past month as well as the past quarter. So that is a positive that is being seen. Very importantly, India is fully engaged with the US on trade talks so far. That is what we're picking up from official sources. The BTA talks, the bilateral trade agreement talks, are still on. What we don't know so far and will only know closer to the date is the status of the August 25th negotiations round. Remember, US negotiators were set to visit New Delhi for the 6th round of in-person negotiations. So that status of whether that round is on or not, that's not clear yet. We'll only know closer to the date, perhaps around the 20th August mark is when we'll know. But the fall deadline for the BTA continues to be in place. On China trade, what we've seen is that trade with China is moving positively. Imports and exports both have gone up over the past month and quarter. So trade developments are moving forward positively, given the fact that business visas have also issued, apart from tourist visas from China to Indian citizens and companies. What we're also seeing is that these additional 25% tariffs that came from the US, those were because of geopolitical reasons, and we'll have more clarity because those 25% have not been implemented yet. They come into effect starting August 27th. So a lot of geopolitical events coming in, and also the most important being the Trump-Putin meeting that is set for in the next 48 hours or so. So that is something that is also being tracked in India. What is also being tracked is the front-loading bit, whether or not there's some sort of front-loading of orders being seen by exporters. That is something that Commerce Ministry sources are telling us that they are tracking. And also a very important one on rupee trade with Russia. There will be a high-level delegation that will comprise of Commerce Ministry officials as well as External Affairs Ministry officials that will be traveling to Russia very soon to engage more and further on India's rupee trade. So that's what we're picking up on the trade front.
Right. Thank you so much for giving us all those trade-related updates, Rishabh. Now, time for an NDTV Profit exclusive. Indian tax authorities are intensifying scrutiny on offshore holdings with widespread inquiry notices sent to individuals holding foreign accounts, mainly in the United Kingdom and Europe. My colleague Shrimi now joins in with more details on this.
Well, that's right. Very crucial information coming in. What we are picking up that Income Tax Department has started sending inquiry notices to several individuals across India on its, over its foreign holdings, foreign accounts. And in fact, sources tells us that inquiry notice is being sent under Section 131, seeking explanation on how and where you disclose these accounts. Now, the action follows the huge number of data which Indian authorities recently received under common, reporting standards via automatic exchange of information India has with the foreign jurisdiction. And what we are also, understanding from the sources that so far about 2.5 lakh of account and the information of those have been received so far, and majority of them is now picked up by the Income Tax Department, and all of them are actually under scrutiny. Now, sources also indicating that the matter is currently at the inquiry stage because they want to first know and awaiting the reply from all these individuals, and also kind of try to send signal that, look, if you have not disclosed your foreign accounts, this is the time you can do it, instead of going for a full-blown investigation. And they are expecting individual to come forward. Otherwise, if they later establish that these accounts were not disclosed, then they clearly will face action against under Black Money Act, which is a very rigorous act, attracting jail term up to 3 years plus up to 100% of penalty on the undisclosed amount. The other important aspect here also emerging that how Indian authorities are using all those data coming through the global cooperation, because at one point of time it was very challenging for them to kind of trace all those money stashed abroad. So now they have real-time data, they have solid proof to go after all these individuals who are have money, illicit money stashed abroad, and clearly they have all the data and documents to back that.
Right. And as we wrap on this edition of Profit 360, our 79th Independence Day isn't just about commemorating freedom. It's about reflecting on the daring reforms, bold bets, and visionary leaders that helped shape India what it is today. We're stronger, bolder, and brighter. We're not just implementing transformative changes by the day, but making an indelible mark on the world stage. Here's a special report, a countdown rather, to the top milestones, policies, and mavericks that turned India into a global giant. Take a look.
In 1947, India broke free, not just politically, but economically. From a 30 billion fledgling to a 4 trillion powerhouse, the journey has been anything but ordinary and wasn't built in a day. It was carved out by daring reforms, bold bets, and people who refuse to think small. This is the ultimate countdown of the policies, milestones, and mavericks that turn the dream of a global India into reality. Number 5, 1951, the first 5-year plan. Our first blueprint for growth placed its bets on agriculture and dams. In just 9 years, GDP jumped from $30 billion to $42 billion. Over 2,000 community projects taught villagers to run their own local economies. An idea so ahead of its time, the world later copied it. But as fields flourished, one question remained. Could India feed itself in the face of a growing population and frequent droughts? Number 4, 1965, the Green Revolution. Enter MS Swaminathan. His high-yield seeds and modern farming turned Punjab and Haryana into India's breadbasket, boosting grain output by 70% in just 5 years. Quietly powering this change were women farmers. Food security was one thing, but to truly grow, India needed fuel. Not the kind you burn, but the kind that you bank. Enter number 3, 1969, bank nationalization. When 14 banks went public, credit finally flowed to rural India. Branches quadrupled in a decade, funding the first rural cooperatives, today responsible for 1/5 of agricultural lending. Yet for all this progress, there was still a ceiling, the infamous license Raj that kept entrepreneurs chained. That is, until the 1990s. Number 2, 1991, LPG reforms. Liberalization, privatization, and globalization ripped away red tape. FDI shot from $132 million to $5.6 billion in just 4 years. And in a twist few expected, these reforms also ignited India's first private TV channels, unleashing a media boom. With markets opening and businesses booming, India was ready for its most radical tax shakeup in history. Number 1, 2017, GST, a single unified tax system in the form of GST in 2017. By digitizing compliance, GST slashed paperwork time by 40%, setting a global benchmark. In 2024 alone, it brought in 1.7 lakh crore. Now, policies can open doors, but it's what walks through them that changes the nation's destiny. The reforms laid the track. Now let's see the trains that roared ahead. From institutes that redefine learning to revolutions that fit in your pocket, these are the milestones that turned India's potential into performance. Coming in at number 5, 1951, IIT Kharagpur, the first IIT that trained over 1 million engineers, powering India's tech rise. And while they were building computers, another dream was taking shape, putting India on wheels. That's right, number 4, in 1983, the good old Maruti Suzuki launch. The Maruti 800 made cars affordable, selling 2.9 million units by 2014. India's first wind tunnel, built just to test it. But it was the 1990s where India found a new export, not a car, but brain power. Number 3, 1990s, the IT boom. By 2022, IT was 8% of GDP, employing 5 million people. India's Y2K fixes alone earned $2 billion and cemented its place as the world's tech help desk. So with tech thriving, policymakers wanted to supercharge exports, and so entire cities of opportunities were born. Coming in at number 2, 2005, the Special Economic Zones. The Special Economic Zones Act transformed exports from 22,840 crore to 7.59 lakh crore in 16 years, pulling in $100 billion in FDI and creating 2 million jobs, half for women. But India's biggest transformation wasn't in factories or farms. It happened in the palm of your hand. Number 1, 2016, UPI and digital payments. 131 billion transactions by 2024. A $400 billion digital economy. And an open source model so good, over 10 countries adopted it. Every milestone has a signature, and behind every signature is a leader with a vision. These are the people who didn't just ride the wave
with zeal and enthusiasm. These are the days that specially remind us of our being proud Indians. The 15th of August is a date etched in our collective memory during the long years of colonial rule. Generations of Indians dreamt of the day of independence. Men and women, old and young, from all parts of the country yearned to throw away the yoke of foreign rule. Their struggle was marked by robust optimism, which has continued to propel our progress since independence too. As we salute the tricolor tomorrow, we will also be paying homage to the memory of all freedom fighters whose sacrifices won India independence on the 15th of August 78 years ago. After regaining our freedom, we also became a democracy with universal adult franchise. In other words, we the people of India put the power to shape our destiny in the hands of each of us without any restrictions of gender, religion, and other factors that had barred many people from voting in other democracies. In spite of many challenges, the people of India made a successful transition to democracy. The transition was a natural reflection of our ancient democratic ethos. India had the oldest republics in the world. It is rightly acknowledged as the mother of democracy. When we adopted the Constitution, it provided the edifice of democracy. We built democratic institutions that strengthened the practice of democracy. We prize our Constitution and our democracy above everything else. As we look back on the past, we must not forget the pain inflicted by the partition of the country. Today, we observe Vibhajan Vibhishika Smriti Divas. Terrible violence was witnessed and millions were forced to relocate due to partition. Today, we pay tribute to the victims of the follies of history. Dear fellow citizens, our Constitution contains 4 values as the 4 pillars upholding our democracy. They are justice, liberty, equality, and fraternity. These are our civilizational principles that we rediscovered during the freedom struggle. At the heart of them all, I believe, is the notion of human dignity. Every human being is equal and everyone deserves to be treated with dignity. Everyone should have equal access to health care and education. Everyone should have equal opportunity. Those who had been traditionally at a disadvantage needed to be given a helping hand. Keeping these principles foremost in mind, we started a new journey in 1947. After the long years of foreign rule, India was in utter poverty at the time of independence. But in the 78 years since then, we have made extraordinary progress in all fields. India is well on the way to becoming a self-reliant nation and is moving ahead with great confidence. In the economic field, our achievements are all the more noticeable. With a GDP growth rate of 6.5% in the last fiscal, India is the fastest growing among the major economies in the world. Even amid stress in the global economy, demand at home is pacing ahead. Inflation has remained under control. Exports are rising. All key indicators show the economy in the peak of health. This is as much due to carefully calibrated reforms and sagacious economic management as due to the hard work and dedication of our workers and farmers. A large number of people have been pulled out of poverty through good governance. The government has been running a series of welfare initiatives for the poor and also for those who have risen above the poverty line but are still vulnerable, so that they do not fall below it again. This is reflected in the rising expenditure on social services. Income inequality is reducing. Regional disparities are also disappearing. The states and regions earlier known for weaker economic performance are now showing their true potential and catching up with the front runners. Our business leaders, small and medium industries and traders have always exhibited a can-do spirit. What was needed was removing the bottleneck in the path of wealth creation. That is so visible when it comes to infrastructure development over the past decade. We have expanded and strengthened the national highway network under the Bharatmala Pariyojana. The railways too have innovated, introducing new types of trains and coaches equipped with latest technologies. The inauguration of the rail link in Kashmir Valley is a major accomplishment. Rail connectivity with the valley will boost trade and tourism in the region and open new economic possibilities. This engineering marvel at Kashmir is a historic milestone for our country. The country is rapidly urbanizing, hence the government has been paying special attention to improve the conditions of the cities. Addressing the key area of urban transport, the government has expanded metro rail facilities. The number of cities with a metro rail service has gone up multifold in a decade. The Atal Mission for Rejuvenation and Urban Transformation, or AMRUT, has ensured more and more households have access to a tap with the assured supply of water and a storage connection. The government considers the basic amenities of life as rightful claims of the citizens. The Jal Jeevan Mission is making progress in providing tap water supply to rural households. In the healthcare sector, we have been witnessing a paradigm shift with a variety of initiatives under Ayushman Bharat, the largest healthcare scheme of its kind in the world. This scheme has already provided cover to more than 55 crore people. The government extended this benefit to all senior citizens of the age of 70 years and above, regardless of their income. As inequalities in access are removed, the poor and the lower middle class also benefit from the best possible healthcare facilities. In this digital age, it is apt that one sector in India that has seen the most dramatic advances is information technology. Nearly all villages have 4G mobile connectivity, and the remaining few thousands will be covered soon. This has made possible large-scale adoption of digital payment technologies, in which India has become a world leader in a short span. It has also supported direct benefit transfer, which ensures that welfare benefits reach the intended beneficiaries without glitch and leakage. More than half of the total number of digital transactions in the world take place in India. These developments have created a vibrant digital economy whose contribution to the country's GDP is increasing year on year. Artificial intelligence is the next stage of technological advancement and has already entered our lives. The government has launched the India AI mission to strengthen the country's AI capabilities. It is also helping to build AI models that answer to India's specific requirements. As we aspire to become a global AI hub by 2047, our focus will remain on making the best use of advances in technology for the common people to improve their lives by improving governance. For betterment of the lives of the common people, there is equal emphasis on improving the ease of doing business as well as on improving the ease of living. Development serves the purpose only when it helps those on the margins and opens new opportunities for them. Moreover, we are increasing our self-reliance on every area possible. This has added to our self-confidence and increased the momentum of our journey towards becoming Viksit Bharat. Last week, on August 7, the country celebrated National Handloom Day, which honors our weavers and their products. Since the year 2015, we have been celebrating this day to commemorate the Swadeshi movement, launched during our freedom struggle in the year 1905. The spirit of Swadeshi was strengthened by Mahatma Gandhi to promote the products made by the sweat and toil of Indian artisans and craft persons and by their incomparable skills. The idea of Swadeshi has been inspiring our national endeavors like Make in India initiative and Atmanirbhar Bharat Abhiyan. Let us resolve to buy and use Indian products. Dear fellow citizens, the all-round economic growth complemented by social sector initiatives has placed India well on the path of becoming a developed economy by 2047. With the nation marching ahead during the Amrit Kal, I see all of us contributing to the best of our ability. I believe there are three sections of society that will lead us on this path: youth, women, and the communities that had for long remained on the margins. Our youth have finally found the right environment for the realization of their dreams. The national education policy has brought in far-reaching changes, aligning learning with values and skills with tradition. Employment opportunities are booming. For those with entrepreneurial aspirations, the government has created the most conducive ecosystem. Fueled by young minds, our space program has witnessed unprecedented expansion. I am sure that Subhangshu Shukla's space journey to the International Space Station has fired a whole generation to dream bigger. It will prove extremely helpful for India's upcoming human space flight program, Gaganyan.